Right, guys, let's come to the new chapter. All of you guys take your power notes. Page number, how much? 46. Page number 46, it seems. Page number 46 or near to that. 47 or 48. 49. Yeah. Guys, ready? Okay. Now let's look at the importance of this particular chapter. As you can see, I have given how many marks out of 10? Okay, which means it is an average chapter. Are you able to understand? So average, or you can also call it as a little bit below important. So out of 4 attempts, in 2 attempts, you'll get this particular question, which means the probability of getting a question from pricing decisions is how much? 50-50. Got it? All of you? All right. Next. In 1 attempt, it has come for 35 marks. 1 attempt. 1 attempt. Next attempt, it was 0. After that, it was around 5 marks and it never crossed 5 after that. Are you able to understand? That's what I'm telling you. That is the speciality of ICA. He can do anything. That's it. Are you able to understand? That's why we will prepare in a normal way, but you should always be ready for some surprise in the examination hall. Otherwise, what will happen is that suddenly you'll get disappointed, and the disappointment will make you perform exams even worse. So that's not good for you. Got the point? That's why I always go with the open mind, telling yourself that anything can happen in the examination hall. Although you go with some expectations that from this chapter these many marks will come and all that, still, yeah, it will happen rarely, but there is a possibility that you should clearly have in your mind. So pricing decisions, imagine the people of that particular attempt who has ignored this chapter and went to the examination thinking that it's an unimportant chapter, and they've got it for how many marks? Some of them would have become that Adal climax Bharat. Like that, they would have come out. You got it? You've seen that movie? Climax. Right. Something like that. Anyways, right. Got this? Inshallah. So first we'll have the bird's eye view. We'll try to see what are all the things that we have in this particular chapter. What is the first one we have? Theory of price. It's a pretty simple thing. Nothing is there in that. This is really important. What is that? Profit maximization model, which we already know. Actually, we know a little bit. We are going to improvise the understanding that we already have. Next, pricing under different market structures. Then what is pricing policy? Then principles of product pricing, price sensitivity, price customization, price adjustment policies, pricing methods. Again, that is very important. And pricing in periods of recession. Sometimes you'll price below marginal cost as well. What are those situations? And strategic pricing of new products. That is also important. Okay, so what are the important areas from this particular chapter? Profit maximization model, pricing methods, and strategic pricing of new products. If at all you get a question, you'll get it from these 3 areas only. Remaining areas, 99% he'll not touch. But that 1% I can't say, as usual. Disclaimer. Got the point? Yes? All right. Okay. Right, Nana? Ready? Guys, okay. So first we'll start with the introduction. What is the introduction that we have got? Everybody knows that pricing decision is the most important decision for any company. What is the reason behind that? Already we have seen it indirectly when we studied activity-based costing. If you don't price your product right, what will happen? Either you will underprice your product or you will overprice your product. So if you underprice your product, what will happen? Everybody will buy your product, but you will not get any profit. Something will not be left over for you. If it is overpriced, nobody will buy your product. Either way, you'll be suffered, right? Eventually. So therefore, a pricing decision is one of the most crucial and difficult decision that a firm has to make, because such a decision affects the long-term survival of the company. Not only any company, it works that way. Your pricing has to be spot on. Got it? Yes. I gave you some examples over here. I gave you examples of only wrongly priced products. Okay. Honda Jazz, the first generation, was it was a pretty fantastic car, but it was absolutely overpriced. It was overpriced actually. So it became flop eventually. Are you able to understand? Despite being a great car. Same goes with Skoda Octavia, the current generation, which has got released, I think, 3 months, 4 months back. I think on an average, the price was increased by 5 lakhs between the previous generation and the current generation. Earlier, it was around 20 to 25. Now it went all the way from 25 to 32. Now the current generation. Are you able to understand? So suddenly, if you overprice things, not understanding the dynamics of the market, you'll be thrown out of the market. As simple as that. You got the point? Yes, all of you? All right. Now, there are two ways of pricing decisions. One is you can be a price setter, you can be a price taker. So price setter means you will fix the selling price. It's a very simple thing, total cost plus profit. Price taker means you'll just accept the selling price that has been fixed by the market forces. Got it? Now, the next thing is, how will you take a pricing decision? For that, we have 3 steps. Step 1, you understand what are the overall objectives of your company. Any company, they'll have a different objectives, okay? Company to company. For example, a particular company can have profit maximization as their objective. Another company can have getting a maximum market share as their objective. And the objective also will change from 1 year to another year, or some 3 years they'll have an objective, then it will change eventually. Are you able to get me? So first of all, you need to understand what is the objective of that particular company at that particular point of time. And eventually you have to take a pricing decision. It can be 100% capacity utilization as well. That can be objective. Wealth maximization also can be objective. Are you able to understand? Yes. So first understand what is the overall objective of your company. Then based upon that, you'll fix your pricing policy. Accordingly, you'll take your pricing decision. What is that? Anyway, we're going to see. What are the pricing policies and all those things? We're going to see later. Right now, this is just a basic overall idea. Okay. Now tell me, how many steps you have with respect to pricing decisions? 3 steps. Step 1, find out overall objectives of the company. Overall objectives can be exactly. Very good. Very good. Very good. It can be profit maximization, wealth maximization, share maximization, or optimum utilization of resources. Are you able to get me? All of you? Yes. Right. Very good. Second step, pricing policy. Third step, pricing decision. Simple. All these things will be helpful for us only to write sentences when you try to answer case studies. Are you able to understand? You'll understand when we come across those kind of questions. Okay. Next one is we have something called theory of price. Now, theory of price is literally nothing, Nana. It's a very basic thing. If a firm sells unlimited number of units, then the total revenue will be obtained by a straight line. Will be a straight line obtained by total revenue is equal to M into X. M into X means M is quantity of units sold, X is price. There's nothing in this, okay? Just naam ke vaste. This I've already explained you. You remember that? Yes. So basically what happens is that in life cycle costing, we will see this lot more deeper. Are you able to understand? The same graph. Right now, just have a basic idea. So this is introduction phase. Not what happens in introduction phase. Yeah, your sales will start increasing, okay? And your cost, you will start incurring your cost. Slowly, when you go to growth phase, cost will slowly start increasing. And your revenue also will increase at a very good pace. Once you go to maturity phase, your revenue will increase at a decreased pace. Are you able to understand? Still it will increase, but it will increase slowly. But your cost will increase at an increased pace, right? And finally, once you come to the last phase, both of them will, which means in the sense, cost will increase and revenue will reduce. Okay, it's just a basic idea. I told you, this is how a real graph looks like. When I taught you break-even charts in marginal costing, there I told you that break-even charts were purely theoretical. Remember that? Because there we have presumed that the revenue and the cost line are linear to each other. You remember that? That's why the graph was like straight lines, because they were linear to each other. Actually, it will be non-linear like this in real life. We will see it in depth when we go to life cycle costing. Mostly in this chapter only I'll cover that also, because there is a problem where there's a mix-up of pricing decisions and life cycle costing. That's the beauty of the new syllabus. Every single chapter you'll have a mixed questions from multiple chapters. Are you able to understand? Yes. All right. Okay, now come to this model. What is this model? Profit maximization model. Nana, in transfer pricing already we have seen. When we are trying to fix the TP, we had 2 columns. One is NMR column, the other one is marginal costing column. So NMR was greater than MC, we went to the next level. NMR is greater than MC, we went to the next level. NMR is less than MC, we stopped at the previous level, correct? And we said that this is the level at which your profit is maximum, correct? That was practical. In real, we were doing it, we were solving a problem. But if you think about theoretical way, Between this greater than and less than, there should be what? Equals to in the middle. And that is the area where you'll have maximum profit possibility, correct? That's what profit maximization model says. When your marginal revenue is equal to marginal cost, it is at that sales level that your profit will be maximum. Got the point? Yes? Fantastic. Now here, there are certain equations that has been given. Okay, now just have a basic idea about these equations. When we solve the problems, we can do it without these equations as well. Okay. Selling price is, he gave you two equations. One is P is equal to A minus BQ. Other one is marginal revenue is equal to A minus 2BQ. This equation logic is very complicated. So thereby take it in a lighter sense. Are you able to understand? This one you can easily understand. Now see, P means what? Price of the final unit sold. A is price of the first unit. B is nothing but relationship between selling price and the unit sold. Q is nothing but quantity sold. The logic is very simple. Generally, when you try to sell more number of units, what will happen? Your selling price will, you need to reduce your selling price. Only then you can sell more number of units. Okay. So therefore, naturally, selling price of the first unit will be higher. Selling price after 500 units will be less. Are you able to understand? That's what is depicted here. What is P? Selling price of the current unit, the latest unit that you have sold, will be less or more? Less. A is selling price of the first unit, or you can say selling price when the demand is 0, which is nothing but selling price of the first unit. Correct? This will be higher than P. Correct? Initially selling price will be very high, which is A, and slowly it will come down. Why it comes down? Because of the quantity that you are selling. That is Q. How much it comes down? Depending upon the relationship between the units sold and the price that comes down. Are you able to understand? Which is nothing but B. What is B? Change in price by change in quantity. What is B? Change in price by change in quantity. Are you able to understand? MR is equal to 2BQ. That's a normal, MR is equal to A minus 2BQ. That's a normal equation. There's a logic behind this also. It's complicated. So right now, just leave it. Okay. Yes. Now what we'll do is that by using this, we'll solve a problem that we have missed in transfer pricing. Okay. Let's finish it off. You remember that? You remember that or not? So take that question, Anna. What is that problem? Additional materials. Problem number 3. At that time, I told you that I'll solve this once we reach what? Pricing relations chapter. So take this problem number 3. If you guys are ready, we'll start. Ready, all of you? Okay. Fox Limited has Division A and Division B. The Division A produces components which it sells to outside customers and also transfers to the Division B. The Division B produces a product called the Zoom, which incorporates a Fox component in its design. Details of the production and operating cost for the next year are forecasted as follows. You got Division A and Division B. Annual fixed cost is given. Variable cost per component is also given. Okay. Both divisions have surplus capacity. Market analysis has indicated that the demand from outside customers for Fox Limited's products are as follows. 4,500 components are sold at a unit selling price of 350. Sales changes by an average of 5 components for each 1 rupee change in the selling price per component. 500 Zoom are sold at a unit selling price of 1100. Sales changes by an average of 125 Zoom for each rupees 75 changes in the selling price. It means that if you sell 125 units, your selling price will drop by 75. It is an established practice for the Division A to transfer components to Division B at market selling price. So you are required to calculate the unit selling price of Zoom that should be set in order to maximize Fox Limited's profit. Selling price should also be exact to the nearest paisa. If P is equal to A minus BQ, MR is equal to A minus 2BQ. That will be given in the question only. No need to remember those equations. Got it? Array. All right, chalo. Help me out with the numbers. Okay. And we will do it together. Ready? Yeah. Chalo. Now we are in pricing decisions chapter. What is the problem number, Nana? Question 3, additional problems in transfer pricing chapter. Okay. Can you please tell me what is the requirement of the question? What is the requirement of the question? C. He is asking you selling price per unit of Zoom. Everything is very important for us. Listen. Selling price per unit of Zoom is equal to question mark. Correct? That's what he has asked. Please understand that Zoom is a intermediate product or a final product. It is a final product, not intermediate product. Keep that in mind. So this is a final product. This is another mistake that you will do. Okay. Now I need to find out selling price per unit of Zoom. What is the condition? What is the condition? You are required to calculate unit selling price of Zoom that should be set in order to maximize Fox Limited's profit. So it maximize. What is that? Fox Limited's profit. That is the most important part. Okay, you got to maximize Fox Limited's profit. Okay, I need to find selling price per unit in such a way that my Fox Limited's profit must be maximum. How to do that? What will I do is that first I'll calculate quantity. What quantity? Optimal quantity. Optimal quantity means what? It is the quantity of sales at which your profit is maximum. Instead of directly calculating selling price, I'll calculate quantity first. Are you able to understand? Once I calculate quantity, I know the relationship between quantity and selling price. Thereby, I can easily convert that into selling price per unit. Are you able to understand? Yes. All right. So I'm going to find out optimal quantity. Right. How am I going to find that out? Very simple. By applying profit maximization model. What is that you're going to do? You know that profit will be maximum when what? MR is equal to MC. Correct? Okay. Right, Nana. Chalo, see here. Ready? Now, I know that profit will be maximum when MR is equal to MC. Now, let's try to understand what is MR. MR is equal to A minus 2BQ, correct? Which is given in the question. Now, what is MC? MC is nothing but marginal cost of Zoom. It is not marginal cost of the intermediate product. It is marginal cost of the final product. Are you able to understand? When we try to find out transfer price in the transfer pricing chapter, there it is the marginal cost of the intermediate product, not the final product. Here it is the marginal cost of the final product. What is the marginal cost of the final product? Zoom. What is the marginal cost? Variable cost of division A is 175. Variable cost of division B is how much? 350. 350 only, na? Here it is clearly given that variable cost per Zoom excludes transfer price. So 350 plus 175. How much? How much? Huh? 525. That is the marginal cost of finished good. Suppose if it is the marginal cost of intermediate product, it would have been how much? 175. Are you able to understand? It would have been 175. But because it is the marginal cost of the finished good, it is not 175. It is how much, Nana? How much? 575. Okay, now, if you want to substitute this A minus 2BQ, what is A? Selling price of the first unit. Do I know that? I don't know. Minus 2 into. What is B? What is B? Just now we have seen change in price by change in quantity. Okay. Change in price by change in quantity into Q means quantity which we need to find. Because I told you, what we need to find is optimal quantity. Are you able to get me? Is equal to 525. Now, I don't know two elements in that particular equation. I don't know A. I also don't know Q. I don't know A. I don't know Q. Correct? That's a problematic kind of a thing because only one I can find. Correct? So what will I do? With the help of other equation, I'll try to find A. Once I know A, automatically I'll find Q. Once I know Q, then I'll find the selling price per unit of Zoom. Are you able to get me? So first I'm going to find out what? A. How to find A? What is A? Selling price of the first unit. Right. How to find that A? What is the other equation? P is equal to A minus BQ. Correct? What is P? Selling price of the current unit. What is the selling price of the current unit of Zoom? What is the selling price of the current unit of Zoom? Look at the question and tell me, Nana. $500 units of Zoom are sold at a unit selling price of how much? 1100. And what is the current unit selling price? 1100. Okay. Is equal to A, I don't know. Minus, what is B? Change in price by change in quantity. What is change in price? What is happening to Zoom C? Change in price is how much? 75. Change in quantity? 125. 75 by 125. Into what is quantity? How many units you have sold right now? 500 units of Zoom you have sold. Calculate and tell me what is A. How much is A? Calculate and tell me, Nana, how much is A? $1,400. You can do this without this formula also. That's not a big thing. See, right now you have sold how much of quantity? 500. Correct? Selling price as of now is how much? 1100. Correct? And you know that for every 125 units, your sales increases, your selling price drops by 75. Correct? Already you have sold how many units? 500. In this 500, how many 125s are there? In this 500 quantity, how many 125 units are there? 4. Which means 4 times it should have dropped by how much? 75. Which means totally it would have dropped by 300. After dropping by 300, it is how much? 1100. So which means before dropping, it should be how much? Bol rahe. How much is that? 1400. That's what we have got. Isn't it? Alright, it's a simple thing. No complication, nothing doing. Got it? So right now the selling price is 1100 after selling 500 units. For every 125 units, selling price will drop by 75. So which means for 500 units, it should have dropped 4 times by 75. Totally, it should have dropped 300. Before dropping, it should have been 1400. Got it? All right. Now I know A. So substitute that over here. Okay. A is how much, Nana? 1400 minus 2 into change in price 75. Change in quantity 125 into quantity is what I need to find. Correct? Is equal to 525. Now tell me how much is Q? How much is Q? How much is Q? It fast, buddies. How much, guys? 729.17 units. Correct? Now you can easily find out selling price. Sir, how to find out selling price? The same equation we'll use. P is equal to A minus BQ. What is P is equal to? A is how much? 1400 minus B is change in price by change in quantity. 75 by 125 into Q is just now you have calculated. I'll take it as 729.17. I'm not taking. Tell me how much is P? 962.6. That's your answer. Finished. That is the selling price at which your profit is maximum. Selling price of Zoom at which your profit is maximum. Got it? Chalo, finish it off. You guys confirm me, we'll go back to pricing decisions. Any doubts? Look at the whole question. How did we start? We wanted to find selling price per unit of Zoom. Okay, we can't find directly selling price per unit of Zoom. Therefore, we went for optimal quantity. Correct? First, we'll find quantity. Then we'll link it up with selling price. To find optimal quantity, we applied profit maximization model, which is MR is equal to MC. Then we applied the formula over here. Correct? Yeah, and if you look at the formula, what is the situation? A minus 2BQ is equal to 525. Correct? Yes. I don't know A. I know 2, B, and Q also I don't know. Because ultimately I need to find Q. Correct? Quantity I need to find. But then, so I try to find A with the help of this particular formula, P is equal to A minus BQ, or without formula also you can find. That I've explained you already. Then I'll find Q, okay, which is 729. By using Q, I have found selling price, which is P. Got it? Without using that formula also, you can find still selling price by using common sense. 729 units means you're about to sell 729 units, correct? In that, find out how many 125s are there. Yeah, you multiply that with 75. That much the selling price will reduce, correct? Yes, like that also you can do. But anyway, formula is available. So just put it, answer will come in much more easier way. Yes. Any doubts? I'll keep it here. Look at the answer. If you got any doubts, you ask me. This is a famous model. Many times it has been asked. Clear? Shall we move on? Guys, done all of you? Right, Nana. Fantastic. Chalo, let's move on to our pricing decisions. Okay, now you have understood the purpose of this. Hello? You got this? Profit maximization model. Don't worry about this. You can easily remember. It's not difficult formulas, or it will be anyway asked in the question. It will be given in the question. Chalo. Now let's move on to the next one. What is the next one we have? Pricing under different market structures. This we have studied in our +1 and +2. What are the different market structures we have got? Perfect competition, monopoly, monopolistic competition, oligopoly, and that's it. Okay, only 4. What are they? Perfect, monopoly, monopolistic, oligopoly. So what is perfect competition? I've simplified it. You will have large number of sellers, large number of buyers. I told you this already. I explained you, indirectly. Homogeneous products means what? Exactly the same. And even the production process also will be exactly the same. Identical means exactly the same. Similar means more or less the same. Are you able to get me? All have perfect information about the market and price. Just like your Modi, Gilani and Miller model in your CA Inter financial management. Remember that model? Very important for your exams. Yes or what? Pre-entry and exit. You can easily enter the market. You can exit the market easily if you don't want to. Sellers are price takers. And you can earn maximum profit by applying profit maximization model, which is MR is equal to MC. So pretty easy. But in reality, you will not find a market like this. It is purely theoretical. Which one? Perfect competition. Because everybody will have every information about the market and price. That's not possible in real life. Are you able to understand? Pre-entry and exit? No. Some sort of problems will be there when you want to enter the market or exit the market. You got the point? Yes. All right. Done with this? Okay. Right. Now let's move to monopoly. Now tell me, what are the features of perfect competition? What is the first one? Large number of buyers, large number of sellers, homogeneous products, identical production process. Everybody will have all information about everything in the market, free entry and exit. Sellers are price takers. And if you want to maximize your profit, follow profit maximization model, which is MR is equal to MC. That's it. Now come to monopoly. Now monopoly means everybody knows there will be one supplier or seller. He sells lot of units and each and every unit will be same. Correct? Homogeneous products means what? They're exactly the same. They're not unique. One product will not be unique. That is the logic. Suppose if I have a monopoly, suppose I'm giving you electricity, Nana. Every unit of electricity will be same, right? Isn't it? Same logic goes with rivals also. Or if I'm trying to sell some product, every unit of the product will be same. It's a common product. Then it is called homogeneous. Suppose every product is unique, then it is called heterogeneous. For example, advertising products. For every customer, I cannot give same advertising, right? Every single piece of advertising will be different. Similarly, visiting cards, marriage cards, and stuff like that. Are you able to get me? Right. There is no close substitute for monopoly products. The word is no close substitute. Means what? Substitute will be there, but close substitute will not be there. Many buyers will be there. Single seller, obviously, seller is the price setter. Now, the point that you need to understand here is just because it's a monopoly and you are the only one giving that sort of a service or giving that sort of a product, just because you are the only one and you are a price setter doesn't mean that you can fix any selling price you want. For example, you take railways, they are the monopoly. Yes, Indian Railways. So, because they are monopoly, can they fix any selling price that they want? I'll fix 3,000 rupees. What will happen? People will start using cars. Cars are very costly actually. Or people will start using bus transport or air transport or something. Are you able to understand? Now because of the petrol prices. Okay. Hello. Got it? Guys are laughing. Bol rahe na na, all of you? Yes? Right. Now, as you can see, in monopoly, there will be one supplier or seller. He will sell homogeneous products, which means all the products are going to be more or less same. There will be no close substitute, many buyers, and seller is the price setter. But that doesn't mean that he can fix any selling price that he wants. Why? Because if Indian Railways, although it's a monopoly, still if it keeps increasing prices, then customers will shift to other means of transport. Bus, airways, for example. Got it? Here also to get maximum profit, the firm can use profit maximization model. That's why that model is very important. Purinjo. Now let's move to next one. What is the next one? Monopolistic competition. Monopolistic competition means what? It will have the flavor of monopoly, but it is not monopoly. Means, for example, what's the toothpaste you're using? Is that Coxa? Close up. Okay. Close up or Colgate. Now, once you start using let's say close up, for example, you will stick on with that, correct? I'm talking about normal human beings. Okay. He will use anything that he finds. That's a different thing. Normal human beings, let us see. Normally, our family and all that, it will stick on to one toothpaste, correct? No. Cool. Which means you'll keep on changing your toothpaste and soap every month. Okay. Pierce is there, Nana. Even though Fiamma Devils has come, people will prefer Pierce only, correct? Although both are that glycerin soaps, correct? Reason? Because of that little bit of monopoly. Are you able to understand? Even though Colgate and Pepsodent are pretty much similar, but people who starts using Colgate, they'll prefer that only over what? Pepsodent. Reason? Little bit of edge. That feel or whatever the reason, you'll stick on with it, correct? That old Synthol soap is also there, Nana, that red color. Red color packing gray Synthol soap. It has got high TFM, right? Almost 79%. First of all, you know what is TFM? That is important when you buy a soap. Toothpaste also, when you buy, it has to have a green strip on it. You know all these things, right? Then what? Then why are you changing? Every time you will go for a different green, huh? Okay, it's okay. We find taste after brushing, Nana. You find it little bit earlier. That's it. Not a problem. Right? Okay. Okay, for soap then. Oh, okay. Okay, right. Okay, Nana. So usually what will happen is that people will stick on. So therefore, there will be a cult crowd for each and every of those products. That cult crowd has got formed only because of that little bit of monopolistic edge. Okay, it's not monopoly because you have very close substitutes actually, but still a little bit of edge will be there. That we call it as what? Monopolistic competition. Okay, right. So you have large number of firms over here, similar but not identical products. That's what I told you. Identical means exactly same. Similar means it will have little bit of difference. And of course, profit will be maximum when MR is equal to MC. Example is soap and toothpaste. Hello. Coming on to oligopoly. This is the most famous model. Whatever the kind of market that we really see outside, pretty much everything is what, Nana? Oligopoly. So in oligopoly, basically what happens is that you'll have few sellers, which you can count with fingers. Okay. Or 10 to 20, something like that. Like that only it will be. And they will produce exactly the same products. Are you able to understand? For example, our telecom sector. What is our telecom sector? Oligopoly. Perfect oligopoly. You have Geo, we have V, yeah, Airtel, ASNL is there. Okay, right. Yes. So we have few players, but if you look at the product that they are providing, exactly the same, isn't it? It's the same services that they are providing, correct? But in oligopoly, generally what happens is that whenever a particular company, one company in that entire group, if it increases the selling price, it will not be followed by the others. Okay, but if one company reduces the selling price, it will be followed by everybody else. Because when one company increases the selling price, they want that particular company's market share to get to them. Therefore, they will not increase the selling price. Are you able to understand? Because public also will be like, because everybody is giving you the same product. If somebody increases the price, what will happen? They will shift to other guy who's providing the same product at a lesser price. Because these are identical products, right? So the shifting will be very easy. Got the point? Therefore, if any company increases the selling price, it will not be followed by the rest. However, if any company reduces the selling price, it will be followed by the rest. That's the nature of oligopoly. Yes. Not only that, in oligopoly, another unique thing is that whenever you try to launch a product, more than you will think about competitors, what they will be doing, how they are going to react, and how the things are going to happen. Are you able to understand? You'll think more about your competitors. That's the nature of oligopoly. Got it? Anyways, now see here, you have few firms. All of them will manufacture and sell exactly the same products, which we call it as identical products. And while determine the price, consider not only the demand for the product, but also reactions of the other firms. That's also very important. So if you can't judge their reaction properly, then you'll be losing the advantage. That's the problem. Got it? Yes. For example, sub 4 meter sedans that was started by, you know, who is the king of the segment? Sub 4 meter sedan. Sub 4-meter sedan is a segment in India, in cars market. Who is the king of that segment? Sedan means what? The car with a dicky. Correct. Ambassador is a sedan. Correct. Okay. Ambassador, Verna, Ciaz, Honda City. These are sedans. Okay. Sub 4-meter sedan means a sedan whose length is less than 4 meters. Okay. Desire, Hyundai Accent. What else is there? Amaze. Yeah, Honda Amaze. Then what do we have? Hey, Ciaz is not sub 4 meter. Mukku fellow. It's big car. It's almost 4.5 meters. What else we have? Yeah. Figo Aspire was there, but now Ford went out of the country, so that's not there. So all these are sub 4 meter. This one, Tigor, Tata Tigor. All these are sub 4 meter sedans. Okay. Due to the indirect tax benefit, they keep it under 4 meters. Got it? Indirect tax will be very less. They'll save it in lakhs. Anyways, so in that particular segment, first it was started by Tata. Okay, Tata Indigo. First he started that segment, but then eventually, who has become the king of the segment? Maruti Suzuki Swift Desire. You understand the point? Not the one who has started the segment. That's why always when you try to do something in oligopoly, automobile sector is also oligopoly. So when you try to do oligopoly, you should always understand the reactions of your competitors. That's more important. Okay, how he is going to react? Okay, in what way he is going to react? That information is also very important. Only then you can plan your strategy perfectly. Otherwise, it will be destroyed by the reactions of your competitor. Ultimately, both of you will end up losing everything. That's what happened in telecom sector. What has happened in telecom sector? Jio went for very aggressive pricing. Everybody has to follow the same. Otherwise, all the share goes to Jio because it's a identical product. Then what everybody has done? Everybody has followed the Jio's footprints, and at one particular point of time, everything was so less that all the telecom companies were running in losses. Are you able to understand? So at one particular point of time, everybody has to increase it. Otherwise, they can't survive. It's as simple as that. Got it? All right. That's the problem with oligopoly. That's why what they do is that instead of going for pricing strategy, they go for non-pricing strategies. In so many places, they become a syndicate and they will not fight on the basis of the price. They'll have an understanding. Rather, they'll fight on non-price things, like for example, improving quality, improving after sales service. Through that, they will try to attract the customers. Are you able to understand? Advertising, sponsorship, loyalty schemes. What? You go to this future group, that Big Bazaar, Brand Factory and stuff like that. They'll give you those points and all that. You go to Arrow, Louis Philippe and all these brands also. They'll give you those points. Reason? Loyalty schemes. When your birthday is there, they'll give you 25% discount, 40% discount and stuff like that, isn't it? That's what. They try to fight, not based on the price, but based on something else. Are you able to understand? And even when it comes to pricing strategies also, there are certain strategies in oligopoly. First one is predatory pricing. I think I told you this. What is predatory pricing? You try to price a product in such a way that your intention is to kill the existing competition. Just because the existing competition size is relatively less when compared to you. Otherwise, you can't kill them. Because if you are trying to kill a competition who is similar to your size, then indirectly you will also kill yourself. It doesn't work that way because he will also withstand. Only when the competitor size is relatively less when compared to you, then only if you go with a predatory pricing where you will price your product less than the total cost. Sometimes even less than the marginal cost also. It depends upon in what way they want to kill, how fast they want to kill the competition. You got the point? Yes, all of you. Right. That we call it as what, Nana? Predatory pricing, which is absolutely illegal. That is the reason as the customers, we have to be aware of things. Okay, suddenly if somebody comes in the market and then he suddenly gives it at a very low price, we should be very attentive. Are you able to understand? If customers are not attentive and if they fall into that pit, then eventually what will happen? Everybody else will get killed down and tomorrow this guy will become monopoly and he'll keep whatever the price that he wants. In so many markets, this has happened. Got the point? Yes. Next one is limit pricing strategy. Limit pricing strategy means usually this happens in case of premium products. Premium products means, like for example, you price your product very high. Okay, and you have entered the market. So, and you have started doing well. Then what will happen? The competitor will see from outside, and he sees that okay, this guy has priced this product at so and so price, and he will calculate the cost. He'll have all the information. Okay, and then he sees that there's a lot of profit. It's a very tempting business opportunity. Then what he will do? He'll try to enter the market. Now you are inviting a competition. As long as your market seems so profitable, it will keep on attracting new guys. Are you able to understand? If they keep on coming, then your business becomes very difficult, correct? So therefore, what you do is that you try to reduce your price suddenly. Are you able to get me? With an intention to stop your competitors from entering. Samjha? That we call it as what? Entry forestalling price or limit pricing strategy. And this one is pretty simple. What is that? Cost plus pricing. That's a normal thing that you already got this. Bol rahe? Okay, chalo. Now tell me, what are the unique features of oligopoly? You have few firms, they produce identical products, and when you try to price a product or release a product, you will not only think about your cost, but also you'll think about what your reactions of your competitor will be, correct? Then if a particular company increases the price in oligopoly, it will not be followed by others. Whereas if it reduces the price, it will be followed by the others. What else? Pricing strategies in oligopoly. Hmm. Nana? Honestly speaking, I felt it so many times. Honestly, yes, yes, yes. Anyways, done. Chalo, now see here. Now let's move on to the next one. What is the next one after oligopoly, guys? Pricing policy. What is this pricing policy? See here. A pricing policy should be in such a way that it provides an incentive for adopting improved technology and maximizing production. So he's just giving you some conditions of how a pricing policy should be. Okay. Second one is it should avoid adverse effects on the rest of the economy and promote what, Nana? Experts. Means when you try to price your product, you should price it in such a way that it is competitive in nature. Thus that when you try to export it, it will go to the other country and there it will be able to compete with the local products over there. That is one condition. Other condition is that it should avoid adverse effects on the rest of the economy. Means what? That's what. If somebody comes into the market, suddenly goes with some aggressive pricing with an intention to kill the competition, then what will happen? It will have adverse effects. Are you able to understand? Like that, you cannot price your product that aggressively. Your pricing policy should have these clauses. That's what he's trying to say. Okay. Provide an incentive for adopting improved technology and maximizing production. Means if at all you say that I want to get a new machine, I want to import a new machine because it's of the latest technology and it will manufacture more units with less inefficiency and stuff like that. Your pricing policy of your company should be in such a way designed that it should encourage these kind of decisions. Are you able to understand? Which means adaptation must be encouraged. Got it? So it's not that important, just to have an idea. If at all you try to fix a pricing policy, you fix a pricing policy in such a way that it satisfies all these conditions. That's all. Got it? All right. Now see here. Next one is what, Nana? Price customization. Customization means what? You'll not sell at the same price to everybody. Okay. You'll try to sell it at different prices based on different reasons. What are those reasons? That's what it is here. First one is product line. Product line means what? Depending upon what kind of a product you are trying to sell, your price will be different. Correct? For iPhone 15 GB, 16 GB, the price will be different. 32 GB, the price will be different. Correct? Basic things only. Customers' past behavior also can be a crisis for price customization. Correct? If you know a customer, he is a loyal customer for you many a times and he has already taken things on credit and he repaid it back, then banks also will give them loans on low interest rates. Correct? That's because of your past behavior. So your past behavior is really good, more will be the discount, which means you're going to sell it at a different price. Correct? Demographics means what? India has got demographic dividend, means what? Demography means basically it talks about your age. India has got demographic dividend means we have got the major youth population. That's what it means. Dividend means advantage of the demography, right? Arey. Ah. Age of the population. Okay. So demographics means based on the age, you'll be trying to giving them a different prices. For example, senior citizen will be given a different price. Correct? In many of the situations in our country, military personnel will be given a different special price. Similarly, women, similarly, children. Correct? All these are based on demography only, na? Yes? Right. Time differential. This you have seen in your broadband. If you take broadband connection for 1 month, what he will say? Sir, 1500, sir. And you need another 1500 for installation. Correct? If you take 3 months, he'll say installation free. And he'll say 1 month comes free and stuff like that. Isn't it? That's based on time differential. He's giving you a different price. And finally, legal factors. Legal factors means, for example, in union territories, cars will be very cheap. Correct? In Pondicherry, it is very cheap. So people go from here to Pondicherry and there they create a fake address, they register the car and they keep on roaming the entire state. Correct? Yes. Reason? Exactly. NCT means National Capital Region. There also it is very cheap. Correct? You know it, right? All those things. Legal factors. Got it? Yeah. All right. All these are simple topics, Nana. That's what. We are reading it because it's there in our syllabus. That's all. Okay, next, price sensitivity. Price sensitivity means what? Price sensitivity means what, Nana? You as a customer, how sensitive you are with respect to the price fluctuations in a product. That is the logic. Are you able to get me? Yes, that's what we are trying to understand right now. Now let's start with the first one. What is the first one we have? Unique value effect. Unique value effect means what? The more unique a particular product is, the less will be the price sensitivity. Means what? If a product is very unique, then even if the price gets increased, still you will buy because of the unique experience that that particular product provides. Correct? Yes, right? So in that case, we call it as price sensitivity being less. Means even if the price of the unique product increases, still you will eventually buy. Okay. Next, substitute awareness effect. If you are aware of the substitute, then price sensitivity will be high or low. You people answer. If you are aware of the substitute, then price sensitivity will be high or low. High. Why? I know the substitute. If this price increases, immediately I'll jump to the substitute. Correct? If you're not aware of the substitute, then price sensitivity will be low. Because even if the price increases, I don't know the substitute. So still I have to buy this to satisfy my needs. Got it? Yes. Difficult comparison effect. This is pretty much similar to substitute only. Difficult comparison means what? If you're not able to compare your product with something else, what does it mean? You're not able to create a substitute. So if the comparison is difficult, then it means you can't create a substitute. Therefore, price sensitivity will be less. Yes. If your comparison is easy, then you'll easily identify the substitute product. Then if this price increases, immediately you'll jump to the substitute product. There ends the matter. Got it? Total expenditure effect. What do you mean by that? Total expenditure effect. No idea? Everybody. Okay, it's okay. See, you have a toothpaste, Churili. Let's say this month he's using Dabur Meshwak. You used it? Okay. Everything you would have used. Hello. So, Churili uses that. What is that? Dabur Meshwak. Okay. 150 rupees, let's say it is. Suddenly its price has got increased to 300. Will he buy? He'll buy if he wants to buy. It will not affect him that much if he's sticked on to that particular product. Why? Because Churili is already a CA and he's earning a salary of 1 lakh. 350 is nothing in front of it. Correct? So the expenditure is what? Pretty manageable. Yes. But suppose Churili got married. Look at his face. Glowing like a 1000 watts bulb. Okay. Right. Okay, Churli, it's okay. That day also will come. I'll also come to see you last laugh. Okay. Right. Now, see here. It's okay on the lighter side. Now, see here. So, Churli wants to buy an AC. AC, okay. And the price was around 50,000. Let's put it this way. It got increased by 30%. From 50,000, it got increased to 65. This might affect his decision, correct? Why? Because the expenditure is pretty much, high, is pretty high when compared to toothpaste, correct? So this is what we call it as total expenditure effect. So when the expenditure of the product that you're buying is pretty small in proportion when compared to your earning capacity, salary and stuff like that, the price sensitivity will be less. Okay. But when the expenditure is pretty having a major chunk of your salary earnings, then that will have higher sensitivity in your decisions. Are you able to understand? So your price sensitivity will be very high. Yes. Next, sunk investment effect. What do you mean by sunk investment? Sunk investment means what? Okay, okay, cool. I'll give you an example. Take one. What the name? Your name, Nana? You, yeah. Helen, right? Helena. Oh, Helena. That Vikram song is there. That only, na? Helena? Correct. Yeah. Okay. Okay. Right. Now see here. Okay. I forgot the example. Right. Okay. Helena. Right. See here. Wait, I'm in the flow of explaining the example. Don't disturb that. Okay. Chalo. Now see here. Helena wants to buy a Skoda car. Okay. Let's say Skoda Superb. Superb is there. Okay for you? Right. A Kodiak will go. Yeah. Okay. Skoda Superb. First of all, she don't know. I think so. Right. Whatever it is, car ultimately. Right. So Skoda Superb. She has bought it. Let's say the car is costing, I think 45 lakhs it will be. Okay. She has bought. Now the car is superb and all that. Then something happens. Clutch is gone. What something I don't know, but clutch is gone. Okay, she goes to the service center and they say that 2 lakhs for what? Clutch. She knows that it is highly overpriced, but still she has to what? Pay that money and get the clutch. Reason? Sunk investment of 45 lakhs. So because of sunk investment, your price sensitivity will be less, or it will be forced to be less. Able to understand? I also personally experienced. Yeah, obviously. Yes, of course. Are you able to understand? So once you have put an investment on a car or a bike and that's sunk, as a result, the spare parts and stuff like that, even if it is pricier, still you have to buy. And your price sensitivity towards them will be less because of the sunk investment. Are you able to get me? Yes. All of you? Chalo, next. Price quality effect. That you know. The greater the quality, lesser will be the price sensitivity. Lesser the quality, greater will be the price sensitivity. If it is a high quality product, even if you increase the price also, still people will buy. So price sensitivity is less. If it is a low quality product, a little bit of change in price also, people will stop buying it, which means higher price sensitivity. Correct? Next. Inventory effect. What do you mean by inventory effect? If you can have a particular product as an inventory, then its price sensitivity will be very high. If you can't have a particular product as an inventory, then the price sensitivity will be very low. Means, for example, I think all of you like gold, correct? Not KGF, Ray. Gold. Gold ornaments, Ray. Gold. Okay, gold bars. Okay, fantastic. Right. Okay, see here. Can you keep gold as an inventory in your house or banks and stuff like that? Yes, you can keep it. So because you can keep it as an inventory, suppose gold price increases tomorrow, like anything, what you will do? You'll stop buying it, which means you are being price sensitive. Suppose gold price all of a sudden falls down. Suppose all the companies have started performing really well post corona and everybody started investing back in the stock markets and nobody is willing to buy gold. What will happen? Gold price then it will drop. Correct? Then you will all of a sudden buy it and keep it in stock. Correct? What is this? This is called price sensitivity. Because you can keep it as an inventory, when there is a change in price, you will accordingly be highly sensitive. When the price falls, you will buy. When the price increases, you will stop your decision of buying also. Got it? Suppose our Akhil is there. He likes KFC. Okay? KFC chicken, leg piece. Now, suddenly KFC increases price by 3 times. Only one leg piece will cost you 500. Okay. Now, can you keep it as an inventory? 100 leg pieces at your home. One day I'll eat one leg piece. Doesn't work that way, isn't it? What? Right? Will it work that way? No. Isn't it? Why? Because you cannot hold it as a inventory. In that case, even if the price increases, if you want to satisfy your need at that particular point of time, you still need to buy it, no matter how much the price is. Correct? So which means if you cannot have something as an inventory, the price sensitivity will be less, because you will buy eventually because there is no other choice for you. But if you can have something as an inventory, the price sensitivity will be high because you can hold it as stock. Got the point? That's what price sensitivity is all about. When I was explaining you all these things, all the examples, did you note it down in your power notes? I've seen some of them noting down. What about others? You will remember this after 20 days also. First of all, after 20 days, if I ask you pricing decisions, you will say, sir, is there a chapter like that? How many of you have noted? Raise your hands. Let me see. Now I am impressed. Good. Very good. This was more than my expectation. Right. Chalo, anyways, done? Okay, it's just a refreshing break. Okay, we have important concepts to cover. Just now I'm gonna come to pricing methods. That's the most important part. Okay, right? We need to finish them off. Okay, take some refreshing break and be back. Try to be back in 10 minutes. 10 minutes here. Go to the most important topic. The most important topic of this chapter, Nana, pricing methods. Take that. Right. So how many pricing methods we have? So we have 3 over here. Competition based. What is the next one? Cost based, and the third one is value based. Cost based, it is nothing, Nana. What you will do, you'll just calculate your cost, you'll add some profit markup, and you'll have your selling price. Cost can vary, like it can be variable cost or marginal cost, or it can be what? Total cost, whatever it is, ultimately. These two are important. One is competition based, the other one is value based. Under competition, we have two: going rate pricing, sealed bid pricing. Under value based, we have again two: TEV. TEV means true economic value. The other one is perceived value. Okay. So 1, 2, 3, 4. These 4 are important. Cost based, nothing. Because basically cost based means what, Nana? Cost plus profit markup. This cost can be marginal cost, total cost, standard cost, variable cost. You got it? It can be anything. It depends upon the situation. Yes? Hold on, Nana, all of you. Right. Now, let's start with the first one, competition based pricing. Under that, we'll start with going rate pricing. Ready? Yeah? What is this going rate pricing? I already told you. When your selling price is equal to average level charged by the industry, which means suppose you have 10 players in the industry, each and everybody has got a different selling price. You take all those selling prices, you divide it with 10, you average it, then you get the selling price. And if you keep your product that selling price, then you are actually following what? Going rate pricing. Now the biggest question is, why would you do something like that? Why would you want your selling price to be average of all the selling price that has been charged by the market? Well, the answer is very simple. When you don't know what your cost is, when you are not able to measure your cost, then you don't have any other choice but to keep some selling price based on the average selling price that is being charged by the market. Are you able to get me? Arey, not only that, suppose you don't want to disturb the industry's harmony, means an industry is going in a particular way. I don't want to disturb the entire industry with the help of my aggressive pricing. Then what will I do? Simply, I'll fix the selling price, which is equal to whatever the price that is being charged by the market already. Got the point? Right. Also, you will do the same under highly competitive conditions. When the competition is very severe, simply what you will do is that whatever your competitors are charging, you will also charge the same. Pretty simple. And also, this will work only when all of you guys are selling the similar kind of a product, which we call it as what? Homogeneous product. Suppose all of you are selling heterogeneous product, then it doesn't work. Then how will you price your product based on what your competitors are pricing? It doesn't work. It works only when you and your competitor are selling the same product. Exactly. Homogeneous products. And also, a firm has got no real pricing decision to make. Okay, in those kind of situations, they will go with going rate pricing. Okay, and in this kind of situations, the major challenge for any company is to control the cost. Why? Because they have no control over the selling price. Why? Because your selling price you are not fixing, you're just accepting the selling price that is being fixed by the market. In what way? You're just taking their multiple selling prices, you're just trying to average it, and thereby you're trying to fix your selling price, which means, is it under your control? No. Therefore, the only factor that you want to bring under control will be what? Cost. Because anyway, selling price is out of your control. Got the point? Yes. The best example for this kind of market is what, Nana? Pure oligopoly. Got the point? So this is going rate pricing. What is the next one we have? Sealed bid pricing. First of all, tell me one thing. What do you mean by sealed bid pricing? You are doing in your firm, Nana, when your auditor wants to have a concurrent audit, what he will do? If you are trying to get a concurrent audit for the first time, what they do? They'll prepare a quotation and then they'll seal it and then they'll apply, isn't it? Like that, multiple quotations, that particular bank or whoever it is, they will receive and they'll finalize one. Mostly it will be based on the lowest price, correct? So if your pricing in the quotation is aggressive, then there is a high probability that you will get the concurrent audit, correct? Same thing will happen in terms of tenders, that when a government calls for the tender, let's presume that it is happening in a genuine way. Okay. In that case, what will happen? If a government calls for a tender, everybody tries to give their selling price, which is nothing but bidding price, correct? Yes, that is nothing but sealed bid pricing. So when you try to go through this sealed bid pricing, let's talk about our firm because we are in the similar profession, right? What will be the thought process of your auditor? He'll be thinking that what is the general market price, which means generally all the other firms also, they'll put the quotation for the bank audits, correct? The concurrent audits or whatever it is, statutory audit. So they'll start thinking, okay, how much can be their pricing? In what way I can undercut, correct? Because the intention is to get the contract, get the audit. Are you able to get me? Even though you have an intention to get the audit, as a result, you want to price it very aggressively by thinking about what your competitor might be pricing. Still, you will not price it below your marginal cost. Are you able to understand? Yes. Now let's have a look into this. Sealed bid pricing. Firms compete on the basis of bids. I have given the example here as original equipment manufacturers. Means what? Who are original equipment manufacturers? Moku fellows, you have changed this again. Moku fellows. Again, I have to adjust. Huh? You say him, he'll say you. I'll become buffoon in the middle. That's what. Now I've observed, therefore I've adjusted. Okay, let's put this side. Right. Bit up. Okay, it's going down. Bit down. No, it's okay. Anna, sometimes if I'm not clear in the image, here there are two idiots. They are responsible. I'll find out their name and then I'll tell you. Okay. Okay. Oh, he understood now. No, it's going reverse actually. Hello. Done? Okay, cool. Original equipment manufacturer means you would have heard about this in your indirect taxes. Have you heard? For example, ACs are getting manufactured, correct? Who will manufacture ACs? Some machines, the big machines inside the company. Who will manufacture those machines? Nobody will manufacture and sell. Okay. What will happen actually is that, suppose you are a Coca-Cola company and you want a big setup of a machine which manufactures those cool drink bottles in a swift way, which you can see in YouTube videos and all that. What will happen is that they will invite for bids, that this is my requirement, and those experts will come, the experts of the respective company, and they will understand your requirement. Okay. And they will start creating the equipment at your location, just like building a house. It's much more complicated than that. Let's put it that way. And they'll build the equipment in your premises. That is called as original equipment. So these original equipments also generally they will accept it in the form of bids only, sealed bid pricing. So MNC will call for a requirement, and then all these guys who have got expert in that particular area, they will put the bids, and finally one bid will be selected. Got the point? Yes. The best example you can also write concurrent audits of banks. Yeah. Bid is the offer price, obviously the selling price. Now see here, as I've explained you already, pricing will be based on how competitors will price rather than your own cost. That does not mean that you will price it less than your marginal cost. Maybe in rare scenarios where you want that particular project to come to you because that will increase your goodwill or that will help you bring other projects or something like that, you might price it less than your total cost. But never ever you're gonna price it less than your marginal cost. Okay. Because the objective of the firm is to get the contract. It hopes to set price lower than the competitor. So they will hope. Whether it works or not, it's a different thing. Because your competitor also will think the same way. Yes. All right. But pricing cannot be below marginal cost. I've clearly told you here. Got it? Yes. Fantastic. Now come to the other one. What is the other one? Value-based pricing. Under value-based pricing, we have two. What are they? True economic value, or what is the other one? Perceived value. Let's try to understand the first thing. What is the first thing we have? True economic value. What is this true economic value? Let's try to understand. It is a measure of benefits that a product is intended to deliver relative to other products without giving any regard whether the customer can recognize these benefits or not. In other words, true economic value is equal to cost of the next best alternative plus value of performance differential. So, samjha? I know. Don't worry. That's why I gave an example. Now, see here. So, what is the definition basically? It is a measure of benefits that a product is intended to deliver, which means a product is expected to deliver. Suppose Honda Activa bike is there. What is it expected to deliver? How it rides and stuff like that, mileage, braking, performance, etc., etc. Relative to other products, how it is delivering with respect to other products, without giving any regard whether the customer can recognize these benefits or not. Means what? I try to sell a bike. When I try to fix the price of the bike based on the performance of the bike, based on the benefits that it is intended to deliver, which I know as a manufacturer. The same thing, the customer may recognize it or not. There are both the possibilities. Are you able to understand? But without giving any importance to that, whether the customer can recognize these benefits or not, if I try to solely price the product of my, bike, whatever it is, if I try to price the bike solely based on my intention in the sense which is facts, okay, which the bike is intended to deliver, then you call it as TEV, true economic value. Mostly Mahindra products are based on true economic value only. All the Mahindra products, especially the cars and the bikes and all those things. So what Mahindra does is, initially, of course, they go with an aggressive pricing. That's a fake pricing only for first 1 month or 2 months or 3 months. After that, the actual pricing, if you see them, once their product get established, it's purely based on TEV. Are you able to understand? Now, if you can see the equation, it is TEV is equal to cost of next best alternative plus value of performance differential. So what is that? Let's try to understand. Now see here. Suppose Honda Activa is already there in the segment. It is there in the market. Okay, it is the king of the segment. Okay. Now let's say TVS is planning to bring in Jupiter. They have done all the R&D and Jupiter bike is ready. Now the only thing that is left is the pricing decision. What price, should we launch? At what price should we launch Jupiter? After doing lot of thought process, they have come to know that, okay, we will price it based on TEV. What is TEV? True economic value. You already know TEV is nothing but cost of the next best alternative plus value of performance differential. So how it works, let us see. We'll take some parameters. For example, let's take engine first. Now, everybody knows that Honda engine is actually better. So because of that, the value of performance differential, let's say for Honda, is plus 1000 rupees. Means that engine is better. So therefore, it gives a little bit of better performance. For that, the value that we are giving as an example is how much, Nana? 1000. Now we'll take another parameter, ground clearance. Now Jupiter has got a better ground clearance because of bigger tires and all that. As a result, your driving experience will be a lot more smoother, especially on Indian roads, correct? Therefore, we'll give some 250 rupees value to that advantage. Suspension, Jupiter has got a better suspension. Are you able to understand? Of course, now the latest generation Honda Activa is fine, but till previous generation, it was having Moku suspension in the front. Many people don't know that, because what we do in India, you buy, I buy, everybody buy. Okay. So what? We don't get into the technical aspects and all those things, right? So therefore, suspension also, which one is better? Jupiter is better. Tire size, Jupiter has got 12-inch tires and all that. Honda still goes on 10-inch tires. Therefore, that is also better over here. Therefore, let's give some 300. Fuel, here I'm talking about fuel comfort. Okay. Because Jupiter was the first one to come with external fuel filling, correct? Honda was not having that at that particular point of time. Therefore, what will happen? Whenever you want to try to fill up the fuel, you need to get down, open your seat, open the cap, and then put it down. Okay. But Jupiter was not like that. Just push off a button, it used to open. The petrol guy itself, he'll pour the petrol and then he'll close it. A lot more comfortable. So I gave additional points here. Let's say that comfort is 100 rupees worth. Yes. Windshield. Jupiter Classic has come, that has got a windshield also, isn't it? So when you go on highways, it will do very good amount of wind deflection. That is also a comfort, correct? Again, Jupiter, let's say we have given 200 rupees value for that performance differential. Performance differential means what? Difference in performance. For that, we're going to give some value. So I gave all these values. Finally, the value of Honda Activa was 1000 positive in comparison to Jupiter. The value of Jupiter is 1350 positive. Ultimately, the value of performance differential is how much? 350 plus for Jupiter. Let's say cost of the Honda Activa is 60,000. Then you can price Jupiter at how much? 60,350. That is what TEV is. Cost of the next best alternative plus value of performance differential. Got the point? Here. What is cost of next best alternative? It is the cost of the comparable product offered by some other company. In this case, it was Honda Activa. And also, a product of one company may be superior to the next best alternative in some areas and inferior in other areas. So it's not like your product will always be superior. It can be superior in certain areas. It can be inferior in certain areas. So that we'll have plus and minus performance differential, and finally we'll net the effect. Yes. Now come to the definition and see again. So what is TEV? It is the measure of benefits. Now we have measured all the benefits. That a product is intended to deliver, right? Relative to others, we have measured it relative to what? Others. Who is the others here? Honda Activa. Without giving any regard whether the customer can recognize these benefits or not. Correct? Till I have explained so far, do you know? Do you expect all the customers who are buying to know that? No. Are you able to understand? That's the beauty of TEV. Yes or not? All right. That's the most important thing. What is the definition of TEV? It is the measure of benefits that a product is intended to deliver relative to the other product, irrespective of whether the customer can recognize these benefits or not. TEV is equal to value of performance differential plus cost of next best alternative. What is value of performance differential? Any particular product of any company can perform better in some areas when compared to the other product, or can be inferior in some areas when compared to other product. Got the point? Yes. Now let's do a small question over here. See here. A company wants to buy a system for a single year. Okay. Yeah. After which it will be scrapped with plans to use it for how many hours, Nana? 2500 hours. So you have particular system X and system X square. Operating cost per hour is given. You know system X square is costly. Probability of system crash. System X square is very less. System X is very high. Price system X is given. Now we need to figure out the price of system X square by following TEV. There is some additional information also. Find the TEV of system X square if the cost of system crash is how much, Nana? 1 lakh. Are you able to get me? Now very simple. How many hours you are operating? 2500 hours. Who is costly here? System X square. By how much? 2 rupee 50 paise. So 2 rupee 50 paise into 2500 hours. How much it comes? 6250 negative. For whom? System X square, because it is costlier. Esa what? It is costlier. Are you able to get me? Yes. Alright. Now, when it comes to system crash, what is the probability of system X square? 0.5%. System X, 10%. So it is 9.5% less. And in case if system crash, what is the cost? 1 lakh. So 1 lakh into 9.5% will be a benefit for system X square. Correct? 1 lakh into 9.5%. How much? 9500 plus. You take the net. What is the net value? I think 9500 minus 6250. Kitna re? 9500 minus 6250. How much? 3250. Yeah? 3250 is value of performance differential for system X square plus cost of the next best alternative. How much is that? 37,500. So what can be the price of system X square? 40,750. Very simple. Right. Okay. What is the last one in the pricing method that we have? Perceived value. Now, perceived value is very simple. Perceived value is what the customer feels the value of your product is. In other words, perceived value is the price that the customer is willing to pay. Are you able to understand? If your goodwill is good, your perceived value of the customer will be greater than the TEV of your product. If the goodwill of your company is bad, then the perceived value will be less than the TEV of your product. So my first bike was Mojo. Yes. uh, Perceived value, that is the value that customer understands that the product delivers. That's why Honda products are always overpriced. You take any Honda product, it is actually overpriced. But still people feel that it's value for money and then they buy. Why? Their perceived value of the product is very high because of the brand image. Are you able to understand? Right. It is the price that of the product that the customer is willing to pay. Now, when I got Mojo, that was the problem. It was a very good bike. The tires were Pirelli tires, upside down forks, the engine were liquid cooled and all that. But then people did not buy it and it became a flop show. Reason, he priced the product based on TEV, true economic value, but the perceived value of the customer on the Mahindra two-wheelers were very low. So according to them, it was overpriced and eventually it became a flop. I'll tell you the fun part. The same engine, the same bike was tweaked and was launched with the name Java. And all the fancy features were removed. The Pirelli tires, Pirelli Diablo Rosso 2 tires, when I bought Mojo, a pair of tires is 20,000 rupees. It was replaced with MRF tires where the pair is 6,000. Okay. And the rear disc brake were removed and the liquid cooling was removed. Even the engine is little bit detuned. Are you able to understand? Upside down forks were removed. All the fancy are removed and then it is still priced a little bit on par and people went gaga over it. And it was a blockbuster hit. Understand that? This is how it works in the market. EV, perceived value. Because for Java, the perceived value was very high. Are you able to understand? Same engine again. Same engine. Everything was same. It's the same company, Classic Legends, which is a subsidiary of Mahindra. Same company has released SD now. Again, same engine. Able to understand? That's how it works in reality. Okay. Perceived value and true economic value. Anyways. Got this? Rightful. Now, let's move on to the next one. What is the next one we have? Pricing in periods of recession. I hope we all have tasted recession. In which year? 2009. And we are about to taste one. It will come. Okay. Right. Now, the point is, as you can see here, in periods of recession, you will price your product less than total cost, but greater than marginal cost. Very, very, very important this is. You will not price it less than marginal cost. Yeah. And that too, you will not do it for a permanent time. You will do it for a limited period only. So the biggest question is, why should we do it this way? Why should I price my product less than my total cost in the period of recession? See, the point that you guys need to understand is, generally in recession, what happens? The purchasing power of the public reduces. So they will be hesitant to spend money. You have to make them spend. Therefore, you have to show your product more worthy than what it was. Therefore, you have to be a little bit aggressive in your pricing. That's the first point. Second, from your perspective, if you don't do that, then you will not have sizable sales. If you don't have sizable sales, then you will not be able to operate your machines. And because of idleness, machines might get deteriorated. That is one particular positive for you, which means you can protect your machines from getting deteriorated due to non-usage. Second, you can protect all your skilled employees whom, if you don't do this, that is this sort of aggressive pricing, you cannot survive doing business during the recession. And if you can't do that, then you will be losing your skilled employees and they will leave your company, they'll go out. And tomorrow it will be very difficult for you to recruit them back because they are skilled. Unskilled will be easily available. Yes. And not only that, if you do this and some of your competitors, if they are not able to do the same, you can get their market share as well. And you will also earn the trust of your buyers. Yes, all these are plus points. Now see, why should we price this way? So that the firm can continue to produce. The firm can make use of services of skilled employees who are very well trained, because it will be very difficult to recruit them later if they are discharged. If you can't reduce the price like this, then you can't run your company during recession. In that case, you have to shut it down temporarily. If you shut it down, then your employees will leave your company, especially skilled employees. In that case, it will be very difficult for you to bring them back. And plant and machinery also can be prevented from deterioration due to idleness, which I have explained you already. So firm will also be able to take advantage of the improved business conditions later, which people are doing right now. Look at the restaurants. Have you observed your restaurants carefully in your local area? Look at their pricing pre-corona. Look at their pricing post-corona. At least it would have increased by 50% minimum. I don't know whether you have observed this or not. Why? Because corona is a recession time for them. They try to manage during that particular period, and whatever the loss they have suffered, they are trying to recover it now. That's the way it works. Always. Yes. But, what is the but? Care should be taken that this should not lead to drastic price cut. That's why we have told clearly that you price it less than total cost, but you don't price it less than marginal cost. Are you able to understand? Because if you try to have a drastic price cut, then your customers will get used to that. And tomorrow, when you try to increase that price, they will feel that you are looting them. We felt the same with Uber, right? Especially Uber. You remember when they have launched how their pricing were, and now what is the pricing? Are you able to understand? Now most of the people, they're not using it, unless it's pretty rare. I think so, at least. Okay, once upon a time when you compare. Got this? All right, next. Pricing below marginal cost. Next concept. Just now I told you, not only now, when I told you sealed bid pricing, when I told you pricing in terms of recession, specifically I was stressing on one particular point. What was that? Never ever price your product below marginal cost. But there are certain exceptional situations where pricing your product below marginal cost is also justified. How does that work, sir? See here. Suppose your materials are of perishable nature. Especially our farmers will face this. Okay. What do you mean by that? Because their produce is perishable. For them, they don't have a cold storage unit, unfortunately. To be very honest, if we don't have these caste differences, religion and region stuff, all these differences, every village, what these guys can do is that they can put together money, they can pool the money, they can have a cold storage setup in a particular village. Are you able to understand? And whatever the produce that they have, they can happily store it there unless they get a requisite price that is fair for them. Everybody can do that all over the country. Not only that, unless the law restricts them, to be very honest with you, right? If the law restricts that they can't sell outside whatever that they produce, just like manufacture, then that's a stupid law, to be very honest. Are you able to understand? So if law is not restricting and if they can do this, then I think we all can become farmers unless the nature is against us. It's a very profitable thing to do. Are you able to understand? This food is going to be the major thing in future. Got it? Yes? All right. So, but unfortunately for them, that's not there. Therefore, their products are perishable. Therefore, whatever the price that is available, which the middlemen will artificially create, they will sell it. Able to understand? So even a company also will face the same situation. If they have a perishable good, they have to sell it at whatever price that they, can come up with, even though it is less than marginal cost. Because if you don't utilize this opportunity right now, that also will not come. Eventually it will perish and the value becomes zero. Are you able to understand? So in this case, is it justified to sell at a price less than marginal cost? Yes, it is. And if you have large amount of stock, suppose there is a situation where suddenly you've got huge amount of stock. Pre-corona situation, Anna, the business was booming like anything. You have got a lot of stock. Suddenly corona has come, business is totally zero. What will happen? The storage cost itself will be so high that you will be forced to sell your product at whatever the price that is available, even though if it is less than marginal cost. Because if you don't do that, you can't bear this carrying cost. Are you able to understand? Yes. Also, in some situations, to popularize your new product, you will sell it at less than marginal cost. Advertising. How, sir? Very simple. Suppose Dabur has got a famous product, almond oil. Now it has got almond shampoo, for example, but nobody will buy initially. So what it will do, if it is confident about the product, it will give it as a free sachet. Free means obviously you're trying to sell it at below marginal cost only. No logic. Are you able to understand? Yes. Or otherwise, sometimes what they will do is that they'll give you combo products. One product 100, that product suppose it is also 80, but the combo will be 130 only. The additional. Sometimes they'll come to your home and they'll give you free samples. Sometimes in the supermarkets also at the billing area they'll have free samples. For all this, when you say free, definitely they're selling it at less than marginal cost because they're not getting anything. So the logic there is to popularize the product so that tomorrow once you like it, once you use it, if the product is good, then what you're using right now, definitely you will start buying it. It's as simple as that, isn't it? Yes. Example I gave you, see here. It may help to boost the sales of other product having larger margin. In real life, who has done this? Gillette. Not Fusion, na. Gillette strategy itself is like that only. Their main product is there, na. They'll sell it at loss only. Are you able to understand? Less than marginal cost, yes. Where they will get the profit? When you start buying their accessories, the other things like the aftershave lotion or the blades. Sorry, the blade which you buy separately, not the entire razor. You see, those blades will be very costly. Yes, exactly. Are you able to understand? PlayStation also, it's the same philosophy. Sony PlayStation. How much is PS5 right now? PS5 or PS6? PS5 right now. How much is the cost? 45 or something. Do you think 45 is gonna be his actual selling price? Actually, his cost will be way more than that. He's selling to you at 48. Are you able to understand? He's actually selling at a loss. Then where are they going to recover all the profits? From the games. Lot of business models are like this only. Their main product will not give them anything. They try to get the money from the other products whose sales will depend upon this main product. Are you able to understand? PlayStation business is like that only. If you buy PlayStation, they will not get any profit. In fact, it will be at loss only. Once you start buying the games, from there they'll start enjoying profits. Got the point? Yes. Cool, Ray. Right. Chalo. With this, we'll wind up the session today. What is the next one? Strategic pricing of new products. Now listen carefully. Now, please try to understand. Many of the students, they keep on asking me this doubt. There are two things. New market, new product. Both are different. Are you able to understand? New product means what? I'm creating a new product and then I'm trying to launch. This is different. New market means what? Same product, but I'm going to launch it in a different market. So both are different. You should not get confused. Clear? Now, new product. Now we are talking about new products. So ultimately, your products can be classified into three. What are they? Revolutionary, evolutionary, and me too. So revolutionary means it will change the whole scenario of the market. The best example is when the first iPhone got launched. It was a revolutionary product because till that time we don't know what apps are, what apps can do, how it can revolutionize. Today it is a new normal. But imagine that day. I think at that time Nokia was using Symbian operating system and all that. Are you able to understand? Way premature they were. But all of a sudden iPhone has come into picture. It revolutionized everything. So that's a revolutionary product. Always revolutionary product will change the dynamics of the industry. It comes after a result of lot of R&D and therefore it enjoys a premium pricing. That's why till today iPhone enjoys premium pricing. You understand the point? That day it created that niche segment and still it is continuing. Yes, all of you. So revolutionary product always deserves premium pricing. It is a reward for the risk that they have taken. Are you able to get me? Yes. What about evolutionary product? It comes after the revolutionary, but it is a better version. Android, for example. Are you able to understand? It has already seen the way iOS apps and all these things were doing their job. But what Google has done, they have come with a better version, which is not restrictive in nature, and they've given it free to all the manufacturers, isn't it? And now it has become affordable. It's more user friendly, isn't it? Yes. You see our products also. For example, you want to buy my classes, Google Drive classes. It's available only in what? Windows and Android. It's not available in iOS. Are you able to understand? Why? Because it's very difficult for us to create a kind of encryption software for that. Of course, we don't do that. There are some software vendors in the country. We try to purchase from them. And we pay royalty on every single sales. That's the way it works. Are you able to get me? Yeah, all right. Anyways, because as a CS, what do we know about software, Nana? Don't know anything, right? What do we know? You know anything about C language? The language. That's all we know. Yes. Right. Okay, chalo. So what is evolutionary product? It is upgraded version. It adds few additional features and the pricing will be based on competition. Are you able to understand? Here I gave some examples, Vitara, Brezza and Zomato. For revolutionary products, what are the examples I gave you? iPhone, Tesla, Ford EcoSport. iPhone you already know. Tesla also, it's a revolutionary. Ford EcoSport is also revolutionary only. It created that segment. Sub 4 meter SUV segment was created by Ford EcoSport. But now that itself is not there. Everything is like that only. For example, Duster created compact SUV segment in the country. Now where is Duster? Barely breathing. Okay. Ford EcoSport created the sub 4 meter SUV segment, which means SUV less than 4 meters. Are you able to understand? But who is ruining the market right now? As of now, it is Tata Nexon and Vitara Brezza. They are ruling the market. Okay. But it was kickstarted by EcoSport. Got the point? Right. Anyways. Now, even evolutionary product. Now, you see, Swiggy kickstarted things. In fact, Food Panda was the first one. Correct? Food Panda. Where is Food Panda now? Are you able to understand? That's what. That's why evolutionary products are also very important. Are you able to get me? Now, look at Zomato. Doing good business. Keeps giving you notifications. Isn't it? You know about Zomato notifications, right? Right. Everybody know that. Sometimes we laugh, sometimes we get irritated. Okay. Chalo, last one. Me Too product. Name itself tells you. Me Too means what? Already there are so many similar products in the market. This guy also will come. I am also there. Excuse me, like that he'll come. Are you able to understand? Any examples you can give? Here I gave Hyundai Aura. Aura means right now that Aura is not there. It is Accent. Right now it is called as Accent. Accent means that car nana with dicky less than 4 meters. Okay. Hyundai Aura and Ford Figo Aspire. It's a sedan. Of course, now it is not there from the market, but when it has come, already the segment was filled with so many cars. This guy also has come. Hi, excuse me, I'm also coming. So, Me Too product is like it can do nothing special. Are you able to understand? Already a segment will be there. Already a market will be there. Everybody will be already placed in the market. They have their own market share. This guy also will come. He will not give anything special. At the same time, he will not give anything less than what is already being provided by the market. He'll be exactly same. People who want something different, they'll go and buy him. And he will have that little bit of share. He is enough for that. Because he will also not do any extraordinary R&D or extraordinary marketing on the same. Their business strategy itself is like that. I'll do little bit of marketing, no R&D. I'll just come normally. That much of market share is enough for me. Are you able to get me? So that we call it as what? Me Too. Me Too product. Are you able to get me? Yes. Fantastic. This one was, what was this? What was this? Strategic pricing of new products. Correct? This one is, you are trying to enter a new market. While preparing to enter a new market with a new product or an existing product also, then the company will have two choices. What are they? Skimming penetration strategy and what is the other one? Skimming strategy. The other one is penetration. Very, very, very important these are. Okay. I'll just give you an idea right now. With that, we'll wind up the session. See here. Listen. First one is skimming pricing strategy. So skimming means basically what happens is that whenever you feel that you have spent a lot of money on R&D, okay, or you feel that your customers are price insensitive customers. Price insensitive means what? They are cream customers, okay? Cream segment of the market. Or you feel that you cannot assess what your sales are going to be. You can't really assess how many units you're going to sell. You have a very big uncertainty. In all these cases, you will prefer skimming pricing strategy. Skimming pricing strategy means very simple. You try to price your product very high at the beginning. Are you able to understand? Slowly over a period of time, you will reduce your selling price. That is nothing but skimming pricing strategy. The best example we can give is all flagship phones. All flagship phones. For example, Samsung S series is there. Okay, Google Pixel. What is this? iPhone, the Pro Max versions, all these. All flagship phones, they have the same strategy. What strategy? Skimming. They have a lot of R&D spent. They come with very great advertisements. They keep their price very high. All the initial cream segment will buy them. Yes. And once all these guys have bought, slowly they will reduce the price. And then the mass market will come and buy. Correct? That we call it as what? Skimming pricing strategy. Are you able to understand? So this is exactly opposite to penetration. The other one is what? Penetration pricing strategy, where you feel that your customers are highly price sensitive. Got it? Second, they are not, it's a kind of mass segment, let's put it that way. And you know that the kind of product that you are manufacturing, when you manufacture that product in great numbers, you will have a lot of economies of scale. Means larger numbered manufacturing will help you save huge cost. It's not possible for all the products. Again, please try to understand. Only for certain products it is possible. And if that is possible, you'll go for penetration. If that is not possible, you'll go for skimming. Are you able to get me? So in penetration, what happens? Exactly opposite. You'll start with a very low price. You'll have a target market share in your mind. You start with a very low price, wait for the market share to get, and once you get the market share, you'll increase the price, then you'll match with your competitors. Are you able to understand? What about skimming? You start with a higher price, you observe the cream segment of the market. Once they've bought your product, then you will reduce the price and you'll get the mass segment or price sensitive buyers. So you'll reduce it. Here it's exactly opposite. You start with the lower price and then eventually you will increase. Got the point, all of you? With this, we'll finish it off. See here, skimming pricing strategy. High price during initial period because the demand is inelastic. Inelastic means what? Even though the price increases, still people will buy. Okay. Price insensitive buyers, cream of the market. Got it? And you will spend lot of money initially. High promotional expenditure. Got it? And in the later years, price will be reduced gradually because you want to attract the mass market or price sensitive customers. Got it? This method is preferred when the demand of the product is not known with certainty. See, if you don't know how many units you are going to sell, you will go with high pricing is safe or low pricing is safe. High pricing is safe bet. Correct? When you don't know how many units you are going to sell, it's better to launch the product with a higher price. Yes. Skimming pricing strategy is preferred in case of high R&D, high capital outlay, because whenever you spend a lot of money, if you start with higher selling price, you can recover your investment faster rather than going with a low selling price. You understand the point? And penetration pricing, I already explained you. Low price for penetrating means mass markets, exactly opposite to skimming pricing. In order to popularize a new product, you can go for penetration because the price will be very less. Company may not earn any profit during the initial stage, later it will earn. In the later period, price will be increased once the demand picks up and the sufficient market share is already achieved. However, it must be noted that penetration pricing strategy is different from predatory. Predatory is different, penetration pricing strategy is different. Got it? Now see here, 3 situations where penetration pricing strategy can be used. When the demand for the product is elastic. Elastic means what? If you price it less, more sales will happen. If you price it more, less sales will happen. Anyway, under penetration, you are pricing it less. So you are expecting more sales to happen. Okay. Economies of scale. This I already told you. Whenever you go for larger production, when you with surety, when you know that lot of savings will happen, then you go for penetration. Because you will see huge numbers in penetration only. In skimming, you will not see huge numbers. Got the point? When there is a threat of heavy competition, very important point. Why? When you know that lot of competition will be coming, in penetration what happens, already your price is very low. So that will seem very unattractive for your competitors to come. They'll stop coming in first of all, which will not happen in skimming pricing strategy, because there your price is very high. It attracts people to come inside. Are you able to understand? So normally in skimming pricing strategy, what happens is that suddenly during the growth phase, they will reduce their price to stop people from coming in. Are you able to get me? In penetration, that will not happen. The price itself automatically acts as an entry barrier, because already your price will look unattractive. Why? Because you are not earning any profit. Are you able to get me? Of course, during the initial stage. Got this? Chalo, right. We'll stop the session today. Tomorrow we'll continue. Chalo. Right, guys. So let's start with budgeting and budgetary control. So, is it really important? No, it's an average chapter. 2 attempts once, probably it can be asked. So there's a 50-50 chance always. And on an average, it comes for around 5 marks. Okay. So therefore, 5 out of 10. Right? So one of the least important chapters in your entire syllabus. That doesn't mean that suddenly it may come. So that's what I'm telling you. So 50-50 chance. Got it? There is a probability that you may not get the question, or you may get for 10 marks also. That also has happened. So anyways, but it is not that big first of all. So if you look at that logical perspective, this is a good chapter. Before we consider a chapter to be important or unimportant, you also need to understand how much big the chapter is, how much time it takes. For example, there is an important chapter like MBE or LSI, which takes almost like 2 days for you to study. And let's say you get 10 marks consistently from that particular chapter, or 15 marks. Budgeting hardly takes 2 hours for you to cover tomorrow if you do revision. And even in that case, if it gives you 5 marks, are you able to understand? Or 50-50, like 10 marks or something like that, that makes it what? A better chapter. Are you able to understand? So that's the reason you should not blindly listen to all these important and unimportant things. So it really doesn't work. They'll not do this sort of calculation. They'll only tell you that this chapter, how many marks it comes, this chapter, how many marks it comes. More the marks that comes from a particular chapter, that will be important by default. Lesser the marks, unimportant. But they don't consider how much effort it takes to really master the particular chapter. Are you able to understand? Arey Mokko fellows, you understand that? So from that sense, this is pretty much a good chapter. It's not something that you should skip. It is a chapter where, because of the minimal efforts that you put, in case if you get a question from this chapter, in fact, you should be celebrating in the examination hall. Got it? All of you? Tell us. Yes. Yare, all of you. Amit? Yes? Good. Now, so let's look at the bird's eye view. We have totally 3 topics in this particular chapter. One is control schemes, behavioral aspects of budgetary control, and the third one is beyond budgeting. Yes, it's an absolute theory chapter. Are you able to understand? So you have to concentrate. Don't go out of the track. Got it? Yes? Very good. Under control schemes, we have 2 things: feedback control, feed forward control. Okay. Under behavioral aspects of budgetary control, we have one important concept called budgetary slack. Then we have 2 ways of budget setting process. One is top down, the other one is bottom up. I hope you know the names. Top down, what is the other name? Top down, what is the other name? Imposed style approach. Bottom up, what is the other name? Participative approach. Mukku fellows. Already it has been discussed multiple times and you forgot. Forgetting is constant. Remembering is temporary. Beyond budgeting. This is an important topic in this particular chapter. You need to understand traditional versus BB and advantages of BB. Got it? Already I think once a case study has been asked from this particular area. Okay, chalo. Let's start with the basics now. What is budgetary control? That's what we're going to understand first. Pretty simple. You try to control an organization's operations. How do I try to control? By setting standards or targets. Okay. Not only that, you set standards and targets not only for income but also expenditure, and then continuously you will monitor and adjust the performance against them. If you read that sentence, it is somewhere similar to what? Cost control. Correct? Cost control, which we have seen. It is also same, where you try to control the cost by setting what, Nana? Standards and targets, and then actual performance will be measured against them. Correct? Here also pretty much the same. What makes this difference is you are restricting yourself to the cost. Here you fix standards or targets both for income as well as cost. That's why income and expenditure. That's one difference. Second difference is there, once you set the standard, okay, to control your cost, and the actuals will be compared with the standard, you will just leave it like that. Here you don't do that, you will do continuous monitoring. So what's the use of continuous monitoring? For example, let's say maintenance department quarterly target is 3 lakhs, which means for 3 months, what should be the expenditure target? 3 lakhs. That is what is the standard that is given. Okay. When you look at the actual expenses, in the first month itself, it has touched 1,50,000. Are you able to understand? So when you do continuous monitoring, immediately you will know that if it is 1,50,000 in the first month, obviously you're not going to go within this budget or target, correct? Therefore, they'll try to figure out the reasons here itself. If this is wrong, which means that 1,50,000 you have incurred because of inefficiency, then they will try to take some steps such that in the second month and the third month it is under control. Or suppose if this is correct, then it means that their budget is wrong, so they will revise the budget accordingly. That is what you mean by the term continuous monitoring and adjustment of performance against them. Got the point? Yeah, right, fantastic. Okay, what is budget? Very simple. It's an estimation, obviously, of if you are estimating revenue, then it's a revenue budget. If you're estimating expenditure, it's an expenditure budget. Correct? Yes. Okay. Then budgets are re-evaluated on periodic basis based on the needs of the organization, obviously. Right? So finally, what is the summary? Budgetary control is a process with the help of which managers will set the financial and performance goals, which is nothing but standards, or you can also call it as targets. Then they will compare the actuals with the budget. Accordingly, they will take corrective action. Got the point? Suppose if actuals go away from the budgets or standards. Got the point? Yes. Fantastic. Okay, now coming on to the most important concept. What is this? Prerequisites of effective budgetary control. Already we have seen this prerequisite somewhere. Where? Target costing. Prerequisites of JAT. What are the prerequisites of JAT? How many times we have seen? Low variety of goods, defect-free raw materials, vendor reliability, good communication, demand stability, preventive maintenance. Got it? Remember that? So here also prerequisites of effective budgetary control means you have a budgetary control system in place in your company with an intention to control everything, correct? If you want the result to really happen in a positive way, which means really the control should happen, means all these conditions must be satisfied. Otherwise, you will have a budgetary control system in place, but it will not give you desired results. Are you able to understand? How is that, sir? Let's try to understand. First one, a serious attitude towards the system must be developed. Means, I told you that traffic example. You remember that? Great. I told you. What did I say? That I told you something. I told you that when it comes to India, the traffic system, people don't follow it that seriously because there is no seriousness towards the system that has been established. Unlike yours, correct? So, what is the expectation of the traffic department here? The traffic should be following all the rules and regulations. So, if you want the effective traffic system to be in place, seriousness towards the traffic system must be inculcated in the minds of the public. Only then they'll be serious and they will follow the rules, correct? Same logic applies to company also. When you fix a budget, just like how we don't care traffic, the rules and regulations, the employees inside the company also, if they don't care the budget, if I say your budget is this much, employees will say, okay, so if that sort of attitude is there, will the budget give you desired results? No. So therefore, first you develop that seriousness towards the system. Means the fellows. Next, timely variance reports. Obviously, this we have seen already, if you remember or not, that all these reports should be on time. If it gets delayed, what will happen? Incident would have happened some months back and you are trying to take action now, it will not be useful. Got it? Demarcation between areas of managerial responsibility. This also I told you. Exactly. Clearly communicating what is the managerial responsibility of each and every manager without having any sort of overlaps. You remember that? Where did we see similar kind of a point? In scope of target costing, if at all you need to reduce a cost, there are 4 broad areas which you need to concentrate to reduce the cost. What are the 4 broad areas? Design, organization, factory layout, production plan. Please, do you remember? That's why I asked you to revise. There also, while I was explaining you in the way of organization, how can you actually try to reduce the cost? There I've told you similar point like this, where you have to give clear cut clarity to each and every manager so that one will not overlap into the work of the other or responsibility of the other. Anyways, next, solution to get operations under control if they get out of control. That should also be in place. For example, suppose a simple example that I can tell you is fire is going to happen. You should have a thought process initially that suppose fire happens, it is something that is out of control. Immediately to bring it under control, what do we have? The fire extinguishers, the exit steps, blah, 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 everything, correct? Similarly, when you try to set up a budget, if something goes out of control, you should have a solution in place to bring it under control. Are you able to understand? That can be due to a particular person, an employee, or a manager of a department, or somebody else, or it can be due to mission also. Are you able to understand? If because of anything, if it goes out of control, you guess it at the beginning itself, just like how you'll guess fire accident, and then how you'll have a fire extinguisher, have a solution in place to get it back under control. Got it? Reasonable budget targets. This point also we have seen. Where we have seen? In building block model, we have seen. In building block model, what are the blocks we have? Dimensions, standards. In standards, one of the point is what? It should be achievable. Achievable means reasonable budget targets only. It should be reasonable. You should be able to achieve it. If it is too tight, what will happen? So initially itself, they'll have a clarity that anyway we can't achieve this. So they'll not even put minimal effort. So you'll not get the desired result. Got it? And finally, reports aimed at individual managers and fairly short reporting periods. You remember that? This fairly short reporting period we have seen somewhere. Where? Target costing. Fairly short reporting period was an important point. Where did we see this? Kaizen costing. Correct. Very good. Kaizen costing. When we try to shift from standard costing to Kaizen costing system, in standard costing, usually the reporting periods will be half yearly, yearly. Whereas if you shift to Kaizen costing, it will be what? Monthly and weekly. Correct? Fairly short reporting period. Correct? Some of you are answering. Some of them are, after answering, they are trying to remember. Okay, the expressions I can see. Some of them don't know what's happening. They're thinking, first of all, it is Scmpe or any other subject. Did we listen first of all? Yare Mokku fellows. Surely you belong to which category, buddy? Trying to think whether you belong to which category, yeah? Okay, right. Anyways, so you got this. These are all the prerequisites of effective budgetary control. So this is very important for you. So what happens usually in case studies is that he will give a situation about a particular company, and then he'll say that this particular company tried to have a budgetary control system in place, but still these problems they have faced. So once you are reading them, then you have to simultaneously connect them with these concepts, and you have to identify the mistakes. What are all the mistakes that they have done, and give the solutions eventually. That these are all the prerequisites that you should follow to have an effective budgetary control system in place. This has not been followed. That's why the budgetary control system has not been effective. It has been a failure. Are you able to understand? These kind of case scenarios or case studies can be asked. Got it? Chala. Now, tell me. So what are the prerequisites of effective budgetary control system? What is the first one? A serious attitude towards the system. Second one, demarcation of the areas of managerial responsibility. Third one, timely variance reports. Fourth one, reasonable budget targets. Very good. Fifth one, fairly short reporting periods. Next, In case if things go out of control, you should have a solution in place to bring it under control. Very easy to remember. Got it? So there is an example over here. See, these are all the problems, suppose, which you can get in a budgetary control system. And I gave you solutions as well. Suppose lack of coordinated goals can be a problem. Sir, what is that, sir? No identity of minds means there is a manager in the company and there is a vice president. Manager thinks that the goal of the company is to ensure quality. Vice president thinks that the goal of the company is to reduce the cost. In that case, both of them will be working exactly in the opposite direction. So eventually they'll fight. Are you able to understand? So if you want to avoid these kind of things, the solution is company's objective must be clearly defined and communicated to everybody, that this company's objective is quality, or this company's objective is what? Cost reduction. Are you able to understand? If that would have been done, then this problem would not have arisen. Right, next. This I have told you so many times. Uncontrollable factors affecting the actual performance. Are you able to understand? Price is increasing in the market because of government laws, and because of that, the purchasing department manager's procurement cost has got increased, and as a result, can you call him inefficient? No, because it is outside his control. Therefore, when you try to measure the performance of any divisional manager, remove the effect of uncontrollable factors while measuring performance. This we have seen at least 10 times so far, correct? Discussed at least. Next, another important thing, short-term perspective can be a problem. What is that short-term perspective? This Mukko manager, what he has done is, this Mukko vice president, he will give monthly targets of budget for all the employees. The moment last month's target is achieved, immediately next month he will again tighten it further. Are you able to understand? And again, if you achieve the next month's target, he will again tighten it further. So that you should not be doing. Establish budgets for appropriate time and don't revise budgets just because they are achieved earlier. Are you able to understand? I have given you examples as Christmas, New Year, bakery and cake business. Means what? Suppose in the Christmas time or New Year time, the bakery business has been fantastic. That doesn't mean that you can give further more tight budget on Feb. It doesn't work, isn't it? So that's what we are trying to say. Got it? That's just an example, Anna, only to give you an idea. Finished? Shall we move on to the next one? All right. So what is the next one we have got? Feedback control. From the name itself, you can understand one thing, Mukku fellows. Feedback means what? Feedback means problem would have happened, mistake would have happened, damage is already happened, then you'll get the feedback that something wrong has happened. Now you'll try to rectify it. So that we call it as what? Feedback control. Anyway, see here. So in feedback control mechanism, see there are two types of control mechanism when it comes to budgetary control. One is feedback, the other one is feed forward. Feedback means you will wait for the mistake to happen, then you will rectify it so that it will not happen again. In feed forward, you anticipate the mistake at the beginning itself and then you stop it from happening itself. So you will avoid the first damage also. You will avoid the first damage also. Where? Under feed forward, not under feedback. You got the point? Yes. So under feedback control, basically what happens is that it will simply compare your actuals with budget. It is like a reaction after the action has taken place. Action means damage has happened already. So there should be error in order to take corrective action, correct? Which means first of all, mistake should happen if you want to rectify it. Another question is, how will you know that mistake will happen? I mean, how will you know that mistake has happened? There should be some error detection system in place. Then only you will know that error has taken place, correct? Right. So feedback control mechanism measures the difference between budgeted output and actual output and accordingly modifies subsequent actions or plans to achieve the desired results. So you will ensure that in future the mistake will not get repeated, but right now the damage is done. Are you able to understand? Are you able to understand what I'm trying to tell you? Now tell me, feedback control mechanism means what? It will simply compare your actuals with budget. It is something where you will have a reaction after the action has taken place. Are you able to understand? Which means damage has already happened, correct? First of all, to have feedback control mechanism in place, first of all, there should be error. Error should happen. Yes. And then you will compare the budgets with the actuals and then you will take a corrective action such that this mistake will not be repeated in future. But the problem is already the mistake has happened and the damage has already been faced. Correct? Yeah. Also, another important thing is that I told you one example, that cool drink example. You remember that? Cool drinks will go like this and it will be filled up, and then the weight will happen and it will convert the kgs into liters or something like that, weight conversion measure. And if it is of the requisite volume, then it will go for packing, otherwise it will be rejected. Now that weight machine is nothing but error detection system. Correct? If there is an error, it will be sent back. If there is no error, then it will be sent for packaging, sent forward. Now suppose if there is a fault in this error detection system, gone. Your entire feedback control mechanism will be a flop show, isn't it? Yeah, that's what we have written here. Error detection system, there is a heavy dependence. If this fails, feedback control mechanism also fails. Another important thing is that there is a time lag between detecting the error, confirming the error, rectifying the error, during which the actual results may change again. So when something wrong is happening, for example, the same example which I told you, the cool drink is being weighed and then the weight has been converted into what, Nana? Yeah, that weight is converted into, that liquid measure. Okay. If there is a problem in that, first somebody has to identify that. When can they identify? When some of the rejected units goes and then suddenly they see that no, the quantity is good, but still why did this get rejected? Are you able to understand? After that they'll come and confirm. After that they'll go and inform. By the time they come and rectify, so much of things has happened, or you should have stopped the entire production. Correct? Both the cases it's not good. Yes. So these two are the limitations of feedback control mechanism. Are you able to get me? Yeah. So in feedback control mechanism, what happens? First action takes place. What action? Not positive action. Error, damage, mistake. Yeah. Then the reaction happens. Got it? So this feedback of what happened above ensures that the error is not repeated again. This is called feedback control mechanism. That's what I've told you here. And accordingly modify subsequent actions and plans to achieve desired results such that the error is not repeated again. Got it? All right. Here we have types of feedback. This has been removed from the syllabus. Okay. Strike it off. Only small. Types of feedback has been removed. Yare? Happy or not happy? Something is gone, na? Huh? Even if it is 2 sentences also, we'll be happy, isn't it? What? Shall we move on to the next one? All right. Now we have another important concept. Mark it as important for case studies. Important for case studies. What is that, sir? Prerequisites of feedback management control report. See, already we have seen some prerequisites already. What is that? Prerequisites of effective but strict control. That is also important. Now we're going to see prerequisites of feedback management control report. Just now we have seen feedback control system. For that we're going to see prerequisites. Means if you want a feedback control mechanism in your company to give the desired result which you are anticipating, then it should satisfy all these conditions. If any of these conditions are not satisfied, even though you have feedback control mechanism in place in your company, it will not give you desired results. Are you able to understand? Which means it will perform like a mokku. Are you able to understand? It will perform like churili. Okay, chalo. Are you there, Nana, buddy? Right. Okay, look at the first one, guys. It should disclose both accomplishment and responsibility. Very important. What should disclose? The so-called feedback control mechanism in place. When you are giving the feedback about a particular division manager or something like that, you should communicate what is the accomplishment that he has done and to what extent he is responsible. Only when you see both, then only we can analyze where something went wrong. For example, let's say there is a division which you have treated it as a cost center. So which means he is responsible to the extent of cost and power is there with respect to what, Nana? Cost only. There, if that is a situation, you cannot make him responsible for some sort of revenue or profit or something like that, isn't it? Because you did not give him that sort of power. So therefore, to have that clarity, you should clearly disclose what is the accomplishment and responsibility of every single division manager or whoever the person is. Got it? Here, next, it should be in standard format. Which should be in standard format? So-called feedback control report. Only then everybody will be in a position to understand. If everybody makes some customized report, then everybody can't understand. That was the logic behind your accounting standards also, right? They fix the standards and say that your financial statement should be in a standard format such that anybody can understand whatever the kind of numbers that you try to communicate. Correct? Same logic goes here also. Should disclose variations from standard, obviously. Are you able to understand? What was the standard that I've thought? What is the variation? Both in terms of numbers, also in terms of non-numbers. Should disclose trend and relationship. Very important. Last year, what was the numbers that you thought? This year, how much? Last before year, it was how much? What was the trend? Is the cost increasing or reducing? Is the efficiency increasing or reducing? Are you able to understand? So that when you look at the feedback control report, you will understand that whether this problem is happening right now or it is a severe problem since last 3 years. Are you able to understand? Yare, that is the importance of trend. What is the importance of relationship? One will be related to other na. So one will be a cause, the other will be effect. So therefore, if we can communicate the relationship, we'll understand that to rectify this, somewhere we need to rectify. For example, suppose there is a defects, Nana. Are you able to understand? You have given a budget target to employees that defect should be 5%. Are you able to understand? Whereas in reality, the defect is 8%. So the budget is not met. Problem has happened. So feedback report has come saying that these many defects has been more. There you have to mention the relationship that the defect can be due to inefficiency of the labor. Are you able to understand? Inefficiency of the machine if it is not properly maintained, or can be a direct defect in the form of raw materials from the supplier. Once you maintain that relationship, once you explain that, then only people will be in a position to identify, okay, this is due to what? Correct. So trends and relationships should be disclosed in the report. Next, it should be extracted promptly. Means time to time. There should not be any delay. That is the point. Got it? This is a universal point. By this time, you would have seen. Every time we talk about some sort of a report, always the word will be what? It should be extracted on time. Here also we have seen the same thing, na? Timely variance reports. Kya everywhere this is a common point. Got it? This is very important for problem solving buddies. Yes? All of you? Right. So, now tell me, what are the prerequisites? It should show both accomplishment and responsibility. Second, standard formats so that everybody will understand. Third, trends and relationship must be shown. Next, variations from standard should be disclosed. Next, timely variance reports. Right. Okay. Now, when I was explaining you the trend and relationship, I have shown you one perspective. There can be another perspective also that is possible. What is that? How customer is changing his preferences since last 3 years can be a trend. Yare, deals offered by competitors can be a trend. Relationship means we are talking about customer supplier relationship also. Are you able to understand? Yare, all sorts of relationship will come depending upon what kind of feedback report you are sending. You got the point? If you are giving a feedback report relating to defects in my example, then the relationship will be why the defects is happening, and the relationship will be explained between that particular, product and the supplier. Are you able to understand? It depends upon the situation. But anyways, I hope you guys can remember this, all these 5 points. Yes? Yes, buddies? All right, next. So now we are done with feedback control mechanism. What is the next one? We have feed forward. So to put it very simple, feed forward means you anticipate that something wrong is going to happen, and then you stop it from happening at the beginning itself by taking precautionary measures. Now the biggest grapevine of this particular concept is that how do you anticipate that something wrong will happen in the future? Are you able to understand? If that anticipation is wrong, then your whole strategy goes wrong. But if your anticipation is right, you can avoid the damage. That is also a good thing. Yes, what? Yeah, hey. All right, see here. Forecasting future error. Forecasting future error now itself and taking action before the error actually takes place, which means you'll avoid the first damage also. In budgetary control system, feed forward control means forecasting the difference between budget and actuals and accordingly taking corrective actions today. thinking that tomorrow you will not reach the budget. Are you able to understand? It can be like this, Nana. For example, you thought that your budgeted sales will be 6 lakhs for a half year. Are you able to understand? After first month, your sales were only 20,000 or 50,000. Going by the trend, you will easily understand that the 6 months target of 6 lakhs will not be achieved. Let's say tomorrow there is no season and stuff like that. It's going to be similar kind of a market scenario. Then you will take steps now itself, anticipating that you may not reach the target, and you do something, thereby you try to reach the target. That's a feed forward control mechanism. You understand the point? Yeah, we'll see some examples here. Indication of increase in price would cause buying before price go up. What do you mean by that, sir? I didn't understand. Very simple. Suppose you have a manufacturing plant in Chennai. Supplier is from Mumbai. And you came to know that in Mumbai, all of a sudden, some dharna is going on. Are you able to understand? Especially in the suppliers area. Because of suppliers factory polluting or whatever it is, whatever the reason it may be. Or some sort of hartal is going on in the entire state, Mumbai, Maharashtra. Now, so you feel that next 1 month the hartal may continue. So, he is the only source of raw metal for you. If that hartal happens, are you able to understand? Still it has not started, but it is about to start. If that happens, you may not get supply for the next month. So what you do, you anticipate that something can go wrong now itself. And as a result, you buy a lot of raw metal and keep it now. So this is how you will react if you are following feed forward control mechanism. Are you able to understand? Tomorrow hartal may happen or it can stop within 2 days also. In that case, your expectation will go wrong. Are you able to understand? In feedback control mechanism, what will happen is that suppose the same situation is happening, you will not react until and unless something happens. For example, you'll just be quiet. You'll not take care of it. There, the hartal will happen. As a result, the entire transportation gets stopped. And as a result, here, whatever the stock you have got is reduced. And finally, once you see the stock out situation, then you will wake up. Are you able to understand? As per which one? Feedback control mechanism. Then you will start trying to somehow rectify the issue that has happened. And then you will ensure that next time it will not happen. Maybe you'll increase the buffer stock or something like that. Are you able to understand? Yes? Here. Another example. For a can manufacturing company, it's better to do weighing of a 1 kg product before it is packed or sealed instead of weighing after packing or sealing. This will avoid scrapping of cans having lesser quantity. Feed forward control mechanism. Are you able to understand? So the cans go, it is sealed, and after that you are weighing, and if it is underweight, then you're throwing it away. Are you able to understand? That is feedback. So what you can do instead, before it gets sealed, you can weigh it, and if it is underfilled, immediately you can fill it, finish it off, and then seal it. Thereby you are saving all the wastage. Correct? Yeah. Next, another example. While preparing cash budget, if cash balance is not as per expectation, preventive action can be taken to meet expectation. Correct? Is not as per expectation means it is again future. Same example I told you, you're anticipating sales to happen 6 lakhs for the next 6 months. First month it didn't even touch 50,000. Then you anticipate that you may not reach your sales level. So now itself you'll start doing more advertising, more marketing, or reducing the selling price, something like that. This is again what? Feed forward control mechanism only. Are you able to understand? I explained you with the example of sales. Here I've put the example of what? Cash. Got it? Fantastic. Now, is all good with respect to feed forward control mechanism? No, it has got some problems as well. Fair bit of problems. First of all, estimation of uncertain future itself is a big problem. Are you able to understand? There itself things may go wrong because study of future is not well developed. Correct? Aisa what? That is the biggest grapevine of feedback control mechanism. That is the biggest grapevine of feed forward control mechanism. Got it? Yes? Alright. Next question is, okay sir, but we relatively like the feed forward control mechanism because it can avoid or avert the damage. How to implement that? Well, pretty simple. This is important for case study. Keep it in mind. Thorough planning and analysis is required, okay, for input variables. Input variables means what are the variables for which you're going to do feed forward control mechanism. Careful discrimination must be applied before selecting input variables. For example, if it is a new project, what can be the input variables? Procurement, human resources, partnerships, Financing sources means money, transportation, or logistics. I just gave you some examples. So you need to collect all the data on input variables that must be regularly assessed. After that, it should be regularly collected. Then feed forward control system can be in place, and that should be kept dynamic. Dynamic means what? Exactly. Tomorrow RBI changes the base rate. Automatically your financial sourcing cost will what? Change. Automatically that should be reflected in feed forward control mechanism. So when it keeps on changing according to the change in the environmental situations which is surrounding your organization, then your feed forward system is kept what? Dynamic. That is the meaning. Here I give some more examples. See, incorporating changes in raw material prices, changes in government policies and decisions already made. Accordingly, if you reflect that change into your feed forward control mechanism, then it is dynamic. Another example is a model of control system should be fully developed. Authority and responsibility of various functions should be determined. Right now, you will not understand this. There is a case study on this when we go to case study chapter. There you will understand better looking at the facts of the case. You got the point? Yeah, right now just understand that whatever the control system that you are trying to do, especially feed forward, it should be completely developed. You cannot go with the half-baked one. That is the logic. Yeah, got it? All right, chalo. That's it. That much is enough. Now this is important, Nana. Tell me one thing. How can you implement feed forward budget? Thorough planning and analysis are required for all the input variables. Okay. Input variables can be procurement, human resources, partnership, financing sources, transportation management, and collect the data regularly on the input variables and assess them. And your feed forward control mechanism, whatever the input variables that you have got, it should be kept dynamic. So you should have track of all the changes that are happening. And of course, have a full system in place before you go for its implementation. Don't have a half-baked one. Got it? It's a very simple thing only. Anyway, again, we'll be seeing the same concept when we go to case studies as well. Got it? Chalo. That's enough. Will not even wait for 1 minute, right? That side. Huh? Chalo, have a small break. After that, we'll continue. Hello guys, settle down. We'll start. Mokko fellow. எனக்கு டீ எங்கடா லூசு. உன் வாட்ஸ்அப் மெசேஜ் பாடா லூசு. எதுக்கு உனக்கு ஃபோனு? தூக்கி வெளியே போடு. பரவாயில்ல, நான் இதுலேயே மேனேஜ் பண்ணிக்கிறேன். இரு ஒரு செகண்ட் இரு. சூடாக இருக்கா பார்க்கலாம். சூடாக இருந்தால் அவ்வளோதான். மேனேஜ். ஐ திங்க் இட் இஸ் ஹாட். இட் இஸ் ஹாட். ஐ வில் மேனேஜ். ஓகே. 1 glass is fine. Right, friends, let's continue. So now we'll go with the next topic. What is that? Behavioral aspects of budgetary control. Ready? Chalo. Balcony ready? Everybody? Shall we? Thomas? Akhil? The power of Jua. Ready? You just move that side, Ray, a little bit. Little bit, that's all. Come on, claps everybody to Suhas. Okay. Chalo, let's move on. Ready? Chalo. Now, right guys, see here. When it comes to behavioral aspects, see, behavioral aspects is a very key word when it comes to the future as well, because I don't know whether you have heard these words like behavioral finance. Okay, did you hear about that word? Behavioral finance means, see, in many of the concepts, the emerging concepts are with respect to behavioral aspects of human beings. Why? Because with the evolution of the technology and stuff like that, all the companies, they have realized that the most difficult thing in this entire world is to manage the human beings. Are you able to understand? So eventually they started studying them out in depth, like how will they react and stuff like that. Are you able to understand? So that's where you have behavioral finance. We have behavioral aspects of budgetary control. Means if I set a budget in a particular way, whether it is a tight budget or loose budget, or whether I allow people to participate or I don't allow them to participate, blah blah blah, whatever it can be, for each type of budget that I set, what will be the response of the people upon whom I'm trying to set the budget, who has to actually execute the budget, you know? So that you need to study. Are you able to understand? Only then the budget that you set will give you the best desired results. So if you don't know how they will react, if you don't study the behavioral aspect of the people upon whom you are trying to fix those budgets, then it will not give you the actual desired result. Are you able to understand? That is what we're going to study here. So our concept is very simple. If you want to summarize, if we fix a particular budget, what will be the reaction? That reaction, is it in the interest of the company or it goes against the company? There ends the matter. Got the point? Chalo. Now, so basically the focus is on how many points, Nana? 3 points. The first focus is there is something called contradictory goals of budgeting. That's focus number 1. Focus number 2 is short-term approach. Focus number 3 is issues in interdepartmental coordination. So in these 3 key areas, we'll try to understand how the behavioral aspects of employees are going to be. Now let's start with the first focus area. What is the first focus area? Contradictory goals of budgeting. Title itself communicates you clearly that one goal of budgeting will go against the other goal of budgeting. That's what you mean by contradiction, correct? Let's try to understand how does it work. For example, see here. Fair evaluation without discrimination of all employees. Suppose that is a budget target for you, where you want to evaluate all the employees without any discrimination. That's your intention. But in top-down budget setting process, you will not at all involve employees. Are you able to understand? And that too, sometimes you may set a too challenging budget. Are you able to understand? This process of doing something Exactly opposite to what you have thought here, correct? Array, you wanted to be fair, are you able to understand? You wanted to evaluate all the employees without any discrimination. Are you able to understand? You wanted to be good with them. But on the other hand, you're not letting them participate in your budget setting process, and you're trying to fix too tight budgets, which will eventually have a negative effect on the employees. Are you able to understand? So one goal of budgeting is contradicting the other goal of budgeting. Are you able to understand? Yeah, short term approach. What do you mean by short term approach? You are trying to focus on cost reduction by compromising on quality. This we have already seen many a times, isn't it? That's why we have said that non-financial performance measures are better than financial performance measures. Why? Because financial performance indicators are short-term in nature. Long-term non-financial performance indicators are long-term in nature. Basically, you understand the point? Yes. Same logic applies here also. I think I gave you that McDonald's example. I don't know whether you remember or not. I told you that for 3 months, these guys, they have a budget target, for example. Let's say there is a cost target. Okay. And they have to train the employees for 2 months, but he tries to cut it off and just trains them for 2 weeks and straight away takes them as employees. Why? Because he wants to achieve cost reduction in the short run. That will affect quality in the long run. So this is the second problem, where if you fix your budgets too tight, in order to achieve the budget, they'll compromise on the quality, reduce the cost. Are you able to understand? So that eventually they reach the budget, they satisfy the budget, but in the long run, that will have a negative way. Are you able to understand? The last one is very interesting. Issues in interdepartment coordination. Sir, what do you mean by this, sir? I'll tell you. Always, please understand, in any company, only sales department will exactly know what the customer wants. Are able to understand what customer will like, what he will dislike, what design he prefers, what quality he anticipates. All this precise and updated information will be there only in the hands of marketing department. Able to understand? Now in this example, marketing department insists on a particular material mix. Are able to understand? They communicates to the production department that you do the material mix like this, only then that product will be liked by the customers. And he also says that do this particular design which the customer likes. This is the feedback from the sales department, and they communicate the same to the production department. But production department may not listen, and he will continue to mix the same way which he was initially told to. Are you able to understand? Yeah, so this is what we call it as interdepartmental coordination issue. Are you able to understand what I'm trying to say? So what the production department will do is that all those things doesn't matter to me. For me, there is a performance appraisal where my production department performance is measured based on profit. To achieve that particular profit, this is the product mix I should do. Are you able to understand? Yes. If I don't do that, I'll not get the bonus tomorrow as that. So therefore, I'll stick on with this, irrespective of whatever the marketing department says. Able to understand? Because of this, ultimately, who will be suffering at the end of the day? Company. Because this guy will go in a particular product mix, which eventually will not be liked by the customers. That is the reason why sales department has communicated the same. If there was interdepartmental coordination, things would have been different. But this particular production department manager went with his own selfishness, because he wanted to go with a particular product mix so that his cost will be less, thereby his target profit, whatever is achieved, thereby his performance appraisal will happen. He'll get the bonus or incentive. Got the point? So basically, when it comes to behavioral aspects of budgetary control, there are three main focus areas. Area number one, contradictory goals of budgeting. One goal says yes, the other goal says no. Got the point? Second one, short-term approach, obvious, by compromising on quality. Third one, lack of interdepartmental coordination in a urgency to achieve the budgets. Budget is the villain here again. Are you able to understand? If there is no budget and there is no performance appraisal, probably production manager would have listened. Okay, you want like this? Okay, I'll do it, because I don't have anything else in my mind. Nah? But because of the budget only, all these things are happening. Or because of the performance appraisal, all these things are happening. Got the point? Anyways, this is not that important. Just to give you an idea, it is not that important. So don't worry. Okay, right. Moving on to the next one. This is important. See here. What is this? Difficulties in using budgets as performance measurement technique. What is that? So let's try to understand this particular graph. Any idea about this graph? Okay, see here guys. This is your budget, correct? Huh? And this is your actuals. Okay. Initially, when your budget is very easy, your actual performance will be better than the budget. Clear? Yeah, initially, when your budget is very easy, your actual performance will be better than the budget. As and when you keep on tightening your budget, your performance will actually increase. Correct? Huh? Till a particular point of time, which we can call it as a breaking point. Are you able to understand? But after a particular point of time, if your budget becomes too difficult, all of a sudden your actual performance will drop. So logically speaking, this is your optimum budget, which means this should be the best budget level such that you get the maximum actual performance. The point. Yeah, are you able to understand? So that is how budget difficulty and actual level of performance works. So let's try to understand. See here. Notes explaining the above graph. Up to the point where the budget is no longer accepted, the more demanding the budget is, the better the actual results achieved. Up to the point where the budget is no longer accepted, the more demanding the budget is, the better will be the actual performance. Demanding budgets are always seen to be more productive than what, Nana? Less difficult budgets. Normally, we feel that if the budgets are less difficult, it will give you more performance. In reality, that's not the case. The more demanding the budgets are, the more performance you'll actually extract from the employees. That too till a particular point of time. If that time crosses, then all of a sudden the actual performance will drop. Very, very, very dangerous. The point. So that's the reason budget should not be too tight. Got it? Yeah, this is very, very, very important, Nana, from examination perspective. Got it? Right. Now, this we already know. Budget setting process. We have two types of budget setting process. One is top down. The other one is bottom up. Top down means what? Imposed style. Bottom up means participative. See what happens in top down. Senior management will decide everything, that this should be the budget for next quarter. Okay, they will send the budget to the departmental managers. Next level, they will send it to the people who has to execute the budget. Who are they? Budget holding staff, and that's all. Now, as a budget holding staff, will I own the budget? Will I own the budget? I'll not own the budget. Why? Because I'm not allowed to participate. I was not taken into consideration. They did not think about me. They just decided something such that it achieves their objectives. Whose objectives? The top level management's objectives. They given that to the departmental managers and they give it to us. Who are us? Who are us? Budget holding staff. We are the ones who are going to execute things. Got the point? Yes. All of you. Okay. There are plus points and minus points with this also. Can you tell me any plus points because of top-down budget setting process? Not always negative. There are plus points also. Top-down budget setting process. Are there any plus points? Minus points you will say, because you did not allow the lower level budget holding staff to participate in the budget setting process. Therefore, they will not own the budget. They will not be motivated. They will not be efficient. Are able to understand? They will disown your budget and therefore the actual performance might not be that great. These are negative points which we already know. I'm talking about positive points. First of all, because it comes from the top, the people who are preparing the budget on the top, they'll have a clear-cut clarity of what the objectives of the company are. So they will prepare budget in such a way that this is in line with the objectives of the company. So that's the first and major plus point for you. Are you able to understand? So the budgets will not deviate from the total objective of the company. Correct? Yeah. Second thing is, when you allow the lower level guys who has to actually do the work, fix the target for themselves. If you were to be in your place, what you will do? Exactly. You will fix easy targets. You will say that it's very difficult to do this amount of sales, but actually inside you know that it's easy, so that easily with little bit of efforts you'll be able to reach that target and get the bonus. This we call it as budget slack. What do we call? Budget slack. And that's one of the biggest negative points of participative approach. Logical, na? Obviously. You are trying to ask the person who has to actually do the work to fix a target for himself. Are you able to understand what he will do? He'll fix an easy target. It's as simple as that. You understand the point? So these are all the positive points of top-down budget setting process. Got the point? Yeah. Now coming on to the bottom-up approach. How does this bottom-up approach really work? Which is nothing but participative approach. It starts in the same way, but you see how it goes. You take the recommendations and suggestions from the lower level budget holding staff. Okay? Yeah, Nana, all of you, right? From there, it goes to the departmental managers. And then from departmental managers, it will go for review the senior management. So ultimately, senior management has to approve it. If they reject it, again, it will go to departmental manager. Again, there will be a revised one from the budget holding staff. Again, it will be sent to senior management. If it is accepted, again from senior management, it goes to what? Department. From there, it goes to budget holding, because eventually these are the guys who has to execute the same. So it's like from bottom, it goes to top, they approve, and again, it comes to them only. So eventually what happens? We have fixed for ourselves, correct? From here it goes and again it gets to us, Ray. So which means what is the actual logic? I have fixed budget for myself. So that is the reason I will own the budget. So that motivates me because I was taken into consideration. That shows that I'm important. My opinions do have value. And not only that, because I'm the lower level guy who knows the ground realities, my budget will be a lot more realistic. It will not be out of the box. Are you able to understand? Unrealistic. In this case, there is a lot of probability that budget might be unrealistic, because when senior management is trying to fix the budget, they don't know what the ground realities are. So they may fix the budget totally out of the realism. Are you able to understand? Yeah, Ray. Everybody? Right? Okay. But of course, there are negative points. One of the biggest negative point of this is budget slack. What is budget slack? Budget holding staff will make the budgets easy. They'll fix easy targets. That is budget slack. Got the point? Yeah, Ray? Right. A second. Ready? Okay, now this is very important. See, Nana, when the so-called top-down budget setting approach will be more useful. Okay, first one, when your job difficulty level is very low, then there is no problem. Even the top level management can finalize the budgets for you, because anyway your job difficulty is not that difficult, correct? Stable environment. When the environment is stable, easily the top level management also can assess what can be the budget. So thereby their budgets also will be realistic. Homogeneous products. Process is highly programmable. Programmable means individual thinking from the lower level staff is not required. They just need to just follow what has been ordered. That's all. No need to really think on your own to do something. Okay. Participation does not ensure commitment to standard. So when you allow them to participate, it will not guarantee that they will reach the budget or standard. In that case, why do you allow them to participate is the logic. Are you able to understand? In all these cases, which one is better? Top-down budget setting process is better. It gives you better results. So again, I'll repeat, this is important when you're solving case studies and case scenarios. Are you able to get me? Job difficulty level should be low, so that even the top level management fixes the budget targets on the lower level management. Anyway, because the difficulty level is low, they will easily achieve it. Stable environment. Homogeneous products. Process is highly programmable. Are you able to understand? As a result, budget holding staff, individual thinking process is not necessary. And finally, even participation does not guarantee what? Commitment to standard. Then why do allow them to participate? Doesn't make any sense. So let's have it under top-down budget setting process. You got the point? Very, 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 very important. Remember that. Got it? All right. Okay, now see here. Suppose if you go for bottom up budget setting process, what happens is that you are allowing managers to set their own budgets or targets, which will introduce easy targets, which we call it as flat targets, where they will underestimate income or they will overestimate expense in order to make them easy to achieve. Got the point? Yeah, yes. Okay, that is a negative point. But there are positive points because of bottom up approach. What are they? It communicates better sense of responsibility. Okay, they'll feel responsible, the budget holding staff, because they have been allowed to participate. Staff will be motivated as they feel their experience is being valued. So what you have to understand is budgets does not have any motivational effort unless they are accepted by the managers as their own personal targets. When they will accept these budgets as their own personal targets, when you allow them to participate. That's why participative approach will give you better results. Are you able to understand this one? Got it? Say so. To make this possible, to make what possible, to make managers accept the budgets as their own personal targets, you need to allow the managers to participate in the budget setting process. What's the point? Yeah, acceptance of budgets is also good when good upward communication exists. So when you can talk and communicate and convince the people well, then also they will accept difficult budgets as well. Are you able to understand? That is what you mean by acceptance of budgets is more when good upward communication exists. For example, you can have a departmental meeting, and having a departmental meeting and communicate with all the department managers was found more useful in encouraging managers to accept the budget targets. Logical only, na? When you talk with a human being, generally he'll get convinced. Especially when higher level people comes and talks with what lower level people and says that you can do it. Yeah, are you able to understand? All of you? Yes. Hello. So I'll give you exactly. You have exactly 3 minutes of time. Just revise, Nana. What? Only the budget setting process. Okay. Do it from this graph. Revise from the graph. Remaining you will revise later. Just revise from the graph. That is important for solving case studies and case scenarios. Okay. Revise from the graph. And then revise budget setting process. Revised. Finished? All of you? Shall we continue? Right. Okay. Okay, there is something called zero-based budgeting. It's a very simple concept. The basic logic of this concept is very simple. Normally, what happens is that as per traditional budgeting, suppose maintenance department cost in 2020 was 10 lakhs. Okay. The budget of maintenance department in 2020 was 10 lakhs. What they will do is that when they're giving budget for 2021, they will take this as a base. They'll take what as a base? Maintenance department's budget of last year. Okay. So basically what happens is that if last year I have incurred a budget of 10 lakhs for a particular department, this year when I try to give a budget, I'll say that I'll take last year's budget as a base, and then I'll give justification for a little bit of increase of this year, like maybe you're expanding your business or maybe due to inflation or whatever the reason it may be. So if you just give justification for the additional 1 lakh, that is enough to get entire 11 lakhs what? Sanctioned. Are you able to understand? Their entire budget for 2021 of 11 lakhs will be sanctioned as per which budgeting? Traditional budgeting. So the problem with this is that suppose in the last year's 10 lakhs budget, if there is some sort of inefficiency, that will be carried forward to next year as well. So which is not good. So what zero-based budgeting says is that suppose last year if your budget is 10 lakhs and this year if you feel that there is a change of 1 lakh and if you feel that 11 lakhs is what you need, there is nothing wrong in that, but you have to justify the entire 11 lakhs. Just because last year you incurred 10 lakhs is not a justification for incurring what? 10 lakhs this year also. You want 11 lakhs this year, you justify why you want to incur 11 lakhs. What are all the areas where you will incur 11 lakhs? Entirely you have to what? Explain. So that is why it is called what? ZBB. ZBB means what? The base is zero. Zero-based budgeting. So this will eliminate a lot of inefficiency in your budgets. That is the logic. Are you able to understand? So always you should follow this. Really important. Got it? Chalo, let's move on to the next one. What is the next one? We have risk aspect of both types of budget setting process. Okay. In top-down budget setting process, what can be the risk aspect? You might fix a very tight budget. There is a chance because the upper level management will not have idea about the ground reality. So therefore, they might think that anything will work fine. So they might fix a very tough budget. Are you able to understand? Yeah, that can be the risk. In bottom-up approach, the risk can be sometimes excessive or arbitrary review substitutes bottom-up with top-down. Did you understand anything? I'll read again. Sometimes excessive or arbitrary review substitutes bottom-up with top-down. Samjha? We'll take an example. Suppose Shalini is there. Okay, Shalini works as an employee. She sets the budget. Telas is the manager there. Telas always says that we should be equal. I should allow all of you to what? Participate, that, this and all. You know? So what Shalini does is that he has to give sales forecast. So she calls each and every customer and takes the feedback and stuff like that, does a lot of work, and then finally gives a projection to sellers saying that this is what I'm expecting to happen, the sales or whatever the projection it may be. What sellers does is that she takes it. She will have a particular target in her mind that I need 15% increase in sales this year. Probably Shalini's number would have been different. She would have thought that maintaining same sales also is difficult based on the research that she has done. But what sellers will do is that no, I want 15%. So she will take it. So what kind of budget approach this is? Participative only. But then she will fix her own budget, saying that she is reviewing it, and that the same will be given to Shalini again, asking her to implement the same point. Now tell me, this is bottom up with a flavor of top down. Now let's say there is another Mokku fellow above Teles. So when we say Mokku fellow, let's take Achurili. Are you able to understand? He is the director. So what he does is that she brings her budget to this fella. He will have his own thought process in mind. He takes it and then he says that no, let's do this. Whatever that he has got in the back of his mind, and that will be eventually given to the budget holding staff. Are you able to understand? Now tell me, what is the use of budget setting process in this, especially the bottom up? It's not bottom up actually. It is bottom up. It is like bottom up, but it's not bottom up. Correct? That is what here we are trying to say. Sometimes excessive or arbitrary review, okay, of the budget given by the budget holding staff substitutes bottom up with top down. Purinja? Got it? Now, this will result in waste of cost, waste of time, slacks, etc. Obviously. See here, manager submits budget to top management for review, but top management always increases target based on their back calculations and expectations. So which means basically it is top down only. Okay, are you able to understand? Just like China, where they say that it is communism, but it is not communism. What is that? State capitalism. Isn't it? But the flavor will be what? Communism. Only the color will be there. What? Reality only na. Everybody knows that, isn't it? State capitalism means state itself will be what? Profit player. The difference between US and China is what? In US, government will be in debt. The people will be rich. In China, people will be in debt. Government will be rich. That's what you call it as state capitalism. Anyways, that's the richest government in the world, na? Who is the richest government? Anyways, right. So, did you understand the risk? Both in terms of top-down budgeting process as well as bottom-up budget setting process. Keep that in mind. It will come handy when we solve sums. Okay, now coming on to the last concept of this particular chapter. So, what is the last concept? Beyond budgeting, and that's the most important concept as well. Okay. Now, when you have a concept called beyond budgeting, definitely the basic common sense is that whatever that was before beyond budgeting, it should have some fair bit of problems, correct? Just like how when we went for strategic cost management, we tried to understand what are the problems with traditional cost management, isn't it? Same template applies here as well. So when I'm going for something called beyond budgeting, definitely there should be some problems with traditional budgeting. So let's try to understand what are the problems that we have in the existing budget. Are you able to understand which is traditional budgets, so that we'll understand why there is a need for beyond budgeting? Understand the point? Respond, Ray. Point number 1, lack of flexibility. This is one of the negative points of traditional budget setting process. Okay, what is that? Very simple. It will not change. Means, for example, suppose there is a dynamic market scenario where future is very difficult to predict. Therefore, your budgets has to be frequently reviewed and accordingly it has to be changed. The kind of market that you're operating is very volatile, Nana. The next 12 months, what's going to happen? You can't predict today. Correct? In that case, as per traditional budget, what will happen? Today you'll fix a budget. That's all. Are you able to understand? Tomorrow you'll not change it. But in a volatile environment where you can't really predict what's going to happen in next 12 months, dynamic budget is something that works. Correct? Dynamic budget means today I'll fix a budget with a note that tomorrow if something drastic happens, then immediately the budget will be revised accordingly. Okay. Are you able to understand? That will not happen in case of traditional budget, but that sort of revision of budgets will happen when it comes to beyond budgeting. Are you able to understand? That is what we try to understand here, saying that there is no flexibility whatsoever when it comes to traditional budgets. They are static. They will not change. Whereas what kind of budgets you need in a volatile environment? Dynamic budgets, which are ready to be changed. Because if budget is wrong, how can you compare actuals with the budget? the whole thing will become messy, correct? If budget is wrong and you're comparing actuals with budget and saying that this guy has performed well, this department did not perform well, it will become chaos when this itself is wrong, correct? Yes, all of you? Yes, all of you? Good. Next. Another negative point of traditional budgets is that they are inward looking. Inward looking means, I told you this example already. I don't know whether you guys remember or not. There is a big MNC which has got hotels in all the major tourist spot locations in the entire world. And they have a head office in Singapore. And what they do is that in the head office, they'll sit in the AC room. They'll see what is the requirement of the equity shareholders. And they'll put that number. They will do the back calculation. If this much return should be given to the shareholders along with the dividend, how much should be the profit, and then how much should be the sales. And then accordingly, they'll split the budget or sales target to what? All the different branches they have all over the world. And then the target will be communicated to the managers of the respective branches. Okay. This sort of budget setting process, we call it as what? Inward looking. Why it is called inward looking? They did not consider the outside situation of each and every branch, which is in a different country. They did not consider the competitors. They did not consider what's happening outside. They only thought about themselves, their shareholders, their requirement, their profit, correct? That we call it as inward looking. No focus on external factors, what competitors are doing, what is the current food trend and all that. Suppose you are having a restaurant. Are you able to understand? Completely you'll think about you within a closed room, and then you try to give the targets to everybody. Third, wrong approach. This is another negative point of traditional budgets. What is that? Too much of focus on cost reduction and not value creation. What do you mean by that? For example, there is some capital expenditure that you need to incur. That too you need to incur immediately to increase customer satisfaction. Are you able to understand? But if you are following traditional budgeting, your thought process will be to reduce the cost. Because of that sort of a thought process, you will not be motivated to incur that particular expenditure. Are you able to understand? Which will immediately increase what? Customer satisfaction. Are you able to understand? As a result, long-term value creation will not happen, but in the short run, you may achieve your cost reduction target or profit target or whatever it is. So which means in the long run, it will impact in a negative way. In the short run, it works fine. Are you able to understand? That is one thing. Second thing is, I've written an example here that responsibility is given without authority. What do you mean by that? Suppose there is a hotel branch. From the Singapore head office, I tell them that this quarter, your target profit is 5 lakhs, which means this quarter you should earn a profit of 5 lakhs. But the fun part is, I decide what should be the room rent from the head office from Singapore. I decide what should be the menu. I decide from which suppliers they should be buying. So to put it in a simple way, I decide everything. But then I say to my manager that this should be your target profit. How will he achieve? Does he have any decision to make there? No, he just need to follow what I say. Are you able to understand? Which means his power is 0, but I made him responsible for 5 lakhs profit. How is that is going to work? If you let him take some decisions instantly by looking at his competitor, if he reduces, if he gives some offers, he will also give some offer. Are you able to understand? If he gives some good food items in the menu, he will also introduce the same and stuff like that. Then probably you can make him responsible. Are you able to understand? You are not at all allowing him to do anything. And then again, you say that he is responsible for 5 lakhs profit. Will it work? It will not work. That's what you mean by responsibility is given without authority. This is a wrong approach. Of which one? Traditional budgets. Next one is, of course, it is time consuming. Add little value in comparison to the time taken to prepare the budget. Got the point? They'll take a lot of time to prepare the budget. To overcome all the above limitations, we have something called BB. What is BB? Beyond budgeting. Can you please tell me what are the limitations? First one, Lack of flexibility, inward looking, wrong approach, and time consuming. Okay. Now, how does BB really work? Are you able to understand? What is BB? Beyond budgeting. Pretty simple here. Here I've used a word. BB will be more suitable in the following situations. Just like I told you, target costing will be more suitable in what situations? Target costing will be more suitable in what situations? Manufacturing industries, assembly oriented industries, basically those industries where logged in cost is very high. Are you able to understand? Similarly, BB will be more suitable in following situations. What are they? First one, industries where there is rapid change in the business environment. If there is a rapid change in the business environment, what happens? Before 12 months, you cannot fix budget. Or even if you fix budget, that cannot be final. So always there should be review of the budget and it should keep on changing accordingly if there is a necessity. Correct? That will happen as per BB. Therefore, BB is more suitable when there is a rapid change. Industries using management methods such as TQM. Are you able to understand? Because traditional budgeting focuses on cost reduction, not on cost of quality. Correct? Whereas BB focuses on quality, not on cost reduction. In other words, value creation. Therefore, it will be more suitable in those industries which are using TQM. Are you able to understand? Third, industries undergoing rapid change. First of all, traditional budgeting is against change, na? It is static. So therefore, any industry where a lot of change is happening, automatically traditional budgeting will not be suitable. Which will be suitable? BB. Example I've given, BPR. BPR means business process reengineering, and PI, process innovation. You know that both these two things are rapid changes, correct? Got it? All right, chalo. Now tell me, in what industries, in what kind of situations beyond budgeting will be more suitable? Three situations. What are they? Rapidly changing environment, rapidly changing business environment, correct? Next. What is that? Industries where management techniques like TQM is implemented, correct? Third. Rapid change in business is happening like BPR or PI. Good. Okay, now this above content, I mean the content which I'm going to cover right now is important for case study. So listen carefully. What is the next topic that we're going to see? Leadership principles of beyond budgeting. In other words, we're going to understand how beyond budgeting works. Are you able to understand? Then we'll see principles, then we'll see characteristics. With that, we are done with the entire beyond budgeting as well as the concepts of this entire chapter. Got it? Yeah, all right, ready? Let's start with the first one. What is the first one? Organization. Okay, what is that beyond budgeting is trying to say? Team of accountables is established instead of centralized hierarchies. To put it very simple, beyond budgeting encourages decentralization rather than centralized way of doing business. As simple as that. Got the point? For example, in a tourism industry, managers should be given authority and accountability. Accountability means responsibility to manage prices according to the demand. Correct? Just now I told you, you cannot sit in a AC room in the head office in Singapore and then decide what should be the rental of a hotel in South Africa. Are you able to understand? Yeah, so which means you should give that particular manager who is managing the hotel in South Africa to take decision to fix the hotel room rents on his own. If his competitor gives some discounts, you should also give him that authority to give discount. Then you give him responsibility after giving authority. Got the point? Then you tell him that within this 3 months, this should be the target profit. It will work. Okay. Put it very simple. BB says decentralized way of doing business is better than centralized way of doing business. Got it? Second, autonomy. Autonomy is also that only. Autonomy means, you know, what is autonomy? Giving independent powers, correct? Give freedom and capability to act instead of being forced to commit what is already planned. For example, instead of giving budget or targets for room rent, material cost, advertising, etc., managers should be given overall profitability target and freedom to take decision based on market demand to achieve the desired growth. Correct? This is what the same concept we have seen in transfer pricing also. Yeah, same logic. Next. Third one is customer focused. What do you mean by that? Focus on the customer outcome and not on interval targets. Means, for example, in a hotel, some capital expenditure need to be incurred for customer satisfaction. Arey, it cannot be avoided because there is no budget for it. You understand the point? If you don't involve this capital expenditure right now, let's say customer satisfaction is going to get affected. As per beyond budgeting, what it says is that you incur it immediately, even though it's going to increase your cost, because it will give you long-term benefits. Just because you don't have a budget for it doesn't mean that you're stopped from incurring is the logic. As per traditional budget, what will happen is that when there is no budget to incur some capital expenditure, suddenly they will not incur. Why? Because they can't get the permission. But in beyond budgeting, what happens is that you are giving them decentralized power, right? So therefore, sometimes they will have the power to take these kind of decisions. Are you able to understand? Yes, and that's important. That decision must be taken. If there is some investment that you need to make to give customer satisfaction, you incur it so that will give you benefits in the long run. Are you able to get me? Kyare? Yes. All right. Fantastic. Next, fourth one, purpose. That can see examples. You can take anything, Nana. For example, let's say there is no, what can I say, heater in the room. Are you able to understand? Customized heater, something like that. Got it? There is no mirror. Okay, something like that. Are you able to understand? Or there is a power problem. It's a remote area. So you need to incur a solar heater expenditure investment so that it will give them 24/7 hot water. That will increase the customer satisfaction in that particular cold area, which is in a remote area. So you need to take a decision immediately to incur that investment. You understand that? It can be anything. Yeah, got it? Suddenly you need some laundry machine, whatever it can be. If this I need to incur right now because my customer is suffering in this area, I want to increase customer satisfaction, means you incur. There ends the matter. Next, purpose. Focus on noble causes and not on short-term financial gains. What do you mean by that? Suppose there is a recession in an industry. Because of the recession, budgets cannot be achieved. Then performance measurement should be based on market condition and performance of competitors and not based on the budget which you have fixed before the recession. That's what you mean by dynamic budgets, where the budgets also should be reviewed. How will you review and fix the new budget based on market condition and performance of competitors? You got the point? Traditional budget will not do all these things. It says, I fix the budget, there ends the matter, that's all. And in that kind of situation, if you keep the traditional budget and you compare the actual performance after the recession and you say that this guy has not performed well, what will be the situation? Exactly. You understand the point? Next, fifth one, values. Last one. Instead of detailed rules and regulations, government should be based on clear values and boundaries. What do you mean by that? For example, instead of buying from authorized suppliers, managers should be given freedom of selecting supplier after formation of quality policy from the quality control department. What do you mean by that? The head office has got a brand protection kind of feeling where it feels that I should not give a less quality food to my customers. Therefore, for all my branches all over the world, I have fixed a rule saying that all the branch managers should buy from the authorized supplier which I have authorized already. I know that this guy will give good quality input raw material. Are you able to understand? This is a very stringent way of working, rigid way of working. So what this beyond budgeting says is that don't do that. You try to give a little bit of freedom to your manager to buy from other suppliers as well, the local suppliers from that area, because then it will be local suppliers, so the price also will be competitive. If your concern is about the quality, right? So what you can do is that fix some rules for quality. This should be like this, this should be like this, and ensure that fix a quality control department, and that department will just review that particular supplier, whatever the input that he gives. Once the review is done, and if they give positive report, then he can buy from the local supplier. So he'll get it at a better price. I saw what? And things will be better. Are you able to understand? That's what beyond budgeting says. Got it? All right. That's it. Chalo, let's move on. So with this, we are done with what, Nana? Leadership principles of beyond budgeting. Can you please tell me what is the first one? Organization means what? You should give autonomy and that's what you should be given power and responsibility, or power and autonomy. Got the point? Or authority or accountability, whatever it is. Got it? Next, autonomy means you should be given what? That sort of independence to act on your own instead of just following whatever that has been fixed by the head office. Customer focused. Even if you don't have a budget, if there is some small investment that you have to incur in order to satisfy the customer, you should incur. Next, what about the purpose? So say for example, sometimes if there is a recession after you have fixed the budget and things have changed, then you cannot compare the performance with the original budget, and that budget should be reviewed. That is the logic here. Got it? And finally, values. What do you mean by values? Give some flexibility to your managers, okay, to allow them to take some decisions on their own. We gave one example. What was that example? You can buy from a local supplier. However, I can fix some rules with respect to quality control and all that. But I will allow you to buy from the local supplier instead of authorized supplier from my point of view. Got the point? That's it. He will not ask you direct question, right? Leadership of what? Beyond budgeting and all that. But these points will help us in solving a case study. Got it? Yeah. Next, principles of performance management. What is that? Pretty simple. See here. It should be flexible. That is first one. Are you able to understand? Second one is it should be based on relative performance. What do you mean by that? Planning should be flexible and not rigid. What do you mean by planning? First one is, first principle of performance management as per beyond budgeting is, performance management means what? First of all, measuring performance of employees. Mukku fellows. If you want to measure performance of employees in your company, what should be the principles? That's all he's trying to say. Who is saying that? BB. Who is BB? Beyond budgeting. Are you able to understand? आपका कंपनी में आप एम्प्लॉयज को उनका परफॉर्मेंस को आप मेजर करना चाहते हो ना? Wait, I am coming with the flow. तो उनके लिए थोड़ा सजेशंस देना पड़ता है, ठीक है? Are you able to understand? हाँ, वही है प्रिंसिपल्स ऑफ परफॉर्मेंस मैनेजमेंट. समझा? मोकू फेलोस. चलो, राइट, ठीक है. इधर देख, उधर नहीं, इधर. Anyways, okay guys, see here. So if you want to measure the performance of employees according to beyond budgeting, what are all the principles that it must have? What must have the so-called performance measurement system in place? You got the point? First one is it should be flexible. Means whatever that you are trying to plan with respect to how to measure the performance of your employees, the planning should be flexible. It should not be rigid. Which means tomorrow if there is a necessity for you to change, you should be able to change it. That's the logic. Which means your plan should be ready for review and revision. That is the logic. And reward should be based on relative performance. Means initially you have thought that okay, this should be the budget, and if you cross the budget, then only I'll give you reward. All of a sudden something went wrong and everybody in the industry went down. Then in that case, relatively you compare now how they are performing after things went odd, or able to understand, or things went bad. Based on that you give them rewards, not by comparing with the original budget. Got the point? Third, resources. Make resources available as and when needed, because if there are no inputs, there can not be any output. So whatever they need, you should make it available. For example, suppose one particular branch manager immediately needs to make some small investment. Immediately you should make the resource available. Means money should be made available. Otherwise, if he doesn't make that investment, then customer will not be satisfied. You cannot let something like that happen, is what BB says. Next, performance evaluation. Evaluate holistically. Holistically means taking everything into consideration. Mokku fellows. Taking everything into consideration. Sir, what do you mean by that, sir? I'll give you some example. Suppose Mokku Kripa is there. Okay. What, Nana? What Mokku Kripa done is that she is the sales manager. So the budgeted sales was 1000 units. Mokku has sold 1500 units. Are you able to understand? Everybody in the company is going gaga. Kripa, 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 like that. You have sold 500 units more. You have sold what? 50% more sales. Favorable sales volume variance. Everybody is dancing. Are you able to understand? Then it went for performance evaluation. And it went to our higher level official, Akash. Okay. Came onto the hands of Akash. Akash has seen. Okay, 1500 units you have sold. Then he has seen something. Then he has said, how much bonus you are expecting? Kripa will say, hey, sir, 2 lakh. 2 lakh nahi. From next month onwards, 5,000 of your salary is cut. Okay. Means I'll give you reduced salary. Why? He has seen sales price variance as well. It was adverse. He has sold 500 units more by reducing the selling price by 10%. What do you understand from this? When you try to measure the performance, you should not see it in its individuality. You should see it holistically. A lot of things must be taken into consideration. Are you able to understand? Are? Yes, all of you? Akhil? Yes? Alright. Next. Rhythm. What is rhythm? Make management process dynamic or rhythmic to the external environment. Enna or wording. Yeah. Even when I studied for the first time also, I felt the same way. What is this rhythm? So what he's trying to say is that it should be proportionate to the changes of the external environment. So for that, he is using the word rhythmic. Okay. Are you able to understand? It's logical point only, but the wording that he has used is very interesting. So if external environment gets a, what can I say? If there is a boom, here also accordingly you'll have a boom. Are you able to understand? And last, targets. Set relative and flexible targets. Pretty simple. So these are all the principles of performance management that you should have. Got it? And finally, characteristics of beyond budgeting. By this time, we know already. It is flexible, it is innovative, which means it will allow new things to happen. Okay. And timely, write it down, Ray. Mokko fellows. Okay. Timely allocation of resources is necessary for beyond budgeting to be successful, whether it is money or whatever it is. And benchmarking is also necessary. Why? Mokko fellows, why benchmarking is a characteristic of beyond budgeting? Here, one of the principles, what is that? Based on relative performance. Relative performance means what? You compare your performance relative to the competitors, which means you are benchmarking. Simple. Got it? And finally, rolling budgets. What do you mean by rolling budgets? Rolling budgets means what? Changing budgets, exactly. According to the changed external scenario. Got it? That's it. Chalo, finish it off. So with this, we are done with what, Nana? All the concepts of budgeting and budgetary control. We'll wind up the session here. Tomorrow we'll continue with the sums. Right, Nana, let's start. So we have come to the last chapter now. Other than this, we have only case studies, okay? So this is very important from your examination perspective as well, okay? So as you can see, you'll get a compulsory question every single attempt. And there are so many attempts where it has come almost like 30 plus marks in the examination. Sometimes it has come as low as 10 marks, as well. I think 2 attempts, I think it has come less than, somewhere around 10 or 12 marks. Rest of the attempts, it has always been more than 25, 30, 30 plus, okay? So that way it is really important. Chalo. Now let's try to understand what do we have in this particular chapter, okay? So what do we have here? The entire bird's eye view. First we have something called responsibility accounting, and then we have something called benchmarking. Although that benchmarking has been totally removed by your ICA in the new study material, only a little bit will be learning when compared to the older study material. Then we have something called TBL. What is TBL? Triple bottom line. Okay. Apart from this, we have something called performance measurement systems, which means how are you going to measure the performance? Okay. You can divide them into two categories. One is pure financial, the other one is financial and non-financial. Pure financial means purely based on what? Numbers. Okay. All your performance will be measured based on numbers only. Under that, we have something called ROI, RI, EVA and SVA. SVA has been removed from your syllabus, so it no longer exists. Okay, so this is not there. Okay, it's removed from your syllabus, it no longer exists. Comedy is that even after removing from your syllabus, it has come in the attempt. Okay, till that time it did not come. That's the fun part. Not even one question has come from shareholder value added. Once it is removed from the syllabus, very next attempt it has you got a question for 4 marks. Okay, I think they've added bonus marks in that particular attempt. Okay, I think it's like 2 attempts back or something like that. I don't remember exactly. That's the fun part. So SVA is not there in your syllabus. Okay, right. And even benchmarking also almost virtually we can say it's out of your syllabus, because earlier the content used to be very strong. It used to be like 7 pages or 6 pages, something like that. Everything has been removed. Now you have only half a page. Okay, so almost virtually we can say that that is also removed. Almost. Okay, after that, what do we have? We have financial and non-financial performance measurement systems. Means you try to measure the performance of a company based on both numbers as well as non-numbers. So under that, what do we have? Balance scorecard, okay, which is very important. Then we have performance pyramid. We have building block model, as well as we have what performance prism. Okay. Then apart from that, we have another important area which we call it as performance measurement in not-for-profit organizations as well. Okay, that's important area. So that is your syllabus with respect to this particular chapter. Okay, right. Now can you guys please tell me what are the things we have in the chapter? What is the first one we have? Responsibility accounting, and after that benchmarking, TBL. What is TBL? Triple bottom line. Then you have performance measurement systems, which can be divided into 2. What are they? Exactly, financial as well as financial and non-financial. So under financial, what do we have? ROI, RI, EVA. ROI means return on investment. RI means residual income. EVA means what? Economic value added. Then SVA has been removed from syllabus, so let's forget about it. Then after that, we have financial and non-financial. What is financial and non-financial? Yeah, balance scorecard. Then we have performance pyramid, building block model, performance prism. Got it? Yes. And apart from that, we have one more thing. What is that one more thing? Performance measurement for a not-for-profit organization as well. That is also important. Got the point? Yes. Okay, that's it. So let's start with the first one. What is the first one we'll be starting with? Exactly, Nana. Responsibility accounting. Okay. Now actually, we have already covered this. It is nothing new over here. Okay, nothing new. We have already covered. Where? In transfer pricing chapter. Okay. So responsibility accounting means making somebody responsible for what they are doing. Okay. In fact, it's not something new for us. We have already seen this in what? Transfer pricing, and even we have seen this in standard costing indirectly, not directly. Okay, let's try to understand the definition of it. So what is the definition? Collecting, summarizing and reporting of financial information where individual manager is held accountable or responsible for what? Cost, revenue and assets of the firm. So if you could remember, we have seen in transfer pricing chapter that a particular division can be treated as cost center. It can be treated as what? Profit center. It can also be treated as cost center, profit center, then investment center as well as revenue center. You remember that? In that, let's say you are treating a particular division as investment center. What does it mean? It means that that particular division manager is responsible for what, Nana? Cost, profit, as well as what? Small investments, correct? He is responsible to that extent, and his power is also given to that extent. Power and responsibility goes what? Hand in hand, correct? You guys remember that or not? Right, just a second, guys. Right, okay then. So, when we treated a particular division as what? Investment center, there we have seen the same thing. What is that same thing? that a particular division, whatever it is, say for example, it is a production division, that particular division manager will be given power to the extent of what? He can take decision with respect to cost, with respect to what, Nana? Revenue. So cost and revenue means automatically he is controlling profit and also some investment decisions, correct? That's why it is called investment center, obviously, right? And I told you at the time that treating a particular division as an investment center is the extreme form of decentralization. This is a word that I've used, which means that is the only area where you give extreme powers to somebody, you know. And the minimum form of decentralization is, we can say, a cost center, because you give him power only to the extent of managing what? Cost, nothing beyond that. Okay. So from that perspective, try to understand this sentence will be very simple. So collecting, summarizing and reporting of what? Financial information, where a particular manager will be held responsible or what? Accountable for cost, revenue and assets of a firm. To the extent that he is responsible, whatever the power that is given, to that extent only. So idea behind this concept is to judge each manager's performance based on how he manages what? Each item which are under his control. This is very important. Why? Because we have seen it so many times that we cannot judge somebody based on certain factors that are out of his control, correct? So only those factors which are under his control, to that extent only. That's obvious. We know this already, nothing new. Okay, what else? This performance measurement is directly linked to organization structure, and depending upon the size of the organization structure is divided into the following 4 parts. Sir, what are those 4 parts, sir? We have something called entrepreneurial organization structure. Then we have divisional organization structure. This is what we have seen in which chapter? Transfer pricing. Then we have matrix organization structure. And then we have something called functional organization structure. Okay, sir. What do you mean by this? As you can see here, when it comes to functional organization structure, straight away I've written here that it is for small as well as medium organizations. Okay. This is for whom? Small as well as medium organizations. Means you will be dividing all your departments based on what, Nana? Functions. What functions will have? Production function, marketing function, finance function, selling and distribution function, a lot of functions. Okay, I just gave an example over here. Then there will be something called head office. And this head office will divide what? Everything. Everything in the sense, at what price you have to sell, how many units you need to manufacture, okay, who is responsible for what, everything will be decided by whom? Head office. Are you able to understand? And every function will have a manager. For example, production function will have a production manager, marketing function will have a marketing manager, finance function will have a finance manager, S&D function will have a S&D manager. Here I have taken purchase function, so you got a purchase manager. Got the point? Carry. All right. Okay, sir. So to put it very simple, what you are seeing right now, your organization comes under what? Functional organization structure. Got the point? Hello. Yes, everything is decided by and controlled by whom? Head office. Exactly. Next, divisional organization structure. You will go for divisional organization structure for what organizations? Large organizations who are really big in size. Okay. What happens if an organization is big in size? Each division will be treated as a separate entity. Actually, it is not separate entity, but we have to treat it like that. We need to give them that sort of power. We need to give them that sort of autonomy, thus that they are in a position to work on their own. Are you able to understand? Of course, we'll be having control, but it is not like a functional organization. Are you able to understand? Control will be, let's say, in functional organization, almost 100% control you'll have. Here you'll have, say, somewhere around 20-25% control. That's all. Yare Nana, you take any foreign company, Nana, for example, here we have Kia. Correct? Here Kia will operate autonomously only, but still under the directions of what? The head office in Seoul, right? Which is in South Korea, isn't it? Are you able to understand what I'm trying to say? Everybody, right? Because here you can't control everything from head office. Logically, it will not work because the challenges for Kia in India are customized here, isn't it? And you have to give that sort of independent powers to the guy so that he can take decisions according to what? The customizations, the preferences, the uniqueness, the challenges of India. And that's the reason what they are doing, Mukku fellows. In international markets, Kia, for example, if you take Seltos, they come with a much more, safe, much more stronger body structure. They are using more, high quality steel over there. But in Indian version, they are using what? A little bit of low quality. That's why the crash test, what has happened recently with respect to Kia Seltos, it was not giving that sort of good star rating. I think it has come 3 stars if I'm not wrong. Okay, you got it? So what we are trying to say is that probably, I don't know, because maybe the Kia management in India, they would have thought that all we need to do in India is to go with features and the way it looks and all that, and Indian customers will be able to go with that. Yes, we went with that, but our taste and preferences are what? Changing right now. It was not like 5 or 10 years back, isn't it? I think probably they'll also change is what I'm feeling right now. Otherwise, I really doubt all the 3 people will be out of the market in another 3 or 4 years, or maybe like 10 years, maybe. Maruti Suzuki, Hyundai, as well as what? Kia. That doesn't mean that Tata and Mahindra, they're doing really well. They also have got their own problems. The first problem with them is their dealership network is pathetic. If you go to any Hyundai or Maruti dealer, 90% of the dealers are good. 10% you'll find what? Pathetic dealers. When you go to Mahindra and Tata, 90% you'll find what? Pathetic dealers, and 10% will be what? Good. And the thing is, when we are trying to spend somewhere around 10 lakhs or 50 lakhs or something like that, you want the experience to be really good because it's a lifetime memory for you, isn't it? That is most of our middle class families, isn't it? If you're rich, that's a different thing, but for middle class family, it's a lifetime memory, isn't it? So therefore, when you go to the dealership, the way you're getting received, okay, the way they give you assurances, when the car is going to come, what can we provide, that, this, and the way they give you after sales service whenever there is a problem, all these things, they matter, right? Everything comes under the ownership experience. You understand the point? Everybody has a what? That's the reason even I'm also conscious from that perspective only. You got it? Right. So that's the thing. So therefore, whenever we talk about these big organizations, they will have something called this divisional organization structure, where they give that independence for all those branches of them. We were talking about Kia, right? So whether it is an Indian branch of Kia or it is in US, whatever it is, they will customize their strategy according to the challenges in the country where they are operating on. Got the point? So each division is treated as separate entity, and the divisions can be based on product, market, as well as geographical area. In my example, I was talking about what? Geographical area. Division heads are free to set what? Selling prices, decide where to sell, and they can also take what? Output decisions. Here they are free. What about here? Who decides everything? Head office. Whereas here, divisional heads. Are you able to understand? That's the difference. Each division is further decentralized based on what? Functions as well. Again, so now you see, each division is treated as a separate entity. And then they will be further divided into what? Functions. Here, the only division is one company that is directly divided into what, Nana? Functions. Here, that's not the case. You have a division, they are divided into what? A separate entities, then each of them are divided into functions. Got it? You can see the example. I gave IT's example over here. So it's a large organization, obviously. So it is based on what? Divisional organization structure. Okay, we have north, south, east, and west in India, for example. And in each of these entities, again, you'll have what? PM, MM, FM, PM. What is this PM, MM, FM, PM? Here we have production manager, marketing manager, finance manager, as well as what? Purchase manager, like that. Are you able to get me? Right? Okay. So what did we understand so far? That organization structure usually will be depending upon the size of the entity. If the size of the entity is really, really small or medium, we'll go with functional organization structure. If it is really big, we'll go with divisional organization structure. Then what about these two? Entrepreneurial organization structure means you are trying to have a startup. For example, you have Ola. Okay, Ola is not a startup right now. Kind of, you have Ather, you have a lot of startups going on, correct? So they will have what kind of a structure? Entrepreneurial organization structure means during early days of business, owner acts in dual capacity. What is the dual capacity? He acts as a owner as well as he acts as a manager. That sort of a setup, we call it as what? Entrepreneurial organization structure. Purely applicable only for startups, that's all. Now moving on to the last one. What is the last one we have? Matrix. What is this matrix, sir? Sometimes people feel that they need a mix of functional organization structure as well as what? Divisional organization structure. Mostly it will be medium-sized companies. Medium-sized companies means they'll be neither too big in order to maintain completely divisional kind of organization structure, or they'll not be too small either to have what? Functional organization structure. Then they'll go for mix. Are you able to understand? Then they'll go for mix. That we call it as what? Matrix organized structure. Sir, what do you mean by that, sir? For example, I'll tell you. Let's say there is an entity. What is this? Medium in size. Suppose. Okay. It is basically from south part of India, southern part of India. Say for example. Okay. Then southern part of India is very big, na? So southern division will be treated as a separate entity. Again, under that you'll have all these functions. Okay. And then there will be something called northeastern division. Say for example, eastern division, where it comes to that Arunachal Pradesh and all that. There, let's say business is not that great. So what they'll do, they will not treat it as a separate entity. In fact, this head office, what you have got in the south, will only cover everything, will only control everything in what? The east division. Are you able to understand? Independent power will not be given to them. Again, let's say in north, let's say the market is really big, then this will be treated as a separate entity. Again, it will be further divided into functions. You understand that? Like that, they'll have a mixed bagged kind of a thing. That we call it as what? Matrix organization structure. Got it? Bol rahe Mukus? Okay. That's it. So with this, we are done with divisional organization structure. Look at the summary. So what is the summary we have got? Summary of divisional performance measurement. Establish organization structure, whether it is functional or divisional, depending upon whether your company is small or it is medium or it is big. Establish responsibility center, make somebody responsible, identify the person responsible for each center. Then identify KPIs. What is KPIs? We'll see later. In this chapter only, we're going to learn. Don't worry about that. And finally, you measure the performance and take what? Action. KPIs means what do we call? Key performance indicator. Got the point? What is that, sir? Don't worry. We'll be seeing it shortly. Okay? Right. Now, what is a good divisional performance measurement system? Very simple. It has to promote what? Goal congruence. What do you mean by goal congruence? Yeah, any decision taken by the divisional manager which are aligned with the overall objectives of the company. We call it as what? Goal congruence, or which are in the interest of the company as a whole. Which are in the interest of the company as a whole. Right. It includes only controllable factors, obviously, isn't it? You cannot try to decide or assess performance of any individual based on certain factors which are outside his control. So many times you have seen. And also it has to recognize both long term as well as short term. That is the reason here we have two parts. One is pure financial, the other one is what? Financial and non-financial. Because you guys know that already financial means numbers. Numbers will always be short term. Financial and non-financial means numbers and non-numbers. That will be also considering what, Nana? Long term. Because non-numbers means it is basically you are thinking in long term only, na? Isn't it? So that is the reason here we have clearly written. What did we write? A good divisional performance measurement system must recognize both short term as well as what? Long term objectives. Numbers will recognize only what objectives? Whereas numbers and non-numbers will recognize both what? Long term and short term. Got it? Arey, bol here. Alright. Okay, chalo. Let's continue. Now see you. Now, we'll start with the first performance measurement system. And what is it, Nana? Pure financial performance measurement systems. Now, you know that under pure financial performance measurement systems, what do we have? We have ROI, we have RI, and we have what, Nana? EVA. So first we're going to start with what? ROI. Now tell me one thing. ROI means what? You are trying to measure the performance of a division based on ROI. When you try to measure performance of a division based on ROI, when you treat that particular division as what? Investment center. You remember that? Try to recollect all those things that I've told you in divisional transfer pricing. If a particular division is treated as a cost center, how will you measure the performance? By comparing standard cost with actual cost. If that division is treated as a revenue center, how will you measure the performance? You will give a target revenue and you'll look at the actual revenue. You will compare both the revenues. Means sales will be compared. If you are treating a particular division as a profit center, what you'll do? You'll give a budgeted profit or something like that. You'll compare it with the actual profit. Similarly, if you treat a particular division as an investment center, how will you measure the performance? By looking at ROI. What is ROI? Return on investment. That's what we are trying to look at here as well. Okay. Ready? Now. Sir, what is this ROI? For each division, ROI is equal to, we know that ROI is nothing but what? Return divided by what, Nana? Investment. That's what you mean by return on investment, correct? Return divided by investment. Return is nothing but profit, but here specifically we are taking what profit? Controllable profit. Very, very, very important. Controllable profit means, for example, head office expenses are there. Is it controllable by the divisional manager? No. In that case, you should eliminate that. Are you able to understand? You should not be reducing this. Suppose there is a profit in the question, which is after reducing head office expenses. What you will do? You will add it back, because head office expenses is not something that is controlled by the divisional manager. So add it back, nullify the effect, and that will be your controllable profit. You understand the point? Everybody, right? So it is just an example that I gave you here, that head office expenses is not under your control. Like that, it can be any X, Y, or Z. Okay, it can be anything. Ultimately, when you're trying to measure the performance, you should take into consideration only those factors which are under the control. So many times we have seen, again and again we are repeating, right? Moving on to the denominator. What is denominator? Investment, because it is return on investment, correct? What investment? Net total controllable assets. So everywhere, what is the keyword? Controllable. Only those assets which are under the control of the divisional manager, only those assets you have to take it as what? An investment. Not those assets which are not under the control of the divisional manager. So that's very, very, very important. You got the point? Okay. Now, next question. Okay, sir. Controllable assets. Assets means what, sir, here? Net. I've used the word what? Net. Correct? Net means after reducing something. After reducing something. What is that you are reducing? Total assets minus what, Nana? Total liability. That's all. Okay. That way, you'll be calculating this net total controllable assets. Okay. Right. Now, I gave certain positive points and certain negative points for measuring the performance of a division based on return on investment. So, what are the positive points? It is in percentage terms. What do you mean by percentage terms? Say, for example, your answer will be like this: 20%, 25%, 30%, something like that. Okay. So, if the answer is in percentage terms, it is ideal for comparison. Comparison, I mean, what are you trying to compare? Different size divisions. For example, let's say there is division A, division B in your company. Size of division A is very big, size of division B is very small. But when you are calculating ROI of both the divisions, this ROI, because the answer is in percentage, automatically it eliminates what? Size difference, correct? Yes or what? So therefore, even B also has got a healthy chance of showing its true performance, even though size wise it is very small when compared to what, Nana? A. Suppose if it is not measured in terms of percentage, similarly let's take A and B, where A is very big in size and B is very small in size. And in that case, what happens is that suppose you are measuring based on absolute rupees. Okay, absolute rupees like 1,50,000. Then what will happen? Always profit of A will be greater than what? Profit of B. So no matter whatever the situation it is, correct? Then it is not a fair comparison, obviously. Okay. So therefore, that is a good point. That is a plus point. That is a positive point of what? Using ROI as a performance measurement system. But of course, there is a negative point as well. What is the negative point? It creates goal conflict. I hope you guys know what is goal conflict. What is goal conflict? Taking decisions by the divisional managers that are not in the interest of the company as a whole, or that are not aligned with the overall objectives of the company, correct? Right. To understand the concept, let's take an example. So let's say there are division A as well as division B. As of now, their respective return on investment is 15% as well as what? 5%. And there is a new project which they are expected to accept. If division A accepts the new project, from the new project, ROI will be 10%. Whereas for division B, from the new project, he will be earning 7%. And the overall cost of capital for the company is what, Nana? 8%. Now tell me what these divisions will do. Division A manager will think that already I'm earning how much? 15%. If I accept this, I'll be able to earn only 10%. Thereby, my average ROI will get reduced. Got the point? Thereby, tomorrow I might miss bonus or incentives. Therefore, division A manager will reject this particular project. Now, coming on to division B, he will think that right now I'm earning only 5%. And if I accept this project, I'm going to get what? 7%. So it is lot more, and my average ROI also will increase, and therefore he will accept. Got the point? Now, but tell me from company's perspective what should happen here. From company's perspective what should happen? From the point of view of the company, the cost itself is how much, Nana? 8%. So company wants something that is more than its cost. So logically, from company's point of view, only if division A accepts, the company will earn through division A how much? 10%, which is more than its cost. Then only the project will be feasible for company. Whereas if division B accepts, then the return here is only 7% and the cost for the company is how much? 8%. So naturally company will be facing what? Loss. So from the point of view of the company, or in the interest of the company, A should accept and B should reject. Whereas in reality, A rejects and B accepts because of what? ROI. That is why we have told here that it will create goal conflict. So to show higher ROI, managers may try to not invest in new assets even if it is in the interest of the company, because if you invest in new assets, what will happen? This denominator will increase, correct? But those assets which you invest today by buying in a new equipment or machinery or computers or whatever it is, immediately it will not start giving you profit. It will give you profit only next year, next year, next year, correct? Therefore, probably this year this will remain same, but your denominator will increase because you have invested, correct? As a result, your overall ROI will come down, and as a result, you may miss what? Bonus. And therefore, citing this as a reason, many divisional managers will not even what? Show interest to what, Nana? Invest, even though that investment decision is in the interest of the company. You understand the point? Is it a goal conflict or not? Yes, it is a goal conflict. But this is a side effect of having a wrong performance measurement system. Got the point? So division A will reject the proposed project as its ROI is less than the present ROI. Division B will accept the proposed project as its ROI is greater than the present ROI. For company as a whole, proposed project should be accepted by A and it should be rejected by B. But actually, A will reject and B will accept. So this is a perfect example of what, Nana? Goal conflict. Got the point? Hey, bol rahe ho fellows. Got it? Okay, sir. What is the solution for this goal conflict? Well, the answer is very simple, and we have the answer as well. What is the answer? Residual income is the answer. Sir, what is this residual income, sir? To solve the goal conflict problem, which we have faced just now, because of whom ROI, we will ask the divisional managers to take decision based on RI rather than ROI. So what is RI? RI means residual income, which is equal to proposed investment amount into what? ROI minus overall cost of capital. For example, if you apply in this particular example, what will happen for first division A? What was the proposed investment amount? So let's say it is 1 lakh. Here I gave you example. Say investment is how much? 1 lakh. 1 lakh into what was the return on investment for division A? 10% minus overall cost of capital is how much? 8%. So division A will be getting something positive over here, which is 2000. Whereas RI, if you calculate for division B, it is 1 lakh is the investment into, it will be getting 7%, whereas cost is how much? 8%. Therefore, it will be getting RI of minus 1000. So if you try to measure the performance of the divisions with RI rather than ROI, then division B, because it gets a negative RI, it will reject. Division A, because its RI is positive, it will accept. So division A will accept and division B will reject. That's what the company wants. Therefore, goal congruence is achieved. So therefore, what we have done right now, the goal conflict scenario, which we have seen by using a performance measurement as ROI, has been rectified by using what, Nana? RI. So from this, can we conclude saying that RI is better when compared to ROI? Because RI never creates what? Goal conflict, and RI always creates, RI never creates goal conflict, and ROI always creates what? Goal conflict. Can I say something like that? Answer is no. Why? Because there is a negative point for RI as well. What is that negative point? It will not suit for measuring differently sized divisions. Means if there is a division whose size is really big and if there is a division whose size is really small, always the bigger divisions RI will be greater than what, Nana? Smaller divisions RI. You understand the point? Because RI is an absolute number, isn't it? So size is greater, automatically your absolute number will keep on what? Increasing. Therefore, when you try to measure the performance of two differently sized divisions, can I use RI? No. In that case, which is better? ROI is better. Exactly. So both of them has got a plus point as well as what, Nana? a minus point. What's the point? Everybody, yes? All right, fantastic. Okay. Now I'll give you 5 minutes of time, not 5 minutes, 3 minutes is enough. What do you do? So far, you revise. Then we'll go to the important topic, that is EVA. Revise, you have 3 minutes. So far, whatever we have done in this chapter, revise it now. Okay. Revise, guys. Right, finished, huh? Okay, chalo, let's finish off this as well and then we'll do revision. See ya. Ready? Yeah? Economic value added. Now, is it important or unimportant from examination perspective? It's a okay kind of thing. Okay means may come or may not come. Let's say 4 attempts once, it will come once. That too. So far, it has come twice in, let's say, 8 attempts. Okay, so that's the thing. So therefore I said it is okay, right? But this is one area where I've seen people struggling. I don't know, because it is not a new topic. I think you are getting this in what? FR, isn't it? Have you guys covered this already? In SFM also. Did you guys cover? Yeah. So the thing is, once you are really familiar with this, so I don't think this will be difficult, but I've seen people struggling unnecessarily. That's okay. We have covered it in a very simplest way possible so that it will be cool. Right. Shall we start? Okay. Okay, what is the purpose of this economic value added? Already we have seen two different types of number-based performance measurement systems. What are they? One is ROI and the other one is RI, or we can say pure financial performance measurement systems. And the last one in that is EVA. What is this EVA? The purpose of introducing EVA as a performance measurement system is to overcome two limitations. What are those two limitations? First one, we ignore what, Nana? KE. So far we have already seen ROI and RI, isn't it? Did we consider something called cost of equity? No. So profit based on performance measurement systems, whatever you have got, you have to really consider what, Nana? KE as well. That's one of the biggest mistake. Why? Because although there is no commitment for you to pay what you have to pay to the equity shareholders, but logically speaking, if you don't pay what they're expecting, what these guys will do, they'll sell away your share. Eventually they'll eradicate your wealth. So they are actually very dangerous, and that's the reason they're costly as well. You got the point? They are costly because they expect too much, because you are giving them least preference. So therefore naturally their risk is high, therefore they expect too much from the company. That's why the costliest source of capital is what? Cost of equity. Everybody knows that, isn't it? Yes. Second one is accounting profit can be manipulated. This is another problem. Many times when we try to calculate whether it is ROI or it is RA, always we take what into consideration? Accounting profit. And accounting profit can be absolutely comfortably manipulated. You understand the point? These two are the biggest limitations that EVA tries to what? Answer. So EVA wants this problem to get resolved. What problem? Not considering KE, which means what EVA will do? It will consider KE, simply put, right? And also, because accounting profit can be manipulated, EVA tries to get into something called economic profit. So what is that? We'll try to understand, okay, later. You got the point? Sure, fine. So how to calculate this EVA? We'll go stepwise. Now first, step one. What is step one? We have something called NOPAT. What is NOPAT? Net operating profit after taxes, which is nothing but profit available for what, Nana? Equity and debt holders. Profit available for equity and debt holders. Okay. In other words, let's put it this way. It is nothing but profit after tax plus interest after tax. Are you able to get me? In other words, profit after tax, here what I'm doing, see here, PBIT into 1 minus T. What do you mean by PBIT into 1 minus T? Profit before interest and tax into 1 minus taxes. The logic behind this is very simple, because your interest is a tax deductible expense. You got the point? That's the reason we are going like this. Okay. So your step one is to calculate something called what, Ray? NOPAT. What is NOPAT? Net operating profit after taxes, which is nothing but profit available for equity and debt holders. In other words, depending upon the information given in the question, Ray, it is PAT plus interest after tax, or it is PBIT into what, Nana? 1 minus taxes. Either way. Right. Okay. That is step one. What is step two? We're going to calculate something called total opening capital, and we're going to multiply the total opening capital with what, Nana? Overall cost of capital. Overall cost of capital is nothing but what? Weighted average cost of capital. But here we have only two types of capital. What are they? Equity, debt. That's all. So from CA Inter in financial management itself, you guys know how to calculate WACC, which is nothing but weighted average cost of capital, which is weight of equity into cost of equity plus weight of debt into cost of debt. Of course, when you are taking cost of debt, it has to be after tax, which is nothing but interest into 1 minus taxes. Correct? Right. Sir, what do you mean by this opening capital? Sir, opening capital means it includes share capital plus reserves and surplus plus what, Nana? Long-term debt. Again, I repeat, opening capital means it includes share capital plus reserves and surplus plus what, Nana? Long-term debt. Okay. So what is the last step? Calculating EVA. How to calculate EVA? Step 1 minus what, Nana? Step 2. What is step 1? NOPAT. What is step 2? Opening capital into what, Nana? KO. You'll get your EVA. That's all. Calculation wise, this is what you have to follow. Okay. Now, can you please tell me how to calculate EVA, buddies? First, we'll calculate something called NOPAT, which is nothing but profit available for equity and debt holders. You can calculate it as NOPAT or profit after tax plus interest after tax, or PBIT into 1 minus taxes. Correct? What is the second one we have? Opening capital into weighted average cost of capital. Correct? Weighted average cost of capital is nothing but what, Nana? KO. Opening capital is nothing but what, Nana? Share capital plus reserves and surplus plus long-term debt. How to calculate weighted average cost of capital? Weight of equity into cost of equity plus weight of debt into cost of debt. And of course, we know cost of debt is nothing but exactly always after tax. And finally, how to calculate EVA? Step 1 minus step 2. What is step 1? NOPAT. What is step 2? opening capital into KO. Got the point? All right. All right. Fantastic. Okay, sir. So with this, one of the limitation, has it got solved? What is that limitation? Ignoring KE. Did we consider KE? Absolutely yes. So one limitation is solved. What is the next limitation? Accounting profit can be manipulated, and that we need to solve. Correct? How to solve that, sir? Let's see. How EVA is going to solve the second limitation, that is what, Nana? Accounting manipulation. So for that, see here. Ready? Yeah, okay. Now, EVA always links the operating returns to the assets that we use to generate the returns. What do you mean by that? What EVA does is that, say for example, there is some X asset. Okay. From this asset only, you have generated returns. Then link that return to the respective asset. That is what EVA tries to do. Also, EVA helps managers to identify areas of weakness in performance and also provides what? Solutions. For example, one asset is there. You have spent 50 crores to buy that asset and you're not utilizing that well, or you are utilizing it but you're not getting good amount of returns which justifies its investment. So EVA will try to give you a solution for that as well. Next, EVA specifically suits the business of any multi-product having many factory sites and multi-divisional companies. EVA can help appraisal of divisional managers for their overall profitability. Sir, how, sir? Right now, all these are what, Nana? Uses. Uses of whom? EVA. To understand uses of EVA, first of all, you should know what is EVA, correct? We already know what is EVA, but not completely, but a rough idea. What is EVA? EVA is nothing but no PAT minus what? Opening capital into KO or WAC. Right. Through that, we have already understood that one of the negative points of EVA has been what? Solved. But we have the second negative point. What is second negative point? How EVA is going to solve what, Nana? Accounting manipulation. And that we'll try to see here. See here. Ready? Yeah. First, we'll start with depreciation. Okay. Normally, what we'll do? We will be going with accounting depreciation by default. Correct? Whichever the method that you choose. But what EVA says is, because accounting profit can be manipulated, I'll not be allowing accounting depreciation. What you usually do in your accounts. Forget about that. No, I'm not going to allow that. Then what are you going to allow? I'm going to allow something called what, Nana? Economic depreciation. Sir, how to calculate economic depreciation? Where it will be? Very simple. It will be there in the question. So which means first, you have to nullify the effect of accounting depreciation and give effect for what? Economic depreciation. Now the question is how to nullify the effect. Already whatever that you have done or able to understand, if you have not at all reduced depreciation, then it is fine. But if you have reduced accounting depreciation, to nullify the effect, what you have to do? Add back, so the effect gets nullified, and now you will reduce only economic depreciation. Sir, what is this economic depreciation? The actual concept is depreciation will be based on actual usage of machines, okay, rather than whatever the accounting philosophies that you follow. Got the point? It is based on actual usage of machines. That we call it as what depreciation? Economic. Sir, how to calculate this? No worries, that will be given in the question. All you have to do is nullify the effect of accounting depreciation and then reduce what? Economic depreciation. There ends the matter. Fine, sir. So that is the effect on profit? Yes. Sir, what about the effect on capital employed? Sir, very simple. On the closing capital employed also, you'll do the same treatment. What is that same treatment? Already you would have reduced the effect of accounting depreciation. Nullify that by adding accounting depreciation and then reduce what? Economic depreciation. Are you able to understand? But the fun part here is, do we have any importance for closing capital employed in our formula? Specifically, I've mentioned only what? Opening capital employed. So logically speaking, we'll not be worrying about what is happening to closing capital employed when we are solving the question. Got the point? Because it has got nothing to do with our EVA calculation. Who is important for us when we are calculating EVA? Opening, not closing. Okay, right. Chalo, done. Till there, just revise. I'll just have tea and we'll continue. Till there, just revise now. Getting cold. Ray Mokus, revise Ray. Now, after we're gonna finish off the CVA, Samba will explain the entire concept. Okay? Right? Kare Samba? This credit goes to you. Huh? Okay. That way I'm thinking of something special. We'll make him stand here and then just like a elocution competition. You know that? Then he has to deliver. Kare Samba? Chalo. Yeah. Yeah. And for every mistake Satvik does, we'll give the punishment to Tatvik. Not Satvik, sorry, Samba. Give the punishment to Tatvik. What punishment? For every mistake that Samba does, Tatvik should either sing or dance. Okay. I know. That's the reason we are not going to have any break. Or even if we're going to have, except those two, we'll be leaving everybody from the class. And for the kind of... right, guys, let's continue. Now, see us here. Don't worry. After that, I'll give you time. Don't worry. Okay. Shall we continue? Yeah. Okay. We have seen the effect of depreciation. We said that whatever the depreciation that will be given in the question, eventually, just nullify the effect of what on a accounting depreciation and give the effect of economic depreciation. So what you'll do, already it would have got reduced. So just add it back and then reduce what? Economic depreciation, right and simple. Next, we have something called non-cash expenses. Okay. So non-cash expenses, what you have to do is that you got to what? Add back to the profit, which means in case if it has been what nana reduced, you need to what? Add it back. Same thing you have to do on capital as well. Add back what nana? Non-cash expenses. That to what? Current year non-cash expenses should be added to the current year closing capital. Okay. Now, non-cash expenses of last year will be added to what nana? Opening capital. Now, this is important for us when we are solving sums. So, we are not worried about current year non-cash expenses. We are worried about what? Exactly. Now, why is that we need to add back non-cash expenses? Because it is not cash. In reality, cash has not got reduced. It's a mere book entry, na? Basically. You understand the point? Yes or what? Alright. So, if there is a non-cash expense, and if I say that 5,000 I've got non-cash expense, what does it mean? It means that 5,000 cash has got reduced. No, it still remains the same, but only merely on the books you are trying to what? Reduce it. So, there is a very good chance of manipulation. You understand the point? And that is the reason what EVA says is that let's nullify the effect of non-cash expenses. How to nullify the effect? You have already reduced, add it back. Effect is nullified. Got the point? Yes, right. So we have to do everything on profit as well as on what nana? Capital employed. What capital employed? Current year capital employed, that is current year closing capital if the non-cash expense belong to current year. But if it belongs to the previous year, then we'll give the same effect on opening capital employed. That is important for us because it will affect our EVA calculation. Next. So far what we have done, depreciation and non-cash expenses. Then we have something called R&D, advertising, staff training expenses. Now you know that all these expenses, whether it is research and development or advertising or staff training, their benefit will go beyond 1 year. Correct? Normally all the expenses that we see, their benefit will go only for 1 year. Therefore, in that year in which it is incurred, in that year only you will debit them off, correct? But there are certain expenses whose benefit will go beyond 1 year. For example, R&D. Tell me, R&D benefit will go for 1 year or many years? Many years to come. Same goes with advertising. Same goes with staff training as well, correct? Therefore, what is the effect on profit? These expenses whose benefit will go for multi-years, you add back considering them as non-revenue expenditure. You guys know that obviously because they are not revenue expenditure, because benefit is going to be for multiple years. And what about the effect on capital employed? Add back to the closing capital employed, correct? But depreciation will be allowed for expenses capitalized in what, Nana? Previous years. Only in previous years if you capitalize, then current year I'll allow what? Depreciation to get. You got the point, right? This is very important. Keep that in mind. Okay, what about taxes, sir? Very simple, sir. We'll not be considering any complications like advanced taxes, that taxes, this taxes, that this. How much taxes you have actually paid, that will be taken. There ends the matter. Everything else will be what? Eliminated or nullified. Got the point? So we'll try to keep it very simple. What we're going to do? Whatever the actual taxes that you paid, I'm going to take that. Everything else will be what? Eliminated. There ends the matter. Shall let's try to look into the example and let's try to understand. So what is the example that I gave you over here? So we have PBIT 162. Interest is how much, Ray? 46. We have PBT, profit before taxes, how much? 116. And you have tax, then you have PAT. Opening capital employed is also given. Right. What about the other data in the question? We have current year accounting depreciation. Economic depreciation is given. R&D in current year is given. Non-cash expense of current year is given. Previous year is given. Provision for doubtful debts in current year is given. Last year closing balance as shown in balance sheet is also given. Taxes paid is given. Correct? So what is that we have to calculate from this example? NOPAT as well as adjusted opening capital employed. Now NOPAT calculation is very easy. How to calculate NOPAT, Ray? Just take PBT first, which is 116. Where do we have PBT? Here. Here. Okay. You have PBT over here. Correct? Take that PBT. Always take profit before taxes. Keep that in mind. Then what I'll do? I'll do all the adjustments. Or what are the adjustments, sir? First adjustment, accounting depreciation, already it is given as 118. So you would have reduced it while calculating PBT. Correct? This is after reducing all the expenses, na? Profit before tax. So now to nullify the effect, what I have to do? Add back. Then what I have to reduce? Economic depreciation. Correct? Then what about R&D? This also you would have reduced while calculating this, thinking that it's a revenue expenditure. You got the point? But is it a revenue expenditure? No, it's a non-revenue expenditure. What I have to do? Nullify the effect. How to nullify the effect for something which you have already reduced? Add it back. Got the point? Then other non-cash expenditure of current year. What do you have to do? 14. You have reduced. Now I have to what, Nana? Add it back. What about this previous year? That we will see later. Only current year only will show the effect on what? Profit. Okay. Then what else you have got? Provision for doubtful debt. That also here it has been what? It would have got reduced. I have to add it back. Got the point? All right. Okay. So what we have done? We took PBT. We added accounting depreciation. Reduced what? Economic depreciation. R&D we have added. Non-cash we have added. Provision for doubtful debts of current year we have added. We got adjusted PBT. Got the point? Then what about opening capital, sir? We have opening capital employed as how much? 1495. What are the adjustments that we're going to do on this? Here we have non-cash expenses of current year. We will give effect on profit as well as on closing capital employed. Correct? Whereas non-cash expense of previous year will be added to what, Nana? Opening capital employed. Therefore, that 12 should be added here. Correct? Next. Sir, what about this one, sir? Provision for doubtful debts in current year, which is how much? 4, will be added to what, Nana? Profit. And also you'll try to show the effect on what? Closing capital employed of current year. Whereas last year closing balance as shown in the balance sheet. How much is that? 5. This will be given effect on what? Opening capital employed. And how much is that? 5 over here. And you'll get adjusted capital employed. Got the point? Very simple and straightforward example. Yes? Hello? Alright. Now look at the note here. First note. I've added accounting depreciation and then I've reduced economic depreciation on closing capital as well. But because closing capital has got nothing to do with my EVA calculation, I did not show that. Similarly, you have to add back 2. What is 2 over here? Which point is 2? Which point is 2? You have to add back to closing capital employed. Which one? The R&D, which is how much, Nana? 24, which I've added here, right? Simultaneous effect will be happening on closing capital employed as well. But I did not consider that. Why? Because it is not necessary for me to calculate what, Nana? EVA. Non-cash 14, which I've added here, will also be added on closing capital employed, but that I have not considered here because it will not affect my EVA calculation. Got the point? Provision for doubtful debts of current year, here I've added for profit, which will be simultaneously added on what? Closing capital. That also I did not consider because that is not necessary for me for calculating what, Nana? EVA. Finally, how to calculate NOPAT rate? Already I have calculated adjusted PBT. Now see here, calculation NOPAT. What is that I told you? NOPAT or what, Nana? What is the other two ways? Profit after tax plus interest after tax, or PBIT into 1 minus taxes. What do we have here? Okay, adjusted PBT. Correct? This is profit before tax. What do I want? Profit after tax. Correct? So after tax means from profit before tax you need to reduce what, Nana? Taxes. Now this becomes what? PAT. Correct? According to your formula. Carry. Right. So we have PAT plus what, Nana? Interest after tax. So PBT minus taxes is nothing but PAT plus this is what, Nana? Interest after tax. Interest after tax is nothing but interest into 1 minus T. Correct? So therefore interest into 1 minus T. I've got my NOPAT over here. Got it? Only for your practice. That's all. Nothing else. Only for practice. Are we done? Carry. All right. Fantastic. Okay. Now I'll give you 3 minutes of time. You revise so far. Okay. After that, we'll go for CSF and KPI, which is very important. Till here, revise, Nana. Till the example. I'll give you 3 minutes. Revise, Nana. That's not for your relaxation. Revise. Finished? Huh? You need one more minute. Okay. Guys, finished? Huh? Shall we move on? Right. Okay, now let's go with the really important one. What is this? CSF and KPI. What is CSF? Critical success factor, and KPI is what, Nana? Key performance indicator. Now, in examination, it will not ask you a direct question asking, please explain what is CSF, please explain what is KPI. Like that, nothing will be asked. But what will happen is that to answer a lot of, what can I say? Yeah. Okay. To answer a lot of case studies and case scenarios, okay, there he will ask you, like, identify, already we have seen one question, you remember, in standard costing, identify 4 critical success factors, okay, identify 4 critical success factors and key performance indicator for every critical success factor. Identify 4 critical success factors and give us 2 key performance indicator for each critical success factor. Like that, there will be so many case studies. If I'm not wrong, at least 20 or 20 plus case scenarios or case studies we're gonna face where they'll be directly or indirectly asking about what, Nana? CSF and KPI. So that way it is important. He'll not ask you a direct question. There will not be any direct question, but what will be there? Indirect questions will be there. Got it? Hello? Yes? Right. So let's try to understand this. Many people today also, they don't have clarity with respect to what is CSF and KPI. We'll try to understand it better with the help of a simple example. So the whole concept of CSF and KPI is based on one simple logic. What is that? What gets measured gets done. That is the logic behind the entire concept of CSF and KPI. What do you mean by that? What do you mean by what gets measured gets done? Means what? Anything that you are able to measure, automatically it will be done if it has the possibility of getting measured. Okay, if you are able to measure something, automatically rest assured that you'll be able to achieve it. That's the indirect logic. Okay, so anything that gets measured will be able to be get done, right? So what do you mean by that, sir? We'll try to take an example here. Suppose a person's strategic goal is to lose 10 kgs, for example, and in that case, in this example, the KPI, key performance indicator, will be the actual weight loss per month, whether he has lost 2 kg this month or 1.5 kg this month or 3 kg this month, whatever that he has actually lost, that will be KPI, which you can measure. Okay, CSF will be what he has done to reduce this weight, that is daily exercises as well as what? Diet plan. You understand the point? So critical success factor to achieving the strategic goal, okay, to lose 10 kgs is what, Nana? Exercises and diet plan. Now, did you really achieve it or not? Yes, I'll check my weight. Once you check the weight, let's say you have lost 2 kgs. That will be what, Nana? Key performance indicator. Because that indicates that, okay, fine, really you are going to achieve what you are trying to achieve. Got the point? So what to do to achieve this is CSF. Did I really achieve it or not? Will be checked with what, Nana? KPI. Okay, that's the simplest way of understanding. So try to remember this example always so that you will not get confused between CSF as well as what, Nana? KPI. Always remember, strategic goal means it can also be called as objective. Okay, sometimes it will be confusing. So just remember as strategic goal. Got the point? Just remember it as strategic goal. So strategic goal is to lose 10 kgs. KPI is nothing but actual weight loss per month. CSF is nothing but what, Nana? Daily exercise and diet plan. Okay, now also we can say cause of success is nothing but CSF. Effect of success is nothing but KPI. What is cause of success here? Daily exercise and diet plan. What is the effect of success? You have lost, say for example, 3 kgs. Okay. Next, a strategic goal of a company may have multiple KPIs and CSF. So there is no rule that there should be one CSF and there should be what, Nana? One KPI. Okay. It can be multiple. You can have 10. You can have 10. Got it? Okay. Now totally it looks like this. First, you'll have the mission of the company. To achieve the mission of the company, you will have a strategic goal. And to achieve this strategic goal, you'll have CSF. And to achieve this CSF, you'll be having KPIs. Or through CSF, actually, you'll be having what? KPIs. KPIs is something that you will measure. CSF is nothing but what, Nana? Objectives. Okay. Yes or what? Sir, indirectly, KPI is like a verification whether CSF is working or not. Okay, I can put it this way. KPI indirectly it is like a proof whether CSF is working or not. For example, here, what is CSF? Your doctor has advised you to do daily exercise as well as diet plan to achieve what? Strategic goal. Whether you are really achieving that or not, what is the proof? KPI. You see the weight? Yeah, you have lost 3 kgs. Then it means that CSF is working. If KPI is bad, it means that CSF is not working. That is the logic. So indirectly KPI is a proof for CSF. KPI is a proof for CSF. Let's move on. Okay, what is CSF? What should be done? That is nothing but CSF. For example, here we want to achieve the weight loss. What should be done? What do you have to do? Exercise and diet. So that is CSF. So it represents objectives that the business is trying to achieve. It represents the question what? What are the things that company need to do to achieve its goals? In our example, we were talking about a human being. Therefore, what are the things that a human being has to do to achieve its weight reduction? Correct? For that only we have seen the example. What is the example we have seen? Exercises as well as diet plan. Similarly, if company wants to achieve its strategic goal, what are all the things that a company has to do? Say for example, its strategic goal is maximum market share. Okay, or let's say market share of 25%. Suppose what it has to do? It has to achieve customer satisfaction. So that what will happen? Customer will get satisfied and therefore there will be good mouth publicity and therefore your sales will increase. To satisfy the customer, you should have a zero return policy. What do you mean by zero return policy? Customer is not at all returning your goods. When he will not return your goods? When the quality is good and he is satisfied. And to do that, you implement what? TQM. Once you implement TQM, there will be zero return policy. Once zero return policy is happening, then it means that you have achieved customer satisfaction. Once you have achieved customer satisfaction, it means that you will be able to achieve your strategic goal or having what, Nana? Say for example, 25% market share. Suppose if that is your strategic goal. Got the point? Right. So always remember, CSF means it is what you have to do as a company. KPI means you already decided what you have to do. How are you doing it? Is KPI. For example, let's say you wanted to achieve customer satisfaction. This is what? Correct? How are you doing it? Did you really achieve customer satisfaction? What is there? Go to the customer and take some ratings. 5-star rating, 4-star rating, 3-star rating. If really customers has given you 5-star rating, then it means that what? You have achieved customer satisfaction. That 5-star rating is nothing but what? KPI. Got it? Zero return policy is your CSF. Did you really achieve zero return policy or not? What is the proof? Check the number of returns this particular year. The number of returns is 0.002%. Say for example, yes, you have achieved this. Got the point? So this is critical success factor, which is what you need to do to make your company successful or to achieve what? Strategic goal. Whether you are doing this perfectly or not, the proof is what, Nana? KPI. So each CSF will have one or multiple KPIs. That also you have to remember. Okay. Each CSF will have what, Nana? One or multiple KPIs. And finally, what should be the quality of a KPI? KPI should be smart. Smart means what? They should be specific, they should be measurable, they should be achievable, they should be what? Realistic, and they should be time bound. Very important. Okay, these are all the qualities before finalizing a KPI. This is not really important for us. You just remember. It is not really important for solving any case study or case scenario. Okay. Maybe it can be asked as a direct theory question. So therefore you guys need to remember. That's all. What do you have to remember? KPI should be what? Smart. Smart means what? Specific, measurable, achievable, realistic, as well as time bound. That's all. Okay. I gave you some examples for KPI. Number of complaints received, number of returns, defective items produced. All these are examples of what, Nana? Key performance indicator. Something that you can measure is a KPI. What you have to do is nothing but CSF. Okay. Now, finally, before we get to all the other important concepts, we have something called difference between financial and non-financial performance measures. Okay, what is that? Financial performance measurement systems like ROI, RI, EVA. Okay, what are the positive things about them? They are quantifiable, which means you can measure them in terms of numbers. And they will directly improve your shareholders' wealth because all of them are numbers, obviously. So greater the ROI, greater the RI, greater the EVA, what will happen? Your wealth will increase. But what is the negative point? You may compromise on quality in order to achieve the numbers. For example, in a particular quarter in MACD, in a particular branch, which same example I told you so many times, correct? To achieve the target profit for that particular quarter, you may compromise on what? Giving training to your employees, and as a result you will ask them to directly get into job without giving proper training. As a result your cost will be saved, as a result your profit will be achieved, as a result you will be getting the bonus, correct? But that will compromise your quality of service in that particular MACD. So therefore in the long run what will happen? That will affect you negatively, correct? Whereas if you go for non-financial performance measurement systems, what do you mean by that? Non-numbers. The positive thing is you will concentrate on non-numbers, for example quality, and that will help you in the long run, but you can't measure them. Are you able to understand? Non-financial things you can't measure, correct? Customer satisfaction, it's very difficult to measure. Yes, you can try, but it's very difficult to, and it is subjective. Subjective means what? For example, let's say you are trying to clean a beach. Okay, beach is clean. You send some 3 to 4 people to the beach, ask them whether it is really clean or not. 4 people comes back. 3 people will say yes it is clean. 1 guy will say no it is not clean. You ask him, if they are saying that it is clean, why are you saying it's not clean? Then he says that no, according to me it's not clean. Why? Because he says that there is one particular dust over here, something like that. Are you able to understand? So which means it's a subjective thing, isn't it? Yes or what? For example, you buy a phone and your friend also buys the same phone, and you are satisfied with the performance, right? But your friend is not satisfied with the performance of the same phone. Why? It is subjective. You like it, your friend doesn't like it. You understand the point? Cleanliness is also subjective. You feel, even if there is a little bit here and there also, you feel that it's clean, no problem. Some of our friends will be there, OCD guys, right? Even a little bit of an issue is there. Oh my God. Yes. According to us it is clean, but according to them it is not clean. So that is something called what? Subjective. That's one of the biggest problems of what? Non-financial performance measurement systems. Got the point? Yes, everybody. All right. Okay. So with this we are done with all the financial performance measurement parts. Now we have the rest of the chapter. What is the rest of the chapter? It's perfectly poised. What do we have now? We have balance scorecard. We have what, Nana? Performance pyramid, performance prism. Tell me, building block model, which is very important, and then of course performance measurement in a not-for-profit sector. What are all the things that we have covered so far? Responsibility accounting is covered. What else we have covered? Did we cover benchmarking? No. Anyway, it is not there in the syllabus. Did we cover TBL? No. Did we cover pure financial performance measurement systems? Yes. What are they? ROI, RI, EVA. Correct? And then we have also covered the difference between financial and non-financial. Plus we also covered CSF and KPI. Got the point? Right, sir. Now I'll give you 5 minutes. Now you do the revision till here. and then have a break. Got it? With that revision, break is for 15 minutes. Okay? Got it? It's your choice. Okay. And yeah, have a 15-minute break. Okay. Meanwhile, in that break only, just revise once, and then we'll continue after that. Okay? Chala, right? Have a break and do the revision in the break itself. Okay? We'll continue after that. Right, buddies? Let's continue. Okay, now we'll start with our first important topic in this entire chapter. And what is that? Balanced scorecard. Okay, very, very, very important. Although actually nowadays it is outdated, but still it's considered important as per your ICA. Okay? Right, Nana. So let's start. What is this balanced scorecard? Pretty simple. See, before this balanced scorecard, what used to happen is that, in fact, we can say that the first performance measurement system that actually came to this world was balanced scorecard, which has got both numbers as well as non-numbers in it. Before balanced scorecard, always in any company, the performance measurement used to be done based on purely numbers. Okay, and so the first revolution happened because of balanced scorecard, just like your iPhone in the smartphone industry. Okay, so it's almost like that, you can say. But now it's obviously what? Outdated. That's a different thing. But still, there are so many companies, even the so-called top-notch companies, okay, who are doing really good business also. They're using still balanced scorecard to measure what, Nana? Performance. Although it has got a lot of shortcomings. Okay, all those things we'll try to understand. Anyways, so what is the concept of this? Why it is called as balanced scorecard? Very simple. What used to happen is that earlier, before balanced scorecard, our performance measurement system was purely based on numbers. Okay, so when it is based on numbers, basically what happens is that, say for example, you have a, let's say, procurement division. Okay, procurement division means what? Purchasing department. Okay, so we have treated purchasing department as a cost center. We know that. And so if it is treated as a cost center, means how will you measure the performance? By comparing standard cost with actual cost. So we'll say that if your actual cost is less than standard cost, then the variance is favorable, then you'll be getting bonus, obviously. So now what the procurement division manager has done is that he wanted to get a lot of bonus, and as a result, the kind of metal that he has to buy, let's say he has to buy copper from the international market. Okay, and since last 6 months, let's say the copper price in the international market is falling down. Okay, now what he has done is that he has intentionally postponed the purchase of copper with an intention that if I postpone the purchase a little bit, then it will further fall, and therefore I can buy it at a lower price, and as a result my actual cost will be what? Much lesser when compared to what, Nana? Standard cost. As a result, I'll have a very good favorable variance. I'll be eligible for a lot of bonus and incentives. Are you able to understand? Now because of this, what are the side effects that a company will face? One, because you have postponed your purchase, maybe there is a chance of stock out. If there is a chance of stock out happening, then eventually your production has to be stopped temporarily. If your production is stopped temporarily, then that will hurt your sales. Correct? Now, so this mess has happened only because of what? If you can see the whole picture of the example which I gave you right now, for this entire mess, one single problem is what, Nana? Performance measurement system in place. Because your performance measurement system was purely based on numbers, where you are comparing your actual cost with what? Standard cost, which is purely number based. And that is what has prompted or indirectly encouraged the procurement department manager to postpone the purchase of the raw material metal, which is copper in our example, and eventually lead to a situation of stock out. Yes, everybody. Samjha? Right. So therefore, what can be the probable solution for this? Well, the probable solution for this is considering both financial as well as non-financial factors. In our example, we have considered only what? Financials, in the example which I gave you. Now, what balanced scorecard says is that you should always, when you try to measure the performance, you should not only consider financial factors, but also you have to consider non-financial. So it says, I will consider 4 perspectives. How many perspectives? 4. Who says that? balance scorecard. The first perspective is as usual financial perspective, which is purely numbers. Apart from numbers, it also considers three another perspective. What are they? One is customer perspective, another one is innovation and learning, and the third one is internal business perspective. So in addition to the financial perspective, balance scorecard also considers three other perspectives. What are they? Customer, innovation and learning, and internal business. Okay, got it? Right. So now the thing is that, okay, fine. So eventually we have to consider four different perspectives. Now suppose in the same example which I've told you, let's say in the place of purely number performance measurement system, let's say if balance scorecard is in place, suppose in the same example, then what would have happened? This guy has postponed the purchase of metal, that is copper, that is raw material, with a hope that the price will fall further. As a result, his actual cost will be very less. That's the whole logic of the story, correct? So if at all you would have applied balance scorecard in the financial perspective, under the heading of the financial perspective, it will look very healthy, because obviously your cost is what? Less. So it will look very healthy, positive. But try to look into the other perspectives. What will happen to the customer perspective? Because of this, if there is a stock out, and because of that, if you are not able to produce your finished good, and because of that, you are not able to deliver the product to the customer, then customer perspective will show that. It will reflect, saying that he is not happy because he has got what, Nana? Delayed delivery of goods, correct? That is one. There you will get caught. Second, suppose you are not getting caught there also. If you go to internal business perspective, it talks about how efficiently you can do your business when compared to your peers and your competition in the industry. There also, if you can see, because of this, definitely production would have got halted, correct? And if production is halted, that will be reflected in what? Internal business perspective, and there also he'll get caught one more time. You understand the point? So your bonus will be given only after considering all these four perspectives. Therefore, even though you try to do something wrong like this, where your financial perspective eventually will look good, but still you will get caught either in customer perspective or in what? Internal business perspective, and at the end of the day, you will not be getting bonus. Knowing this, they will not take these kind of decisions. Suppose I am the procurement department manager and I know that to measure the performance, balance scorecard is there in execution. It is in picture. So my performance will be measured with the help of balance scorecard. Then I know that if I do something like this, even though my financial perspective may look good, but I'll get caught either in customer perspective or what? Internal business perspective. So I'll stop taking that decision. I'll stop taking a decision to postpone my purchase, and therefore I'll purchase today itself. You understand the point? That is the advantage of considering financial as well as non-financial things, or numbers as well as what, Nana? Non-numbers. Okay. So that's the background of why there is a need of balance scorecard. So let's try to understand the concept over here. So this balance scorecard was invented by somebody called what, Nana? Kaplan and Norton. It was designed to be used as a strategic performance measurement and management framework. Okay, it provides a framework which can be utilized to develop multi-dimensional set of performance measures. What are they? As you can see, we have four perspectives. What are they, Nana? Financial perspective, customer perspective, internal business perspective, as well as what, Nana? Innovation and learning. So the balance scorecard includes what? What does it include? Financials, which are nothing but numbers, non-financials, which are nothing but non-numbers, external as well as what, Nana? Internal information, right? So to put it very simple, that's it. This is the diagram, and that is what you have to remember. Very important. Okay. So financial perspective means what? How do we look to our shareholders? How do we look to our shareholders means what? Shareholders, what they will do generally? You will see how the company building is. What you will do? You will see how the company's performance is. Correct? That's what shareholders do. What performance you will see? How much is their profit? How much is their sales? How much is sales growth? How much is profit growth? Correct? These are all the numbers you will see. Na? And that's what. How do we look to our shareholders? Means what shareholders will see? They'll see my numbers. How my numbers are. That's all. Example, ROCE, profit, revenue, growth in sales, etc. etc. Anything that is based on what? Numbers. Next. Customer perspective. What do you mean by customer perspective? How does the customer see us? How does the customer see us? Means, for example, let's take Maruti Suzuki. Okay. If a customer who wants a really economical car with really low maintenance and low price and great fuel economy. He will get into Maruti Suzuki Arena showroom. You know that Maruti Suzuki has got two types of showrooms. You remember that? One is Arena, the other one is Nexa. Arena is for middle class people, kind of. Nexa is a little bit more premium and stuff like that, isn't it? Because their interiors are all blacked out. The moment you enter there, they'll offer you all those juices, drinks, and stuff like that, isn't it? Yes or what? All right. Why? Because Maruti Suzuki knows that there are two different sets of customers. So accordingly, they have designed that particular strategy. Got the point? Yes. Everybody. All right. Exactly. Honda also. Correct. In Honda also, we have separate set of showrooms called Big Wing. Correct? You know it or you don't know? They call it as Big Wing. Okay. Where this Honda CB350, all these bikes are sold. Correct? Yes or what? And they are not sold in normal Honda showrooms. There is a specific reason for that, because we wanted to give that unique experience, because Honda, they were trying to compete with Royal Enfield. Na? So obviously, you know how Royal Enfield showrooms are. They are very posh. They are really built well, isn't it? And therefore, if you want to compete with them, then you also have to give that sort of a premium feel for the customer. Whoever comes to my showroom and buys something, he has to be made special. He has to be, at least, we need to make him feel special, you know. But if he goes to a normal Honda showroom where you'll be trying to buy a 3 lakh bike and then somebody is taking Honda Activa beside you, what, Nana? What will be your feeling? It will not be that good, isn't it? Yes or no? Yeah, that's the intention. Anyways, so this is also important. How does the customer sees us? Next, internal business process. What must we excel at? Means what? Indirectly speaking, how well your business is running. That's all. Are you able to understand? Everybody, for example, calculating manufacturing cycle efficiency. That tells you how efficiently your business is running. Correct? That will come under what? Internal business perspective only. Got the point? There is something called manufacturing cycle time. How fast your product is getting what? Manufactured. Right? The moment, right now I have a raw material. Within how much time my raw material is getting converted into finished good? Let's say it is 1 hour. Let's check that with industry standards. In industry, on an average, everybody is taking 1.5 hours. Then it means what? Exactly. We are really good. Okay. So, what must we excel at means how well are we manufacturing? How well are we doing our business? Are we efficient in the way we are doing business? That will come under internal business process. And finally, innovation and learning. Innovation and learning means we know how many new products are we launching. Now you see, since last 1 or 2 weeks, how many cars are getting launched. Every day there is a car launch, almost every alternate day, isn't it? Right? So why people are doing like that? Why? Because they want to give something new in the market. For example, as you can see, I think 3 days back, what is that? Toyota Hyryder has been launched. Correct? Hyryder. Okay, that car has been launched. Anyway, you don't have an idea, because Maruti Suzuki and Toyota, they are of the opinion right from the beginning. Maruti Suzuki is always of the opinion that electric cars will not work. That's their opinion right from the beginning. Okay. Because they feel that without right proper infra, it will not work. So although Tata and Mahindra, all these guys are looking towards electric cars, including Ola, but Maruti Suzuki never looked into electric cars. They believed that electric will not work. So they wanted to get into hybrid sector, strong hybrid. Strong hybrid means what? Hybrid means what? Petrol plus electric. So what will happen? Electric will be self-charging itself, with the help of petrol. Thereby you'll be getting better mileage. For example, you take this Toyota Camry. It's a luxury car. It will cost you 52, 53 lakhs. Okay. Generally, any car that costs 52, 53 lakhs. For example, you have BMW 3 Series also. If you take a petrol, hardly you'll get 10 to 11 mileage. Max 11 or max 12. In highway, probably 13. That's all. Beyond that, you'll not get the mileage. But you know what is the mileage of Toyota Camry? 23 it is. That's a luxury car. Luxury car giving you a mileage of 23. You can imagine. Why? Because of hybrid system. You understand the point, right? So, it's best of both the worlds when there is no real development in infra. Got the point? Tomorrow, once infra is developed, maybe they'll come out with something like that. We don't know. But I firmly believe that hydrogen is the future. Let's see how it's going to work. Hydrogen cells? Yeah. So just like petrol, we can just fuel it up and then we can run within 1 minute hardly. That's the technology of hydrogen. And so I personally feel that will be the future, because no, electric, no. See, simple logic, Nana. Where are you getting electricity from right now? 60% you are getting it from what? Coal. And coal is more polluting than diesel also. Forget about petrol first of all. Then how are you actually going green? I don't understand this logic first of all. Isn't it? In fact, you are polluting a lot more. Not here in the city, but somewhere where the coal is getting manufactured, isn't it? Yeah. Actually, where the coal is burnt and getting converted into thermal power, isn't it? If that electricity is coming from renewable energy, then it makes sense. Yes, you are going green. Isn't it? That's one thing. Second thing is, the lithium ion batteries are very polluting actually in itself. In itself. Which one? The batteries themselves are. In that case, I don't really see any, the good future and stuff like that. But hydrogen cells, yes, I feel that's gonna be the next big thing. And recently that solar powered car has got launched. What is that? Lightyear Zero. That I feel that sort of things will be the future, is what I feel, especially for countries like India. Anyways, so these kind of new things will come under what, Nana? Innovation. And learning means what? What do you mean by learning here? Learning means your employees also has to be trained continuously. Are you able to understand? Otherwise, what will happen? They'll not get updated. When they don't get updated, what will happen eventually? They'll be out of the industry eventually, indirectly, right? Or they'll make us indirectly go out of the industry because they are not getting updated themselves, and as a result we can't compete with the industry. As simple as that. So time to time you also need to train your employees. Got the point? So therefore training your employees plus innovation, which is nothing but trying to launch new products and stuff like that, will come under innovation and learning. So totally how many we have got? 4. What are they? How many we have got? 4. What are they? Financial perspective means how do the shareholders look at us? Okay, next. Customer perspective. How does our customer look at us? Next. Internal business perspective. Where do we need to excel at? Then what is the last one? Innovation and learning means Dhamma. Okay, fellows. Can we continue to improve and create value? Okay, chalo. Right. So what is the next one? Within each of these perspectives, 1, 2, 3, 4. Okay, businesses should seek to identify a series of goals, which is nothing but CSF, which can also be called as objectives, and to establish appropriate measures, which is called as KPIs. So these should be in line with the overall objectives and vision of the organization. Let's try to look into that. Now this is very important. So what are we trying to do here? What are we trying to do here? For each perspective, we are trying to fix CSF as well as what, Nana? KPIs. Now, already you guys know what is CSF and KPIs. What is CSF? What is that a company has to do to achieve their goal? What is KPI? It's a proof for CSF whether you are really achieving the goal or not. Correct? Now let's try to understand. Always out of these two, what is important? This is important. Which is important? CSF. Because once you know CSF, from this CSF, KPIs will automatically come. You need not memorize these things, okay? But this, yes, you have to memorize. Got the point? That also you need not memorize, but it will come out of experience. Once you got good experience in sums, then automatically you will be able to tell CSF on your own, but not at the beginning. But what about KPIs? Once you know CSF, automatically KPIs will come. So KPIs is not something that will trouble us, but CSF, yes. So give more importance to CSF. Now see here. Let's start with customer perspective first. What can be the CSF? What can be the critical success factor? Ready? Okay, now see here. First one is low cost. If we can provide your product at a low cost to the customer, will that be a critical success factor for the company? Yes. So that is a strategy. It's a critical success factor. Okay, if we can provide at low cost, eventually customer will be satisfied. But now the question is, are we really providing at low cost? How to verify that? Compare your cost with the competitor's cost. Are you able to understand? If your cost is really less when compared to competitor's cost, then it means that really you are providing at a low cost. Correct? Then it means in reality, customer also will get satisfied. Correct? That is KPI. High quality can be a critical success factor. So if we can provide high quality goods to your customer, then he'll be satisfied. Correct? Now the question is, are we really providing high quality goods to the customer? What is the proof? Check the percentage of defects. You can write anything actually. Percentage of defects, percentage of sales returns. Are you able to understand? Number of complaints, number of warranties claimed. Are you able to understand what I'm trying to say? You can write anything. But here I've written what, Nana? Percentage of defects. Responsive service. If you can provide very good responsive service to your customer, that can be a chance, that can be a critical success factor for you to achieve your strategic goal. Say for example, you want to increase your market share. Yes, you can, once your customer is satisfied. How to satisfy my customer? Give him low cost, a product at low cost, a high quality product, and the response time also has to be really good. Now the question is, okay, if response time is good, then the customer will be happy, thereby my sales will increase. Now the question is my response time is really good? I need to check. How to check? See percentage of on-time deliveries. Okay. Suppose your dealership has promised a customer, you will get the delivery in 1 week. Are you really delivering on 1 week? Within 1 week? Kyare nana? If the answer is yes, your customer is satisfied, then your business will increase. It's as simple as that. Got the point? So indirectly, all these are proof to check whether this is working or not. You understand the point? This is a checking whether this is working or not. Yes, everybody. Say for example, your percentage of defects are very high. It means you're not achieving high quality. It means somewhere there is a problem, either in manufacturing or whatever. Identify the problem and then try to rectify it. You understand the point? That's the way it works. Okay. Moving on to next one. What is the next one we have? Internal perspective. Internal perspective means what? Internal business perspective. How are you running your business? Okay. How am I running our business? One of the critical success factors can be operational excellence. What do you mean by operational excellence? Whatever you are operating inside your business, everything should be what? Excellent. Excellent means what? Your labor is working at 100% capacity, whether production department 1 or 2 or 3, everybody is working at 100% efficiency. You understand the point? So, operational excellence can be a critical success factor, so that the way you are manufacturing your product will be what? Very, very, very efficient, and as a result, you'll be able to get your market share. Is one of the thought process. Now the question is, are you really excellent in your operations? Are you really efficient in manufacturing your goods? There is a doubt. What's the answer for that? Calculate manufacturing cycle time. Got the point? Kyare? You see and compare your manufacturing cycle time with the peers, competitors. If your manufacturing cycle time is very small when compared to your competitors, it means automatically you are efficient. If you are efficient, it means that you have achieved what? Operational excellence. It means tomorrow, anyway, your what will increase? Your market share will increase or sales will increase, whatever it is. Employee satisfaction is also a critical success factor in internal business perspective. Why? Unless your employee is not satisfied, he'll not work at 100% efficiency. If he doesn't work at 100% efficiency, what will happen? You'll not achieve operational excellence. It's as simple as that, isn't it? Defects will be more and it will take more time and all those things. Yes or no? So what's the solution? Very simple. How can you figure out whether your employee is satisfied or not? Employee satisfaction can be a critical success factor. Correct only. How do I know whether my employees are satisfied or not? Look at staff turnover. What is staff turnover? Number of employees leaving your company at any given point of time. Correct? Check that. If no employees are leaving your company, what does it mean? They're happy with your company. They're happy with the compensation. They're happy with the workload. They're happy with the kind of growth opportunities you are providing. Are you able to understand? In that case, why will they leave the company? So they will not leave the company. If they are not leaving the company, it means they are satisfied. So if the staff turnover ratio is very less, it means they are satisfied. If they are satisfied, then your internal business perspective looks healthy. Got the point? Moving on to next one. What is the next one you have got? Innovation and learning. Okay. In innovation and learning, one of the critical success factor is what, Nana? Innovation. Innovation means what? Are you launching any new products? You know? Now, so launching new products is a good thing, correct? But are they successful in launching new products? Then how to find that out? Very simple. Look at percentage of sales from new products out of what, Nana? Total sales. If there is a good percentage of new product sales when compared to what, Nana? Total sales, it means your new products are performing well. It means you are good in innovation. That's all. Are you able to understand? It's a good thing or a bad thing? Good thing. Next, training sessions or internal learning for your employees. So the more and more training sessions that you can have for your employees, it means by default they are learning new things. If they are learning new things and if they are getting updated on all the new updates in the market, naturally what will happen? They'll work really efficiently. Naturally what will happen? You'll be able to do business well. Now the question is, how are these training sessions working out? What is the proof that employees are really learning? Very simple. See how much percentage of employees are attending your training sessions. See in reality how many hours of training sessions has actually happened. And in those hours of training sessions, how many of the employees have actually attended? Are you able to understand? And then take the feedback from the employees, take the suggestions from the employees. All these training sessions are really helpful for them in getting their knowledge updated with respect to the current trends of the industry. Got the point? Based on that, this is a proof that training sessions are going really well. Once the training sessions are going really well, automatically operational excellence will come. Once the operational excellence comes, automatically customer will be satisfied. Once customer is satisfied, automatically financials will be good. One is linked to the other. One is linked to the other. That's why it is called balanced scorecard. You gotta balance out everything, all the four. Got the point? You need to balance out all the four, right? And finally, what is the last but not least? Financial perspective. Financial perspective means obviously it is numbers. What are the critical success factors? Growth, survival, profitability. What is the proof whether you are having good growth or not? Look at the sales growth in this particular quarter. Yes, there is a sales growth of 8%, for example. Yeah, then your growth is happening really well. Got it? Survival, look at the cash flow. If the cash flow is healthy, then you will survive. As simple as that. Profitability, look at ROCE. Gross profit margin, net profit margin, whatever you want, you can see. Got it? You can see EVA also. Who is stopping you? Got it? And all these things can be all KPIs, can be KPIs for these CSF. Okay? That's the thing. Now, this is really important for you, and you guys have to what? Remember. Okay? Right. Anyways, now you people tell me, can you please tell me what are CSF and KPIs? Yeah? One by one, I'll ask you, tell me. Let's start with the first one. What is the first one? Customer perspective. Tell me some CSF. Low cost. Okay, KPI. Low cost. KPI. Your cost with competitors cost, or your cost with benchmark cost, whatever it is. Next, high quality. I myself has told you. I asked you one more CSF. What is one more CSF? High quality. Okay. KPI. Percentage of defects. It need not be percentage of defects. Please try to understand. It can be anything. It can be percentage of compliance, percentage of sales returns. It can be anything which proves whether there is quality or not. Please try to understand. Don't be rigid. Okay. Next, any other CSF? Responsive time. Okay. KPI. Number of deliveries on time. Correct? Right. Moving on to the next one. What is the next one? Internal business perspective. CSF. Operational excellence. KPI. Manufacturing cycle time. Okay. Next CSF. Employee satisfaction. Okay. KPI. Staff turnover. Fantastic. Next, what do we have after this? Innovation and learning. What is the first one? Innovation means number of new products. Okay. Number of new products launched or about to get launched. Okay. What is KPI? Percentage of revenue of new products out of the total percentage of revenue or total revenue. Got it? Next, training sessions for your employees. Correct? KPI. Number of training hours that your employees have attended and number of sessions they have given. All those things will come. Then finally, what is the last one? Financial perspective. What do we have? Growth. KPI. Percentage of growth. Okay. Next, survival. KPI. Cash flow. Next, profit. KPI. ROC. So pretty easy. Chalo. Anyways. So basically, the balanced scorecard provides a balanced view of the organization performance. It includes a mixture of both financials as well as non-financial. It also covers internal as well as what? External data, external information. So it links the fulfillment of long-term and short-term objectives to achievement of overall strategy and vision. So success is the 4 key areas that should lead the organization to the long-term success. What are those 4 key areas? Financial, customer perspective, internal business as well as innovation and learning. What gets measured gets done. If managers know they are being appraised on various aspects of performance, they will pay attention to those areas. Correct? That is the reason we have a concept of CSF and KPI, which is dependent on what gets measured gets done. If you measure anything, automatically it will be done. You understand the point? That's the power of measurement. Okay. Chalo. Okay. I gave you some examples over here. See here. So you guys need to identify to what perspective they belong. So weekly patient complaints, they belong to which one? Customer perspective or internal business. It depends upon what business you're doing. Okay. Patient satisfaction survey, customer perspective. Number of staff hours, internal business perspective. Percentage of repeat customers, customer perspective. On time performance of airlines, internal business. Internal business, which means your airlines is performing very well. You got the point. Your mission is performing very well. That is the meaning. Flight cancellation rate, customer perspective, because your customer will get affected directly because of that. Employee retention, internal business, but ICA has given it under innovation and learning as well. Are you able to understand? Innovation and learning as well, because they are thinking about employee training is there in innovation and learning. So they have covered this as well, but actually it should come under internal business. Next, cross selling of a product. It is a critical success factor. It comes under what? Internal business. Is it? Yeah, internal business. Okay. And what can be the KPI? Number of units purchased per customer. Okay. This is a proof, na? If customer is purchasing more, it means cross selling of the product is working. Correct? For example, you have a bike. For that bike, you are selling what? Accessory. So that is nothing but cross selling. Correct? Yes or what? So that's your internal business perspective, because you are trying to sell, isn't it? There. And if the number of customers who are purchasing these accessories are more, it means that your cross selling is working. Correct? So critical success factor is achieved. Next, zero idle time is a critical success factor. It comes under what? Internal business perspective, because idle time is directly related to your manufacturing. Okay, anything that is related to manufacturing will come under internal business. Keep that in mind. So what can be the KPI? Hours spent on idle time. So zero idle time is a critical success factor, Nana. What is the proof? In reality, see how many idle hours are there. Suppose hours spent on idle time is 0. What does it mean? Then your critical success factor is achieved. Correct? Suppose idle time is 10 hours. What has happened? Then you did not achieve this. Then there is some problem. Then you go and rectify it. Okay. Next, TQM and TPM, critical success factor. If you can implement these two successfully, okay, that comes under internal business perspective, because TQM and TPM will improve the way you are doing your business, the way you are manufacturing. Correct? Or even if you are doing banking business, for example, as it is a service sector, this will help you improve your banking operations. Correct? We have already seen a question. Yes, sir. What in TQM did we see or not? Did we see or not? Yes. Now, what can be the KPI for that? Number of defective items produced. Because if these two are implemented successfully, then number of defective items should have got reduced. If they did not get reduced, it means this has not been implemented successfully. Got the point? So this is a proof for this. Correct? Next, technology leadership will come under innovation and learning. We know that. Example, see how much money you have spent on R&D. The more money you have spent on R&D, it means that you are trying to become a technological leader. Correct? Leader technology wise, that's what you are trying to become. Next, no stock out, that comes under customer perspective, because if there is a stock out, that will directly affect your customer satisfaction. Correct? So no stock out is a critical success factor. How to verify this, whether there is stock out or not? Check whether there are number of stockouts or not in reality. Suppose in reality it is 3. It means that 3 times your customer satisfaction has got affected because of not having stock. Suppose this is 0. What does it mean? You have achieved your critical success factor. Next, skill development is a critical success factor. Again, it comes under innovation and learning. Whose skill you will develop? Employee skill. So how to verify whether the skill has got developed or not in reality? See number of training hours given to your employees. If this is more, automatically skill is going to get developed. Profitability, financial perspective. Example, ROC. Correct? This is KPI. This will measure the profitability of your company. Correct? Next, increase in number of products, innovation and learning. And see how many new products has been launched. Then it will verify whether your target critical success factor of increasing the number of new products has been achieved or not. Critical success factor means if you increase number of new products, then you will be successful as a company. That is the logic. Did you really launch those new products? That will come under what? KPI. So this is a proof for this one. Got the point? Always understand this will be a proof for this one. Okay. You got it? Okay. This is just for your understanding. Okay. I've given some examples over here. Chalo. Now I'll give you 2 minutes. Just revise balance scorecard. Then we'll move on to the next one. Okay. You have 2 minutes. Just revise. Very important, Nana. Okay. Revise it carefully. Once you put the effort here, problem solving will be very easy. Okay. Chalo. Revise it. Right, Nana, finished, huh? Shall we move on? All right. Let's get to the next concept. So what is the next one we have? Performance pyramid. Okay. Now, it is also a simple thing actually, but to solve the case scenarios or case studies based on this particular concept, that is performance pyramid, all you guys need to do is that remember this diagram. So if you can remember this diagram, I'll teach you when solving sums how to convert that diagram into what? Sentences. Okay, that I cannot obviously explain you right now, but we will try to understand that when we are actually solving case studies and case scenarios. Anyways, now let's get into the concept. Now see here. So what do we have here? It starts with level 1. Okay, how many levels we have got? Totally 4 levels. And as you can see, the objectives travel from the top level to the lower level, and the measures travel from lower level to what, Nana? Top level. Okay, that's the first thing. And so how many things that we have got? In level 1 we have something called corporate vision, and in level 2 we have market as well as what? Financials. In level 3 we have customer satisfaction, flexibility as well as productivity. In the last level we have quality and delivery, and cycle time as well as what? Waste. Now you have a line in the middle over here which exactly divides them into two. On the left side, whatever you have, we call it as external effectiveness, which means all these are external factors. Okay. On this side, on the right side, whatever that you have got after this particular line, what do we call? Internal efficiency, because all these things are based on internal factors of your company. Okay. All these things are based on external factors of your company, which means outside your company. And everything on the right side, they are purely numbers. They are based on what? Numbers. Everything on the left side, they are non-numbers. For example, quality, delivery, customer satisfaction, all these are what? Non-numbers. Cycle time, waste, productivity, all these are numbers. Okay, right. So all you guys need to do is that just remember this diagram the way it is. Okay, chalo, now let's try to understand one by one. See here. Level 1, that is this one. What do we have in level 1? Corporate vision. Normally, what will be your corporate vision? Either you need a long-term success or you want to gain some competitive advantage. That can be your corporate vision. Okay. To achieve this corporate vision, either you have to be successful in getting the market share, or you have to be successful in terms of your financials, which means any financials has to be strong, whether it is ROCE, okay, or it is growth, or whatever it is, any numbers. Now, to achieve a good market share or success in market, you need to satisfy your customer, okay, and to get good financials, you have to be efficient in manufacturing your goods. In addition to these two, you also need flexibility. Now, what is flexibility? Ability of a company to cope up with what? Market changes and customer varied requirement. I gave you two examples for this in real life. One is SUVs. Why all the brands, whichever new brand is getting launched in India, they launch their brand with an SUV. Not only that, I gave you the example of what? Saffola brand as well. How you can adapt to the changes in the external market scenario. Correct? Right. After that, to achieve customer satisfaction, you need to deliver a quality product, and the delivery time also has to be on time. So which means the response time has to be good. Response time has to be good. Similarly, if you want to achieve productivity in your manufacturing cycle time has to be low, and your waste also has to be low. So everything is linked to each other. So which means if quality and delivery is good, automatically customer satisfaction will happen. Automatically you will be able to achieve the market share. If cycle time and waste is low, automatically your efficiency is very high. Automatically financials will be very good. Automatically you will be able to achieve your corporate vision. So like that, it is linked from bottom to top. Now let's try to understand these things. First one, level 1. At the top of the organization is the corporate vision, through which the organization describes how it will achieve either long-term success or what, Nana? Competitive advantage. That generally that will be the vision of any corporate. Okay, next. Level 2. Level 2 means what? This one, market and financial. This focuses on achievement of an organization's critical success factors in terms of market related measures and financial measures. The marketing and financial success of a proposal is the initial focus for the achievement of corporate vision. So which means to achieve the corporate vision, you should have marketing success as well as what? Financial success. Now, next, level 3. The marketing and financial strategies which are set at level 2, okay, must be linked to the achievement of what, Nana? Customer satisfaction, increased flexibility of manufacturing or providing service, and increased what, Nana? Productivity. Correct? These are all the guiding forces that drive the strategic objectives of the organization. Means if you are good at this, automatically marketing and financial success will come. Next, level 4. The status of the level 3, that is customer satisfaction, flexibility as well as what? Productivity, will depend upon the lower level departmental indicators of quality, delivery, cycle time as well as water waste. Means if you are able to achieve quality and if your delivery is on time, automatically you will be able to achieve customer satisfaction. Automatically there will be marketing success. Automatically you will have success in the long term, or you will be able to get competitive advantage. Similarly, if your manufacturing cycle time is low and if your waste is low, automatically you will be able to have productivity in your manufacturing. Naturally you will be able to have a good financials. Naturally you will be able to achieve your corporate vision, which is nothing but what? Competitive advantage. You got the point? Here, all right. Okay, now okay, now see Anana. Now everybody will say along with me. Ready? Yeah? Chalo. So what is performance pyramid? All you have to do is to remember that diagram. How many levels are there? 4 levels. Okay. Objectives will move from top to bottom. Measures will move from bottom to top. And the entire performance pyramid is divided into 2. What are they? One is external effectiveness. The other one is internal efficiency. External effectiveness is nothing but non-numbers, which are non-financials, and internal efficiency is nothing but number-based, okay, financials. Now let's start with the top. What is the first one? Corporate vision. Next, market financial. So marketing success, financial success. Then below that you have customer satisfaction, flexibility as well as productivity. Then below that you have quality, delivery. Then what is that? Cycle time as well as waste. Okay, is that clear? All right, fantastic. If you can remember this diagram, it's enough. All the explanation what I've gave you after that, that is also not necessary. All you have to do is to what, Nana? Remember the diagram. That's all. Got the point? Here, all right. Chalo, that's it. Let's move on to the next one. What is the next concept we have? Performance prism. Okay. Now let's try to understand this concept. To understand this, we'll have some examples. Okay. Ready? Okay. So we'll take this first 2 benches. So they are our shareholders. Okay. Equity shareholders. The next 2 benches. Okay. You will be suppliers. Next 2 benches. Okay. The balcony part of it. You will be hey, wait, Ray. Chalo. You'll be, what can I say? Employees. Okay. And this side, the balcony, the Tatvik, Samba, all those things, that 3 benches. You guys are lorry drivers. Okay. Right. After that, we have the next, the Taskaskambutlu batch, that entire Prabhas and Amarnath, all that. That batch, what we'll do? Huh? They are customers. Okay. Who are they? Customers. I think that's enough. I think so. That's it. Huh? Okay. We'll take the first 2 benches. These guys are, let's say, government. Okay. Who are they? Government. Right. Anyways, so it is like this. Okay. Now let's try to understand the example first. So what is happening is that so far we have already learned 2 financial and non-financial based performance measurement systems. What are they? One is balance scorecard. The other one is performance pyramid. They are easy. We can easily remember. That's not a problem. Now, let's say you've already implemented balance scorecard. Now, you know that balance scorecard is really revolutionary because it was the first performance measurement system which is based on non-numbers. And we know that it has got 4 perspectives. What are they? Financial, internal business, customer perspective, as well as innovation and learning. So we are already aware of it. Now, so company, what it has done is that it has implemented balance scorecard, thinking that it will measure the performance perfectly. Everything was going well, but after some 3 months or let's say 1 year, what has happened is that all of a sudden your company has got a very good logistics, okay, where you've got a lot of lorry drivers, okay, you know, yeah, driving the lorry and all that. So truck drivers, let's call it as truck drivers, okay, it's a little bit posh, na? Kya re? Tatvik, will you be a truck driver? Huh? Moku fellow. Right. So let's say they are truck drivers. Okay, it sounds really good. And so what has happened is that all of a sudden the truck drivers went on strike. They went on what? Strike. Okay. Strike means, you know, Tatvik? Huh? What do you mean by strike? Yeah. Okay. After that, what has happened? All of a sudden, the employees of your company, they started leaving your company, which means all of a sudden the employees turnover has started shooting up. A lot of people are leaving your company and they're going out. So this became a major concern for the management, and they were really worried. Why is that employees are leaving the company? A lot of employees, and at the same time, why are our truck drivers are entering into what? This sort of a strike and all that. So then they started investigating why something like this is happening. Then finally, after doing a lot of research, they came to know that the problem is with the performance measurement system itself. What is that performance measurement system that we have in place? Balance scorecard. They said that the problem is with the balance scorecard. What you have implemented. Why? What is the problem with balance scorecard? The problem with balance scorecard is, from financial perspective, it indirectly takes care of shareholders. Correct? Right? And through customer perspective, it indirectly takes care of customers. So there are only 2 stakeholders of your company. One is shareholders, the other one is customers, are taken care by balance scorecard indirectly, correct? But it is not at all taking care of all the other stakeholders who are directly or indirectly involved with your company. Got the point? So which means only 2 people are taken care of. Who are they? Customers and shareholders. There ends the matter. That's all. But what about customers? What about suppliers? What about the people who have given you bank loans, right? The financial institutions. And in this example, what I gave you, the beautiful truck drivers. Okay, right. Okay, chalo. Right. So we have all these, you know. So all these stakeholders, you are not taking care of them. You are not even thinking about them. Correct? Are you able to understand? So that's the biggest drawback of what, Nana? Balance scorecard. So as a result, probably you're not giving them enough salaries, or maybe first of all you're not even paying truck drivers salaries. Maybe you're paying them variable pay, and you're not giving good compensation to your employees, or maybe you're not giving them good growth opportunities, or you're giving them a lot of work. Maybe you're not giving them enough time to do that work, or enough resources, or enough money. Got the point? They can be anything. Now, is that something like that possible? Yes, it is possible, because as a result of balance scorecard, you're only purely concentrating on what? Customers, and who is the other one? Exactly, shareholders, and not others, isn't it? So that's the biggest problem. Okay. Therefore, to counter the shortcomings of balance scorecard, we have a new system in place, the latest, which we call it as what, Nana? Performance prism. Okay. Okay. In performance prism, what happens? Very simple. What it does is that it says that, okay, first identify all your stakeholders and give them what they want. Give them what they want. This we call it as, and satisfy them eventually. So this we call it as stakeholder satisfaction. What do we call? What do we call this? Stakeholder satisfaction. Stakeholder satisfaction means what? Kya re? What do you mean by stakeholder satisfaction? Giving the stakeholders what they want. Pretty simple. Okay, you just give them what they want, there ends the matter. Okay. Now let's start with all our stakeholders one by one. Let's see what they want and we'll give it over to them. Okay, ready? Yeah. Kya re? Right. We'll start with the first one. Who are you? Shareholders. Yeah, Nana. They all are stakeholders. In that, who are you? Okay, shareholders, right? What do you want? Give me some response, Ray. I'm asking you what do you want. Inna Venu. Mokus. No, 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 no. Yare? Right. What do you want? Huh? Hey, Mukku, you're not customer, Ray. You're shareholder. Yeah, yeah, yeah. Chalo. No, no. You guys are still stuck with tea itself. Mokko fellows. Kaskas kumbutla. I know, I know. Chalo. Anyways. Hey, Mokku shareholders. You want something or what? Tell me, what do you want? Dividend and what is interest, Nana? We will pay you dividend. That's all. You need dividend time to time, and you want our performance to be what? Good, healthy profit, and our share price must be what? Increasing and all that. Okay. So what do you want? Okay, okay. Take, enjoy. Right. What do we have after that? Who are you? Suppliers. What do you want? Payment on time. Very good. Take it, take it. Enjoy. What do you want? Who are you first of all? Employees. What do you want? First of all, ask salary, re, Mukku. What do you want? Salary. You want good salary? Employees, na? Good salary. Take it. Enjoy. 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 Right. Moving on to that side. Who are they? Truck drivers, na? Re, Mukku fellows, truck drivers. What do you want? They want wages. They want fixed salaries, actually. Let's say right now we are paying them variable. Okay. You want fixed salaries. Okay. Tell Ray. Take it, take it, take it. Okay. And get lost. Who is the next one? Who are you? Customers, Mukku fellows. What do you want? They want product at a cheaper cost and qualitative product. Correct? Take that. Enjoy. Enjoy. Who are you? What do you want? Tax. Take it. Bribe. Mukku fellow. You want your Mukku jokes. Chalo. Right? So we have government. You take what? Tax. Okay. Fantastic. Satisfied? All of you are satisfied? Say satisfied. Satisfied? 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 Mokku fellow. Jump in Krishna River. Chalo. Satisfied? Tell me, Ray. Ray, truck driver. Satisfied? Ray, involve in the character and tell me, Ray. Satisfied? Yes? Happy? Happy? Happy. Done. Okay. Now this is not one way. It is two way. Okay. I gave you what you want, right? So now you also have to give the company what the company wants. So the first step we call it as stakeholder satisfaction, right? So we try to give the stakeholders what they want, but it is not one way, it is two ways. So now stakeholders has to give something in return. Kyare Nana? Somehow there is resound coming. I don't know why. Now it's better. All right. Okay. Now see here. Okay. What did you ask? Dividend and all that. I gave you na. Now what you do is that whenever we ask money, you give. What? Whenever we sell right shares, what do you have to do? Buy. Okay. And be a good shareholder. Okay. You got it? And that's what we want in return. Who are you? Suppliers. Supply raw material, good quality raw material on time. Whenever we ask. Okay. What? No delay. Nothing doing. You wanted bonus, I gave bonus. Okay. Now what do you do? Come on time and work efficiently. Mukku fellows. Is that clear? Say Ray. Right. Here is this Mukku truck drivers. Hey, you stupid fellows. See here. Right. What did you ask? You asked for wages. You want fixed salary. You want to be on our payroll. I gave everything. Now what do you do in return? Deliver the goods on time. Be efficient and be good. Got it? Right. Who is the next one? Customers. What do you want? You asked for quality goods at a lower price. Did I give you that? Yes. Now you stupid fellows, be loyal. Be loyal to the brand. Okay. Whenever we launch something new, first you have to buy. That's what we call brand loyalty. Okay. Now coming on to last Mukku fellows. Who are you? Get lost. Chal. Right. Okay. So what do we have here? So we have seen stakeholder contribution as well as stakeholder satisfaction. The first step is stakeholder satisfaction. Try to ask each and every stakeholder what they want and give it to them. And what is the second step? They have to give something in return for us. That we call it as stakeholder contribution. Right. Now let's try to understand this. See here. This performance prism is introduced to replace and overcome what, Nana? The negatives of balanced scorecard as well as performance pyramid. Instead of focusing only on two stakeholders, which is shareholders and customer, performance prism meets the need of all stakeholders like employees, government, suppliers and society at large. For example, if a company is doing exceptionally well with the balanced scorecard, but having high employee turnover rate due to dissatisfaction of employees, and truck drivers associated with the company are going on strike due to what? Dissatisfaction, due to a lot of reasons. Maybe their wages are not good, or they're being paid variable, or work culture is not good, respect is not good, whatever. So how are we going to solve the above problem with the help of performance prism? First, what we'll do, we'll go with something called stakeholder satisfaction, where we will identify the needs and wants of the stakeholders and we will give it to them, and eventually we'll satisfy all our stakeholders. And then you can measure whether the stakeholders are satisfied or not. How to measure? Check the employee turnover ratio. If employees are satisfied with us, then they will stop leaving our company. So this has to be low. If the truck drivers are satisfied with us, then the strike will be stopped. If the customers are satisfied with us, then the feedback will be strong. Okay. So once you are sure that all your stakeholders are what? Satisfied, then you ask something in return from them. What is that? What management needs or expects from stakeholders. Okay. Example, suppose better services to customer is what the customer wants in return for revenue and loyalty. Revenue and loyalty means you be loyal to our brand plus you buy our products. In that case, we'll be getting revenue from you. Next, better pay or training to the employees so that employees are satisfied. In return, you give improved productivity, which means you have to increase your efficiency. On-time payment or early payment to the suppliers. Okay. In return, what you have to do? Deliver us good quality of raw material, that too on time without any delay. Like that, we will give something to all the stakeholders, make them satisfied, and they will give the company what the company wants in return, which we call it as stakeholder contribution. Now, to do all these things, to give what the stakeholder wants, to pay more dividend, to pay the suppliers on time, to give more compensation to the employees, to make truck drivers permanent, and to give good quality products at a lower cost to the customers, correct? We need to develop some strategies. Okay. So strategies needs to be developed for all the promises that you made to different stakeholders for their satisfaction, correct? And also you have to develop strategies to get the best from the stakeholders as well. Now you're asking the shareholders to give money whenever we need. Accordingly, you have to develop a strategy for that. When you'll go for rights issue and all that. You expect the suppliers to give your raw materials of good quality and on time, correct? Yes, sir, what? You expect your employees to work efficiently. You expect the truck drivers to deliver the goods on time. You expect the customers to be providing you revenue, which means they have to buy your goods plus they have to be loyal. For all these things, you have to develop what, Nana? Strategies. And once the strategies are developed, you have to again prepare some processes to implement those strategies. Okay. Whatever the processes that are required to support the strategies that you need to create. Okay. For example, training process for your employees so that they will improve their efficiency. Proper recruitment process. HR policy needs to be revised because you have decided to pay what? High salary to the employees in order to satisfy them. Then accordingly, this process has to be followed so that you will revise the HR policy based on revised what? Salaries and all that, or salary structure. And finally, last but not least, you have to check the capability of your organization to give all these promises. Giving promises is not the point here. Do you have the capability to actually do it? For example, check whether the company has got financial capacity to pay high salary to the employees and also fixed salary payment to what? Truck drivers, which you have promised in our example, correct? Yes or what? That's it. So ultimately, How many things you have got in performance prism? 5 things. What are they? Stakeholder satisfaction, stakeholder contribution, strategies, processes, and capability. That's all. Got the point? Right. So what are the benefits of performance prism? Helps in implementing strategy for each stakeholder. It helps the company to address risk and opportunities of the business environment, thereby considering all the stakeholders, right? What are the disadvantages? Increased measurement gives start to managing micro things and lose sight of strategic direction, which means the more and more you concentrate on small things, sometimes it will make you lose the focus on what? The bigger picture. For example, you guys also take, suppose you want to write this Scmpe exam, you try to get into a lot of depth to devise strategies to write your exam. Okay, how to study each and every chapter. From each and every chapter, how many marks will come? How much will be for problematic? How much will be for theory? You understand the point? And in the examination, within those 3 hours, how many questions you have to attend? Let's say there are 15 questions. Then for each question, how much time is available? Then how fast I need to write? Like that, you go into a lot of depth. So once you start focusing on micro things, you will lose the entire picture of that macro things, and that's why we end up failing many a times despite going with a lot of strategies. You understand the point? That's why I always say that don't try to make things complex. Don't try to focus too micro level or too much at micro level. Just try to keep things simple so that you will not lose the main focus of passing the exam. You understand the point? Going into so many books, first chapter is good in that book, second chapter is good in ICA study material, third chapter is good here, problems are good in this book, theory is good in this book. You understand the point? Too much of micro focus will make you lose the bigger picture. This is a small example which I told you over here. Similarly, it happens inside the company as well. You understand the point? Too much of focus on micro areas will make you lose what? Exactly. In another simplest way I can say, suppose you get into a mobile store like Celcon, what mobile stores we have got? Select or something like that. You enter. And what is the basic process over here? Say for example, they are focusing too much on micro areas. For example, if a customer comes, okay, you are focusing too much on whether the customer has got the credit capability or not, so that he'll be able to what? Buy a mobile or not. You're focusing too much on that area. You understand the point? And therefore what this guy is doing is, okay, this guy, does he has got the capability or not? We'll ask his bank account number, we'll try to check his CIBIL score, that, this, everything. And because of this too much of focus on that micro area, we are losing the bigger picture. What is the bigger picture? Selling the required product to that particular customer, correct? That's the business that we are doing now. Whereas the major focus goes into the ancillary areas. You understand what I'm trying to say? You got it? And that's the thing. So therefore, that is the same risk that we have here in performance prism as well, where we try to focus on all the small things and we try to be really efficient there, thereby we miss the bigger picture. Got the point? Anyways, that's it. So with this, we are done with the concept of what? Performance prism, right? Chalo. Revise it once. I'll just give you 2 more minutes. After that, I'll ask you questions, and after that, we can wind up the session. Right? Chalo. Make it fast. Done with the reading? Ready? You guys are ready? Chalo. Okay, now tell me how to calculate EVA. NOPAT minus opening capital employed into weighted average cost of capital. How to calculate NOPAT? What is that? Profit before interest and tax into 1 minus tax, or profit after tax plus interest after tax, right? Okay. Then, okay. What are the 4 perspectives of balance scorecard? Financial perspective, customer perspective, internal business perspective. Financial perspective means what shareholders, how shareholders look at us. Okay, right. Then customer perspective, how do the customers look at us? Internal business perspective, where do we need to excel at, or how can we excel at? Excel at means manufacturing. Okay, right. Finally, innovation and learning. What is that? How can we continue to improve or innovate? Okay, right. After that, we have seen, okay, just tell me one critical success factor for customer perspective. High quality. Okay, KPI for that, number of defects. Okay, one critical success factor for internal business perspective. Operational excellence. KPI, manufacturing cycle efficiency. Okay, one CSF for customer perspective is also done. Financial perspective. Growth. Okay, KPI, percentage of growth in numbers. Okay, right. What else we have got? Innovation and learning. CSF. Number of new products. Okay, new products getting launched. Okay, new product launch is CSF. Number of new products launch is KPI. Okay, right. Okay, we are done with that. Then, okay, tell me what is performance pyramid. Give me the diagram. It starts with corporate vision. Below that, market and financial success. Remember that way only. Market and financial success. Below that, customer satisfaction, flexibility, productivity. Below that, quality, delivery, cycle time, waste. And the left side we call it as external effectiveness, which are purely non-numbers or non-financial. Right side we call it as internal efficiency. We call it as numbers. They are number based, correct? Right. Measures flow from top to bottom. Is it? Objectives flow from top to bottom. Measures flow from bottom to top. Right. Then we have seen something called performance prism. So what do we have in performance prism? Stakeholder satisfaction, then stakeholder contribution, then strategies, processes, capabilities, right? That's it. That's enough. Okay, chalo. So we'll wind up today. Tomorrow we'll continue with the most important chapter. Okay, chalo. Enjoy your Sunday. Okay, enjoy. Right. Yeah. Okay. Right, guys. Then enjoy your weekend. Okay. Shubhodayam to all of you. Shubhodayam. Good morning. Shubhadinam. Prabhadam. Whatever it is. To all of you. Dash. Okay. Right. So, shall we start? All of you ready? Take your power notes and open the chapter cost management techniques and keep that ready. What is the page number, Nana? 60. 68. 68, it seems, the page number. Ready? Right, Nana? Okay. See, there are certain tier 1 chapters for you. Tier 1 in the sense, first in the priority of your entire syllabus. Among them, this is one of the chapters. Okay. So as I've written here, what did I write? So it belongs to A category, which means very important. Okay. And you'll get question every single attempt for sure. On an average, we can expect for 10 marks. It can go otherwise as well. Okay. But you'll get a compulsory question every single attempt from this particular chapter. Got it? Yes. All right. So what is the chapter name? Cost management techniques. Right. So let's have a look into the total syllabus of this particular chapter. So let's start with bird's eye view. So what do we have here? First topic that we're going to learn is cost control versus cost reduction. Yeah, all right. Then we have target costing. We have life cycle costing, which almost 50% we have already covered. Then we have Pareto analysis. Then we have environmental management accounting. So if you look at the importance wise, the most important topic of this entire chapter is what, Nana? Target costing. After target costing, what is the next important one? Life cycle costing. Third one, environmental management accounting, EMA. A little bit dry it is, but still it's important topic. Okay. And finally, Pareto analysis. Cost control and cost reduction, it's not just a topic. It is just, you need something to learn the other topics. Okay. So it's like a foundation. So therefore, I did not give any numbering for that. Got it? All right. Okay. Tell me, first of all, cost management techniques. What are the things that we're going to see? Cost management techniques. What are the things that we're going to see? First one, cost control versus cost reduction. Then target costing. Then what is that? Life cycle costing. Then Pareto analysis. Then EMA, environmental management accounting. So keep that in mind. Right. So we'll start with the first one. What is the first one we have got? Cost control versus cost reduction. Okay. So what is this cost control? Right. It's pretty simple. You're just trying to regulate your cost. What do you mean by regulating cost? With the help of some yardsticks such as budgets or standards. For example, I want to control the cost. Say, for example, I thought that for a particular product, you should be incurring 100 rupees cost. Are you able to understand? How do I control it? I simply give you a target. I say that there is a standard for you and that standard is 100. So whatever the actuals that you're gonna, incur, it should be within the standard. If that's the case, I'll give you some sort of a bonus or incentive. Are you able to understand? If it is outside the standard, in the sense if it is crossing the standard, then it will be an adverse variance. In that case, you will not be getting a bonus or something like that. Like that, I'll indirectly control the cost. Are you able to understand? That is nothing but we call it as cost control. I think in your inter you have done it, right? Standard costing is nothing but what? Cost control. Budgetary control is nothing but cost control. Now just try to imagine, suppose budget does not exist. What will happen? You'll not have a psychological control, isn't it? Say, for example, if I say this much is the budget for maintenance department for 3 months, the budget is, say, for example, 40,000. Are you able to understand? And if your actual expenses for the first month itself is, say, for example, 30,000, then psychologically, what you will do? For 3 months, what is allotted is what? 40,000. It's not like allotted. Let's put it this way. What is allowed is 40,000. But what I'm doing right now, already I'm trying to breach it pretty much early, correct? So therefore, they'll take some steps. Are you able to understand? So that they'll try to keep it under control as much as possible for them. At least the thought process will come. They'll do some, actions accordingly. Are you able to understand? They'll take some actions accordingly. Now, the point here is, suppose if this budget is not there, and let's presume that budget does not exist and only actuals are happening. If 30,000 expenditure you have incurred in the first month, would you think like this, the way we have just thought? If budget was there, you will not think like this, isn't it? You will be just careless because you're not worried about anything. Are you able to understand? So that's how these targets will have a psychological influence on the actual performance of the workers. Are you able to get me? Yes. And indirectly, that's the way they control. Got it? Anyways, now, so regulation of cost is nothing but cost control, which means, say, for example, you want a cost to be incurred around 100, you'll just control it in and around 100. Are you able to understand? If it crosses, accordingly, you will take some steps and you will try to bring it. Are you able to get me? Right? Now, how do you do that? With the help of some yardsticks such as budgets or standards compared with the actuals to ascertain what Nana performance, which is what we have been doing in standard costing as well as budgeting. And see here, all this is possible only if there is effective cost accounting system in place. Why? who's gonna actually record all these things? For example, suppose your standard has been, say for example, some 250, okay, and your actuals is, let's say, some 270. How do you know that actuals is 270? There should be some cost accounting system in place, and that has to recognize it exactly at the time, and eventually that system has to make a report of it, and that report should reach the concerned level of management, and then the management must take action on the same. Are you able to understand? So all those things should work, isn't it? Otherwise, how will you control your cost? So which means if all these things has to work, there should be a parallel cost accounting system in place, which will record everything that is happening and accordingly prepare the report, and eventually it will reach the concerned authorities, and then they will eventually take an action. Only then everything works. Are you able to get me? Yes. Now, this cost should be categorized into controllable and uncontrollable costs. This I already told you. What did I say? Here you are trying to measure the performance of the individuals, right? With the help of this targets, the so-called standards and budgets, correct? When you try to measure the performance, I told you so many times, in the last chapter itself we have seen, you should only take into consideration those factors which are under the control of that particular individual. I gave you one metal example, correct? Suppose purchase department is there. Are you able to understand? You gave them a standard cost, right? That this should be the price within which you should purchase the raw material, which is metal. And internationally, the price is falling down since last 8 months or 10 months, right? And as a result, his actual price will be what? Very, very, very less. Correct? And then he says that therefore there is favorable variance. You try to give me bonus. Will it work that way? No, because it is not due to your personal effort. Correct? It is not in your control. So when I try to measure your performance, I should remove the uncontrollable factors, whether it is favorable or not so favorable. It doesn't matter. If it is not in your control, I'll remove it. I'll eliminate it. There ends the matter. Then only your performance measurement will seem fair. Correct? Yes. That is what we have done here. That is the reason your cost should be categorized into what, Nana? Controllable and uncontrollable. Are you able to get me? Yes. And here there is one point that I've written. You're gonna regulate your cost with the help of yardsticks such as budgets and standards, which means you'll keep your standard and then you'll compare that with actuals, and accordingly you'll measure your performance. Correct? Then, if this needs to happen, organization should be divided into responsibility centers. What do you mean by that? What is responsibility center? We'll see in a chapter called PME. What is PME? Performance measurement and evaluation. But it is not that such a big topic. The simple answer is, let's say for example, you have multiple departments like purchase department, production department, stores department, maintenance department, stuff like that. Sales department. Now, suppose purchase department is there. What do you mean by making it a responsibility center? It means that you will give divisional autonomy to them. Okay. Which means I'm not going to involve in your day-to-day activities. You can take your own decisions and stuff like that. But I gave you powers, right? Accordingly, parallelly, you should be responsible as well. In a sense, suppose if I treat purchase department as a cost center, suppose, okay, which means that purchase department manager has got his powers to take any decisions related to cost, which means he is equally responsible to the extent of cost itself. Now that's what you call it as a responsibility center. Power and responsibility goes parallelly, hand in hand. You got the point? And his performance will be measured by comparing standard cost with actual cost, which means first I'll give you standard cost, which is nothing but cost allowed. Then you link actual cost. Then actual cost will be compared with standard cost, and accordingly whether the variance is favorable or adverse, depending upon that you'll get bonus or not whatsoever. Are you able to understand? That is what we call responsibility center. For example, there is a production department. I have treated that production department as a profit center. Suppose profit center means what? That production department can have control over cost as well as sales. At the same time, it is responsible to the extent of cost as well as sales. And its performance will be measured with the help of target profits. I'll give it some target profit. If it reaches, then you'll get the bonus. Otherwise, you'll not get bonus. So responsibility center means it is nothing but I'll not only give you power, but also I'll make you responsible. Tomorrow something otherwise happens, you're equally responsible. That's the point. Are you able to understand? Only if something is made as a responsibility center, then only you can catch hold of some person and you can make somebody responsible tomorrow for some sort of mistake that happens. Are you able to get me? And eventually you can correct it. And next time you can ensure that the mistake will not repeat again. That's how you control the cost. For example, let's say you gave a standard price for a purchase department, like you should buy the raw metal at 18 rupees. Okay. Whereas this guy was very inefficient and he bought it at 21. Or let's say he has mingled up with the supplier and he said that you goof up the price, I'll accept the price, and whatever the benefit that you get, both of us will share. Something like that happened. Now, eventually, when the variance calculation happens, because standard costing is nothing but cost control, correct? So, when variance calculation happens, it will be adverse variance because you purchased at 3 rupees more, correct? So, once the variance calculation is done, then investigation will happen. So, why there is 3 rupees extra? And then finally, they'll figure out a reason. And who is responsible for that? Purchase department manager. So, he'll be called upon and he'll be asked for explanation. You got the point? If he explains it correctly, then it's fine. If he doesn't explain correctly, then what will happen? Exactly. Accordingly, action will be taken. What is the ultimate result of all these things? That mistake will not happen again. And that's the way you control the cost. Got the point? Yes. Fantastic. You got it? This is done? All of you. Right. Always when you read these sentences, try to understand what is happening and then you read so that you will remember it pretty easily. Got the point? Yes? Okay. Chalo. Examples are what, Nana, for cost control? Standard costing and budgetary control. Those two are the examples, right? Now tell me, so what is cost control? Regulation of cost with the help of some yardsticks. Yardsticks means you need something to measure, okay? So what are those yardsticks? Standards and budgets. You will measure that with what? Actual performance. Actuals to measure the performance, correct? Yes. To do that, you will divide all your entire organization into responsibility centers. So are you able to understand? And to recognize this, parallelly, there should be a cost accounting system in place. So when you try to recollect this, you should only remember the keywords. Okay. Okay. Regulating cost is nothing but cost control. We will have some yardsticks like standards, budgets that will be compared with actuals. Performance will be measured. To do this, you need two things. One is parallel cost accounting system in place because they have to recognize all these things that is happening and make a report. And the other one is these divisions should be treated as responsibility centers. There ends the matter. The examples are standard costing and budgetary control. That's it. Got it? Array, all of you. Simple and subtle. So, moving on to the next one. What is the next one we have? Cost reduction. This is real and permanent reduction. What do you mean by that? It means that cost control is temporary. Are you able to understand? Why cost control is temporary, sir? Simple logic. See, suppose you put a standard as 18 rupees per unit in Q1 to purchase the raw material. And purchase department was very good and the actual price was 18 rupees per unit only. So which means you have actually successfully controlled the cost in Q1. Now, does it guarantee that in Q2 also same thing will happen? No. It can go otherwise. So whatever the cost control that you are trying to do is always what in nature? Temporary in nature. You may achieve it, you may not achieve it. Even if you achieve it, there is no guarantee that you will achieve it again. Are you able to understand? So purely it is what in nature? Temporary in nature. Unlike cost reduction. What about cost reduction, Anna? Permanent in nature. Once you reduce the cost by any means whatsoever, your cost will get reduced permanently. Are you able to get me? Hello, yeah. How, sir? Very simple. Look at the examples. Target costing, which you don't know. In this chapter we will see, but right now just try to remember. See, target costing means what I can say. Right now it will be a little bit complicated to explain. Okay, just remember that whatever the cost reduction techniques that you have got, once that is implemented, it will be permanent in nature. Are you able to understand? It's not temporary in nature. That much you remember, it's enough. For example, business process reengineering is there. What do you mean by that? It's a cost reduction stuff. What happens in that? Your entire way of running your business will be changed completely. For example, you have banks now. Once upon a time, pre computer era, they were having all these files and stuff like that. Everything was what? Hard paper and stuff like that, isn't it? And all of a sudden, the computers have come and taken over, and suddenly the efficiency has got increased multiple times. Correct? Yes. Are you able to get me? So that we call it as BPR. Now, because of that, definitely cost of operations of that particular bank at that particular point of time would have got greatly reduced. Now tell me, was that reduction permanent? Yes. Are you able to understand? So cost reduction by any means, if you do, it will be permanent in nature for sure. Okay. Got it? All right. Now see it. So what is the first sentence, guys? Real and permanent reduction. What is the second sentence? It does not accept standards or budgets. What does it mean? Any of the cost reduction techniques, they will not accept the standards or budgets. Means what? See, suppose I tell you a standard that this work should be done in 100 hours. Are you able to understand? Cost reduction techniques, what they will say is that, why should I be following that 100 hours? I can do even better. I can finish it off in 99 hours. I can finish it off in 98 hours. So basically the cost reduction techniques will challenge the standards or budgets, and they'll further try to what? Improvise them. That is the meaning behind this sentence. It does not accept standards or budgets. Are you able to understand? Yeah, because that's the attitude of cost reduction techniques, right? I'm here to reduce the cost, not to control. So therefore you gave me one particular target. It doesn't mean that I have to reach that particular target. I can even what? Cross it. Yes. Right. Next, it rather challenges the standards or budgets to make what, Nana? Improvement. So it will further improve them. Are you able to get me? And finally, it is dynamic and not static in nature. Cost control techniques are static in nature. For example, you take standard costing. How standard costing works is, suppose employees are working at a particular level of efficiency. That will be taken as a base. Okay. Let's say it is 100% efficiency. So standard costing will take a presumption that always this company will work at this efficiency level only. It will take a presumption, and accordingly it will fix the standards. Are you able to understand? So there is no question of improvement when it comes to what? Standard costing. What this cost reduction technique says is that you have to keep on changing yourself. For example, in the first quarter, let's say your target is 100 hours. Okay, be dynamic. Let's put it 99.5 hours in the next quarter. And then we'll make it 99 hours in the next quarter. So accordingly, it should be what? Changed. So changing according to the situation. Changing according to the situations, we call it as what? Dynamic. Got the point? Yes? Right. Chalo. What are the examples? Target costing. Under target costing only, you'll be getting value analysis and value engineering, which we'll see in a short point of time. JAT, just in time, total quality management, business process reengineering, and Kaizen costing. All these are cost reduction techniques. Got the point? The ultimate target of all these techniques are to reduce your cost. Yes? Chalo. So now tell me, when it comes to cost reduction, what are the important points we have? First of all, it is real and permanent. Second, it does not accept standards or budgets. Rather, it challenges and further tries to improve them. Correct? Then, dynamic in nature. Examples? Target costing, just in time, total quality management, BPR, Kaizen costing. Frequently, we will use target costing and Kaizen costing as the examples. Are you able to understand? Remaining are a little bit advanced versions. Generally, we will not use them. See, for example, BPR, it's very rare to implement BPR because it's very costly. Very, 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 very costly. So it's like, what can I say? If you are in deep danger, are you able to understand? If your company is in so deep danger that unless you implement BPR, you have to shut your company. That's the situation. Or you'll be thrown out of the market. That's the kind of scenario where you'll implement BPR. You understand the point? So it's also a cost reduction technique, but only in extreme situations, you'll go for it. Are you able to understand? So if there is a situation like survival, in those kind of situations. But Kaizen costing and target costing, normally you'll implement. Especially Kaizen. Target costing also in certain kind of unique situations you'll implement, but Kaizen normally. What is that? We will learn. Don't worry about that. Got it? So right now just remember. Okay. Tell me what are the cost reduction techniques again? Target costing. Okay. TQM, just in time. BPR, Kaizen costing. Okay. Enough. Right. Now. No. Not really. Okay. You'll understand when we go there. Okay. Ready? It's there in your SM, right? Yeah. Then you should be able to remember what is the exact definition of it. Try to remember, you'll get it. That's okay. It focuses on what? Defects. Okay. The focus is on defects, right? The primary focus is on that. Yeah. Yes. We'll try to learn it when we go there. It's there in our syllabus also. Okay. Anyways. Okay. Let's come back. Now let's come to the next one. What is the next one we have got? Scope of cost reduction. Now, what do you mean by the scope of cost reduction? It's a very simple thought. Suppose, say for example, Churili is there. Okay, Churili is recruited by a company. Okay, don't ask me who is that stupid company, but there is, let's say, some company. Okay, this guy went and did some performance in the interview. They liked it. Okay, and they selected probably some dance performance or whatever it is, song performance, which we'll also eventually see in the class. Okay, everybody is waiting, surely we'll do it. Okay, what is there more happiness than making others happy, isn't it? Right? Yeah. Okay. Yeah. Okay. So let's say that idiot who has recruited Churili is Akhil. Okay, so he is the interviewer. He has recruited. We know what's the future of the company is going to be, but still, then there is one innocent fella over there. Our yeah, four relationship specialist. Okay, what's his name? Apacha. Okay, that Apacha is there. Okay, right. So our Apacha is the costing head over there. He takes care of all the costing aspects, and in the hands of Apacha, Churili goes. Now, Apacha says that, see, already we are facing a lot of issues. There is a lot of competition, and our cost is not at all under control. So we want to reduce our cost. Now, tell me roughly what are all the areas where we can at least think of reducing the cost. Then Churili thinks like this, and all, and something strikes him. Okay, Apacha, I can help you out because you got the most intelligent guy in the world, at least who feels like that. So therefore, okay, there are four broad areas where we can try to reduce the cost. Okay, what are those four broad areas? What is the first one? Product design. So first we can think about product design. That's an area where we can figure out some ways to reduce the cost. Are you able to understand? Second one, organization. What is this organization? You'll understand once we try to read it, but that's the area where you can try to reduce the cost. Then factory layout, and the last one is production plan. So these are the four major areas where there are chances for you to reduce the cost. Are you able to understand? Broadly speaking. So it's not like we are trying to go in depth. So it's just a broad overview. Okay. Yes. Well done, Anna. What's your name, buddy? AB. Abin. Okay. I thought AB de Villiers. Okay. AB baby. Whatever. Right. Okay. Abin. Good, yeah. Right? Apacha is very good. Chalo. Now, right. Ready? Now, see here. So, first, you guys need to understand one thing. Any company that even tomorrow, if you go and join a manufacturing company, you want to reduce the cost. The highest probability of cost reduction will be available only in one area. What is that area? Product design. Almost like 80% of the chances of reducing your cost will be there in product design only. Of course, it varies from product to product, but general sense. Remaining and all hardly some 5%, 8%, something like that. It's very relatively small number, but this is the core. Which one is the core? Product design. So product design is everything, product design. So for example, you take car industry. It's the design which makes you buy the car, correct? It's the design that makes manufacturing a car faster. It's the design ultimately that makes manufacturing the car efficient. It's a design that makes making the car when there is a crash, safe. It's a design that makes using kind of materials, chrome or fiber or whatever it is. Everything ultimately comes down to what? Design. Are you able to understand? So normally, whenever we think about design, we just think about the looks. It's not the looks. It's much more than that when it comes to a company's point of view. Design is the one that really decides how fast your product can be manufactured in the entire manufacturing plant. Are you able to understand? Yes. So it's the design ultimately. So the most important area where cost reduction can be attempted. I just gave a small example, cheaper material substitutes. With that, you can try to reduce your cost in design. For example, you're using a lot of chrome. You can remove the chrome. Eventually, chrome is a costlier one. Without chrome, you can go for what? A cheaper material. Yes. Thereby, you can reduce the cost. Yes. And the design language is such that you see Royal Enfield, for example, how are the design is? Pretty much the same most of the times. The tank and the battery part, isn't it? And that way, if you can see, only the tank color will be changed. The other part where the battery is being placed, it will always be in blank. Have you seen that? It will be in black, correct? So whether you choose red color or green color or whatever the color it is, eventually in single colors I'm talking about, not the desert storm and sandstorm, all those colors. Okay, I'm talking about the single colors. You can see that on the back where the battery is there, the color remains the same. Many of the bikes you observe, they'll follow these small techniques. Are able to get me? And you look at the design language, most of the times they'll use common headlights, okay, in multiple products, in various platforms. So they try to actually, balance the cost this particular way. That's how they achieve economies of scale. Thereby, they'll be able to give you a product at affordable cost. That's the reason we are getting 650cc around 3 lakhs, isn't it? The Interceptor, I think now it is 3.5. Interceptor is how much? Somewhere around 3.5. Whereas if you look at the competition, it's not less than 7 lakhs. 50cc parallel competition. But this guy is able to provide at half the price. Reason? Economies of scale. Of course, there are little bit of cuts in terms of performance and quality and the kind of things, the parts that they have used, but still, nevertheless, still it's a great value for money. Got the point? Anyways, so this is the first area. What is the second area? Organization. What do you mean by organization? How can we try to reduce the cost with respect to organization? Well, look at the first point. What is the first point? Define each function and responsibility. What do you mean by that? Defining them will reduce your cost? Yes, because indirectly it reduces the efficiency. Sorry, inefficiency. Are you able to get me? Yeah. See, for example, I think way back in 2017, I worked as a director in one B school, okay, for international wing. So when I worked as a director over there, I worked only for 9 months. Okay, so there the problem was when we all the heads of different verticals, we have around 4 verticals and the chairman. So the problem was our function and the responsibility was not clearly defined. Are you able to understand? As a result, many of the times we used to clash. Are you able to understand what I'm trying to say? So which means I'll go to a target audience whom I need for my wing, okay, and the other guys also will come and they'll try to land on the same audience, and eventually we used to fight, or we used to eventually try to, what can I say, try to influence them to come to our respective verticals, and eventually they used to get confused. You understand what I'm trying to say? I'm just trying to give you a simple example, okay? So the most important part is your function and the responsibility must be clearly defined. Otherwise, what happens? There will be inefficiency in the work that's happening. That will indirectly increase your cost. It's as simple as that. It's not visible, but actually it happens. You got the point? Yes. Next, proper assignment of task and delegation of responsibility to avoid overlapping. Same stuff. Removal of doubts and fictions. Removal of doubts and fictions means sometimes certain employees, especially the higher level employees and the lower level employees also for that matter, they don't even have clarity to what extent their powers are, to what extent their responsibilities are. Especially in big companies, there are certain companies which I've seen in real life where certain employees, they don't know that they can communicate to the higher level management. Are you able to understand? Where these guys who are actually working in front of the real missions, they will get so many thoughts where they can do the work in a better, efficient manner. And they want to communicate that so that that change will happen. As a result, it will benefit the company as a whole. But they don't know that they do have the authority or the power was given to them to communicate to the higher level management, and there is a communication channel. Are you able to understand? So all those things you have to remove. Then what will happen? Automatically these guys will do that in my example, and eventually it will reduce your cost, correct? Yes, in Japan they do that. That's the reason they are kings in manufacturing. Japanese and Germans, isn't it? The entire world. Okay. Even today, there are two countries that you will listen. Incidentally, both the countries got destroyed in World War II. They're really great, isn't it? From there, recovering and then being manufacturing hubs of the entire world. Isn't it? Yes, right? Encouraging employees for cost reduction solutions. That's what I told you. If you remove these doubts and fictions, then only indirectly they'll also move forward and then try to give you something. Got it? Okay, moving on to the next one. What is this? Factory layout. Studying the factory layout to eliminate the wastage of men and materials is also important. What do you mean by that? You see, I gave you an example. Suppose this is the floor layout. Let's say it is a first floor or whatever it is. To get the output, you need 4 machines, and the machines are placed this way. Okay, so whereby you get the raw metal over here. This is the in. It goes to machine 1. It comes out. It becomes WIP, and then it goes to machine 2. It comes out. Goes to machine 3. Comes out. Goes to machine 4. Comes out, and then eventually goes out. Are you able to get me? So here, this is a kind of inefficient layout setup. Correct? Yes. This will also increase your cost because there is unnecessary movement of men and materials. Correct? Yeah, what? That's what we're going to learn in lean system and innovation, where unnecessary movement of men also will be considered as a waste. Unnecessary movement of material also will be considered as a waste. And our target in lean system is to reduce the waste. Are you able to understand? That we'll see when we go to that particular chapter. But here, this is the factory layout, a simple example which I can give. In reality, it will not be that simple. But anyways, through that, is there a scope for me to reduce the cost? Yes. And finally, production plan. Production plan means what? Ordering correct machines, very important. Proper utilization of materials, men, resources, etc. Pull system, push system. Pull push system means there are 2 systems of manufacturing. Are you able to understand? We'll see it clearly when we go to JAT. Okay. Push system is a traditional system of manufacturing. Pull system is the latest. What is the exact difference between them? We will learn when we go to chapter called what, Nana? JAT, which is nothing but LSI. In LSI, we'll see. Clear? Right now, just understand that even production plan helps you reduce the cost. Are you able to get me? For example, what is JAT? Just in time. Just in time production means what? How much sales happens exactly immediately you have to what? Produce in such a way that your production and sales matches. That's the logic. That's what you call just in time. Are you able to understand? Yes, it's a production plan basically, correct? Versus the traditional production plan where you produce well in advance and keep the stock ready. Are you able to understand? Whereby you have lot of money being stuck into the value of the stock, correct? Suppose you have got 1 crore worth of stock. What has happened to your money? It's in the stock. So which means on 1 crore worth of stock, in case if the stock does not exist, you could have invested it somewhere and you would have earned something in return, correct? So you're losing the entire benefit because the money has got blocked in the form of stock, correct? Yes, that's what we call it as finance cost or working capital cost, isn't it? Yes, that will not happen in terms of JAT. Got the point? So that's what I'm trying to tell you. Even in case of production plan also, there is a chance for you to reduce the cost. Got the point? Yes, all of you. All right. Hello. It's not that important, but it's good to have an idea. Sorry. Now tell me, what are the 4 areas where we can try to look out for cost reduction? In other words, scope of cost reduction. What are the 4 areas? Can you please tell me? First one is product design, the most important one. Second one, organization, where you have to clearly assign the function, responsibility, task and stuff. You have to remove all the doubts of fiction and all that, and clearly you need to communicate them that they can come out with their own ideas and suggestions for cost reduction, right? Next, factory layout. I gave you an example how it has to be efficient, where unnecessary movement of men and material should not be there, correct? Last one, right? Production plan, where it can be pull system plan or push system plan, whatever it is, but there is a chance of cost reduction even in the way you plan to produce your finished goods. Got the point? Yes. Chalo, that's it. So we're done with the basics now. So this part is done. So what is the next part? What is the next part? Target costing. Let's get to that now. Ready? Right. Okay. Ready? Let's start with our first important topic of this particular chapter. What is that? Target costing. Okay. So I gave few examples here to understand the basics of target costing. Okay. Right. So for that, I took 2 companies over here. One is RE, everyone's favorite. Okay. And then we have Classic Legends. Classic Legends is a subsidiary of Mahindra. Under that, you have Java, the recently launched SD and all that. You guys have any idea about all these things? You should, because in our entire syllabus, I'm going to take examples of automobiles. Because automobile is a very complicated industry that you can cover the entire syllabus with that. Okay, that's what. So you should know. Go to YouTube and search. Have a little bit of idea. You'll understand. Ready? Yes. Hello. So here what I've done is that I've taken two scenarios to understand target costing. In scenario 1, we are RE. In scenario 2, we will be Java. And let's try to understand how target costing works. So in scenario 1, what happens is that we are Royal Enfield and we are the market leader, correct? Yes, obviously. So we have the major share in the market. Yes. And then all of a sudden, competitor comes. Who is that? Java. So he's also on the same template, right? Same kind of, it's a brand name, from 1980s. So it's a classical one, isn't it? And there is a lot of cult fan following from 1980s. And so he's trying to pitch up against Royal Enfield in the same style. The strategy and everything is the same. So he's the new player who is entering the market and he tries to fix the selling price at 1,60,000. Equivalent comparable bike. Whereas this guy is actually selling right now at how much? 1,80,000. Are you able to get me? So his cost right now is 1,40,000 and right now he's enjoying a profit markup of 40,000 on every single bike. But then all of a sudden there is a competition. Not all of a sudden obviously. And this competitor tries to sell the same equivalent bike at a price of 1,60,000. Now the situation is, suppose if Royal Enfield continues to sell the bike at 1,80,000 itself, what will happen? Slowly the market share will move towards the new player. He doesn't want that to happen. So what he does, he tries to fix his new selling price, which is equivalent to what? Exact. The new player in the market. He revises. Now because he's a market leader, now people will generally buy Royal Enfield only. Are you able to understand? They'll not shift now. The probability is very less. But the problem is, because the new selling price is 1,60,000, generally companies will never ever try to compromise on their profit margin. So earlier, what was the profit margin? 40,000 on selling price, which is somewhere around 22.22%. Is the number correct? Just check the numbers. I don't know whether I've written, I calculated correctly or not. Yeah. Okay. So 22.22% right now. So which means when the new selling price has been revised all the way from 1,80,000 to 1,60,000, here also he doesn't want to compromise on the percentage of profit on sales. That's how companies will act. That's the only way they can survive. Remember. Are you able to understand? Right? So he will put the same percentage on sales. Then he'll get the desired profit margin. You reduce that, you get your target cost. So what is the target cost? 1,24,448. Now this is like a budget. Now he has to manufacture the same bike within the cost of 1,24,448, which at one particular point of time it used to cost him how much? 1,40,000. So which means there is a cost gap of how much? 15,552, which he has to close it. That cost gap has to be closed through value analysis and value engineering. What is that? We're going to see later. Are you able to understand? But those two, they come under target costing only. Value chain analysis is different. Are you able to understand? That we're going to see in a chapter called Intro to SCM. That is different. Value analysis is different. Okay, value chain analysis is different. Value analysis is different. You got the point? So we're going to apply value analysis or value engineering, whichever is more relevant. And we're going to close this cost gap. And thereby, the cost will come all the way from 1,40,000 to what? 1,24,448. Thereby, he'll be able to sell at 1,60,000 and take head on with the competition. Got the point? Yes. Fantastic. This is first scenario where you need to make use of target costing. Are you able to understand? Did you understand what has happened here? How target costing was implemented? Correct? Now come to scenario 2. In scenario 2, what is the situation here? We are Java. So we are not RE. Who are we? Java, which means we are the new player. Correct? Okay. So I am Java and there is RE, who is a market leader. So I am the new player. Are you able to get me? So how will I think? You see here. So I'm thinking about bringing a product called Java to take on the market leader who is Ari. So when I'm trying to do that, I know that already the market leader is selling at a price of how much? 1,80,000. Therefore, if I were to launch my product, I can never ever sell it at a price higher than 1,80,000. So this is where we call it as price takers, where you have to accept the selling price fixed by the market. So Java is clear on one thing. You cannot sell for a selling price of more than 1,80,000. Therefore, the target selling price will be how much? 1,80,000, which I can never cross. Are you able to get me? Now, Java, what it does is that from that, I'll reduce my profit margin. This profit margin is 20% on sales in the example which I gave you. Are you able to understand? It depends upon what is the overall cost of capital of that particular company. It depends upon how that company has got the funds. Are you able to understand? It varies from company to company. So once you reduce the profit margin, you got your target cost, which is how much? 1,44,000. Now this is like a budget. Means till the company has not even started operations. Before itself, they know that 1,44,000 is the budget that I've got. So whatever the bike that I'm gonna create must be within that 1,44,000 budget. So they start designing the product keeping this budget in mind. That's the beauty. Are you able to understand? So now you'll start designing your product in such a way that it should come under 1,44,000. It should come under, in a sense, what does it mean? It means that your entire manufacturing cost should come under 1,44,000. Got the point? So this is the second angle. Are you able to understand? That's what they've done. See, I told you, in Mojo, they had Pirelli tires, they had dual disc brakes, they had upside down forks, USD forks, and all that. Are you able to understand? But when, with the same engine, they wanted to take on Royal Enfield, this is not some story. In real life, it has happened. Okay. So what they've done, they have applied target costing, and eventually they have figured a target cost within which they have to manufacture Java. And to achieve that target cost, they have done a lot of cost cutting. Are you able to understand? In real life, they have done it the same way. That is the reason when Java got launched, its price was exactly similar to what? The Royal Enfield price. Are you able to understand? Alright. So from this, what you guys need to understand is that target costing can be implemented in two ways. One way is you are a market leader and a new player comes and then he tries to sell the product at a lower price, and therefore now you don't have a choice but to reduce your selling price, and thereby don't want to compromise on the profit margin, therefore you try to reduce your cost. This is one way. The second way is you're not the market leader. Now in the second scenario, you are the newbie, you are the newcomer. Okay, so you know that there is a market leader and you want to enter a segment where you want to compete with him, correct? So now what you do, because he is already a market leader, when you try to create a product, unless it is better than the product that he has already created, that's a different thing. But when you're trying to create a same product, then obviously you cannot sell it at a price more than your market leader. Therefore, you take his selling price as the target selling price. You reduce your profit margin, you get your target cost, and now this becomes your budget within which you need to ensure that your entire manufacturing process comes under that particular budget. So you start designing keeping that budget in mind. Got the point? Yes. So in your study material, actually only scenario 2 is covered in the form of definition. We'll see that definition also. Okay. But scenario 1 has not been touched upon. Okay. But both are there when it comes to target costing. That's the point. Okay. Sure. Now see here. Before we get to the target costing, in the cost control, we have seen that there are different types of targets. You remember that? You forgot, huh? Regulation of cost when it comes to cost control with the help of what? Yardsticks such as budgets and standards compared with the actuals to ascertain the performance. This is nothing but targets. Correct? How the targets can be, here I gave you an idea. Now see here. The types of targets. They can be external targets or they can be what? Internal targets. Internal targets are nothing but standard costing and budgetary control. They are not external targets. External targets will generally come under benchmarking. Okay. What do you mean by benchmarking? It's an official term for copying. Copying only, na? Benchmarking means. What you'll do is that you'll find out the best practices that is happening in the market you'll try to implement that in your company. It's as simple as that. But that's a separate topic. When we go there, we'll try to study. Are you able to understand? Yes? Anyways, I just gave you an example for external target. That's all. Right. Now see here. So what is the next one we have? Prerequisites of cost control. What do you mean by prerequisites? Huh? So what are the prerequisites of passing CA or becoming a qualified CA? Huh? First of all, you have to write the exam and get more than 50% aggregate. That's one prerequisite, correct? We have to do articles, you need to do CA foundation, inter, final, isn't it? All these are prerequisites. Prerequisites in the sense, of course, hard work, studying, that, this. So, which means if you don't follow any of this, you cannot achieve the target. That is the meaning. Prerequisites are something that you have to compulsorily follow, mandatorily follow. Are you able to understand? The heading is prerequisites of cost control. It means if you want to control your cost, these things are compulsory, mandatory. Are you able to understand? Otherwise, you cannot control your cost. That's what we are trying to say. So what is the first point? Delegation of authority, assignment of responsibility for cost. Are you able to understand? Which means cost center designation and manager responsible for it. Means, I told you just now that every department must be made a responsibility center. He should be given power, he should be given responsibility, he should be given targets, so that tomorrow something otherwise happens, you have a person to be made responsible and question him and take action accordingly. Are you able to understand? Yeah, that's first prerequisite. Second prerequisite is clearly defined targets. So when you try to give a target to somebody that this is the target, you need to work within the target. First of all, it should be defined clearly and he should also be able to understand. You cannot have a lot of complications within the target. So are you able to understand? For example, clearly give him 40,000 in quarter 1. Are you able to understand? Be clear. It should not be ambiguous. Got the point? Third, motivation to reach goals. What do you mean by that? After giving a clear target, you should give them some motivation to reach the target. What is that motivation to reach the target? Bonus. Are you able to understand? So if you see, those 3 points are very simple. First, make a responsibility center, give a clear target, give a motivation. That's it. Yes, right? And then we have what? Timely and efficient reporting. That is also important. What do you mean by that? You have given a target. Actuals are happening. Suppose actuals happen this week. Okay. Versus the target, the report is reaching them 3 weeks later. Your cost accounting system is like that in that particular place, your ERP system, whatever it is. Once he gets the report, then he says, then there is an adverse variance, then he wants to take an action. If he goes and sees already 3 weeks has got passed away. So what will be the ultimate effect of that kind of an action? It is not that effective, isn't it? Because it's already very late. So therefore, whatever the kind of reports that you try to report, it should be timely and efficient. Are you able to understand? It should not be too late. And recommendations must be followed by action. That's also important. Suppose your purchasing department manager has purchased at a very high price when compared to the standard. And you have got the timely and efficient report, and accordingly you have seen the report, then you have signed saying that this action should be taken. And then the report is thrown in the dustbin or it is kept in an almara. There ends a matter. Nobody has taken any action on the so-called purchase department manager and he continues to be the same inefficient way that he was. Will it give you any sort of cost control results? No. Because you have recognized, you have a system in place, you have taken that particular system and that system has given you a report, you have prepared the report, you gave a recommendation that this sort of an action should be taken, but action is not taken at the end of it. Got the point? Will it give you result? No. That is why he has given you this particular point. And finally, an effective system to follow. What do you mean by that? You have taken an action and you gave a warning, say for example, this should not be repeated again. Are you able to understand? And again, you have to follow it up to check whether the mistake is again happening or not, to ensure that it does not happen again, correct? Therefore, follow-up is also required. See, to put it very simple, even this is not there. With our common sense, we do the same thing, isn't it? Yeah, forget about all these English terms. If you are doing a business, won't you do all these things? Suppose tomorrow you set up a firm, you have employees with you, you want them to work, correct? Yes. And you made them into departments. Let's say yours is a big firm. some 3 to 4 branches. Won't you do the same things here? Just look at those points. Or say, for example, if you are in a big firm right now, is there anybody who are in big firms right now doing articles? What? No one? Everybody is saying others' face. Raise your hands. Let me see. Big firms, Nana. See, it need not be big four. Even the local firms also, there can be a big firms, isn't it? Yeah. How many of you are working in big firms where we have departments and stuff like that? Only one. Others? Huh? Surely, you work in a firm? Somebody has recruited you? Is he okay? Yeah. How many months since you have joined? 3 years, huh? Not you survived, they survived actually. 3 years got finished. Okay, so articles is done. Hey, come on, Churili. Right. Now tomorrow you're gonna take over the firm, right? No. I told in a positive way only. Right. Chala. Right. Okay. Balcony. You guys are with me? Yes? Right. Okay. Chala. So when this will be useful for you in a case study or a case scenario where you can find a situation where he'll explain about a particular company, and in that case scenario he'll say that this particular company has failed in controlling their costs. Are you able to understand? In those kind of situations you can write the answer as these points. So when you're trying to read the theory, don't read them as a plain theory. Try to understand that in what kind of scenario this can be asked as a question, where he will not ask you like this, write prerequisites of cost control. This is not 10th class, where those kind of questions will be asked. Are you able to understand? So what will happen is that indirectly he'll ask you. Are you able to get me? He'll ask you like, there will be a situation where they did not follow proper prerequisites for cost control. Therefore, cost control system in that particular company did not give them desired result. So he'll give you a question like this: explain what is the problem going on in the existing cost control system in this so and so company. Then suggest some solutions, corrections, something like that. Are you able to understand? Then you have to see where the mistake were happening in that particular question. When you are looking at it, you have to keep this in mind already. Okay, I already know that if at all effective cost control needs to happen, what are all things that are necessary? A responsibility system must be there in place, a responsibility center, then clearly defined targets, motivation, timely reports, and action should be taken. And what is the last one? Follow-up also should be taken. So you can just remember in a simple way. Are you able to understand? And you keep on reading that, then you'll understand which is missing. Okay, responsibility center, they are not following properly. Nobody is made responsible. This is the problem. Okay, the reports are getting late. They're getting it after 1 month. Therefore, timely and efficient reports are not there. Are you able to understand? Follow-up is not there. Then you have identified some problems. Now below you will write the solution. That's the way case study works. Purinjo? Yes. Anyway, next year all your papers are going to be case study based only. So better be prepared for it. Nah. 2023, 90% there is probability that all your papers will be. Anyways, I said 90% only. As long as I know, it may become like 2024, 2025 also. We can't say. Eventually, it has to come into effect, right? We can't really say. So it's a guesswork right now. Okay, so you better be ready. So which means every subject, case study on. Ready? Okay. So we're done with prerequisites of cost control. Now let's move on to the next one. Here, I gave you a graph. Can you see that? Right. So what is this graph is all about? It's a very important graph. If you can see the y-axis, I gave you total cost in terms of percentage. Correct? If you see the x-axis, I gave you conceptual design, prototype, manufacturing, distribution, service, and disposal. Correct? And in the dotted lines, I have represented cost incurred. In the straight line, in a thick line, I have represented cost committed. I hope you know the difference between cost committed and cost incurred. Correct? Yes. All right. So what does this graph represent? This graph basically represents manufacturing companies, okay, who are involved in assembly operations or whatever it is. It's a manufacturing company. So what is the uniqueness of this graph is during the design phase and the prototype phase itself, okay, you are going to commit 80% of your total cost. Are you able to understand? You have not incurred, but you have committed. So there is no going back. That's why it is also called as what cost? Logged in cost. It's completely logged in. You able to understand? Once you finalize the design, done and dusted. So this design is finalized, which means this is the machines that I have to buy. We call it as commissioning, where you have to, buy the machines and set up your entire manufacturing setup to manufacture those particular machines. Okay, right? You'll buy the machines and all that, and that we call it as commissioning. And all those commitments will happen during which phase? During design prototype phase itself. So which means 80% of your cost will be committed only when nearly 15 to 20% of your cost are just incurred. Are you able to understand? Commitment is different, cost incurring is different. You have spent only this much, but this much has already been committed. There is no going back. Then you'll start spending after the commitment. Are you able to understand? And majority of the cost where it will be spent during the manufacturing phase. Actually, it will be spent. And in the distribution and service phase, it will be spent. So major spending is happening here, but major commitment is happening here. Got it? That's what this graph is all about. Very important graph. Keep it in mind. Got it? Bol re. Right. Okay. There is next question. What is this question here? What do you mean by standardization of components and the manner in which it will work out to reduce the cost? Already we have seen a lot of cost reduction techniques, correct? What are the cost reduction techniques that we have seen? Target costing, PPR, lean system and innovation. What is that? TQM, Kaizen costing, all that. There is another way to reduce the cost also. This will come in real handy whenever we solve case studies and case scenarios. What is that? Standardization of components. What do you mean by standardization of components? For example, you take Maruti Suzuki. What is happening in Maruti Suzuki? Right from the espresso car, the lower level segment car, till the top level, that is S-Cross. All the cars you'll find same infotainment system, correct? Okay, go and check. It's exactly the same infotainment system. Now in the recently launched Baleno, things are changing. But earlier, if you can see, before the Baleno, the new age Baleno, which launched just 1 month back, I think so. All the cars, right from 5 lakh to 15 lakhs, it's exactly the same infotainment system. What is that we call? That is what we call standardization of components. For example, you take Kawasaki vehicles right now, from Ninja 650 till ZX Tenor, which is 20 lakhs. It's the same infotainment system. Are you able to understand? You see the door handles, you see the power window switches in Maruti cars. Every car, it's going to be exactly the same. The kind of controls they've got, correct? Why do they do this? The steering wheel design is same. The steering wheel component, steering geometry is the same. So why do they do it? To reduce the cost. Are you able to understand? They use the same components in multiple products. As a result, they can manufacture them in larger numbers. Therefore, they'll get the advantage of economies of scale. Plus the kind of intellectual employees that you need to work upon them. For them also, it will be easy. Why? Because they don't have separate infotainment system in different cars, isn't it? It's the same infotainment system in all the cars. So it's easy for them to even work upon them, give an update, etc., etc., etc. You got the point? Yes. This we call it as what? Standardization of components. certain components will be made standard and it will be used among multiple products. And as a result, you will save hell lot of cost. Are you able to understand? I told you, in Royal Enfield bikes and in so many bikes where I told you one part will be same. It will always be in black, correct? Here, whatever the tank color changes, this color will always remain black. Standardization of components. So, irrespective of the color that you order, I will put the same component here, correct? Suppose if both the colors are changing, then for me it's difficult, right? Depending upon your order, here also I need to put a little bit of extra effort and then change it. Yes. Are you able to understand? All right. So, using same type of component for more than one product or all the products in which any manufacturer is producing, using same type of door handles, wiper in all the models. Are you able to understand? Car models I was talking about. Okay. So what is the advantage of standardization? It helps in economies of scale because you can manufacture in bulk, thereby automatically cost per unit get reduced. Ease in inventory control, isn't it? Because it's the same unit everywhere. So people also intellectually, they can easily understand that. Ease for an operator who use this equipment for various purposes. If it is different, components, then it's difficult for him also, right? Yes. Exactly. Done? Chalo, now let's come to the main part. What is that? Target costing. Still, we have not yet completed target costing. Still within that. Got it? Ready up? How precise you guys are? Huh? Okay. Right. Look at target costing. Look at the definition. Ready? I'll give. Wait. Okay. Look at the definition on all of you. A structured approach to determine the cost at which a proposed product with specified functionality and quality must be produced to generate a desired level of profitability at its anticipated selling price. So this definition matches with scenario 1 or scenario 2, which I've taught you just now. I gave you 2 examples. You're reading the definition again. Great. Instantly you should answer scenario 1 or scenario 2. Scenario 2. Very good. What is the definition? A structured approach to determine the cost at which a proposed product. What was the proposed product? Java. It was proposed only, na? It's a new company with specified functionality. 350cc engine, 300 I think so it is. Okay, that this whatever it is, specified functionality and quality must be produced to generate a desired level of profitability at its anticipated selling price. What is the anticipated selling price? The selling price of the competitor, which is 1,80,000, which is for RE. So this definition basically reflects only scenario 2 and not the scenario 1. That's what I told you, na? Only one angle has been covered in your study material, not both the angles. Got it? So it is a management technique aimed at reducing a product life cycle cost. Okay. So you see the steps here. What is the first step? Product requirement and market analysis. First, you'll analyze the market. You'll understand that people like 300cc vehicles. Are you able to understand? You'll try to figure out how much should be the power, how much should be the torque, that, this, and all that. Okay, that's step 1. Then you will put the target price. What is the target price in our example? 1,80,000, correct? Which is the price of the nearest competitor, which is RE. Then from target price, you'll reduce target profit. In our example, how much profit we have reduced? I don't remember the number. 20% we have reduced. Then did we get target cost? Yes. Once after getting target cost, this will be treated as a budget, and within that budget you will prepare your design, and then you will process your design. Eventually you will go for production. Correct? And after that you will not stop. Then you will still continuously you'll go for cost reduction. Why? Because always cost will keep on increasing. That's the reason you see when I bought Interceptor, I think that was 3 years back. It was 2,94,000 was on-road price when I bought it. Of course, I bought it the moment it got launched. Now what's the price? 3.5 somewhere around. At least Interceptor has got increased relatively less. There are a lot of other products which got increased by 2 lakhs, 50,000. You see now, how much is Honda Activa right now? 1 lakh, literally. I still remember that I've seen it at a price of 55, 58,000, isn't it? Got the point? Yeah. So this is a challenge for all the manufacturers, especially in a developing country like this. Because the problem with emerging economies is, by default, our inflation rate will be 5 to 6%. That is considered healthy actually. It should be 6% around. You understand that? Purinjo, emerging economies nature itself is like that. Okay. So 6% though, definitely it will increase for sure. Are you able to understand? Whereas the developed economies, their interest will not be that much. What can I say? Inflation rate will be somewhere around 1%. Are you able to understand? Ours will be somewhere around 6%. That's why generally our return that we earn must be greater than the inflation, so that we can at least increase our purchasing power a little. You understand the point? That's the way it works. Anyways, right? You got this? So therefore, that is the reason we should involve in continuous cost reduction. Otherwise, it will be very difficult for you to give the product at a particular price. Of course, for us, our case is little bit different, right? Why? Because from BS4, there were no BS5, and straight away they jumped to what? BS6, and that too it got all of a sudden. Therefore, all the manufacturing companies has to spend extra cost to achieve that, and that increases the product price. And then suddenly they said that beyond 150cc, I think so, ABS is mandatory. Correct? There were a lot of rules and regulations, isn't it? Now also the car price are going to increase like anything from April, if I'm not wrong. The reason? Again, government regulations. They made 4 airbags mandatory. Now, if it is made mandatory, what the manufacturer has to do? They have to compulsorily give it. Will it come free of cost? No, they have to increase eventually, isn't it? Yes. That's the way things will increase. Are you able to understand? One is due to the input cost. The second is due to this one. Apart from all these things, we have this great, increase in oil prices going on. Now, once oil prices increases, in the world it is increasing, here it is increasing. That one thing is enough, everything will increase. Correct? Just now I told you what is happening to paper cost yesterday and day before yesterday, isn't it? So that's how things are happening. Anyways, that's why we need continuous cost reduction to keep the cost in check. Normally, the best example for continuous cost reduction is Kaizen costing. Got the point? Yes? Right. Okay, chalo. We'll have a short break now. Then we'll go with the remaining part of target costing. Okay. Let's have a break. So take the next concept now. Let's continue. Advantages of target costing. So we are done till here, correct? Right? Chalo. Okay. Ready, guys? Okay, look at the first point over here. What is the first point we have got? All these are advantages of target costing. First one is proactive approach. What do you mean by proactive? For example, you take the example which I have told you, where you get a competitor, and then your competitor tries to sell the product at a lower selling price. Okay. So normally what people will do is that if they try to sell it at a lower selling price, they'll not react. They'll just be quiet. Then after some time, because of the low selling price, he tries to take away your market share. And once you face the heat of reduction in sales, then only they'll start reacting, and then they'll try to take some steps, and as a result they'll try to reduce their selling price and then eventually protect their market share. This is what we call reactive. Reactive means after the damage has happened, then you will react and then you'll try to rectify. Okay. Whereas in the target costing concept, which I've explained you right now, is it a reactive or proactive? It was proactive. Proactive means what? You expect that something wrong is going to happen in future and you act now itself. So the moment he has reduced the selling price, the moment a competitor has entered into with a low selling price into the market, immediately what we have done? We did not wait for his product to become successful and eventually take away our market share and then get damaged and then react. No, what we have done? The moment he launched his product at a lower selling price in our market, immediately we have reduced the selling price. So we didn't give them a chance. This we call it as what? So proactive approach helps in avoiding the damage. Are you able to understand? Damage in terms of loss of profit, loss of sales, loss of market share, whatever it is. So it helps you not to face it. That is one of the biggest advantages of target costing. Got it? Next, It starts with market study, helps company to compete well. Correct? Yes, we have already seen. Arey, because it starts with market study, that is the reason as a Java, when I try to fix my target selling price, I fix the target selling price is equal to what? My nearest competitor R is, isn't it? So that starts with market study only, because I know that market will not accept any selling price more than that for this particular product. You got the point? Yes. Ensure proper planning well ahead of production. That's what I've done. I planned at the beginning itself. I figured out the target selling price. I reduced my profit margin. I got what? Target cost. And I kept the target cost as a budget. Within that budget only, keeping that budget in mind, I started designing my product. Correct? So which means I've planned properly well ahead of the production itself. Correct? Minimize NVA activities. What do you mean by NVA? NVA means what? Non-value added. Correct. NVA means non-value added. So generally, there are two types of activities: value added and non-value added. Okay. So value added means basically if there is a particular activity which adds functionality to the final product. For example, we'll take our Surili. Surili is a costing expert. He has got a cost consultancy. Gary, are you able to understand? Our friend is there. What's your name, buddy? Ashik. Rashik. Okay. Okay. Rashik is there. Now, Rashik has got a new electric manufacturing company. He's manufacturing electric cars. Let's put it that way. Startup. And he reached Churili for consultancy. Okay. He said that, see, I've planned, this is my design, this is my car. And eventually I find that it's a little bit going on the higher side. The cost is, so you please try to look into this and then try to, tell me which are value added and non-value added activities, so that I'll eventually remove the non-value added activities. Thereby, I'll eventually reduce my cost. That's the whole conversation. So Churili went and said, okay, what is this product is all about? I mean, what is this entire step is all about? What it is doing? What is the function is all about? He says that, sir, that is brake, sir. Remove. Yeah, able to understand? Remove. Why there is a brake? You make engine braking very strong so that automatically it will stop. You remove the brake. Something like that. Can we do something like that, Churili? No, you can't. Yes, I have an experienced guy here. Okay. Yes. So, value added activity means if any activity actually adds functionality to a particular product, like brakes, headlights, stuff like that, it is compulsory and it will be called as value added. You understand the point? Second is, if there is any activity for which the customer is ready to pay, he's willing to pay, that automatically becomes value added, even though it doesn't add any functionality to the final product. So that's the, curious part. You got the point? For example, we'll take same car, the Rashik's car. The moment you open the door, there is a puddle lamp, okay, which throws light of the branding of the car on the floor. I mean, in the sense, not the car floor, the road. Okay. Is it adding any sort of functionality to the way your car performs? No. But still, if the customer is willing to pay for that, that eventually becomes value added. So there are simply two conditions. One is functionality, the other one is customer, whether he is willing to pay or not. So if there is any function or any process which adds functionality to the final product, or anything for which the customer is willing to pay, by default it becomes value added. Otherwise, it is automatically non-value added. So here I've written clearly, minimizing non-value added activities is one of the advantage of target costing. Are you able to understand? Because that's one of the ways of reducing the cost. Got the point? That's what I've added here. Does not add any, what did I write? Does not add any function, or customer is not willing to pay for the same. Got it? Yes. Finally, reduce time to market is an advantage of target costing. What do you mean by that? Reduce time to market. We'll take the same example. Rashik's car. Okay. It's EV car. Okay. He designed the prototype. The prototype is finalized, and he plans that it should be launched in the market within another 1 year or 1.5 years. Now there is another startup also. Okay, let's say by our friend. What's your name, Nana? Mrudula. Okay. Right. Mrudula also comes with a startup. Same kind of a similar kind of a car company. Are you able to understand? Electric car. So she sees the competitor, Rashik. Are you able to understand? And she thinks that I should be able to come a little bit faster so that I will be the first Desi Indian startup car company. That craze I can encash as a first mover advantage. You got the point? Are you able to understand? Rashik also wants to do the same. You understand that? Now, Archurili goes and says, okay, I'll do one thing. I'll let you help. You better implement target costing. Because of target costing, because you plan everything well in advance, are you able to understand? The time to market means from the time you have decided the prototype of your product till the time eventually it gets into mass production and is available for sale. That is what we call it as time to market. Will be very less so that you'll come to the market pretty fast and thereby you'll have the advantage of first mover. Are you able to get me? Got it? I told you, na, Mojo bike that had a biggest negative point in this area. Its time to market was pretty long. I think almost it took 3.5 years. From the time they planned to launch it, they finalized the product, the prototype. By the time the actual product got launched, it took almost 3.5 years. And in that 3.5 years, a lot of things have got changed, and therefore these guys have lost that, first mover advantage, and they didn't get the kind of recognition that they would have otherwise got, provided if they would have launched 2 years back. Are you able to understand? Yes. If this time to market is pretty long, then what will happen is that your competitor anyway will be observing your prototype, because in the auto external anyway you'll show prototype, correct? Yes. Then competitor, everybody knows, then obviously competitor will know much earlier, and then he'll come with his own version. And if he's really efficient and if he has implemented target costing, he will come to the market pretty much faster when compared to you, and you lose all the first mover advantage, correct? That's the thing. Anyways, got it? Chalo, now tell me, what are the advantages of target costing system? Advantages. What is the first one? Proactive approach. You know what it is. Second? Right. Third? Try to remember that. Okay. Try to remember that. It starts with market study and okay, all those things. Next, ensure proper planning well in advance. Try to remember in a simple way. Don't try to remember too much. For example, see here. Proactive approach, market study, proper planning, NVA, time to market. That's all. That's all you have to remember. Don't remember beyond that. Okay. Now tell me, what is the first one? Proactive approach, market study, proper planning in advance, non-value added activities. Last one, time to market. That's all. Try to remember the example which I gave you. That's all. So try to remember it in a simple way. In examination, of course, you will add a little bit of 1 or 2 words extra. Are you able to get me? So try to remember in a shortest way possible. Got it? Yes. Hello, that's it. Now move on to the next one. What is the next one we have? Components of target costing system. Okay, what is that? Here we try to understand how, with the help of target costing system, eventually they will be able to reduce the cost. What are the steps that are being followed? That is what we are going to understand here. Are you able to get me? So here we have two components of target costing. One is value analysis. The other one is what, Nana? Value engineering. What is value analysis? What is value engineering? First, we'll start with value analysis. So it is a planned scientific approach for cost reduction. We know that it is for cost reduction, which reviews the material composition of the product and the production design so that the modification and improvements can be made, which does not reduce the value of the product to the customer. Got it? So which means basically what they do, they take the product, okay, they'll try to break them into pieces, analyze each and every component, see whether there is a substitute raw material at a cheaper price, see whether you can make certain changes such that your entire intention is to reduce the cost. So you want to change the material composition of the product, or you want to change some components, you want to replace it with something else. Are you able to understand? Yes, all of you. The way it works. You got the point? Now you see the lower level cars, they'll have a lot of these things. The cost cuttings will happen, isn't it? Lower level cars where they'll not paint the handles, door handles, which will be in black color, right? They'll not paint the front bumpers. They'll not have wheel covers, correct? Yes or what? You see the lower level cars. I'm talking about each car will have multiple models, right? Low model, high model. Look at the low models, what will happen? Isn't it? They'll do cost cutting in all these areas, isn't it? Yes or what? Inside also they'll have a normal material and stuff like that. If you go to higher models, they'll have a wood trim, they'll have a leather covering and stuff like that. So many things they'll do wherever you touch and you feel, isn't it? Yes. How do they able to do that? Through this only, through value analysis. Why? Because when they launch a car, always you see the advertisement starts from will be there, and that starts from has to be really attractive. So therefore, they want their lower model to be really priced attractive. Yes, every car you see, the advertising strategy is exactly the same. Are you able to get me? Starts from, correct? And starts from means that is the lowest model. Got it. But if you see the highest model, sometimes it will be as costly as 10 lakhs more. For example, you take Creta. What is the base model Creta? Somewhere around 11 to 12 lakhs. What is the top model Creta? 21, 22 lakhs, isn't it? But when you look at the advertisement, starts from 9.5 lakhs ex showroom, 9.9 lakhs ex showroom, isn't it? But when you actually go and try to buy the car, where it will be? It will be in another league. Yes. Okay. So value analysis is pretty simple. What you do is that the intention is to reduce the cost. You take the product, you break them, whether you chemically break them or physically break them. It depends upon the situations. You analyze it, analyze the components physically or analyze the components chemically, whatever it is. And then you try to somehow replace it or change it or do whatever it is. Ultimately, you want to reduce the cost. But when you are doing this, you will ensure that whatever the changes that you have done is not recognized by the customer. Otherwise, what will happen? If he can feel it, then he'll feel that the quality of your product has got reduced. Then he'll stop buying, or he feels that this particular product now it doesn't deserve the same price. Are you able to get me? This is a very big problem. For example, let's say there is a vacuum cleaner. Initially, you manufactured vacuum cleaner with a very strong material so that even it falls down from 2 floors, 10 floors also, it will withstand. It will not break, no matter how much is the weight of the impact. Okay. Then you have thought that when you are doing this particular analysis, you thought that what is the probability of such a kind of impact that is happening? Pretty rare. Correct? Therefore, you thought that 100 or 200 kgs of impact is enough. If I make that sort of a material, with that, if I make, vacuum cleaner, it's enough. So you try to replace the material. Thereby, you reduce the cost. But you have to ensure that should not be felt by the customer. If he feels that, yeah, the material has got changed, then your entire cost reduction effort is gone in vain. Are you able to understand? That's why that last point is very important. What was the last point? And improvements can be made which do not reduce the value of the product to the customer. Got the point? Right. Sir, what? This is value analysis, sir. What is the difference between value analysis and value engineering, sir? It's very simple. Value analysis is for the products that are already in production. Then what about value engineering? That is for new products before the production has got started. For example, in the example which I've taught you, RE will come under value analysis, Java will come under value engineering. Are you able to understand? In both the cases, you will apply target costing only. But for RE, you will implement what? Value analysis, because it was already in production. Correct? And you have a new competitor called Java and it is competing. So RE is already in production. Correct? But from Java's perspective, Java is trying to produce for the first time. So still production has not yet got started. So when you try to implement target costing for Java, will it be value analysis or value engineering? Value engineering, exactly. Got the point? Right. The final summary is, typically the total target is broken down into various components and each component is studied and opportunities of cost reduction are identified. That's what they do. Yes, all of you. It's very difficult. It's not as simple as you're just saying it. Normally in Germany, what will happen is that whenever they read this kind of concept, they will be actually lively taken into the, the factories. Even the guys who are doing degree there. And practically they will show you there. So what is happening over here? How are we trying to analyze it? And how are we able to figure out how to reduce the cost and all that? Unfortunately, we don't have the luxury of all those things. Therefore, we need to imagine. Are you able to understand? Unfortunately, that's all we can do. Beyond that, we can't do it. Unfortunately. Yes. And to be very honest, even that is made available here also, I don't think anybody will support it, because people will say, all these are time waste, sir. You just tell me whether it comes for 5 marks or 10 marks. I'll go and write it in the examination. There ends the matter. Yes. Anyways. Okay. So did you understand how the target costing works over here? Just try to take the product, analyze the component of the product, break it down into pieces physically or chemically, analyze the material composition of the product, try to replace it with some other material or something such that there is a chance of cost reduction, and ensure that this is not recognized by the customer. Ensure that the value to the customer is not compromised. That should be kept in mind simultaneously. Got it? All right. If you do it for the product which is already in production, we call it as exactly value analysis. For a new product before production, we call it as value engineering. Simple. Right. Let's move. Okay, now we know what is value analysis. Let's see with the help of value analysis how we try to reduce the cost. Ready? Yeah. This is very important for case studies. Case studies. Case studies. You have to remember that. Ready? Okay, so what we are going to do is that we're going to ask ourselves a series of questions. In the examination also, you have to write exactly the same. Okay, so let's start with the first question. Why are we asking this series of questions? To find out any opportunity to reduce the cost. That's what we are trying to do eventually. So let's start with the first one. What is the first one we have? Can we eliminate functions from the production process? So the intention here is to eliminate non-value added activities. Are you able to? Yes. So the intention here is to reduce this, eliminate this such that your cost will get reduced. Example I gave you, ABS in automobiles. I told that ABS is a value added activity. ABS means what? Anti-brake lock system. It is used in what? Bikes and cars. In bikes, it is even more important. Okay. Right. If you look at the wheel of the bike, you'll have a sensor like that, which I've drawn in the middle, that ring like. Okay, so what basically happens is that, so when you brake it, it will not take your brake force into consideration to brake the bike. So the sensor will assess the rotation of the wheel. It will assess on itself. The computer will be there. That will assess how much brake force will be required, and automatically it will brake. Thereby your rear wheel will not get locked up, and eventually you will stop in the most efficient short distance possible. That's what ABS does. Now, if you look at the bikes, in order to cut cost, normally what is happening is that for the ABS to work efficiently, it should be on both the wheels, front wheel and the back wheel. But if you look at most of the bikes right now, which is 150cc bikes, it will be only on one wheel, mostly 90% on the front wheel only. It will not be on the rear wheel. The reason is to reduce the cost. They call it a single channel ABS. Dual channel ABS means in both the wheels. Single channel ABS means only on the front wheel. Any of you got these 150cc bikes like Yamaha FZ or MT-05, thing like that? Yeah, R15. Yeah. You go and check your bike, you'll understand that. Okay. Now, why do they keep ABS on one wheel and then they try to skip it up in the other wheel? The reason is to reduce the cost. Keep the cost under control. Are you able to understand? Yes. Now, because as a customer, we are not really concerned about that. Therefore, for them, it's a non-value added activity, and then it has been eliminated. Unless, see, once upon a time, where there was ABS in our bikes, unless it was made mandatory by the Supreme Court, I think so, if I'm not wrong. Right? Yes, Supreme Court or government, I don't know. Right? So one of them has done. I really am not aware of it. But the point is, unless there was a rule like this, there was no ABS, isn't it? Hardly it was one or two bikes which had the ABS. Rest of them, they were not having it. Because as a public, we are not aware of it. So therefore, we are not demanding it. As a result, from their perspective, when they calculate these things, they feel that it is non-value added because customer is not willing to pay, isn't it? Are you able to understand? Therefore, they will calculate, okay, can we eliminate function from the production process? They'll have ABS. Okay, they'll feel that anyway, customers are not asking. Let's eliminate them. You get me? Now, another example I can give you. Himalayan. Okay. How many of you have got Himalayan? Hey, why there are there's a lot of ants here. Why? Uh, okay, anyways, Royal Enfield Himalayan bike. Okay. Does it have hazard lights right now? I'm talking about recent iteration. Sure. First batch it has got. After that it was removed. Huh? Okay. Okay. See here. You know hazard lights? Normally you'll find it in cars where both the blinkers will keep on blinking, correct? So that you park on the. Yes. Triangle. How did you get triangle? Not triangle. Not a triangle. Chalo. Anyways, okay. So in the first batch of the Himalayan, hazard lights were there. So where you try to park the bike on some side, okay, you try to push it on so that people will know that your bike is there, right? In the next iteration, it was removed. The reason was people felt that the company guys they felt that the customers are not giving enough value for that particular hazard lights. Same thing happened with what is that Endeavor, Ford Endeavor. It has got headlights washer. You know headlights washer. Ford Endeavor, not the recent version. Of course, now it has been stopped entirely Ford. But prior to that, there will be a cut below your headlights, front headlights. So it will come out and it will, sprinkle the water with good amount of force on the headlights, and it will wash the headlights. We call it as headlight washer. Okay, and that was removed in the later version because they felt that it was a NVA for which customers are not willing to pay. They removed it. You understand the point? Okay. That's the way it works. Like that, we can keep on giving examples. Anyways, next. So that's the first. What is the first one? Can we eliminate functions from the production process? In simple words, we are talking about non-value added activities being eliminated so that your cost gets reduced. That's it. Can we eliminate some durability and reliability? This I've already explained you. Example, there is a vacuum cleaner. It has an ability to withstand 1 ton of an impact, but the probability of that 1 ton of an impact is 0.05%. In that case, you can replace it with a material which can withstand just 100 kgs of impact instead of 1 ton. Yeah. No. Cost will get reduced, profit will get increased. If they reduce selling price, what is that use of doing all these things? Your intention is to reduce the cost. Selling price remains the same. So your profit margin will get increased. Yeah. Yeah. See, sometimes your selling price also will get reduced. That also will happen. It depends upon what kind of situation you are in. Suppose you are in a situation where you have a competitor and he is selling a similar product at a reduced price. In that kind of a situation, you are implementing target costing to reduce your cost. Are you able to understand? After reducing your selling price so that your selling price matches with the lowest selling price of the competitor. In that case, you are doing this for reducing selling price only. Depends upon the context. Yeah. It depends upon the context. Right? Karthik, are you ready? Where is this Moku fella? Dwarak. Oh, sorry, you're here. Oh, sorry. Hey, you were not visible actually. I don't know, that image did not store in my subconscious actually. So We're here only now. Why you were not visible to me? Okay. Huh? That's okay. I don't know. Chalo, it's okay. Cool. Done? Ready? That balcony. Hey, balcony. Your name, buddy? What's your name? You only. Yesterday you were posing well, na? In the pics. What's your name? Akash. Akash. Is it Akash? All right. You? Yeah. Prasanna. Right. You? This side? Fahmi. Ashik. Right. Ashik, Rashik, correct? Right. Little bit of mistake only na yaar. Ashik, Rashik. Right. Fine, fine, fine. Huh? Q. It's Q, right? Okay, okay. Okay, okay. Right, right, right. Chala, cool. You guys are here? Ready, ready, ready. Okay, concentrate. Ready? All of you? All right. Fantastic. So, what is the first one that we have done? Can we eliminate functions from the production process, which is nothing but we talked about non-value added activity elimination. What is the second one? Can we eliminate some durability and reliability? Where I gave you an example, the vacuum cleaner example. Try to remember that. You'll be able to get that point, which means when there is no necessity, we can compromise on some durability and eventually we can reduce the cost. That is the intention. Third one, can we minimize the design? I gave you an example of base model of cars. In base model of cars, that's what happens. In fact, many of the cars, they will minimize a lot of design in the base model. For example, in the front, you will not have chrome. Are you able to understand? You take any car and then you try to check out their base model design in the online. You'll get it on the online. You'll understand how they minimize the design. You'll not have a spare wheel. Okay, you'll not have a music system also inside. Are you able to understand? Fog lamps will not be there. Halogen lamps will be there, and lot of things will be cut. Lot of things will be cut. Are you able to understand? So where you try to minimize it in such a way that your cost is reduced, so that you can justify that lower price. Purinjo? Yes. Right. Generally, this is free information for you. Lower model, if you want to buy German companies. It will be loaded. Are you able to understand? If you go for Korean companies or Japanese companies, you always buy the top model. Free advice. Purinjo, right? German companies, generally lower models will be more value for money. Okay. Korean companies, higher models will be value for money. Japanese companies also same. Higher models will be value for money. Purinjo, there might be some exceptions, but I'm telling you about 90% of the cases. Yes. Don't know the power of information I gave. It's okay. Right. Base models of cars. Ready? Akash. Right. Let's move on to the next one. Now see ya. Guys, let's move on to the next one. Can we design the product better for manufacturing process? That is the next part. Here also the intention is to reduce the cost. Now the question is, sir, how can we design the product better so that we can reduce the cost? Yes, you can. The best example I can give is, see, let's say there is a printer. Okay. In printer, you know that, you know how to replace the cartridge, right? We remove it and then we try to place it. Now, you have designed the printer in such a way that when the printer is getting manufactured for the first time, when you try to put the cartridge inside, only if it is put it in the right way, it gets locked. Otherwise, it doesn't get locked. So when you have designed a system like this, then what happens? You're actually avoiding defects, correct? Because if it is locked, it should be locked in the right way. Otherwise, it will not get locked, correct? Thereby, you're avoiding the defects. And as a result, all your printers, the final products will be defect free. Naturally, you will be saving cost because you have designed the product well. Correct? Are you able to understand? Yes. Isn't it? It works that way. Are you able to understand? Yes. That is the reason. See, you see, nowadays, many bikes and cars. You listen to the word modern classic, modern classic, modern classic. Like, have you heard it? Modern classic bikes, retro styling bikes, and stuff like that. And even companies are also encouraging that, and people are also loving it. People are loving it because of a lot of reasons. Because probably your parents' generation would have seen them, and that thought process would have been imbibed to you, so that you also has got the same price. You want to get it. Are you able to understand? And sports bikes, how much nana craze will be? Maximum it will be till, say for example, 35 years. After that, eventually you need to go for classics or comfortable bikes. Correct? Yes. So therefore, customers are showing interest. Now, why companies are showing interest? Because there is a demand. No, they're actually indirectly creating the demand. Actually, they're able to understand. The reason for them is because for them the cost is very less when they go for classic design. For example, you take Royal Enfield. What is a rare light for that? It's a round lamp, isn't it? For that, the creation of the mold is very cheap. The wastage is very less rather than going for an intricate tail design. Correct? Even the headlamp, if it's a simple round, are able to understand. And you can see Interceptor also. My Interceptor, the headlamp was not a clear lamp as well. Right now, the new Interceptors are clear headlight is there, where the visor will be clear, so that you can see the lamp inside. Mine was not even like that. So it's a pure cost cutting. Are you able to understand what I'm trying to do? So which means they try to design in such a way that it's better for the manufacturing process. So because of these simplistic designs, it becomes easy for them manufacture, faster for them to manufacture. Are you able to understand? Yes, that's the way it works. Anyways, you just remember this printer example. That's enough. Next, can we substitute parts so that eventually we can reduce the cost of the vehicle? That happened in new generation Mahindra Scorpio, where they have replaced iron fuel tank with what? Fiber fuel tank. Joe, I think the new generation Scorpio has come 5 years back. Okay, new generation Scorpio. Before that, one old generation was there. Na? It was having iron fuel tank. Okay. So then in the latest generation Scorpio, they have replaced that with fiber. Thereby, they have reduced the cost, weight, money. Reduce cost means money only now. Right? Eventually, the performance also would have got increased because of reduction in weight. You got the point? Yes. What? Able to get me? Even in the recent XUV 700 also, they have replaced the tailgate with a fiber. It's not a metal tailgate. Have you seen it? XUV 700. You know that? Right. See, okay, let's move on to the next one. Now, can we combine steps? For that, the example is bread jam. Bread jam means uh, raw metal is bread. Okay. The first step is you toast the bread. Then the second step is you cut the bread. And the third step is you apply the jam and bread jam product is ready. You convert that into a sandwich. You know how sandwich looks like. Correct? This is our product. Yes, all of you. Right? So we'll try to understand how we can combine steps over here with a simple example. Ready? Yeah? Okay. I need 3 volunteers for this. 3 volunteers. Fatafat, you come. You will come or should I ask? Come. Surely come. Huh? Come. One more. No, no. For Akash, we have a special deal. We'll apply that. People are very happy. I love it. Right. Stand in the order. Nobody should stand beside that fella. Everybody will feel short, like dwarf only. Come here. Come here. Okay. Stand in the middle. You come. Right. You stand. Right. Okay. So now, see, this is not going to be easy. It's going to be a little bit challenging. So you perform correctly. Okay. Right. You can switch that off. That one. Switch it off. We'll finish it off in 2 minutes. Yeah. Unfortunately, we don't have the equipment right now, all those things. So we have to eventually imagine that and do. Purinjo, imagination. That's okay. Right. Look at the positive nature of Churili. It's very positive, isn't it? Right. Okay, done. Ready? Okay, see here. See, first thing is we need raw material supplier also. Who come? Right? Okay. So yeah, tomorrow and day after tomorrow, what you do is that I'll tell you that I need certain requirements. If you can bring that over, we can do some experiment in the class. It will take some 20 minutes. Are you able to understand? If you can bring the ingredients, we can do it. Are you able to get me? Right now, I just give you a small flavor of it, but for cellular manufacturing, Kaizen costing, and all that, that examples, it will be very easy for you to understand. You can bring it over. Okay. Chalo, now, here's a raw metal supplier. Now you have got bread in your hand. Okay. Imagine. Okay. Now, so give that bread to Shafiq. Okay. Shafiq has got the bread. That's a very good pose. Okay. Now you have a toaster in front of you. It is there. There. You put the bread on the toaster. It is not there here. It is there on that side. There. Okay. Put it on the toaster. Great. Hey, stupid fellow. You come here. You are here to put the jam on the bread. Why are you involving in his activity? You come here a little bit this side. Shafiq, come this side. Come this side. Okay. All right. Toaster, you know, it will have two horizontal holes. Okay. Just place the bread like this. Okay. All right. Here only. You stand here only. Will not be visible over here. Put it. Put in the toaster. All right. Now, like this. The button. All right. You have not switched on the plug ray. Switch it on. It's based on battery. Right. Okay. Now it is getting toasted. You see, it's getting toasted too much. Remove it. It will be hot, Re Mokku fellow. It will be hot. Give that reaction. Trouser, huh? Gloves. Okay. Right. Okay, chalo. Now, give it over to her. He also has got gloves. Very good. Keep it over there. Cut it with hand. Where is knife? Take the knife and cut it. Right. Now you have those pieces, right? So that's what she is done. Cutting. Okay. Now I give it over to Churili. You apply jam on it. Right. Huh? Sandwich. Eat. You should not eat. Chalo. So now the product is ready. Now when this process is happening, you can see when this guy is applying the jam and she is cutting, what our Shafiq is doing, he's not toasting, he's just standing idle. He's idle actually. The point is, do we really need 3 people to do this particular job right now? The logic is no. For example, now let's eliminate these two. Come, Churili, go and sit. You also. Shafiq, now what you do is that take the raw metal from her. Done. Put it in the toaster. Right? And already toasted bread is available there. Bring it over here. Now you cut it. You are cutting your hand, Ray. Okay. All right. Now apply the jam over here. Right? Keep it over there. Finished product. Now it is getting toasted. Go and catch it up. All right. Now again cut it. Jam it. Place the product here. Again it is getting toasted. Go run. Okay. Enough. 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 So what did we do right now? This is process centering. Are you able to understand? Where we have mixed what? 3 jobs. We have reduced 2 employees and we made only one guy do all the 3 and it worked here. Because instead of keeping them idle, by the time the bread is getting toasted, he can only what? Cut and jam it and then again get the toasted bread, cut and jam it. Are you able to understand? So this way you call it as what? Process centering. What is the advantage because of this? You can save cost because whatever 3 people were doing earlier, now it is being done by one guy. This is what we mean by can we combine the steps. Did we combine the steps here? Yes. All the 3 steps has been made into one. and one guy is doing the job right now. Are you able to get me? Yes, right? Give a big hand for our Pratik, and for Churili also, and for Mrudula, and Divya, Nivya also. Give her a big hand, right? Great, good. Okay, now I'll be back. Yeah. Okay. Right. Okay, fantastic. Great job. So that's what I've put here in the form of a diagram. Okay. So bread jam product. Earlier there were 3 people who were doing this. Okay. Now after process entry, only one guy does all the 3. Buddy, switch on the projector. It's on. It's gonna come. Right, done all of you? Yes. So earlier there were how many people, Nana? 3 people doing this job. Okay. But now after process entering, what's gonna happen? Yeah, one guy is gonna do all the 3. He's gonna toast it. By the time this happens, he can cut and he can jam, right? And again, he'll come and he'll pick the toasted bread and he'll repeat the same process. Got it? So this we call it as NV combined steps. It comes under that, and this process is called as what? Process entering. Process entering is one of the effective ways of reducing your cost, similar to standardization of products. Remember that? What is standardization of products? We'll use same components in multiple products. As a result, you can produce those components in larger scale, getting the advantage of economies of scale. Are you able to understand? Plus, even for the guy who is working upon that particular product, it's easy for them because he works upon the same product for different products. Sorry, same component for different products. Are you able to get me? Yes? All right, fantastic. Okay, are you guys done with this? Right, chalo. The last 2 is just residual steps. Can we take assistance from suppliers? Why this point is there? Because many a times supplier might have expertise in a lot of areas in which we don't have expertise. Therefore, it's better to get an advice from him. He can give us some advice where we can try to reduce our cost. And finally, is there a better way? That question will always be there. No matter how many angles you have thought, still there might be a better angle. Correct? Yes? So, right. And here I gave an important note. What that is? Initially, value analysis or value engineering, it depends upon whether you are doing it for an existing product or you are doing target costing for a new product. If you are applying target costing for a new product, it is value engineering. If you are applying target costing for an existing product, it is value analysis. So initially, value analysis or value engineering may not uncover all possible cost savings. This is why Kaizen costing is designed to repeat many of the value engineering steps for as long as the product is produced. So which means all the things that we have discussed right now, all the questions that we have asked ourselves to reduce the cost, we're not going to do it just for once. We're going to keep on what? Repeating it again and again, so that it will be a continuous process. Are you able to understand? Because if you just do it once, it's not gonna discover or uncover all the possible cost savings. We're gonna do it repeatedly. Are you able to understand? That's the most important point. Okay, keep this in mind. Chala, that's it. This is very important. Now, shall we revise? Now, tell me. What are the steps in value analysis or value engineering? Tell me the first step. Can we eliminate some functions? That is nothing but non-value added activity. Can we eliminate that from the production process? What is the second one? Can we compromise on certain durability and reliability of the product, right? Example is vacuum cleaner, 1 ton of an impact versus 100 kg of impact. Third one, can we minimize the design, base model of the cars, right? Fourth one, you should be able to easily remember that. Can we design the product better for manufacturing process? You remember the printer example which I gave you. Next one, can we substitute parts? Example, Mahindra fuel tank. Okay, can we combine the steps? The bread jam example. Next, can we take the supplier's assistant? Is there a better way? That's all. Very easy to remember. Got it? One more time. One more time. What is the first one? From here we'll start. Can we eliminate functions from the production process? Correct. Second one, can we compromise on durability and reliability? Third one, can we minimize the design? Fourth one, can we design a better manufacturing process? Can we design the product better for manufacturing process? Correct. Example is printer. Next, can we substitute parts? Example, Mahindra fuel tank, Mahindra Scorpio, right? Last one, can we combine the steps, which is nothing but process entering? Example, bread jam. Next, can we take supplier's assistant? Last, is there a better way? Done. Hello. Right. And also I've told you that all this initial value chain analysis or value engineering, which is nothing but these questions which we have asked, it comes under value chain. Sorry, value analysis, not value chain, value analysis. Okay, this will not uncover all the possible cost savings at the beginning itself. Okay, it will do it step by step. So therefore you have to keep on implementing this again and again. Are you able to get me? Right. So what else we have? Now let's come to the negative points. So it's not all bells and whistles with respect to target costing. There are certain negative points as well. What are the negative points? First one, long development process time due to number of design iterations. Means what? When we start with target costing, you guys know that, for example, in Java example, what was the situation? We already have a target, which is 1,40,000 in our example. 1,40,000. That was the budget, right? For Java. Within that budget, you need to manufacture, including the design. So now what you do, you try to design the product for the first time. First time itself, will it be finalized? No. Then you will see with this design whether that 1,40,000 is possible. Then again you'll change the design. Then you'll say it is possible. Again you'll change the design. Again you'll change it. Again, it takes hell lot of time because there will be a lot of iterations. Doing it again and again, we call it as an iteration. You got the point? Yes, all of you. Now here, what did I write here? Universal point. Very good. So which means this can be used as a negative point for many of the concepts. Are you able to understand? Any concept that you take, BPR, that, this, everything, you are trying to implement them, right? Always, almost all the concepts will take long time to implement, to get implemented. So that can be a universal point for you. Suppose in the examination, there has been a question where he has asked you, what is the problem with so and so? It's not just target costing, it can be something else as well. If no point, you are able to, remember, simply you can use this. What is that? Long development time. Every single technique will take time. So time is going to be a biggest negative point in 90% of the cases. Got it? Next, what is the next thing with respect to target costing alone? Equity. Equity means what? Equity means it is fairness. It is not equality. Equity is different. Are you able to understand? So, for example, you would have seen that famous photo in social media where three people will be watching a football match. Remember that? One guy will be very tall, one guy will be a little bit medium, the other guy will be short. For short guy, you need a lot of support so that he gets the same view, and then the tall guy doesn't need any support, and the medium guy gets a small support, so that all the three will have a same level of vision. Correct? Have you seen that? That's called equity. That is equity. Equality means either giving same support to all the three or not giving any support to all the three. That is equality. Equity means if somebody is weak, you give them a little bit of more push. If somebody is strong, you will not give them any sort of a push. That we call it as what? Equity. He says this will be a big issue in target costing. Are you able to understand? Why? Because basically what is target cost? You want to achieve a cost gap. Okay. So in target costing, basically what happens, you'll have your existing cost, you'll have the new target cost. Definitely your existing cost will be greater than the target cost, correct? and you will try, there will be a cost gap. In our example, it was somewhere around 15,000 something, and you want to close this cost gap, correct? So suppose 15,000 is the cost gap that you want to close. You should give that responsibility to all the departments now. So here in this case, I gave you industrial engineering staff and purchase staff. So purchase department, I'll give some 5,000 responsibility. So from your department, next time this much of cost must get reduced. Okay. Then I'll go to the engineering department, the industrial engineering staff who are working on that car, for example. For them, I'll give some 7,000, or I'll give 10,000 to them. Are you able to understand? So here you're being unjust, presuming that both of them are of same competing level or something like that. Here you're being unjust because you're giving too much of pressure to one team and you're giving relatively easier target to achieve to another team. So in target costing, this problem happens in each and every company because somehow that cost gap, you need to distribute the responsibility to multiple departments, and therefore whenever you distribute, always one department will fight with the other. Even if you distribute at the same level, for example, the scope of cost reduction in purchase department is very less. Are you able to understand? Because of that particular company, of that particular raw material which they are buying, it is in high demand. In that kind of a situation, there is very, very, very less or almost zero probability of purchasing department saving something. Are you able to understand? But what you have done, you have taken the entire 15,000. Suppose there are 4 departments, you divided them into 4 and you gave each and every department the same, then you are not being just. You are being equal. Equality is not equity. That's what I tried to tell you, correct? Then the purchase department manager will come and shout, saying that, see, for us, you look at the situation, even at the same price, getting the raw material itself is going to be a big challenge. For that only, we are doing a lot of hard work. And then you're asking us further to save a little bit more, which is impossible. So you're not being just to us, and therefore we'll strike us. Some sort of mess will happen. Are you able to understand? This will be one of the negative points of target costing. Next. Another problem is you'll have people from multiple departments. Reaching to a conclusion is very difficult because there will be difference of opinion. When you try to finalize a design, it's not just the design team who will do that. You'll have a CEO, you'll have the people from the production department, you'll have the people from the marketing department, and you'll have the people from the R&D and the design team. All of them will put together, then only they'll discuss and they'll finalize. Because if design team designs a particular design level, they might like it. Marketing team will say whether the customer also will like it or not. Production team will say how much effort it will take to finalize this design into a real mass production, whether it is possible or not, or it's going to be costlier, or it is cheaper, or will it come within the budget or not. So it's a combined effort of all these guys from multiple departments eventually to finalize a particular design. Correct? Naturally, when multiple people are involved, what will happen? There will be difference of opinion. So reaching to a conclusion will be very difficult, and thereby you will be wasting time. That is one of the negative points of target costing. Got it? And finally, target costing may reduce quality of products. This is again universal point. Universal point for whom? For all cost reduction techniques. That is universal point for all cost reduction technique. Every single cost reduction technique, there is a tendency that you might tempt to compromise on quality to reduce the cost. This applies to everybody, all cost reduction techniques. So if in the examination, if there is any negative point that is being asked for any cost reduction technique, you can write this negative point where they may compromise on quality to reduce the cost. You got the point? Yes. That's it. Finally, the difference between traditional costing and target costing. Very easy. See here. Exactly, it is opposite. In traditional costing, what happens? First, we will go with product specification. For example, Java. You want to manufacture a bike which looks like in this particular way, in a classic way, and 300 cc, so much power, so much torque. Okay. Then you will design. You will do some design, and a particular design you like. For that, you will calculate estimated cost. Got it? Yes. Then you will add your target profit margin because you are a price setter as per traditional costing. Then the estimated cost for the design which you have finalized, which you personally liked it, plus profit margin will be your selling price and you will sell the product. This is traditional. But in target costing, that's not how it works. You start with product specification, correct? You have a market leader, which is RE. He's already selling 350cc, around 18 to 20 bhp. I also need to make a same product around 300cc, which competes with him. Correct? Product specification is same. But after that, I'll not go for product design as per target costing. What will I do? First, I'll take the target selling price. It starts with selling price. Here you can see last step is selling price. Correct? Here the first step is what, Nana? Selling price. Then you'll reduce your target profit from that. Then you'll get your target cost, which will act as a budget. Then only you will go for design. That's what I told you, na? Whereas you see the traditional costing, you start with design first. You will finalize the design, then you will think how much is the cost for this particular design. Here, you figure out the cost first, which is the target cost. Then you will start designing your product such that it comes within the budget cost. I mean, within the target cost, which we are treating it as a budget. See the difference? Asman niche ka fark hai. Like, can you see that? That's the thing. This is very important. In case if he has asked you what is the difference between traditional costing and target costing. These diagrams are very important. This is what I call it as diagrams, because when you put this in the examination paper, anybody, any human brain, naturally they'll get impressed. Even though, suppose if this is not there in the key. Are you able to understand what I'm trying to tell you? Even though it is not there in the key, still they will get impressed, because that is the natural reaction for any sort of diagrams. It is human tendency. Are you able to get me? Yes, all of you. Fantastic. Chalo. Okay, sir. Now everything is good. Fantastic. Target costing is good. Everything we have seen. Now I'm so much impressed. I want to implement target costing in my company. Now, how to do that? We have the answer. What is the first step? Create a project document, and that should be approved by the senior management. Project document relating to what? Relating to implementing target costing. Are you able to understand? Obtain a management sponsor means money. You think that, okay, sir, I'll start implementing target costing, means somebody should give you money to do that. That should be the second step. Third, obtain a budget. How much overall money that you need. Yes. And finally, assign a strong team leader. Then take full-time employees and implement target costing. As simple as that. First 3 points are what? Universal points. Means what? You want to implement anything new in your company. First 3 steps are usual. Anything you want to implement, first you need to obtain the permission. Then you need to get a sponsor. Then you need to know how much you are going to spend, which is a budget. Correct? So these 3 are common for anything that you want to implement. Here it is target costing. That's why I've written them as universal points. Got the point? Yes. Hello, fantastic. As you can see, what are the limitations of traditional costing model versus target costing? In traditional costing, you will ignore the price charged by the competitor. Correct? Means what? In target costing, when my competitor is charging a lesser price than me, immediately, proactively, I will react. I'll reduce my selling price immediately. But in traditional costing system, that's not what will happen. If your competitor is is selling a product at a reduced price, you will not react. You will think that nothing will happen to you. If something happens, then we will see. That will be the attitude. Got the point? And then you'll keep quiet. That guy is selling the same product at a reduced selling price. He will slowly take your market share. And eventually, once you start losing your sales, then you will start reacting. So therefore, you will ignore the price charged by the competitor. Next, ignorance of the price when what consumer is ready to pay. Are you able to get me? So which means if consumer feels that your product is worth this much only, you will not consider that as per traditional. But in target costing, that is where your first preference will go. How much consumer is willing to pay. That's why we are working on non-value added and value added activities. Where the primary thought process is what? Value added means it is that particular activity in my whole manufacturing process for which consumer is willing to pay. If consumer is not willing to pay, immediately I'll figure it out as non-value added activity and then I'll eliminate it straight away. So which means as per target costing, I'm considering what the consumer is willing to pay or what the customer is willing to pay. Correct? Whereas in traditional costing, they will not do that. And of course, they will not do cost control as well. Are you able to understand? These are all negative points of traditional costing system. Done. Okay, then we have steps of target costing. I think you can just do it yourself. Just revise it once. Okay. Are you ready? Shall we go? Yes? Right, sure. Let's look at the steps of target costing. First step, which means what do you mean by the steps? Already we have seen how to implement target costing, correct? Just an idea, that's all. If you want to implement target costing, you need to get the permission, get the sponsor, figure out the budget, then employ all these full-time employees and then implement them. Then it's a matter. Have a strong team leader, that's all. This is just a rough idea. Now we're gonna go in depth on how to implement this target costing step by step. So what's your first step? Reorient culture of thinking and attitude. In exam also you have to write it like this only. Okay. What does it mean? It means it is important to have market driven prices and to understand the need of the customer. Okay, here I've missed all those wordings. Okay, and to understand need of the customer. In the sense, what does it mean? It means that your price should be driven by the market. You cannot have any price that you want. Point number one. Point number two, understand what is the need of the customer and give it to him. Are you able to understand? Why the heading is reorient the culture of thinking and attitude? Because earlier, as per traditional costing system, this thinking and culture is not there. Therefore, I have to reinvent that and put it in all my employees. That is the logic. Are you able to understand? Yes. Earlier, my employees are like this. Whatever competitors are doing, ignore. Whatever customer is willing to pay, ignore. So now you have to change this thought process. That's why reorient culture of thinking and attitude. I've explained it here. Got it? Yes. Next. Identify the market requirements. What do you mean by identifying the market requirements? First of all, the product that you're about to launch, what is the use of it? How the customer is going to use it? What kind of design that you are planning? Will it be accepted by the customer? Or does customer want a unique design? Next, all these things keeping customers in mind, you need to finalize. What are the requirements of the market? Are you able to get me? Yes. For example, you take this Java itself. Customer wants the bike to look in a classic way, correct? And it has to be a double seat version, keeping the customer's need in mind. The mileage should be good. Now what? All these things are important, isn't it? That's the reason now you see Honda City is coming with a new vehicle. You know that? New Honda City is coming. Hybrid one. Hybrid. Don't know. It's gonna come. It will come within another 1 month or something or 2 months, where the mileage will be easily 20 plus. Ready? Okay, now establish the market driven target price. That is the next one. What is that? So based on market share, you have to identify at what price you can eventually sell your product. I gave you one example here. Nissan versus Maruti Suzuki. Can you see that here? Sub 4 meter called SUVs. So what is that? See, basically what happened is that Nissan and Renault, they are cousin car companies, just like Volkswagen and Skoda. What do you mean by cousin car companies? They'll share the R&D, they'll share the platform and all that. Skoda and Volkswagen also, they do the same, right? For example, you have Skoda Kushaq, Volkswagen Taygun. Both are same, but different. Yeah, like old villains will be there now. One matcha. I'm a different guy now. You remove that. Oh, you're a different guy. Arey, aisa what? Old villains. That's what. Heroes and villains. Hero triple action. One recently also Shah Rukh Khan did na yaar in Rab Ne Banate Jodi. Isn't it? You put the mustache. Hey, you're a different guy. Wife also can't recognize. You take the mustache. Wife will be, oh wow, who are you? Isn't it? Why we are thinking about 20, 30 years? Recently only it happened. And the movie also has been a hit, right? Yeah, hey, ऐसा what? Anyways, now, so like that, these guys are cousin companies. You see Skoda, Kushaq and Taygun. The platform, the engine, the interiors, everything is same. Little bit of difference will be there. That's all. Same goes with this Nissan also. So they came out with this. I forgot the name of it. Not able to remember the name, but it's okay. They came out with an SUV and eventually it became a flop. Nissan Kicks. Yeah. Kicks. And you had a similar product with Renault. I forgot the name of it. Ranbir Kapoor came as a brand ambassador for that. Forgot the name. Renault. What's happened to my brain? Will recollect. Huh? Ranbir Kapoor was the brand ambassador, Nana, for that. What is that? Kiger. No. Kiger is the recent one. Kiger is competition to Nissan Magnite. I'm talking about the next segment. Nissan Kicks is the next segment, Nana. It's a 15 lakh car, right? 15 to 18 lakhs. Nissan Kicks and Renault, similar segment. Okay, it's okay. Huh? No, I have to. What is that? No, not Coleus. No. Okay. Huh? Ask Siri. What Siri will know? Anyways, forget about it. So they have launched. Kicks is also not that successful, right? They launched that and they've came to know that it really didn't work. So what they've done is that they wanted to tap into the most mass segment of our country. The mass segment is the sub 4 meter SUV segment. That's why you've got many cars. Still, they're selling like hotcakes. We have Vitara Brezza. We have this. What is that? Hyundai. I am not remembering suddenly. Vitara Brezza, Tata Nexon, Hyundai Venue, Kia Sonet, okay, Mahindra XUV 300. Earlier it was EcoSport. All these cars, they belong to the same segment, sub 4 meter SUV segment, where the price range will be 10 to 15 lakhs. Okay. So what this Nissan and Renault they have planned is that we will target the same segment, but we will price it a little bit less. Not little bit less, significantly less. So they try to go with a turbocharged engine, thereby the size of the engine will be less, but the power will be almost equal. Thereby they'll have tax benefits. In this entire segment, the only car which does not have tax benefits is this Moku car, Vitara. Right. Okay, chalo, see ya. Done? Roundtable conference finished. Shall we start? Okay. Ready. Now see ya. So what they've done is that they tried to compete with these guys. So they went for a smaller size engine. Now this Brezza has got 1500cc engine. So it doesn't get the tax benefits. That's why except Brezza, all the cars you check in this particular segment, they are having 1.2 liter engines. Thereby they get the tax benefit and they go for turbocharged engines. Turbocharged means engine size will be less, but it will churn out big power. Thereby they have the advantage of saving the taxes. At the same time, they give the same power. Are you able to understand? Yes. So what these guys have done is that they went with the same philosophy and thereby they launched their product, which is competing with the sub 4 meter size SUV, but they've launched it on par with the hatchback segment prices like Swift i20 is there. Na? With the prices of Nissan Magnite and Renault Kiger were on par with the lower segment cars. And these are all the first two products that became successful after a very long time. If these products are not there, probably Nissan also would have left the company. I mean, left the country actually. Nissan and Renault. Now, because of these products only, they are in the survival mode right now. Got the point? That's how important it is to analyze the market and accordingly price your product. Very, very, very important. Are you able to get me? And even the crash test rating also was very good. Nissan Magnet has scored 4 stars in crash test rating, global NCAP. So it was very good. Anyways, yeah. So when you buy a car, before that compulsory, you should see the crash test rating and then only you should buy eventually. Got it? Right. Next one. Determine the volume of the product. based on the third step and the fourth step. What is the third step here? Market driven target price. You fix the price first of all. After that, what is the best volume for you? You need to decide. For that, we will apply profit maximization model, which we already know. Then you determine the target profit margin, because now you know how many units to sell. Now you know at what selling price you need to sell. Finalize your profit margin. Then from the selling price, you reduce the profit margin, you get your target cost. And finally, after finalizing your target cost, you establish target costing process. What do you mean by target costing process? Very simple. You try to get a team leader, you put the team, full-time employees, and then try to tell them what should be done. What is first step? What is second step? What is third step? Are you able to get me? Clearly give their roles and responsibilities. You tell them that, okay, first you concentrate on product design, you focus on that area, and you try to figure out whether there are any chances of what cost reduction. Then step 2, you approach production department, you see whether it is possible for them to what produce. Then you approach marketing department, you see whether this particular design is acceptable for the customers or not. Like that, everything will be clearly told. That is nothing but target costing process. Next, brainstorm and analyze the alternatives. This is applicable only for newly developed product, these two steps, not for existing products. Clearly I've written. So means what? For example, you take Nissan Magnet example itself. So when they were trying to brainstorm themselves on how to really get first success in Indian market, so what they have done, they selected that particular segment which is really developing like anything. See, in India, you know, Nana, the sedans market is gone. Earlier, it used to be sedans market. Now, nobody is buying sedans. Sedans means what? With dicky, and the car also will be more grounded. The height of the car will be very low. Verna, Honda City, all these are sedans. So earlier, there used to be a very solid sedan market. Now, that market is gone. Probable reason is because of our roads. Sedans, naturally, they'll have low ground clearance. Therefore, it will always be hitting the speed breakers and the potholes and stuff like that. SUVs, honestly speaking, all these cars are not SUVs actually. They look like SUVs with a higher ground clearance, because all these are front wheel drive cars only. SUVs should be rear wheel driven and should be based on body on frame platform. All these are monocoque platforms. So they are not SUVs actually. If you don't understand, just leave it. Okay. So the point is, the point here is, this Nissan Magnet, guys, they have really brainstormed themselves and they have ultimately got that particular trick. The trick is they and Renault, they shared the platform, thereby the cost has come down. Okay. And after that, what they have done is that they went with a smaller sized engine and they gave it turbocharging. Thereby they've saved a lot of money. And as a result, even though the size, these are all sub 4 meter SUVs, right? So the size should be less than 4 meters. Within that only, when you have a smaller engine, naturally it will take lesser space and thereby they can increase the space on the back, correct? And so it's best of both the worlds. You save the taxes, you give more space, and still it remains within 4 meters. Because of that also, you will save taxes. Less than 4 meters, you save taxes. Smaller engine, you save taxes and more space on the back. Got the point? So that's how they have achieved their first success. Who is that? Nissan and Renault. Tiger and Magnet are similar segment cars. Got the point? Next, establish product cost models. That's what they have done. Closing down the cost gap will be your next job. Closing down the cost gap means what? It is the difference between existing cost and the target cost. How do you close that? By applying value analysis and value engineering. What is that? We already know. Correct? What is value analysis? You break down the product into physical components and understand the chemical composition of the product, thereby look out for instances of cost reduction without compromising on the value that is being provided to the customer. This is value analysis. How to do that? We have seen so many steps. Remember that? What is the first step? Eliminating the functions, that is non-value added activities. Second step, you can compromise on durability and reliability. Third step, can we design the product better for the manufacturing process? Next, can we eliminate? Can we substitute the parts? Next one is, can we combine the steps? Next one is, can we take support from the supplier? Last one is there any other better alternative? You know that. That's how you do as per value analysis or value engineering. Next, reduce the indirect cost applications. What is that? Indirect cost means what? Overheads, which is nothing but eliminate these NVAs and apply ABM. ABM means what? Activity based cost management. ABM means activity based cost management, which you will get it in SAOA chapter, strategic analysis of operating income. In that chapter you will have it. Activity based cost management means it is very simple. You use the knowledge of activity based costing to save the cost. For example, we already have the setup cost. We already know about it because we are done with decision making. We're done with activity based CVP analysis, correct? So we already know that. So you take the setup cost. What is the cost driver for setup cost? Number of setups, correct? Having this information is nothing but activity based costing. Activity based costing gives you this information. Now using this information to reduce the cost is nothing but activity based cost management. Okay, means now I want to reduce the setup cost. How to reduce the setup cost? Reduce the number of setups. You can reduce the setup cost. How to reduce the number of setups? Increase the units per production run, which we have already done in one problem. You remember that? Got it? This is nothing but activity based cost management. Increase the units per production run, thereby number of production runs will get reduced, thereby number of setups will get reduced, thereby setup cost has got reduced. Are you able to get me? Right. Setup cost is nothing but overheads only, na? Overheads is nothing but indirect cost. That's what here we are talking about. Reduce the overheads by using ABM. Next, measure the result and maintain management focus. Measure the result means ultimately did you achieve the target cost? Means ultimately did you close the cost gap? Are you able to understand? Yes, sir, I've closed. Then you still maintain management focus such that it will not get repeated again. Because when you try to reduce the cost gap also, there is always a chance that again it will inflate, correct? It can increase. So therefore keep the attention of the management so that if something goes otherwise, again we'll try to bring it back. Got the point? That's all. This is not that important, Nana, but because it is there in your syllabus, I gave it to you. Got the point? Just have a rough idea. It's enough. He will not ask you, and so far I haven't seen any case study also. Are you able to understand? So it is not important, but still, because it is there in our syllabus, we are going with it. Got it? All right. This is the last one. After that, we will have a lunch break. Okay, chalo. What is the last one? Utility of target costing. Okay. So where it will be more useful, where it will be less useful. See here. In industries like fast food restaurant, chemical production industry, service sector, here target costing will be less useful. Now the biggest question is why target costing will be less useful in these industries? Because they have less locked in costs, less committed cost. I already told you what is committed cost or locked in cost. We have already seen that in a graph, correct? Target costing will be more useful if there is more committed cost or more locked in cost. Example, automobiles and assembly oriented industries. Are you able to get me? Try to recollect the graph which I've already told you. So if there is more committed cost, what happens? It means during the design phase itself, you're incurring a lot of cost, correct? Therefore, target costing will be more successful in which phase? Design phase only. That's where its strength is. Therefore, you'll be able to achieve good result. Are you able to understand? Got it? That will happen only in automobiles and assembly oriented industries. In fast food, what can you do with respect to design? Nothing. Are you able to understand? There is no locked in cost. Therefore, target costing will not give you that result. It will not be that successful. The way it will be successful in manufacturing and these so-called automobile and assembly oriented industries. Got the point? Yes. Same goes with service sector also. In chemicals also, where is the question of design in chemical? Okay. Service sector also. Are you designing anything over here? Nothing. You're just providing service. Therefore, in service sectors, chemical production and fast food, target costing will not be that useful. Whereas in automobiles and assembly oriented industries, target costing will be very useful because here design will play a major role. Got the point? And you will, as a result, you will have more locked in cost, more committed cost. Got it? Yes. This is very important, Nana. Remember this. In case studies and case scenarios, this will be asked. This will be asked. Are you able to get me? So please remember that. This is not that important. What is that? Steps steps of target costing. It is not that important. Implementing a target costing is also okay. This is important. Difference between traditional and target costing. Problems with target costing, important. And this value analysis or value engineering steps, very important. And what is value analysis, value engineering is also important. Advantage of target costing, yes, this is also important. Definition is obviously important, okay? Right? This is okay, not that important. Standardization of components is important. He will not ask a direct question. He will give you a situation where he'll ask you how to reduce the cost. Give us some suggestions. In that, one of our suggestion will be what? Standardization of component. That way it is important, not directly. Prerequisites of cost control is also good one. It can be asked indirectly. That's all. Remaining is okay. Not too important. Got it? Okay, fantastic. So with this, we are done with what? Target costing. So let's go to our first page. We're done with one more. Where is it, Ray? So cost control versus cost reduction is done, and target costing is also done. So what is the next thing we'll be covering? LCC, Pareto analysis. This will not take much of a time. This will take good amount of time. Okay, and it will be a little bit dry. I'm telling you at the beginning itself. EMA will be a lot dry topic. It's a lot more drier actually. Okay, it will be very dry. If you don't concentrate, then dumb. It is important as well. Already 2 times questions have been asked from this area in the examination. In the last 6 or 7 attempts, it has been asked twice. Prinjo, it is related to environment, so that is a burning topic right now. So it is always a contemporary topic. Therefore, it will always be tested. There is always a chance that it will be tested. Are you able to get me? But unfortunately, the topic is dry. So we can't do anything. We have to study the same way it is. But I made it as much practical as possible by adding examples. Are you able to understand? And in certain areas where it has not been explained well in your study material, I've added some content so that you can easily understand it better. But nevertheless, eventually, it's not that engaging topic. Samjha, all of you. So after finishing of these concepts, then only we need to get into questions. Got it? So make yourself ready. Accordingly, have your lunch and come back. Got it? Hello, fantastic. So let's have a break. Right now, let's start with a new chapter. What is that? Intro to SCM. It's a very simple chapter. Okay, no complications, nothing doing. There's only one concept which is important in this particular chapter, and in the recent study material, there is a concept called value shop model that was totally removed in the new study material for you. Okay. Yeah. Earlier, value shop model was there in this particular chapter. A lot of content relating to value shop model was removed. So now we are not going to see that. Okay. As per your recent study material, 2022. So 2022 edition, value shop model has been removed. Okay. Yeah. Only one small paragraph is there. To that extent, if you have an idea, it's enough. Okay. Ready? And even the case study relating to value shop model was also removed actually. Okay, but still we can't trust ICA. Before exam only, like this only they have done. They have removed a particular concept and then they've asked the question from that particular concept itself. Okay, so always it's risky. Chalo, anyways. Shall we start? Alright, a very simple and very small chapter. Padafat will finish it off today itself. Okay, right, chalo. So intro to SCM. First, let's have a bird's eye view of what this chapter is all about. Again, it's a theory chapter. So we have traditional cost management, strategic cost management. There are 2 subtopics. Traditional cost management, we'll try to understand what is its meaning and limitations. Strategic cost management, we'll try to understand what do you mean by strategic positioning, cost driver analysis, and value chain analysis. This value chain analysis is the only topic which is important from this particular chapter. In fact, except this concept, this chapter is useless, to be very honest. Got the point? That's why, from importance perspective, also it is 6 out of 10, which means 2 attempts or 3 attempts once, you'll get a question from this particular chapter. Even if you get that, it will be only value chain analysis. Are you able to understand? This is very, 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 very important. Except that, remaining all are dry and unimportant topics from this particular chapter. In case the day before the exam, in case if you don't have time and still you have to revise this particular chapter, you can just revise value chain analysis and then you can move on. Got the point? You need not touch anything else. Got it? Why does it has come? Did I use that? Then nobody. Okay, Moku. Why it's not going away? Thank God. Yeah, how to switch this Moku Siri off? Huh? Anyways, right guys. Okay, so the only important concept in this entire chapter is what, Nana? Value chain analysis. So under value chain analysis, we'll have 2 subplots, strategic framework and assessing competitive advantage. Under strategic framework, we have industry structure analysis, core competencies analysis and segmentation analysis. Under assessing competitive advantage, we have internal cost analysis, internal differentiation analysis and vertical linkage analysis. So that is what we're going to see in this particular chapter. It's a pretty dry chapter and average chapter. It's not so important except for one concept. This concept is bloody hell, it's important. Which one? Value chain analysis. Really, it's seriously important. Okay. Value shop model, earlier it was there. There was a case study. It was asked in the examination also. I don't know why that particular concept has been removed in the recent study material, because I don't think it's an irrelevant concept. It's still relevant. He did not remove it completely. He removed most of the explanation part, but one paragraph was still given. Are you able to understand? One paragraph was still given. So therefore, we'll touch it a little bit to be on the safer side and then we'll move on. But the case study relating to value shop model, there's only one case study that was removed. Actually, it was a very good case study. That's okay. Right. Anyways, are we done with this? So this is your bird's eye view. These are all the topics that we're going to study in this particular chapter. Chala, fantastic. Let's start. So first, we're going to try to understand what is traditional cost management, what are its limitations, and why there is a need of strategic cost management. Okay. So coming on to traditional cost management, it focuses largely on what, Nana? Cost control and cost reduction. Through what? Budgetary control and standard costing. Are you able to understand? With the help of these two, we mainly control the cost, correct? These are perfect examples of cost control. So what? So what we actually do as per traditional cost management is that we take corrective action only if there is any variance such that it does not repeat in future. Thereby, eventually we try to control the cost, correct? So we try to fix a standard. We try to calculate the actuals. The difference between standard and actuals, we call it as variance. And then once the variance has come, then we'll try to find out who is responsible for that particular variance. Then we'll take the counter action. You got it? The result of taking that action is that in future, this particular mistake will not be repeated. And thereby you try to control your cost. Got it, all of you? Right. Fantastic. So what are the limitations of this so-called traditional cost management? First of all, it's a reactive approach. Reactive means what? Exactly. After the damage has happened, then you will try to react. In target costing also, we have seen this as a plus point. Proactive approach was the advantage, correct? Target costing comes under strategic cost management. You understand the point? So strategic cost management, it's all about acting in advance. So the benefit of acting in advance or proactive approach is that you can avoid the damage. In reactive approach, the problem is you will react only after some sort of a mistake or an error or a damage has happened. And as a result, your damage is done. So all you can do is avoid it in future. But what about the damage that has already happened? That you can't do anything. So that you have to face. Are you able to get me? Yes, that's the biggest negative point. That's why it is given as a limitation. Short-term outlook. You'll only think about today, tomorrow, day after tomorrow, or hardly 1 month. That's all. You'll not have a long-term perspective. Are you able to understand? Yeah, for example, suppose there is a one branch of McDonald's, okay, and he says that this particular quarter, your result should be some 5 lakhs profit so that I'll give you some bonus. This guy, the branch manager, he comes to know that, I mean, he'll come to know that I can't really reach that 5 lakh profit because my business is not that good. Probably I'll stuck up somewhere between 4 lakhs or something. Then what he does is that he tries to compromise on certain areas. Like, for example, maybe once you try to take employees into McD, you have to train them for at least 4 weeks or at least for 2 months. Say, for example, he cuts short that training and then he just trains them for 1 week or 2 weeks and straight away gets them into the job. Thereby, he'll save a lot of cost, and as a result, he'll be able to reach the target profit of 5 lakhs. Able to get me? But this is purely short term, because tomorrow, in future, in the long run, what will happen? These guys aren't trained that well, and as a result, they'll not serve the customers well, they'll not prepare the food well, and eventually the footfall for your particular restaurant will get reduced in the future, and that will eventually hurt your profits in the negative way, isn't it? So this is what we call it as short-term outlook without thinking in the long term. This is one of the negative point of traditional cost management. Limited focus on revision and improvisation, which means mostly the company's mindset will be static. Standard costing is also static, right? What does standard costing say? I'll presume an efficiency in your company, okay? And based on that, I'll fix a standard. If you achieve the standard, then it's a matter. That's all. I'm happy. Whereas the Kaizen costing and all those concepts that we have seen, what does Kaizen costing say? Or what does cost reduction techniques say? We have seen the difference between cost control and cost reduction, right? In cost management techniques, correct? In cost reduction, what is the sentence that we have seen? That they will challenge the standards, correct? Are you able to understand? So Kaizen costing says that why should you be static? Why should you presume the efficiency at the current level? Why can't we improve it further? Okay, so one of the negative points of traditional cost management is that they are static. They don't want to improve themselves. So they're just happy at the level at which they are operating right now. Are you able to get me? Yeah, Nana, all of you, yes. Ignores competition, market growth, customer requirements. So which means it is inward looking. Inward looking means, say for example, there is a head office, okay, in Singapore, and they've got some branches all over the world. Now in head office Singapore, all these guys will be sitting in an AC room and they think that, okay, our shareholders are expecting 12% return, okay, and therefore we have to ensure that we get some 18% return or 20% return. Like that they'll decide, and accordingly they'll give some targets to all the branches all over the world. That's all. Are you able to understand? This sort of running business, we call it as inward looking, because here you're not thinking about anything else. For example, you gave a target to a particular branch in India. Are you able to understand? Here you're not thinking about whether that branch can really achieve that particular target. What is the competitive environment in that particular area? How their competitors are behaving? What is the market growth in that particular area? Is there any other new challenges that is happening over there? Nothing is considered. Are you able to understand? You just think about yourself. What is your shareholders requirement? What is your requirement? And eventually you find a target and then you just distribute that to your branches. This is what we call inward looking, which means you'll always think about you and your company within your company. You'll never think about what's happening outside. Is it good or bad? Absolutely bad. Excessive focus on cost reduction. Trying to focus too much on cost reduction, thereby you'll try to compromise on quality. That also you should not do. Next, expectation of modern customer is different, which is dynamic. Modern customer expects a lot of changes. For example, you take your mobile phones. What's happening? Every 6 months or every 3 months for that matter, things are changing, isn't it? The fashion changing like anything for every 3 months, every 6 months, isn't it? Changing or not? Are it's really changing? Yes, obviously, isn't it? I still remember once upon a time, like when we were growing, our pants will become shorter, correct? And people used to mock when you have pants till 3/4 or it's not covering your leg completely, isn't it? Yes, you guys remember, right? But now it has become fashion. That too till there, and then you don't want to put your socks. Without socks, if you wear a shoe, once upon a time, they used to mock. But now, that's the fashion, right? Exactly, it's the opposite. So things keep on changing, isn't it? Arey. Anyways, right. So the thing is, see, what we have to understand eventually is that people's what can I say? Preferences, the likes and dislikes, they keep on changing. For example, in India itself, you take the automobile industry. Once upon a time, people were crazy over the sedan cars. They loved it like anything. Everywhere you see in India, it used to be sedans. But all of a sudden, we don't know when this change in taste has happened or change in preference. Everybody started liking SUVs, and all of a sudden, everybody is bombarding their cars with SUV models, isn't it? You see how Kia entered our market. How did Kia enter? With Seltos. What is Seltos? SUV, right? MG entered our market with Hector. What is Hector? SUV. Citroen, which is a, I think, French company, I think so it is, it entered our market with Citroen C4 Aircross, right? What is the car? SUV. You take anybody, Citroen. Siri. Yeah, I'll try to switch it off. Now Siri is officially dead. Chala. Right, okay, chala, let's continue. So therefore, customer preferences and taste or what, Nana, changing. Are you able to understand? Yeah, hey, all of you, yes. Okay. All these things are not considered when it comes to traditional cost management. Okay. Therefore, all these are negative points. So too much of cost reduction focus will lead to inferior quality of products and services that might drive away your customers, thereby lower sales and lower profitability in the long run. Got it? Everybody knows this. Simple. Okay, chalo. So that's all about traditional cost management. So we have the solution for that. What is the solution for all the problems that we have faced so far? Strategic cost management. Now, to understand SCM, which is strategic cost management, first of all, let's try to understand what is a strategy. Are you able to get me? So what is a strategy? Any idea? As you can see, it is set of actions taken by the manager of the company. Okay, set of actions, which means it's not just one, it's not just two. A set of actions. What happened to the balance? Yeah, erase it now. Now. Okay, right. So what is a strategy? It's not just one decision that you make, or it's not just one action that you take. It's a set of actions, okay? Where eventually the result of action should be what? It should improve the company's performance. That you call it as a strategy. Got it? Yeah, Ray. For example, what is the strategy for passing your CA exams? You'll say certain steps, right? Step 1, first you have to write the exam. Step 2, then these many marks you need to attempt. Step 3, then you have to prepare the subject this particular way. So it's not just one, it's a set of actions, right? Yeah. Okay, so now we know what is strategy. What is the next thing we try to understand? What is SCM? What is SCM? Strategic cost management. So what is strategic cost management? Very simple. You apply cost management techniques so that they improve the strategic position of your business and also control and reduce your cost. To put it very simple, that is nothing but strategic cost management. You understand the point? Applying CMT, cost management techniques. What is the purpose of applying them? To improve their strategic position and also reduce the cost. Okay, so what is the aim? The aim is to achieve sustainable competitive advantage. Very, very, very important. It's not competitive advantage. What is that? Sustainable. What is the difference? Competitive advantage means now you get some sort of edge over your competition. Fine. Sustainable means what? You maintain the same over a period of time. Got the point? Competitive advantage right now it's not enough, because once you do that, you get an edge over your competition. Of course, you will do that for sure. But then your competitor also will do something. And then you have to guess what he's going to do. And again, you keep improving yourself continuously. That we call it as what? Sustainable competitive advantage. That is the aim of SCM. Got the point? That's why I gave the examples as Duster and EcoSport. Duster, what has happened? It had a blockbuster launch, and I think if I'm not wrong, for 3 years or 4 years at least, it was leading the market like anything. Then, so it had competitive edge in those years. But later, what has happened? It was not able to improve itself with the growing competition, and as a result, competition has come and taken over, and now that is gone. So, which means it had competitive advantage, but it did not add sustainable competitive advantage. Or you able to understand? Same goes with EcoSport as well. Got it? So if you don't have sustainable competitive advantage at one given point of time, you'll be thrown out of the market. It's as simple as that. Got it? Let's try to understand that with the help of an example. Which one? SCM, strategic cost management. Look at the example. There were two, A and B. All the rupees are given in lakhs. You have revenue, you have cost of sales, you have gross profit, you have overheads, you have net profit. And you can see that it is loss for B, correct? Normally, if you apply traditional cost management, you will see that there is a loss for B. Therefore, B should not be continued to be manufactured. It should be discontinued. Would have been your decision, correct? Instead, if you go for SCM, what you will usually do is that you will try to first of all do some research. What A is doing for our company, what B is doing for our company. After doing some research, you will get some additional info. What is that additional info? If the company stops producing product B, the sale of A would fall by 25%. Why? There would have been some complementary relationship between these two. Because of A and B put together, more of the company's products might have been there in the market. As a result, the awareness about the company's products would have been higher, and as a result, people are buying A also more than what it should be otherwise. You got the point? So therefore, some sort of this relationship is there. You got to know about this information when you have done little bit of research as per SCM. Got it? Now, so as per traditional cost management, straight away you'll stop production of B because it gives you a loss of 2 lakhs. Whereas as per SCM, you'll see that if you stop producing B, sales of A would fall by 25%, which means 25% into the profit that you get otherwise from A will give you 5 lakhs. So this much you will lose, correct? Yeah, of course, once you stop B, you will save that 2 lakhs loss. So let's put that 2 lakh savings. Still there will be a net loss of 3 lakhs, correct? Yes. So if you stop B, you will not be facing this loss of 2 lakhs, but here you will lose some 5 lakhs. So the net effect will be further more loss of 3 lakhs, isn't it? Yes. So therefore, decision to stop B is not advisable. Now, this sort of sensible decision making will happen only when you implement what, Nana? Exactly. Are you able to understand? Now it seems all that stupid that when you compare it with TCM, that is traditional cost management, you will be wondering that at that particular point of time, people were that stupid to take decisions. They were. Are you able to understand? Now, because we know what is SCM, we find that, okay, people should have been using common sense and then they should have been a lot more what? Logical in their decision making. It feels that way, but that's not the case. Are you able to understand? Right? Yes. Anyways, we'll take another example. Suppose there is a manufacturing company. If you implement traditional cost management, what will happen? If you implement strategic cost management, what will happen? Let's try to understand. So as per traditional cost management, what that company guys have felt is that why should we do preventive maintenance for all the machines? Okay, they feel that doing regular preventive maintenance for the machines, despite irrespective of whether the machine comes to a problem or not, or machine faces some sort of a problem or not, some people they feel that it's a time waste. Are you able to understand? Especially under traditional cost management, that used to be the thought process. What used to be the thought process? Preventive maintenance of a machines when the machines are properly running, stopping those machines and then doing them a regular preventive maintenance is a waste of time. Instead of wasting the time, you can still continue the production. You can even produce more, sell more, earn more. Are you able to understand? So they are of the opinion that we will just do repair for the machines when it gets that sort of an issue, right? When it is not properly running or something like that, or when it comes under some sort of a repair issue. Are you able to get me? Guys, yes, right, fantastic. But see here, as per SCM, what happens? So, as per TCM, repairs are done only if there is a breakdown. So that is a short-term approach. This is done to save cost of maintenance. Not only cost of maintenance, they feel that suppose you need half a day to repair that to maintain that particular machine, to do preventive maintenance, they feel that a time is getting wasted. In this half a day, we can produce even more if we run the machine and we can sell them, we can earn some profit. Are you able to get me? Simultaneously, you will be saving cost of maintenance as well. So therefore, they felt that regular preventive maintenance is a waste of time. You got it? But as per SCM, what people have started thinking is that suppose if you have a breakdown, it is not just the time that you're going to lose. You're going to lose a lot of things. So what will be your loss? First of all, your production time is lost. Suppose that machine takes 1 day or 2 days to get it repaired so that it is back in its working condition. In those 2 days, what your labor will do? They don't have a machine to work upon, correct? So what they will do eventually? They'll sit quiet. So there is idle labor time as well. And because if you don't maintain your machine properly, the overall life of the machine will get reduced. Same goes with your bike, correct? If you don't give your bike to the regular maintenance, whether that is 3 months or 6 months, what will happen? It will not perform the same way it used to perform once upon a time. It will not give you the same mileage that it used to give once upon a time, isn't it? Loss of goodwill due to customer dissatisfaction. Why? Because these breakdowns are unexpected. Breakdowns will never be expected, correct? Yeah, regular maintenance breakdown is an expected breakdown because you break down the machine for the sake of maintenance. Okay. Otherwise, usually breakdowns are unexpected, correct? So when it is unexpected, what will happen? All of a sudden it will break, correct? You would have already given commitment to your customer saying that this day you'll have the delivery, and now you cannot stand on your word. You cannot deliver them on time. So there's gonna be delay, correct? That too, the second problem is, one is there's gonna be delay. Second is, if you don't maintain your machines like this, the output quality also will get reduced. Just like how mileage gets reduced in your bike if you don't maintain. Correct? Are you able to understand? Because of these two reasons. One is the delay. The other one is the compromise in quality. Who will get hurt? The customer will get hurt. In the sense, he'll get dissatisfied. Let's put it that way. And as a result, that word will spread. The bad goodwill will spread. And in the long run, your sales will get affected in a negative way for sure. Correct? Bol rahe? Obviously. Therefore, you'll lose market share in the long run. Got the point? These are all the multiple losses that you will face because of your decision to not maintain your mission properly. Are you able to understand? Therefore, what SCM says is that it is important to go for preventive maintenance so that we prevent something wrong from happening. So you always understand, if there is some sort of breakdown that's happening, it's not a problem for me or for anybody. There will be problem only if the breakdown is unexpected. If there is an expected breakdown to maintain your machine, you will accordingly give commitment to the customers, isn't it? So you'll say that, okay, fine, this much time it will take, isn't it? Yes. They Mokku fellows, yes or what? All right, that's what. You got this example, all of you? Right, next example, telecom company. Sir, what is this telecom company example, sir? Very simple. Let's say our Churuli is following traditional cost management, okay? Churuli, you are following which one? Telecom company. You are not following telecom company, Ray. You are following traditional cost management in a telecom company which you own. Or let's say you are working as a chief. Hey, it doesn't suit him, Ray. What suits him, you tell me? They're saying something. I have nothing to do with that. Huh? Yeah, let's say chief cost accountant. Okay, he takes care of all the costing stuff, part and all that. So Churili was given a target. See, we have to improve our profit this particular quarter. So what Churili says is that, okay, fine. So want to improve profit? PK sir has told, okay, we need to cut the cost. Okay, how to cut the cost? Then he says, hey, how many customer care centers we have got? 8. Hey, why you need 8? Remove 4. What Churili? For nearly 8 lakhs you are spending every month, remove 4 lakhs, gone. Okay. So if you do that, Churili, what happens? The remaining customer case centers will have overcrowding, correct? And as a result, customer has to wait for longer period of time to get their problem resolved. And that will lead to bad customer case service. And that will lead to loss of customers. And that will lead to loss of business. And that will lead to loss of job for Churili if he is there. Yes, isn't it? Right. For the company, it will lead to loss of profit in the long run. Also, overcrowding impacted the performance of the employees as well. Yes. So not only the customers who will be at the receiving end, but also the employees will be at the receiving end. Why? Because earlier 8 customer care centers used to take care of the same volume. Now 4 customer care centers are taking of the same volume. Are you able to understand? So they will also be demotivated. So ultimately, there are 2 important stakeholders of your company are not happy. Who are they? Customers and employee. Who is responsible for this? Churili. What? You're only responsible. Mokko fellow. We are talking about customer service, right? Is the question, what is the logic of linking sales with that? We'll discuss later. Okay, right. Now, oh, he's trying to protect his job. That's okay. Now, how eventually SCM will solve the same problem? Okay, let's try to understand that. So, what SCM says is that, see, there's nothing wrong in trying to reduce your cost so that you want to improve your profit. Everybody tries to do the same, but not at the cost of losing your business in the long run. Because then you can ask why traditional cost management does something like that, because it doesn't have long term vision. It has only what? Short term vision. Okay. Whereas SCM is not like that. It will have the long term vision. So it will know that if it suddenly try to cut these costs by way of closing down your customer care centers, eventually it will lead to these kind of side effects. So who will know that in advance? SCM, when you implement SCM. So what SCM says is that, okay, fine, you do one thing, you do two steps. First, before you take such a kind of a decision, you try to train your employees such that they'll be able to handle the extra amount of pressure. Are you able to understand? Third, what you can do is that you can have some pre-recorded solutions. That's what people have done right now, isn't it? Earlier, I don't know whether you remember or not. If you could recollect, around 8 years back, or like, yeah, 8 years back probably, it was very easy for us to get to customer care. You know that? I don't know whether you can recollect or not. Just like that, the moment you call the customer care, there will be one number. In the recorded message itself, they'll say, if you want to speak to our customer care, press this particular number. So we used to easily get to them. Now, can you easily get to them like that? No. They say that if you have these problems, you better solve it in the app, you know, or you better try to click this number, and there will be, most of the times it will be a recorded message only. Only in very rare cases you will get to the customer care. Reason? Reduce the cost. Are you able to understand? So somebody has raised this particular kind of a question and somebody has come out with a solution. Are you able to understand? Now also, for example, yeah, I'm also using Airtel. So what do? Very rarely we try to speak to the customer care. Otherwise, majority of the things are done in the app itself, isn't it? Yes, all of you. That's the way it works. So SCM tries to give you the solution without facing the negative points. Are you able to get me? Yes. Come on, guys. Right. That is another example. So how many examples we have seen so far? 3 examples. What are they? The first one is the A and B, where you try to stop producing B because it gives loss. Second one is a manufacturing company with respect to machine preventive maintenance, and the third one is a telecom company. Got the point? Whole Ray, all of you, right? Sure, fantastic. So let's move on to the next one. What is the next concept we have? Components of SCM. So what are the components of SCM? We have 3 components. What are they? First one, strategic positioning analysis. Second one is cost driver. Third one is value chain. I hope you guys already know what is the cost driver, isn't it? Anyways, let's try to understand the first one. Strategic positioning analysis means what? So it is your company's relative position within the industry. For example, you take a car manufacturing industry. Who is the leader right now? What is the strategic position of Maruti Suzuki? It's the market leader, right? Yes. Hyundai, it is the one next to the market leader, so it can, at any given point of time, it can triumph over the market leader, isn't it? Tata, having phenomenal growth since last 2 or 3 years, isn't it? Yeah, so like that, every company will have its own strategic position, and a position of one company can be defined only with relative to others in the industry. That's the way it works. Are you able to understand? Yeah, yes, all of you. For example, you take Skoda and Volkswagen, they have a unique, proposition in the industry, isn't it? Like people who like driving, they tend to buy their car. People who like safety, they tend to buy their car. People who like to be a little bit different, they try to get those cars, isn't it? Who can withstand those costly services and not so good customer service? To be very honest, you got the point. Especially in case of Skoda, customer service is pretty bad, is what I heard. Again, it depends upon the dealer also, to be very honest. You got the point? Yes. Actually, to be very honest, Tata and Mahindra could have been market leaders today. provided if they would have set right their dealer network. Actually, the products are really good, especially since last 3 years, but still the dealer network is pretty bad, at least in the majority of the cases in the entire country. Worst dealership. The main advantage of why people buy Maruti Suzuki and Hyundai is because of the dealer also. Because once you go to a showroom to buy something by spending 10, 15, 20 lakhs, you don't want yourself to be treated really bad, isn't it? Where people doesn't take care of you and nobody comes to ask what you need and stuff like that. Yes or no? It's obvious. Are you able to understand? Anyways, so strategic positioning analysis means your company's relative position with respect to the others in the industry. Got the point? Okay. It reflects the following. Which one reflects the following? Strategic positioning analysis. What does it reflect? It reflects what are all the kind of choices that the company makes. Are you able to understand? For example, what is the choice that Maruti Suzuki has made 2 years back? Not 2 years back, 1 year back, 1.5 year back. It has taken a decision to get away with all the diesel engines. Isn't it? There are no diesel engines now. Isn't it? Maruti Suzuki. Yeah, they took a decision, right? Same goes with Skoda, same goes with Volkswagen. None of these guys have got any diesel engines right now in the Indian market, isn't it? You know it or you don't know it. That's okay. Now you know. Okay, next. And the kind of value it creates. Okay, now MS creates a value in a different way, correct? Like free from any kind of unnecessary headaches, and gives good mileage and good customer service and all that. That's what Maruti Suzuki, the way it creates value, correct? In what way Hyundai creates value? More features, better value for money, good looking and stuff like that, right? In what way Tata creates value? Right now it's creating value by way of safety and stuff like that, isn't it? So everybody kind of create value in their own way. That reflects their position, and that depends upon the choices they make. How differently it creates value when compared to its rivals is also important, correct? Yes. For example, when Volkswagen got launched in Indian market, if you look at their advertisement, they were always stressing upon the term German engineering and all that. But if you look at Toyota, they were always stressing upon the term QDR. The car is built on QDR basis and all that. QDR means quality, durability, and reliability. That's their selling point. You understand the point? Yes. So like that, everybody has their own value creation, and they create value in a different way. Got it? For example, you take the luxury segment as well. Mercedes, it's a luxury car, right? BMW it is actually, that's the way they pronounce it, seems. But okay, we call it as BMW. Now, it creates value in its own way, right? So mostly people who would like to be behind the wheel, they always go for BMW, correct? Yes. People who would like to sit on the back seat and it is driven by chauffeur, so they prefer what? Mercedes most of the times. Audi is a kind of mixed bag. People who like to do both, they go for Audi. So like that, everybody, they create value in a particular way, isn't it? Are you able to get me, right? Chalo. Okay, this one is not that important, just have an idea. Factors that will affect strategic position of the company. What will affect your strategic position of the company? Okay, the values, culture systems that you have got. External environment also will affect your company. Internal environment also will affect. You got the point? For example, now all the car companies and the bike companies, especially the car companies, advanced car companies, they are affected by one particular chip shortage. What is that? Semiconductor chips. It's happening since 2 years, the moment Corona has come. Is it an internal factor or external factor? External environment. Is it affecting your strategic position of the company? Yes. Every company, it is affecting them. Are you able to get me? Yes. Okay. So external environment means pestle will affect your company. Pestle means political, economic, social, technological, environmental, and legal. Suddenly government comes and says that hereafter BS7 norms will come into place. What will happen? So you can't sell BS6 now from a particular day. So companies has to stop their models. That's what they have done with BS6. Many models have got stopped in the middle, isn't it? And then they've got relaunched it back after 6 months or after 1 year. So all these external factors will affect you, isn't it? I just gave you one example. Are you able to get me? Yes? Right. Okay, so this is not that important, Anna. Just to have an idea, that's it. Okay, something is there like this. Strategic positioning analysis. Okay. All these external factors and internal factors will affect your company. That much, if you remember, it's enough. Nobody is going to ask you in the exam. And it's not important for your case study or case study digest as well. Are you able to understand? Right? So because it is there in your syllabus, we are just looking at it. That's all. So just have a rough idea. It's enough. Got it? Chalo. Now let's move on to the most important part. Okay. So what is important for you in this entire chapter is value chain analysis. Okay. Very, very, very important. This is important both from the perspective of direct questions or indirectly it can be used for answering a particular case study or a case scenario. You got the point? Very, 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 very important. And it is not difficult, but it is important. So shall we? Bole na all of you. Ready? Chalo. Now see here. What is value chain analysis first of all? It's a process by which a firm identifies and analyzes various activities that add value to the product. So your main idea is to identify VA and eliminate all the NVA. Simple. Are you able to understand? For example, there are multiple activities to manufacture a particular product. Okay, let's say a car. Got it? Sorry. Each and every activity will be analyzed from the perspective of whether it is value added or non-value added. Okay. All the non-value added activities will be eliminated and only value added activities will be continued. Are you able to understand? So the whole thing what you are doing right now is nothing but value chain analysis. I've given one important point over here. I said that value chain analysis helps a firm to obtain cost leadership or product differentiation. Means what? When you are doing this particular analysis of each and every activity, you'll get to know whether you have the advantage of being a cost leader in the market or you have the advantage of being a guy who can run the company based on product differentiation, where your product can be sold, saying that your product gives a unique experience. You understand the point? That clarity you will have only when you implement what, Nana? Value chain analysis. Exactly. Now you will have a doubt. Sir, what do you mean by value added? What do you mean by non-value added activities? In a simplest way, what I can say is, if any activity adds any functionality to the product, for example, brakes in a car, are you able to understand? Clutch in a car, headlights in a car, fog lamps in a car, are you able to understand? Which adds functionality to a particular product, that's value added by default. Or even if it does not add any functionality to the particular product, but customer is willing to pay for the same, automatically it becomes value added. If both these conditions are not satisfied, then it is non-value added. Pretty simple. Got it? All of you? All right. Now, sir, what is the definition, sir, as per Potter? You know Potter? Michael Potter, obviously. That Mokufil only. Right? So, what does he say? Internal processes or activities a company performs to design, produce, market, deliver, and support its product. Everything is referred as value chain. Are you able to understand? So indirectly what he says is that whatever that is happening inside the company, whatever the process or activity that is happening, ultimately to design your product, to produce or manufacture your product, to advertise your product, which is nothing but marketing, or distribute your product, and to support after your product is sold, which means we are talking about service. Everything put together, we call it as value chain. And analyzing this value chain, we call it as value chain analysis. Got the point? Okay, now let us see what Michael Porter's value chain analysis looks like. Remember, it applies only to manufacturing companies. That's the reason we had value shop model. Value shop model means it applies to service sector actually. Because value chain model you cannot apply to service sector. Therefore, we had something called value shop model. It's a good model. I don't know why it has been removed from your syllabus in the latest 2022 study material. I don't understand that. But anyway, that's okay. You guys got this? Now, as per Michael Porter, all your activities can be divided into two, primary, secondary. Secondary can also be called as support activities, okay? Sir, what are primary, sir? Inbound logistics, operations, outbound logistics, marketing and sales, after sales service, okay? What about support or secondary activities? Firm infra, human resource management, technology development and procurement. Remember this diagram, write it the same way in the examination, it creates an impression. Got it? Okay, right? So, what does Michael Porter say? He says that internal processes or activities that any company performs in order to what? Design, manufacture or produce, market or distribute, deliver and support your product. is nothing but value chain analysis. According to Michael Porter, you have all your activities in a value chain analysis can be divided into two: primary, secondary, or support. So what are these primary activities? Primary activities are those activities which are directly involved in transforming your input into output. Are you able to get me? Sir, what about secondary or support activities? These are all the activities which will support the primary activities in doing what they are doing. Got it? So primary activities basically convert your raw metals into finished good. Secondary activities will support the primary activities in converting the raw metal into finished good. Yes. So what are the primary activities? Inbound logistics, operations, outbound logistics, marketing and sales, after sales service. Okay, right. What are secondary or support activities? First one, firm infra, human resource management, technology development, and procurement. We'll try to understand one by one. Here I've given the sentence here. Sir, what about service sector? The answer is value shop model. That's why here I've written it applies only to manufacturing companies. Got the point? Yes. I already explained you what are primary activities. Primary activities means what, Nana? Those activities which are directly involved in converting your input into output. Okay, directly involved. If they are indirectly involved, then it is called secondary, as simple as that. Anyways, so let's start with inbound logistics first. Inbound logistics means what? Obviously, you're buying the raw metal, that will be inbound, correct? Logistics means your entire focus will be on the logistics part only. Logistics part means what? The transport stuff. Are you able to understand? So all the activities concerned with receiving, storing, and distribution of raw metal to the production department is nothing but inbound logistics. Please understand only the logistics part of the raw metal which you are trying to get from the supplier. There are so many other things also which you need to do. Identify the supplier, finalize the supplier, negotiate with the supplier, blah, 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 all those things. That will come under secondary activities, which is procurement. Only the logistic part will come under primary activities. Now be careful with that, especially when you apply this concept to a case study. Don't get confused. Many times people get confused between what will come under inbound logistics, what will come under secondary activity, which is a procurement. Are you able to understand? Yes? All of you? Right, fantastic. Next one, operations. What about operations? Activities concerned with transforming your input into output, which means machining, packaging, testing, equipment maintenance, everything comes under operations. Got the point? Yes? All of you. Right. Outbound logistics means very simple. Here also it is logistics, but it is outbound. Means what? Once your finished good has got prepared or manufactured completely, now you have to transport these finished goods to the customer. Correct? You need to receive the order, take care of the order, and then deliver that to the customer. That comes under outbound logistics. Activities concerned with collecting, storing, distributing the products from the factory to the customers. Examples: finished goods warehousing. Once the finished goods are manufactured, then it should be stored. Delivery vehicle operations, those delivery vehicles which will pick up the goods from the warehouse and transfer that to the customers or transport that to the customers. Processing the order, when you get an order from the customer, scheduling the delivery, everything will come under outbound logistics. Got it, Anna? All of you? Yes. And finally, marketing and sales. What do you mean by marketing and sales? You have a product with you. You have to let people or customers know that you have a product with you, correct? So any activity which eventually increases the awareness of your product automatically is called marketing and sales. Anything that you do, ultimately because of you doing something, people are getting to know about your product, then that will be exactly right. Okay. After this, we have after sales service. What is it? Once you have sold your good, obviously you got to take care of the after sales, warranty claim, service, repairs, replacement, this and all that. Right. That's very simple. Now come to secondary or support activities. What did I tell you? These are all the activities which will support the primary activities in doing what they're doing. Primary activities are doing what? Exactly. They are trying to convert your input into output and eventually sell them, obviously. Right. So for that, first we have something called firm infra. Now, the moment we talk about infra, the only thing that we'll remember is what? Bridges, buildings, flyovers and stuff like that. Infra is not that. Are you able to understand? Infra is a very big term. For example, here you see firm infra means what? Finance team, legal team, accounting team. So it's an intellectual infra as well. It is not just physical infra. You got the point? Yes. Right. So having a proper intellectual team which can take care of all the legal aspects that your company shall face also comes under firm infra. You got the point? So we have three teams over here as an example which I gave you: finance, legal, and accounting team. What about HRM? Human resource management, selecting a particular employee, recruiting them, placing them, training them. Appraisal means? Exactly. Rewards, promotion, rewards, and maintaining relationship with them. All these things will come under human resource management. If you do this properly only, here all the employees will do their job properly. Correct? Yeah, right. Next, technology development. Of course, you need to take care of both the hardware side of the technology and software side of the technology, because both of these things will help you convert your input into output. And finally, procurement. What about procurement? Purchase of raw material, supplier, components, and other consumables. Everything except the logistics part will be taken care here. Means how to purchase raw material, from whom to purchase raw material, finalizing the deal, talking to them, whether it is credit or cash, and everything will come under procurement as a secondary activity. Once everything is done, then the raw material will be shipped from the buyer to the seller. That is, from the seller to the buyer. That is our factory. Okay. Once the shipping starts, then it comes under inbound logistics. Got it? Yes. Fantastic. Okay, chalo. This is really important. So let's revise one more time. So we started with value chain analysis. What did we discuss? It's a process by which a firm will identify and analyze what are all the various activities which are adding value. Thereby the intention is to eliminate all the non-value added activities that will reduce your cost. Correct? This also helps you in identifying whether you have the advantage of cost leadership or product differentiation. Very important. After that, we know what is VA and NVA. Okay, we are already aware of that. Then we have seen definition as per Porter. What is the definition as per Porter? Internal process or activities of a company which performs, first what it will perform: designing, then producing or manufacturing, then marketing, then distributing, which is nothing but deliver, and support. What is that? It's product. All these things will come under value chain analysis. After that, we have seen that this Porter's value chain analysis will be applicable only to manufacturing companies, and all the activities of this value chain analysis can be divided into two. They are primary, secondary. What are the primary activities? Those activities which are directly involved in converting your input into output and selling them eventually. So what are those activities? First one, inbound logistics, outbound logistics, operations, then marketing and sales, after sales support. Then what about secondary activities? Firm infra, HRM, human resource management, technology, hardware and software, technology development, then procurement. Done. Okay, one by one. What do you mean by inbound logistics? Activities concerned with receiving, storing, distributing your raw material into what? Production, and then giving them into production process, right? Obviously, production department will send you a material requisition note, and then you will transfer your raw materials to the production department by following FIFO method or weighted average, whatever it is. Got it? Next, operations. Operations means what? Activities concerned with converting your input into output or raw material into finished good. Correct? Example, machining, packaging, testing, equipment maintenance, all those things will come under operations. Next, outbound logistics. Activities concerned with collecting, storing, distributing your product from the factory to the customers. Examples are storing your goods in the warehouse, delivery vehicle operation means you have to deliver your finished goods to the customers, ordering, processing your order, as well as scheduling your delivery. Got it? Marketing and sales. Any means through which the customer are made aware of your product will come under marketing and sales. Example, advertising, promotion, distribution channels. Okay. Finally, after sales service, activities concerned with related to the after sales activities, like for example, installation if it is AC, repair, normal for any product there will be repair, warranty claims, parts replacement, etc. Got it? Then we have seen secondary or support activities where they support primary activities in doing what they are doing. Firm infra means it is not just about physical infra, it's about intellectual infra as well. Finance team, legal team, and accounting team. Then we have human resource management, where we have selection, recruitment, placement, training, appraisal, rewards, everything related to the employees, Nana, managing them comes under HRM. Technology development, both hardware and software, which will indirectly help you to convert your raw material into finished good. Procurement, purchasing of raw material, finalizing the supplier, what are all the components that you have to buy, when you have to buy, everything will come under procurement. Once it starts shipping, then it will go under inbound logistics. Got it? You'll understand better, even better when we start solving case studies. Okay, right now you'll have a decent idea. Got this? All the theory will be like that only, especially when you have application oriented theory. Only when we start solving case studies or case scenarios, you'll have a better idea, right? Are we done with this? Chalo, let's move on to the next one. What is the next one we have got? Strategic framework for VCA. What is VCA? Value chain analysis. So we have got three things over here. Industry structure analysis, correct? All of you, industry structure analysis, then core competency analysis, then segmentation analysis. In that, first we'll start with industry structure analysis. So which means we are going to analyze how an industry structure is going to be. Everybody know that Partner's 5 forces analysis. What are they? Threat of new entrants, bargaining power of customers, bargaining power of suppliers, rivalry among existing competitors, threat from substitutes. You guys know this, isn't it? Right. Now let's try to understand this concept better with the help of some examples. Ready? Suppose buyer's purchasing volume is very high. Then who will have better bargaining power? Whoever has got the volume, he will have better bargaining power. Are you able to understand? Who has got the volume here? Buyer. So he'll be able to bargain better when compared to the seller. Now the biggest question is, how will he bargain? There are two ways how he will bargain. Way number one, he will accept the price that has been given by the supplier as it is. He'll not bargain on the price. Rather, he will say that I want a better quality. That way he can bargain. Or he will accept the quality that is being given by the supplier as it is, but he will bargain with respect to price. Either way, when your quantity that you're buying is very high, you have the bargaining power. Who has the bargaining power? Buyer. Same goes with seller also. Able to understand, right? It depends. Anyways, right, one by one we'll see. Second, if the cost of switching suppliers is low, buyer's bargaining power will be high. What does it mean? Once I've finalized a particular supplier, if I don't like him, or if something is not good between us, or if both of you guys are not mutually agreeable at a particular price, then the buyer will think about shifting to another supplier. If the cost of shifting is very low, then naturally, whose bargaining power will be high? Mine, the buyer's. Why? Because seller also will know this. So if I don't accept to the demands of the buyer, then I know that it's easy for him to shift from myself to somebody else. And therefore, I will, little bit compromise, which means whose bargaining power is good? Buyers. Exactly. If it is opposite, if cost of switching is suppliers is high, whose bargaining power will be high? Suppliers. Because I know that he can't shift just like that. Able to understand? Same thing happened with, what is that? What do you mean by cost of switching suppliers? Why it's gonna cost you a lot? Why? Because see, supplier will be at a particular place. Are you able to understand? From that particular place to your place, all the the transport infra, all these things would have got developed. You would have got better understanding with a lot of transportation agencies also, because you have been doing that from so many years. Okay. Apart from that, he might be near to your location. Are you able to understand? Apart from that, already you know what kind of quality you'll be getting from him. There are a lot of factors. In fact, this is the reason why that 2.0 movie is there, right? Its budget went all the way to 500 crores, right? 500 or 600, something like that. What was the reason? Cost of switching supplier only. There we were talking about the graphics supplier. Initially, they went to one particular company, and what director can do, he can only communicate his vision, correct? What? That was communicated to them, and they said that, yeah, we'll do it, we'll give it to you, blah, blah, blah. They said we'll do it in 6 months. It didn't work. They said we'll do it in another 1 year. It didn't work. And then another 1.5 year, like that, it got postponed. And finally, they have to shift it all together to a new guy, a bigger VFX company. You understand that? And literally, Shankar told in one interview that that cost of switching was very high for them. Are you able to understand? Because all the work is done here, right? It is already stored in all these computers and stuff like that. It was very difficult for them to switch it to their studio. Just like it was as difficult as, transferring a home from one location to another location. Just imagine how difficult would that be. It was that difficult, it seems. Are you able to understand? Same thing. See, when you try to switch a supplier, in fact, for whatever the existing supplier you have, there will be some EDI interchange also, electronic data interchange between you and the supplier. Are you able to understand? Nowadays, that's how things are happening. So that whenever you need a particular component for a particular mission at a particular date and time and a location, simply you will put the need request and immediately it will be reflected in real time to the supplier. Just like how it happens in the McDonald's when we go and order. So in the front monitor, they'll take the order from us and they'll take all the stuff. The moment we make the bill payment, immediately it will be reflected on the backside of the monitors and immediately that will be communicated on real-time basis to the employees and they start preparing our food, isn't it? Yes. Unlike our normal holders where we say one masala dosai like that from here. And then whether he'll hear that properly or not, we don't know. Yes, a what? Isn't it? Obviously. You understand that? So that's a simple example, the McDonald's which I told you. Just imagine that this is happening in a real scale. So then if you want to switch the supplier, then it's very difficult for you to switch, isn't it? Are you able to understand? You have to change all these things, right? Anyways. And these two are very simple points, Nana. Obviously, when you have a large company, bargaining power will be high, isn't it? If your size is big, automatically your bargaining power will be big, correct? If yours is a small company, automatically your bargaining power will be pretty bad. And this is really important. Bargaining power of suppliers will be high if the input is important for the buying firm. Very important. This. For example, right now, semiconductor chips, whoever is manufacturing that, his bargaining power is hell high. Why? Because even though that costs relatively less, without that, there is no question of a car or a bike, especially electronics dominated car or a bike. You understand that? So whose bargaining power will be high? The guy who is manufacturing those semiconductor chips, correct? Because his input is important for the buying firm. Got it? Next, if there are very few suppliers, then also bargaining power of suppliers will be high. That's obvious. Yes, when there are few options. Threat of new entrants will be high if industry is profitable, correct? That's why in skimming pricing strategy, what we do, we try to reduce the selling price because the industry seems to be profitable. Therefore, so too many people will enter, correct? Also, if there are low barriers to entry, which is there in our CA coaching, isn't it? Always there is a threat of new entrant. Of course, now there is no threat. Why? Because everybody is going in losses, right? It was not like once upon a time, gone. So therefore, the threat of new entrants is pretty low right now. Are you able to understand? Yes, but normally it will be high because there are low barriers to entry. If you want to set up a CA coaching institute, what do you need? Do you need any license? No. Do you need something? At least from government perspective? No. From ICA perspective? No. Nothing is needed. Have some money, go and invest. That's all. Got the point? Especially it is till CA enter, even CA qualification is also not needed. CA final is a different thing. You got the point? Yes. So when there are low barriers to entry, automatically threat of new entrants will be very high, correct? Threat of new entrants will be very low if huge amount of capital is required. Yes, airlines, just like that some Tom, Dick and Harry can enter to airlines, not possible. You have seen our Surya, how hard work he has done to enter into airlines. Yeah, it's not Surya actually. Who is that? Gopinathan. Gopinathan only, right? Air Deccan, yeah. We should thank him actually, right? So, Air Deccan, correct. Gopinathan, correct? His name? Yes. Great guy. Just imagine for a middle class guy to get into airlines, how difficult it is, isn't it? Yeah, so that's why it's a threat, right? That sort of investment is a threat. Technical know-how is also required. Correct? If you want to set up a pharmaceutical company, suppose you have done some B pharmacy or M pharmacy, you know a lot of things and you can create some good medicines, and you want to what? Set up a pharmaceutical company. Can you? Yes, only if you know how. But in India, a lot of additional things also you need. Here, you cannot have a pharmaceutical company even if you have a technological know-how. You know how to make good medicines and everything you know. Then also you can't open. Why? Tomorrow nobody will buy. In India, if you want to open a pharmaceutical company, compulsory you should have a political support. Got it? No political support, no question of pharmaceutical company opening. Got it? Kya All right. Okay, that's a different thing. Right, guys, finished? Huh? So, when you have a demand of high capital requirement, then obviously it's very difficult for you to enter. Correct? Threat of new entrants will be very less. Technical know-how is required in case of pharmaceuticals and all that. Then also you can't enter. Correct? Strict legislation is there. Then also you can't enter just like that, especially in case of defense industry in India. And also rivalry among competitors, which I've already told you. What are they? Firms more or less of the same size, they'll fight more rigorously. Extra capacity in the industry is there. To get that extra capacity, people will fight. Therefore, rivalry will be very high. If you can't exit, don't have a choice, but you have to fight. Therefore, the fight will be very severe. You have invested a lot, then also you can't exit. Therefore, you have to fight. So you need to understand then and there itself, and then try to figure it out. You got the point? Yes, and that's important. This is important, Anna, because compulsorily this will be indirectly asked in a case study or a case scenario. That's why I asked you to, look at these points carefully. Now that I gave you examples, but when we try to solve a question, let me see how many of you will do it correctly. Okay, shall I finish this off? I'll just wait for 30 seconds. Fatafat, you see all these things which I've written in green. Okay, once you're done with that, then I'll go to the next part. Got it? Hello, revise. Guys are hungry? Yes? All of you? Reduce the AC temperature. Hey, Mokku fellow, Nitin, reduce the temperature. Huh? Yeah, make it cooler. Even more cooler. Okay, chalo, done? Huh? Lunch break will be there at 1 o'clock. Okay, yeah. Shall we move on to the next one? Okay, now let me recollect. Strategic framework for value chain analysis. We have three things over here: industry structure analysis, core competencies analysis, and segmentation analysis. Yes, in that industry structure analysis is done, which is nothing but Parda's five forces. We have seen that in detail, correct? So now what is the second one? Core competency means what? Okay, right. Okay, cool. For example, what is the core competence of Nitin? Managing the temperature of AC, isn't it? No, isn't it? What is the core competence of Shafiq? Huh? Is the that is core competence? Huh? No. Just a second. Wait. He told something. My mind got blocked actually. I asked about core competence. He said he is a front seater. That is core competence. That already they've answered. Say. What's your core competence? Watching Churli movie again and again. Chalo. Yeah, true. Anyways, huh? No, 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 no. I haven't watched it. I will. I will for sure. Okay. What is our core competence of Akash? Ah, yeah. Giving a photogenic smile as if always Colgate or close up ad shoot is going on in the class. Isn't it? Yeah, Akash? That's good actually. That's good. Yeah, obviously. Nice smile. Isn't it? Yeah, of course. Chalo. Done? So everyone will have their core competence. For example, we forgot important core competence here. What is the core competence of Pushpak Vimanam batch? We don't know sometimes whether they are there or whether they are not there, but they are there. Got the point? In the class. You got it? That is a core competence, isn't it? Okay. Yes, obviously. Surely, you have a core competence as well, beside watching Surely movie. Whether you are listening to the class or you're sleeping, we can't find out actually. Because you'll be seeing like this only. Chalo. Anyways, done? Right, now. So, what is a core competency for any company? It should have a unique or distinctive skill, okay, or a technological know-how that creates a unique customer value. Are you able to understand? It can be a craftsmanship of a particular product. It can be a technological know-how, a particular feature that is being given. It can be an experience. Are you able to understand? It can be anything. Ultimately, something will be a core competency. For example, you take Shell petrol bunks. What is a core competency for them? A little bit of better quality petrol. They say. Then once you get to those bunks, they'll check your coolant level, they check your oil level, and they talk to you really well. And you feel as if you went to some sort of a hotel or a restaurant, and then they leave you with good feel. That's the core competency of Shell. Understand that? Yes. Here I gave you some examples also. Google, what is the core competence? Before Google also there were search engines. What made Google what it is today? It was giving best results in the search. Okay, that's the core competence. Apple, product differentiation, obviously giving you unique experience, isn't it? Yes, all of you. Whether that unique experience is a difficult experience or not, let's keep it aside. It's a debatable thing, but ultimately they'll give you what? Unique experience. Who is that? Apple. Kya re? Xiaomi, obviously cost leadership. That's the core competency. It can give you all the best features at the lowest price possible. In fact, isn't it? Yeah, re? Yeah, even Vedigundu is also inside automatically, right? Chalo. People didn't understand. You should understand in the flow. Yeah, yeah. Sometimes it will blast, na. That's what I told. Okay, chalo. Anyways, right? So competitive advantage could result from cost leadership or product differentiation. Correct? That I've already told you. If you're gonna lose your core competency, okay, that could be disaster. I gave some examples. Nokia has lost its core competency, isn't it? When there was a shift in the software that's happening, when this Android and iOS app revolution has come, this guy was not able to adapt. He was still sticking on with his Symbian operating system at that time, and he was totally what? Removed from the industry. Same goes with Bajaj Auto also, Chetak. Later, after a long point of time, Bajaj has revamped itself with the help of Pulsar. In that gap, they were totally a flop show once the Chetak is gone. Are you able to understand? Yeah, re. So, why? Because they lack their dynamic nature or they did not evolve along with the competition. Okay. So, once you lose your core competency, you're gone. It will be a disaster for your firm. Got it? Yes. Fantastic. Now, the next important thing is how to identify core competency. Are you able to understand? How to identify the core competency in a particular company? You can do some 3 tests. What are they? First one, end product benefits. Means what? What is the product that they are manufacturing? You take that product and see what sort of benefit it is giving. Are you able to understand? Yes, for example, you take the mobile phone and see what kind of experience it is giving you, the use, ultimate use. Are you able to get me? And from that, I can analyze, okay, this is his core competency. If the customer feels that this is the benefit that he's enjoying, that will be the core competency, correct? Access to wide variety of markets can be a core competence as well if you have it. What? That's the biggest advantage of Maruti Suzuki right now. That is the reason Toyota has entered into MOU with Maruti Suzuki, right? What else Maruti Suzuki has got? More technology than Toyota? No way. Why did they enter into MOU? Technology is with the Toyota. Wide access of markets is with the MS. Are you able to understand? That can be a core competence, of course. Difficult for competitors to imitate can be a core competence as well. Exactly. Rolls-Royce is a perfect example. Why still today Rolls-Royce is very famous? They provide customization. Finite amount of customization. Whatever you want, they'll do. Is there any other company who's doing that? Harley Davidson also, that's the reason. Why do people go gaga over Harley Davidson? Finite customization. Able to understand, once you get that stock bike, you can do whatever you want. Other bikes, we can't do the same. That sort of customization is not possible. So people want their bike to feel a little bit what? Special. Just my bike should be lot special when compared to what others. A lot of people will have this sort of a feeling, isn't it? Yes, exactly. Here I gave you examples. Maruti Suzuki, okay, Alto 800 success over Hyundai Eon is one of the examples of access to wide variety of markets advantage, core competency. You know Hyundai Eon? Actually, Hyundai really tried to do something unique. So it wanted to penetrate into the mass market of Indian, entire Indian market. So it started with Eon. Then Maruti replicated that idea. That's what I'm telling you, every time competitor will come out with his version of your product. Maruti did that. In fact, I still remember a paper ad where Hyundai mocked Maruti, saying the trendsetter and trend follower. It was a full page ad where trendsetter, whatever Hyundai has done, and it mocked what? Maruti. But at the end of the day, who was successful? Maruti. Eon, now you can't see it. But it was kickstarted by Hyundai. The reason is this one: access to wide variety of markets. You understand, man? You go to any village, you go to any small town, you'll find what? Maruti dealership. That is also one of the reasons why many people stick on to Maruti cars, including me. The reason is I go on a long trip, something happens at some particular point of time. If it is a Maruti car, people will be there. Take care of it. Otherwise, exactly. My Harley is there. I take it to Ladakh. Something happens, gone. That's all. Exactly. Royal Enfield, there itself somebody will be there. Brother, please you take care of me. Something they'll do, something we can do, and we can manage and we can go. Are you able to understand? If it is these kind of things, what you have to again, you have to come to a metropolitan city where you have a dealership, isn't it? That's what exactly. MOU between Suzuki and Toyota, which I've already explained you. Right? Chalo, let's move on. Okay, hereafter all these are dry theory, Nana. This is not really important. Even if you want to skip it, you can. It will not be asked in the examination as well. But because it is there in your syllabus, in your textbook, therefore I'm just trying to give it to you a little bit of an idea. See here, what can be a source of competitive advantage? Well, the answer is very simple. Collective skill set of the people in that particular organization, plus the kind of structure the organization has got, centralized or decentralized, whatever it is, the kind of resources the organization has got. For example, you take Tata. Why they are performing really well when it comes to the crash test ratings and all that? They have Tata Steel advantage, isn't it? Which others does not have. Are you able to understand? So it's a resource which the Tata group has got. Next, technological know-how. Everything put together will be the source of competitive advantage, which can be either product differentiation or cost leadership. Another thing is, core competence stems from two sources. So from where it comes, one is the resources, other one is capabilities. And resources also can be tangible or intangible. For example, you take a particular company, Nana. Okay, from that particular company, how the core competence will evolve. It will evolve from two sources. One is the resources the company has got. The other one is the capability to use those resources. Are you able to understand? For example, the resources can be two: tangible, intangible. Tangible is nothing but land, buildings, machinery, etc. I've written the example as BSNL. Why? Because BSNL has this advantage. Nobody owns that many land, buildings, and all that in the middle of the metropolitan cities the way BSNL owns. Got it? Are you able to understand? So if BSNL wants to really get some loan and stuff like that, it can easily bring them. Are you able to understand? Because it has got so much worth of assets. So that is one of the resource only, na, which is tangible. Correct? You can ask me, sir, because of this resource, what is the core competency, sir? You can get a loan, sir. That you can invest in R&D, sir. And that will result in improving your performance and stuff like that, sir. Isn't it? It's possible. Next. There can be intangible benefits as well, like skills, brand value, patent rights. Correct? I gave example as BMW GS 1250A. I don't know whether you can understand this or not. BMW GS 1250 Adventure. Do you know about this bike? Okay. Okay, I'll finish it off real quick. Big level adventure bikes. In bikes, there are so many bikes, Nana. Sports bikes, touring bikes, naked bikes, sports tourer, adventure touring, and all that. So this is an adventure. A stands for adventure. Okay. There are only three competitors: BMW GS 1250A, Harley Davidson Pan America, and what is that? Ducati Multistrada. There are three bikes. Okay. They are within the price range of 25 to 30 lakhs. Okay. This BMW GS 1250A will cost you 28 lakhs nearly. So it has got one unique thing. What is that unique thing is? It has got front suspension, and behind that there is a unique suspension setup. Are you able to understand? Nobody else have got this, which will prevent the kickback, especially when you're doing off-roading. In off-road, you'll jump, na. So normally what happens when you jump, there will be steering damper so that it doesn't kick back. The bike doesn't kick back. Are you able to understand? And there is a problem of nosedive also. Nosedive means when you put a sudden brake, the suspension will suddenly travel front and then it will come back. Correct? That we call it as nosedive. To prevent these two things, that unique setup has been kept in GSA. No other bike it has got that. And they took the patent rights as well. Who has taken that? BMW. So even today, since last 30 years, this bike is the king of the segment. Able to understand? In that case, don't ask me why I purchased Pan America. For me, there are a lot of other reasons as well. Got the point? Why did I miss the king of the segment? I went for something else. Got it? Yes. So that is the thing. I think I don't have time for you to show the image or not. You can just Google it and see. Next, capabilities. Okay, sir. All these are resources, fine, tangible or intangible, which you can touch, which you cannot touch. But capabilities are also one of the most important thing, because you should have the ability to coordinate these resources and put them toward productive use. Correct? This is one of the major complaints of Harley Davidson since last year. Okay, since last year they are trying to revolutionize things, but most of the critics, if you see them, they say that Harley has got a lot of resources, money and stuff like that, but they don't have capability to put them together and put them in such a way that they can really compete with the competition and come out successfully. Are you able to understand? So capabilities are also really important. Got it? Yes. Sir, I have a lot of resources, I have a lot of tangible resources, I have a lot of intangible resources, but if you don't know how to put them together such that it gives you good amount of results from your company's point of view, it doesn't. All these resources are useless. Got the point? Anyways, done. Let's move on to the next one. We have to hold on. You have to hold on. That's how theory is going to be. Out of all the theories, this is the dry of the dry of the driest of the driest theory. Yeah. Actually, we can skip all these things, but as I told you, one, because it is there in the syllabus, we have to cover. Two, I really don't trust ICA. Are you able to understand? I don't know. Suddenly, if he wants to really trouble you a lot, he can ask from areas where no one could have ever imagined. In fact, nobody teaches you all these things. They just skip and they move on. But why I'm sticking on to this even in the crash batch is because I don't want to take chances. Because tomorrow something otherwise happens, you'll remember my name. I know how you'll remember. I don't want to take those chances. Okay, right? So it's dry only, Nana. See, it's good to have a basic idea. That's all. Suppose tomorrow there's a question and he's asking you, normally from what sources you'll get your core competency. You can just remember, okay, there will be two sources. One will be what? Resources. The other one will be capabilities. Resources means tangible, intangible. That much if you remember, fine. not more than that. Then you can write something, something, something. Are able to understand based on that, isn't it? What? Fine, chalta hai. Okay, right. Now see here. Next one. Question. What is the question? How to apply value chain approach to core competencies for competitive advantage? Did you understand the question first? Which means what? The value chain approach which we have got, how to use it to what? Core competency, correct? For competitive advantage. What do you mean by that, sir? I'll give an example, you'll understand. Here. First step is validate your core competencies in the current business. First of all, means whatever the business you are running right now, first you need to identify where your core competency lies. I gave an example here. Tata's JLR. JLR means what? You know that Tata Group has acquired what? Jaguar and Land Rover, correct? Soon, or why did they acquire by paying so much of money? The reason is they know that that will become the core competence in their entire setup of Tata Motors. You understand the point? So first you validate the core competency in the current business. In Tata Motors business, what is the core competency? JLR, Jaguar and Land Rover. Then what has happened? Leverage the competencies to the value chain of the other existing business. So in Tata, JLR is a separate segment. Tata Motors is a separate segment again. So now what they have done is that they have leveraged the value chain of the JLR to the other business, which is Tata Motors. Example is Harrier. What is the platform of Harrier? Land Rover platform. Are you able to understand why Harrier is successful? Because it's a good handler. It really handles bad roads pretty well. It rides well, that, this, and all that. All these are happening because of the platform. Where did this platform come from? JLR. You able to understand? Jaguar and Land Rover, which means they took the core competence from the Tata Group and they used it. Leverage means using it to your advantage. Okay. They used it to the advantage. What? Leverage the competency to the value chain of other existing business. What is the other existing business? That is Tata Motors. In that, Harrier is a prime example. How you can use your already existing advantage to create something else. You got the point? Yes. Next. And use these core competencies to reconfigure the value chain of the existing business as well. Like how Uber has ventured into what? Uber Eats. Of course, it eventually became a flop show, and I think Uber Eats got merged with Zomato. Okay, but still they tried to do that because they know that their core competency is what? Transport. Yes, obviously. And use this core competency to create new value chains as well. What do you mean by using core competency to create a new value chain? I gave the example as IKEA and Tetra Pak. You know Tetra Pak? Once upon a time before Tetra Pak, what was the situation? First of all, you can't manufacture a juice in a factory. Even if you manufacture, it should be frozen. Something like that. Are you able to understand? All the milk and stuff like that, it has to be completely what? Kept in -degree and all that. Otherwise, you cannot really transport them. But once Tetra Pak has come into picture, what has happened? There is no need of refrigeration for that, isn't it? You can just keep it outside. You know how much cost it saves? When you're transporting it, there is no need of refrigerated trucks. When you're keeping it in your, the shop or something like that, there is no need of refrigerated. It's going to save you a hell lot of cost. So it's a revolution that has got created and a new value chain has got created. Because of that, new products have started coming in. That's what you mean by new value chain creation. Isn't it? Yes. And that's the way it works. Anyways, you got this? So this is how you can use value chain approach to core competencies for gaining what? Competitive advantage. That's how Tata gained competitive advantage. Now people are buying Harrier. Why? Because whatever the roads it is, you can just forget and you can take Harrier and you can go because the platform is so good. Are you able to understand? Right? Yes? Hello, fantastic. Next. Segmentation analysis. What is this segmentation analysis? Very simple. Identify the segments based on geography, products or customers. Divide them into multiple segments. I gave an example. Look at ITC Limited. You know ITC? So you can divide them into various segments. Like for example, based on products, how can you divide? They have cigarettes, they have hotels, they have textiles, isn't it? They have paper segment, right? Based on geography also, you can divide them as north, west, east, south. Got it? Based on customers, Maruti Suzuki can divide them into two segments, Arena and Nexa. Correct? Arena, na? Happened to all this? Why it has got mixed up? Then here it has got missed. I did not erase these things. Did I? Yeah. The one. What did I write after this? Segmentation matrix? Huh? That? Example. Okay. Oh, why it has got messed up. Anyways, right. Now see here. So segmentation analysis. First one is identify segments based on geography, products or customers, which I have done here. This is product, this is geography, this is customers. Got it? Yare. Construct a segmentation matrix. Oh, kya hai sir? Oh, kuch nahi sir. Just have a matrix like this. Suppose you are constructing a segmentation matrix for ITC. Okay. North, south, east, west. Then you'll write all the products over here. Then how much business they are doing. You know? Are able to understand how much is the turnover, how much is the profit, something you'll, so that you can compare. You'll have an idea, okay, how this is performing in this area or this area or this area. Are you able to understand? It's a pretty simple thing. So after constructing a segmentation matrix, analyze the segment attractiveness. Means what? In each and every segment, which is really performing well and why it is really performing well. What was the attractive factor? All those things, which means what is driving them to perform well. Then identify KSF for each segment. What is that KSF? KSF means key success factor. Are you able to understand? For example, paper segment is there in ITC. It is performing really well. You have analyzed the segment attractiveness. Paper segment is really going good. What is the key success factor for that? What is the key success factor? Why ITC product, which is nothing but your classmate book, is performing really well? Quality. Next, it's environment friendly, chemical free, so that conscious also will make you buy them, isn't it? Third is the availability. Next, distribution network is really good. Wherever you go, you can find them. So you think that rather than paying 10 rupees less for some local book, let's buy classmate. We know that anyway it's going to be good. Got that? That's a key success factor. Got it? Yeah, yes. Analyze attractiveness of broad versus narrow segment. Broad segment, narrow segment means what? What is broad segment? What is narrow segment? First of all, segment means what, Ray? Where did it go? What was the page number that I've kept? Huh? Just a second. Yeah. Okay, broad segment versus narrow segment means what, Nana? Huh? Any idea? See, here you have got various segments, correct? Yes. One segment is based on products. One segment is based on geography. Are you able to understand? One segment is based on, segmentation is based on what? Customers. In this, individually you can find out which is the broader segment in this, which is the narrower segment. Mostly north and south will be the broader segments, west and east will be the narrow segments relatively. Or it can be found with respect to different products as well. For example, hotels can be a broad segment, textiles can be a narrow segment. Are you able to understand? Depends upon size of it, length and breadth of it. Are you able to understand? Simple. So this is what you have to do. Based on this, you can take some decision making. That's all he's trying to say. Okay, segmentation analysis. Got it? We'll just see this competitive advantage. Then I'll have a break. Almost we are done with the entire session. That's all. Hardly another 2 pages. We are done. Yeah, break only now. This one only. Just a small one. That's all. Finished. See ya. Ready? Competitive advantage. Very important, Mokku fellow. You can have competitive advantage in the form of what? Product differentiation or cost leadership. Everybody knows this, isn't it? Now, through product differentiation, how can you get competitive advantage? One is superior innovation. Correct? Yeah, how, sir? Latest Apple notebooks are really making a lot of Boom machara in the market. Because earlier Apple used to depend on Intel for the chips, isn't it? Now they've started manufacturing their own nano chips, isn't it? Yeah, so that is driving many people to buy. Even I've also got one only because of what? M1 chip. It's very fast. So all your classes editing will be done in that, especially the compression and all that. You got the point? Next, superior customer care service, Shell petrol bunks, which I've already told you. That can be a reason for competitive advantage, correct? Because your service is unique, different, high quality, like Apple and BMW. Because of that, also you will buy those products, and that gives you competitive advantage, correct? Similarly, you can get competitive advantage because of cost leadership as well, correct? What are they? Innovation related to low cost. See, there are two types of innovation. Innovation which will give you higher quality and special experience, which will be costly. Innovation related to what? Low cost as well. Both are called innovations only. Which way it goes is all that matters. Next, access to low cost materials will also help you manufacture things at a low cost, which China is doing actually. Superior operating technology, that will also help you manufacture things at a low cost. China is able to manufacture everything at a low cost. Why? They've got all the resources, especially all the metals and stuff like that. Why? Because they've occupied Tibet. Are you able to get me? Anyways, example is Maruti Suzuki and Xiaomi with respect to what? Low cost operation. Anyways, that's all. It's pretty simple. Nothing is there in this. We'll have a break over here. And then after the lunch break, we will continue. Hardly it will take another 15 or 20 minutes. We'll be done with this. Got it? Right. Chalo. Okay, guys, right. Let's start. Hello, ready? Right. So I think we have stopped here, isn't it? Till competitive advantage. Kya? Yes. One is product differentiation, and the other one is what? Cost leadership. Got it? Chalo. Now we need to finish this off. Chalo, check, I'll check. We'll finish off this chapter and then we'll move on. Ready? Nitin, ready? ACs are ready? Hot or cold? You guys are feeling hot means here I'm getting fried basically. Chalo. Okay. Okay, right. So now we'll go for the next one. So what is the next one we have got? Value chain approach for assessing competitive advantage. Ready, guys? So if any company wants to assess what is their competitive advantage, I already told you that there are only two ways you can sell your product. Either it can be cost leadership or it can be differentiation. Okay. So here we're going to do the same thing. We're going to find out what's going to be your advantage, whether it's going to be cost leadership or product differentiation. For that, we're going to use value chain approach to find out competitive advantage, or at least to assess. Assess means how much competitive advantage I've got, where do I have it, how much do I have it, do I have it at a low level or medium level or high level, something like that. Okay. So let's start with internal cost analysis first. If you can see, what is the first step? Identify the firm's value creating process. Every firm will have a particular process where the value gets created. You need to find that particular process. For example, your hotel here, Thompson's Casa. Just now I had biryani from there. Okay. Yeah. Anyways, now tell me where the value gets created. For me, it has got nothing to do with ambience. When I ordered to Swiggy, still I ordered. So where the value is getting created then? See, quality is a very generalized term, Nana. Okay. How? Okay, quality. How the quality is getting created? Is there any unique ingredient or the way they make it or something like that? See, I know something about a restaurant here and you people don't know. What do you know? Tell me, what is the value creating process in Thompson's Casa? Exactly. So they grow their own requirements, whether it is non-veg, mostly non-veg, I think so, isn't it? Right? And that's how they are advertising that as well, isn't it? You can see the parcel. How are they advertising? That this is the specialty that we have. What is the specialty? We bring all the inputs from our own farms, not from somebody else. Are you able to understand? So therefore it is fresh, automatically it will be tasty and healthy at the same time. That's the main value creating process, Mukku fellows. Huh? Chalo. Anyways, like that, that's okay. See here. Like that, even Starbucks also, they have a value creating process, a particular process which will create value. That is this one, where they will pick some raw beans and they will roast it in a special way. No other company does that. Are you able to understand? Nana, right? And that's why their coffee really tastes a little bit special. Are you able to get me? Of course, the ambience and all that, that's for people who go there and then, yeah. Okay. For people who drink Starbucks coffee in a single way, why do we need ambience? What we need is coffee. Correct? Of course, exactly. Isn't it? Kare? Really? Right, obviously. You got the point, all of you? What is that? Not the ambience, concept. Okay, so every company, they'll have a particular value creating process. Okay, I gave you the example of Starbucks here itself. You can just go through that if you have time. That's not there in your syllabus, but I just gave certain lines. I've actually cancelled it off. Okay, rest of the things, if you just study, it's enough. You can see here. Where is it? Okay, see here. Value is added to the beans through Starbucks proprietary roasting and packaging, which helps to increase the selling value. Can you see that? Yeah, yes. So they particularly roast it in a special way. That's where the value gets created. Anyways, right. So that's the example which I gave you. Rest of the thing you can just study yourself. That's not relevant for the exams, but to just give you an idea. Right. So that's the first step. You need to identify the firm's value creating process. Next, determine the portion of the total cost of the product or service attributable to each value creating process. Which means, suppose total cost of a Starbucks copy is 150. 150 where it is available? 300. Are you able to get me? Yeah. Now that 300, you break it down into multiple process. Right from roasting the beans, okay, then the milk, then the processing, blah, blah, blah. Multiple steps will be there, na? Processes. And for each process, you try to identify how much is the cost that is being incurred. Are you able to get me? Yeah. So determine the portion of the total cost. In our example, it was 300. In that, how much is the portion or service attributable to what? Each value creating process. Whichever process which is adding value, how much it is, 30 or 40 or 25 or whatever it is. You identify that. That is step 2. Third, identify the cost drivers for each value creating process. For example, for roasting the beans, what is the cost driver? Number of beans roasted. More the beans roasted, more will be the roasting cost. Like that, easily you can identify cost driver. Identify the links between the process from one process to other process. For example, the roasting the beans process is depending upon the beans, correct? And after that, what will be the next process? Probably they are going to grind it down into fine pieces. And then eventually from that, they'll make what? Eventually the coffee. So one process will be linked with the other and try to figure it out. And finally, evaluate the opportunities for achieving relative cost advantage. Once you do all this only, you'll be able to figure out where you can get the cost advantage. Now, why are we talking about cost advantage? Because here we are talking about internal cost analysis. So the whole intention behind these steps is to identify a chance to reduce the cost in your whole manufacturing process such that you'll be able to deliver the product at a low cost. Unfortunately, Starbucks is not an example for this because Starbucks has got nothing to do with what? Low cost advantage, isn't it? It's all about product differentiation. Got it? Yeah, all right. Anyways, now coming on to the next one. What is the next one we have? Internal differentiation analysis. So here you are trying to find out where you can, you know, have that advantage of selling your product at the low cost. Here you are trying to find where you have a special process in your whole manufacturing where you can really make your product different. Got the point? That is why look at the first. Here, what did I say? Identify the firm's value creating process, which means from the point of view of the company, you'll start thinking, according to the company, where are we creating value? Whereas here you see, identify the customer's value creating process. Are you able to understand what I'm trying to tell you? For example, for iPhone, where the value gets created? Hmm? Quality. Yeah. Does that mean that Samsung is not having good quality or Google Pixel phones? Huh? It's the security and the iOS app, iOS OS. I mean, the iOS OS, what is that? iOS, basically, operating system, correct? That's where the value gets created, right? Of course, the symbol also, especially for mirror selfies. That's lately because even they would have not thought that this will also create value. Are you able to understand? Isn't it? That's honestly, it creates value because even when I've purchased my MacBook, I got really disappointed. The reason is this will not light up. It will not light up. I got disappointed because every time we are watching in movies now, this is getting light. It is not getting live. I thought I really scolded that fellow also. Hey, stupid fellow, what you're doing like that means, sir, no, sir. It got stopped. Now it's not coming like that, he said. Huh? Anyways, okay. For me, the value creating process in this was M1 chip. Okay, nothing else. Of course, I like that color as well. Anyways, now, yeah, obviously. What happened, Abin? Are you here? Abin. Tell. Anyways, you become unconscious. No, conscious. Right. Okay. Chalo, here, all of you. Ready? Okay. See, the difference between internal cost analysis and the differentiation analysis is that differentiation you should think from the customer's point of view. If you think you are different, it doesn't work. Customers should feel that you are providing them something different. That is where the difference comes in the first sentence, where there we are thinking about what is the firm's value creating process. Are you able to understand? Here we are thinking about what is the customer's value creating process. Are you able to understand? That's what makes your product different. You got it? Next, evaluate different strategies for enhancing the customer value. Determine the best sustainable differentiation strategies. Okay, you have identified a differentiation strategy. Customer feels that your ambience is one of the reason. For example, cafe, coffee day, and all that, isn't it? But once you have identified that, there is a very high probability that if yours is a successful business, competitor will replicate it, correct? Obviously, he'll replicate it. In fact, I feel that cafe, coffee day is a replication of Starbucks, isn't it? Yes, and somebody will replicate the coffee day. In fact, many people have tried kappa, that, this, barista. So many people are there, isn't it? Yes, although they are not so popular like cafe coffee day. But anyways, so I just don't want the competitive advantage in the form of differentiation, but I want it in a sustainable way. Means I want it forever, not now, not tomorrow, not next year. Because in some way or other, somebody is going to come up with the same idea and then my uniqueness is going to go away. If my uniqueness goes away, then how can I sell? Are you able to understand? So, therefore, I should figure out a way where I can sustain my differentiation strategy. To be very honest with you, when Apple became successful with their own ecosystem, the so-called iOS, that, this, and all, Mac OS. In fact, Microsoft also tried same strategy actually. So they wanted to bring Windows into the phones and they paid up with Nokia. You remember that? It created a lot of buzz at that time. Even I was using one of their phones, despite it was not that convenient and many of the apps were not there for Windows phones. Any of you have used Windows phones? Raise your hands. Okay, myself as well. I used to have it was a pretty weird color at that time. I got bored of all the normal colors and I went with an orange one. That too, it was a bright orange. And that too, it was a very big phone. So whenever I used to bring it to the class, it used to be like a, it was very, very, very disturbing and all that. Are you able to get me? Anyways, now the point is, okay, chalo, cool, see here. So they also tried to mimic the differentiation strategy of Apple. Are you able to understand? But eventually they were not able to do so, and it eventually became flop. That's a different thing. So they two people have become flop, Microsoft and Nokia as well. So Nokia should have shifted to Android at that time itself. The things would have been a lot more different. Adaptability. They were known for the secrecy. Yeah, the security and all that. They did not really adopt to the technological advancements. Now also they are releasing the phone still, but still people have adapted to iPhones actually. So they are okay with it. Blackberries is all about security. That's the reason people were buying it at one point of time. Yeah. Okay. Got it, guys? Anyways, that's all. So, and after that, we have something called vertical linkage analysis. So, what is this vertical linkage? First one, it includes all upstream and downstream activities throughout the industry. What do you mean by that? See here. Let's say we are a tire manufacturing company. Who are we? MRF. Tire manufacturing company, MRF. Okay. Above us, there is one supplier who gives us refined rubber, who supplies us, which we need to manufacture tires. And above him, there is some other supplier who gives him raw rubber to refine it. So whoever is above us are referred as upstream, and whoever is below are referred as downstream. Okay. So what does he say? Vertical linkage means this is what is called vertical. Are you able to understand? Vertical linkage analysis in a particular industry, which means because see, everybody is dependent on the other in one way or other, isn't it? If you're in an industry, right? This is what we call entire supply chain. If this guy gets, fever, it affects what? Everybody in the supply chain. You understand the point? I'm just trying to give you a weird example. Okay. If he affects us, he gets affected in one way or other, everybody in the supply chain will get affected. Here in this example, I gave you a very small supply chain. Hardly there are 4 or 5 players. Normally, if you look at the supply chain in the world, there will be some 10 to 20 players in a single supply chain. Right from the source, the first original source, till the customer. Are you able to understand? Anyways, now. So what did I say? Vertical linkage analysis includes all upstream and downstream activities throughout the industry. Let's say this is the industries. So vertical linkage analysis includes upstream and downstream. Okay. Next. A company must have understanding of not only its internal value chain, but also of its industry value chain. Internal value chain means what? Suppose this is the company and here the raw material is there. Let's say it is, let's call it as maida. Raw material. From maida, then bread, then cut pieces of bread, then jam bread. Let's say that is the finished good. Are you able to understand? So this is the internal, manufacturing process of the company, right? And here the main, okay, after this the bread is, let's say, roasted. And then roasted bread is cut and then it is, now we will jam it. Okay, the same example, the experiment which we're going to do it in class. Now let's presume that when, okay, forgot that it will go away. Okay, it's okay. Raw material, maida or wheat. Happy? Okay. Okay, okay, okay. Okay, there is something like this. Got it? Just for example purpose, Ray. Now let's say this is our company. What is the name of our company? Hmm? What is that? Kiana. That fellow is not there. Huh? Tukas. Okay. Okay, something like that. Akash Rose. Let's say that's our company's name. Okay. Now, this is our internal value chain. Let's say the value of the bread, say for example, the final one, okay, it is for this Mukku fellow bread, how much will pay? Even if it is given free, also will not eat. Hello. Anyways, let's say 40 rupees. Okay. So when you try to, what is that we are trying to understand? A company must have understanding of not only its internal value chain, but also of industry value chain. Here we are talking about internal value chain. What is this? Hey, Mukku fellows, what is this? Internal value chain. We are just trying to understand. Okay. Right. Let's say here the value added is 3 rupees. Here the value added is 4. Okay. Here major value is added. Let's say it is 7. Maybe you are toasting it in a very unique way. Okay, here another 3 rupees value is added, and that's your selling price. Got the point? The value of your good. Okay, so where the major value is getting added? Here. So you have to ensure that that's going to give you that advantage, that edge, and whatever the secret temperature and how you're going to actually work it out, that you should keep it with yourself to have a sustainable competitive advantage. Got the point? Like this is an industry, correct? Industry also will have a value chain. Means, so what is the final thing over here? Let's say the bike value, it is 2 lakhs. Okay, the tire value, let's say it is around 20,000. Okay, this refined rubber will be somewhere around 5,000. Raw rubber will be somewhere around 1,000. You see how the value chain is there for the industry. So like this, now let's say the crucial value chain is happening when MRF is converting the refined rubber into what? The so-called tire, where major value is getting added upon, then he will be the key in that entire industry supply chain. So like that, we need to think whether we are the key or we are at the receiving end of somebody else. Are you able to understand? That decides our bargaining power and everything. That's what he was trying to say here. A company must have understanding of not only its internal value chain, but also of its industry value chain. Next. A company must identify and evaluate the opportunities for sustainable competitive advantage after carrying out industry value chain analysis. So, which means internally also you need to figure it out where what we can do such that we'll have sustainable competitive advantage. Plus, externally also you need to figure it out that what is the industry I am upon, what is the final product ultimately reaching the customer, in that my company is valuing how much, what is the value that it is providing. Thereby, we need to figure it out where the ultimate advantage is at. For example, see here, in this industry, what is happening? MRF is the key, correct? Yeah, so always in this industry, the key company will be the tire manufacturing. Are you able to understand? Yeah, we are talking about rubber. We are not talking about automobile industry. We are just talking about rubber alone. There ends the matter. Got the point? Yes. Chalo, that's the thing. Anyways, that's enough. It's just a rough idea, nothing else. So far it has not come in the exam and we are not expecting it to come as well. Just to have a rough idea. What do you mean by vertical linkage analysis? That's it. Got it? It includes all upstream and downstream. You need to have an idea about not only your internal value chain, but also about external value chain, and ensure that you maintain sustainable competitive advantage. There ends the matter. Got it? Yes, all of you. Mukkus has arrived. Come back. Right now, okay, chalo, concentrate here. So are we done with this? All right, let's move on to the next one. Vision and mission. I hope you guys know. Can you please tell me what is the vision of ICA? Vision and mission. Any idea? Since 10th class, we are looking at vision and mission, isn't it? What do you mean by vision? What do you mean by mission? Mission is? Okay, at least I'll give you choices. Among these two, one is what we are as a company. That is one. Second, what we want ourselves to be in another 5 years or 10 years or 100 years is another thing. Second one is vision. First one is mission. Got it? Right. For example, we. Who are we? ICA. So what are we first of all? We are an accounting body where we want to manufacture qualified integral professionals. Yeah, isn't it? Okay, let's put it in a funnier term. What about the vision? To become the world's largest accounting body or whatever it is. Are you able to understand? right? This is important. It might be asked as a part and parcel of a case study. So just have an idea. So mission statement means why does a company exist? What is its purpose? Organization value and major goals. For example, ICI is developing global skilled professionals, highest quality of services to its members, role of governing authority to all the CS. Highest quality of service. Okay. Mission. Are you able to understand? So why are we? What's your mission? Huh? You only, Mukku fellow. What's your mission? Involving in an accident and becoming unconscious. Myself also. Chalo. Done? You. What's your mission? Mission means what? Exactly. Not vision. Mission. Mission. We have discussed only mission here. So why does a company exist like that? You know, mission. Chala, cool. Anyways, okay. Now see here. So why does somebody exist? Is nothing but a mission. So as you can see, our ICA we have taken that, isn't it? What is its mission and all that, right? Vision. Where do you want yourself to be in another 10 years or 20 years or 30 years or 50 years? So what company would like to achieve in future? For example, when it comes to ICA, we wanted to become world's largest accounting body by 2024. This was their mission. Whether they'll become or not, they means what? Whether we will become or not, it is a different thing. Are you able to understand? Kyare? Yes. I hope this is clear, isn't it? Fine, fantastic. Now we have value shop model. Actually, this has been removed. This entire content has been removed and only this paragraph has been given. Okay. I wanted to remove this, but then I thought suddenly if we give some sort of twist in the examination and gives you this, then what we can do? Because it was not completely removed. This paragraph was given. Okay, in your 2022 study material. Got it? Right? So therefore, hardly it will take 2 minutes. So why should we ignore? Because anyway, it was not completely removed. Otherwise, why this paragraph is given? Therefore, I thought that let's keep this and add this paragraph. That's what I've done. Got it? Yeah, all right, chalo. Now see here. It will hardly take 1 minute for us. Okay, chalo. What is this value shop model? It is designed by an organization to solve specific customer or client problems rather than creating value by producing output from the input. See, creating value by producing output from the input is what the value chain analysis does. Correct? For example, let's say you are manufacturing a solar heater. That's your company. So how you manufacture solar heater? What are the manufacturing steps? Where do you get the raw material? The finished good is solar heater, and where the value is getting added upon. Everything comes under value chain analysis. But once a customer inquires for a solar heater, so you go to the customer's place, you try to understand what the customer needs are, how much hot water he needs, what are all the other needs that he wants from the solar heater or whatever it is. Okay. And then you try to look at his place, try to talk to him, find out the ideal place, where you can install that solar heater and all that, finalize it, and then in a customized way, depending upon the space available, that size and all that, you try to communicate the same to the company, and eventually your company will manufacture the same. Now, if you remove the manufacturing part here, everything comes under value shop model. Able to understand? So it's all about like a service. It's more like a service. Service only, na? This is. Forget about the manufacturing part. What about the other thing? Coming and meeting your customer, talking to him, understanding what does it need and requirements, X, Y, Z, blah, blah, blah. Everything comes under service only. Are you able to understand? This portion is value shop. Manufacturing portion is value chain. Got it? See here. Value shop model configures resources and activities according to specific customer problem. Professional services like law, medicine, consulting, CA firm, BCG, wherever you need strong expertise in all those areas, you can apply value shop model. So value shop model aims to serve companies of service sector, which we know. Important point is value shop model has same support activities as value chain model, but primary activities will be different. Why? Because each and every service is different. Therefore, each and every service will have a different primary activities. Whereas we did not face that kind of situation when it comes to value chain analysis. Why? Because all our manufacturing companies, they'll have pretty much similar primary activities. What are the primary activities? Inbound logistics. Exactly. Inbound logistics, operations, outbound logistics, marketing and sales, after sales service. Got the point? But for service sector, that's not the case. Each and every service will be unique. Therefore, their primary activities will be different, but secondary activities will be same as value chain. What are the secondary activities then? Firm infra, very good. Second, HRM, human resource management. Third, technology development. Last one, procurement. Fantastic. Got this, all of you? Come on. Right. Now look at the summary. Actually, here there was one diagram which I removed it. Now that diagram only he tried to explain it in the form of this paragraph. See here. The value shop, an alternative representation of value chain for professional services firm. This concept aims to serve companies from which sector? Service sector. In value shop principle, no value addition takes place. It only deals with the problem, figure out the main area which requires its service, and finally comes out with a solution. I gave you a perfect example. What is the example I gave you? Solar heater. What? All right. This approach is designed to solve customer problems rather than creating value by producing output from an input of raw materials, which I have already written here. Correct? This model applies best to telecommunication companies, but also to insurance companies and banks whose business essentially is mediating between customers with a different financial needs. That's what I told you in my example, solar water heater, where you're talking to the customer and trying to understand what his actual needs are. The model has the same support activities as Potter value chain, but primary activities are different. Did I tell you that here? Why they are different? Because services are different. They are not like manufacturing, where pretty much manufacturing is same, isn't it? Yes. In value shop, they are problem finding and execution, problem solving, that is choosing among solution, execution and control. These are all the steps which I should have given as a diagram in your power notes. Can you see that? In the latest power notes, I have removed. I have removed it in the latest power notes, which is in the process of printing right now. What is there in that, Mokku fellows? Take it off if you don't want it. But actually the diagram is better, because from this sentence, what you can understand? Diagram is better, right? It is not removed from your syllabus. It is still there. Yes, in the form of single sentence here. What? This is what you see in the diagram, right? What do you have in the diagram? See there? Problem finding and equation. That is the first step. Then problem solving. Then choosing among multiple solutions. Then execution, and then control or evaluation. Correct? That is even more beautiful, right? When compared to this sentence. Are you able to understand? Yeah. Then why did you remove sir? Means because ICA has removed, I also removed. That's all. Able to understand? Because every time I can't explain everything. Got it? Yes? Chalo, that's it. So with this, we are done with intro to SCM concepts. Okay?